productive, it would depress growth, and we're going to get to the same point this time next year of talking about now which tax goes up. However, I was very comforted to hear just before she went off to the IMF, I thought the Chancellor really was bringing the spending side of the equation back onto the conversation.
Is that politically realistic?
Nothing is politically real. You know, there's no options on the table that the UK electorate are going to like. I think there are things where, for example, tell the UK population, look, we've got people that pay into the system and the people that take out. And we have to make sure that those that are paying in, the growth of their earnings is what drives the growth of the earnings of those taking out. So I'm sorry, Triple Lock, that's got to go. Your pension's going to go up with average earnings. Benefits are going to go up with average earnings. Delinking everything to inflation, I think actually there's a political narrative there and there's certainly an economic narrative. But don't envy her the job, that's for sure.
No. She's going to have a fun time when she comes back from the IMF.
Yeah, we're on the wrong side of the Laffer curve, essentially, is what you said.
Absolutely.
The left won't like that.
Nice economics right there.
Karen Ward, EMEA, Chief Market Strategist at JP Morgan Asset Management. How much do you buy on Instagram?
Oh, it's my kryptonite. Constantly, Guy, when I'm not sat here with you.
Maybe she's doing it right now. Anyway, while we're focusing on that, and we'll give Lizzie some time to go shopping, we'll look at the Core 6 and figure out what is happening. This is the picture at the moment, and as you can see, it's a mixed one. Nestlé to the right-hand side, look at that. That is the takeaway of this morning. Nestlé cutting jobs, accelerating the restructuring. The market likes that. And you wonder how much of the jobs that are going to be cut will be done by AI going forward from here. Anyway, LVMH is a little off this morning, but not by much, and holding on to the gains from yesterday. Chips are on the front foot. Let's get more with Chloe Melly.
Good morning, guys. So as you just mentioned, Nestlé is up massively, almost 8% this morning on the back of that stronger than expected sales growth and also those job cuts. So 16,000 job cuts over the next couple of years. So this is really an attempt by the new CEO who joined just last month to really streamline the business and turn things around after a few months of volume weakness at Nestlé. And this seems to be rewarded very, very positively by the market this morning for Nestlé. Moving over to luxury, where we see a little bit of weakness for LVMH and Kering this morning after being cut by Berenberg. So Berenberg analysts cut LVMH to a hold rating and Kering to a sell rating. They said that there was potential structural demand issues facing that sector, that there was continued pressure in China, and also a changing consumer behavior among younger generations, and that those two names would be the worst affected. So we see a little bit of the reversal of the really good performance that we had yesterday on the back of the sales update by LVMH yesterday. Moving over to Whitbread, where we see also shares in the red this morning. Whitbread, the owner of Premier Inn, the hotel operator, it reported earnings that disappointed. In particular, what might be driving the shares down this morning is weakness in Germany, where with expectations of a lower profit in that quite important division, even though the company actually reiterated guidance for the entire business. Moving on to Sartorius and its subsidiary Sartorius Stedim. So Sartorius is the makes precision equipment, and then Sartorius Stedim is a subsidiary that makes more biotech precision equipment. Both of those have raised their outlook this morning, and this is being rewarded by the market this morning. We're up 10% and 11% for those two companies. And finally, let's end with another guidance raise, and that is for Flatex de Dreyro, which is an online brokerage firm, raises guidance, and the shares are up 5% on the back of that this morning.
Okay, Chloe Melly from our equities team, we thank you so much for the stocks that are moving at the open. We've also got an eye on France, and we have MPs currently debating a no confidence vote. You can see on the screen Marine Le Pen of National Rally speaking about why there should be no confidence in Prime Minister Sébastien Lecornu. Of course, he has suggested that there be this compromise with the socialists in Parliament, that they should suspend President Emmanuel Macron's pension reform to raise the retirement age. It's a humiliating concession for the president. But if Lecornu can get through these confidence votes, you would think that the Oates-Bunt spread would narrow somewhat. So we're at 78 basis points at the moment on the French 10-year bond yield, up a basis point at the moment. And we were talking about French stocks, the CAC 40 lower 0.1%, but that much to do with the luxury story, as Chloe was highlighting there.
Okay. Coming up, let's talk about what is happening in terms of the corporate story that we're watching this morning. We'll park the French politics for now. We'll come back to it in just a moment. Nestlé, 16,000 job cuts at the world's biggest food company. The market likes it. We are going to see a more efficient company going forward. We're going to talk Nestle and the sales figures and the job cuts. That's all coming up next. This is Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Morning, Thursday morning. At an index level, not a lot to see here. At a stock level, there's some fairly interesting price action this morning, which is worth focusing on. Let's start with Nestle and figure out what is happening there. Better than expected gains in sales. Pricing looks okay. Volume looks all right. What seems to be, though, driving things this morning is they've got a new CEO, and we are seeing significant job cuts. This company is looking to become much more efficient. It's planning 16,000 job cuts over the next 2 years. Swiss business reporter Fabienne Kinzlerman joining us now to talk about this. Good morning.
Good morning. Thank you.
So how's this going to happen? What's the cost of this? That sounds like an awful lot of job cuts to me. I know this is an enormous company, but nevertheless, 16,000 job cuts sounds like a big number.
Yeah, you're absolutely right. That's the talk of the town, right? Besides, like, the already strong...
Certainly the talk of Verve, I would imagine, this morning.
Oh, yeah, definitely. That's for sure. I mean, they are just, like, they announced these 16,000 job cuts. They didn't announce, like, where exactly it will be. They didn't say which geography region, like, which field. What they said is, like, 12,000 of them will be white-collar jobs.
Okay. Is that an AI story? I don't know. But is that where... How easy are they to get rid of? Is this something that is going to cost the company a lot of money in the near term? That sounds like a fairly big transition.
It definitely is. It will come over the next 2 years, and they are actually expecting like cost savings. I think it was around 3 billion Swiss francs, which they announced to save till the end of 2027.
And so we've got this new CEO.
Yeah.
You know, they're just a couple of weeks into the job. We had the alleged undisclosed romantic relationship with a subordinate going on with the past CEO. But with the new one, what's his vision? What is it that he wants to do to step up investments?
Yeah. He came in bold, right? He announced the job cuts. He announced a strong third quarter. And the investments, I think they really, like what was important to him was to lay out they will be in growth areas. He specifically mentioned platforms, like they are hopping on the air fryer trend, for example, but also on the cold coffee trend, which is big with the Gen Z.
Cold coffee trend.
The cold coffee trend, like drinking cold coffee.
I'm not Gen Z, though. Thanks for the comment.
My bad. I missed that part. But thanks for joining us. That was Fabienne Kinzelman joining us on the latest out of Nestle. Now let's turn to tech. We did have TSMC results overnight, and shares have been called higher, but they did post a better than anticipated 39% jump in quarterly profit in the latest sign of the AI boom. The chipmaker also raised its revenue growth outlook for the year and expects annual capex of 40 to 42 billion US dollars. Joining us now for more on this story is Matt Bloxham from Bloomberg Intelligence. Matt, your top thoughts on these earnings today?
Yeah, well, I mean, you know, the capex guide, which has been narrowed to the top end of the range, not surprising because everybody's just throwing more money at this opportunity. And again, probably the upgrade to the revenue outlooks are now mid 30% in US dollar terms. Again, maybe not a surprise, but there's definitely some catch-up for analysts to do there, and an optimistic outlook for the year ahead. And, you know, interestingly, on the call that didn't finish too long ago, much of the Q&A was more about the kind of AI opportunity, rather historically, where you beat people trying to kind of understand what's the demand for the latest iPhone or the kind of, you know, the next big kind of chip driver. Much more about the opportunity.
And they clearly see the opportunities being big, but are they? Like, the pace of this thing is moving like a freight train. Like, what do they see in terms of the sustainability?
Yeah, I think in the near term they see you know, a very robust sustainability of this, because you know, we're still at that kind of developmental stage where people are building the platforms and the capacity to hopefully one day kind of be met by all of the demand. So I think even, obviously there's some question marks about the China situation from a number of different angles, the constraints about selling technology into that market, China's constraints on rare earth materials and whether that creates a new supply chain glitch for companies like TSMC. But they seem very optimistic that even without China, there's still very robust demand for their platforms. And obviously we heard similar things from ASML yesterday too.
Yeah, because we're always asking for an expert to try and put the food chain together for us of how those rare earth export controls are going to filter through and damage this market. Where does TSMC fit into that? And also, if they're putting money into factories in the US, how can they protect themselves from that?
It's a good question. I mean, they're clearly going to be impacted like everybody else. I mean, even ASML yesterday said that they're going to be constrained if there were raw earth materials supply constraints from China. I think that's going to affect everybody. And, you know, obviously every Western country is rushing to try and find alternative sources for some of those materials. I mean, the US situation is kind of fairly complex for TSMC. You'll see one thing that came up on the call was the rivalry with Intel. See a lot of money going into Intel as an alternative foundry provider, both in the US. Now TSMC is investing in their own US capability, but they're also going to continue to invest in Taiwan too. So I think that they're going to be investing as much as they can to maintain their lead over people like Intel. I mean, they're over 50% of the overall foundry market right now, and spending money to kind of protect that dominance.
But of course, Intel's got Trump as their pitch man, so we'll see how that race goes. Matt Bloxham from Bloomberg Intelligence, good to get your expertise on this. But coming up on the programme, the French PE giant Ardian has raised a record $20 billion for a European infrastructure fund. And we're going to head to Paris next to speak to Matthias Berghardt. That conversation next, plenty to discuss. My least favourite word, cockroaches in credit, certain to come up. That's next. This is Bloomberg.
In case you missed it on Bloomberg Surveillance.
We heard from Restoration Hardware, and the RH CEO was on the earnings call dropping F-bombs. And I imagine a lot of people are having similar issues at the moment trying to sell furniture. You're at a different price point. What's your experience this year?
People have less money. You can say still recovery from the pandemic when it comes to inflationary measures. But then again, our line of business is really about human basic needs. It's about the bunk bed when the kids grow up. It's about the chair and table and so on.
Anne-Marie had one final question.
How are the meatballs? And you're lowering the cost of meatballs.
I am myself, I'm an intellectual vegetarian. I normally say down here I struggle. I love the meatballs. We're actually running today about 40% of our sales is actually vegetables and plant balls. And personally, I don't love the vegetables, but the plant balls is a great exception. But meatballs is part of our legacy, so there you go.
I love your honesty.
Don't miss Bloomberg Surveillance live every weekday.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
This is the opening trade, and we're 30 minutes into today's session, and as you can see, not much doing when it comes to European equities so far. Trying to make our minds up, aren't we, about what's happening with trade, the US and China blowing hot and cold at the moment. We've got a lot of earnings to digest as well, but the CAC Cajon only down 0.1% at the moment. We're holding our breath to see what happens in the French National Assembly when it comes to those votes of confidence in Prime Minister Le Cornu. Guy, what's happening when it comes to the look under the hood?
There's an excellent fight developing in the French National Assembly right now. We'll come on to that in just a moment. So Stoxx 600 up 247, down 327. So we are reasonably balanced. The down has it, but only just. Volume's actually fairly reasonable at the moment. Val mentioned this a while ago. Nordea is the stock that actually stands out at the upper end of the stock story this morning, and it is hitting a 52-week high. You can see the Scandinavian Bank up by nearly 40% so far this year. Bank's been a really big driver. Ironically, the French gaming and lottery company, FDJ, is the loser this morning in terms of the 52-week lows that we've pulled out. The stock has seen a downgrading of expectations, and that stock has taken a decent. It took the big chunk down in February, but we are now continuing with that move lower on the back of the latest update from the company, and we are down on a year-on-year basis by 25%. So that's what is happening in the single stock story. What else do we need to know this morning, Valerie?
Well, here's what else you need to know this morning. U.S. Treasury Secretary Scott Bessent has flagged the possibility of extending a pause on import duties on Chinese goods for longer than 3 months. Speaking at a press conference in Washington, Bessent said the truce would be on the condition that China halts its plan for strict new export controls on rare earth elements. The comments came as President Trump confirmed to reporters that the U.S. and China are in a trade war. Traders have been piling into wagers calling for at least one outsized Federal Reserve interest rate cut by the end of the year. Activity in options linked to a secured overnight financing rate shows a buildup in positioning for a half-point reduction, either when the Fed meets later this month or in December. That's two more than the two quarter-point cuts now priced into interest rate swaps. And French MPs are currently debating the 2 no-confidence votes facing Sébastien Lecornu. The French premier is expected to survive the motions after announcing plans to suspend a contentious pension law. Lizzie?
Well, we can see the debate happening in the National Assembly, and we've been hearing from Marine Le Pen. She got a standing ovation from her part of the National Assembly, but we'll have to wait and see whether Le Cornu can survive these 2 votes. I'm sure that we will see a narrowing, perhaps, of the spread against German bonds if we get victory.
There was a fantastic moment a few minutes ago, which we didn't manage to catch on camera, between Le Pen and Le Cornu. She spoke first.
They fist bumped, did they?
Well, no. She made a speech, went back to her seat, got a standing ovation from her little slice of the French Parliament, and then he stood up, and they were basically kind of jockeying with each other in terms of him going, we've got a stable government here, and she's going, where is that in the rest of the French Parliament? Anyway, Caroline Conan, I'm sure, was monitoring all of this for us. Let's go to Paris and get the latest from her. So we've just seen a really interesting interchange between these two, and I'm wondering what that tells us about what we can expect for the rest of the day.
It's interesting because you were talking about the lottery company just a few moments ago, and some Renaissance MP was saying yesterday, it's like a poker game. You need to pay before you play. That's what Le Cornu has been doing by giving away this pension reform in order to get the support of the socialists. At the moment, these 2 motions of no confidence proposed by the far left and the far right of Le Pen are being debated in Parliament. We should hear what the vote comes out in the next probably half hour, 1 hour. No more than that. It's going to be quick. And in fact, Le Cornu should survive these 2 motions of no confidence, but it's going to be very tight because you need 289 votes in order to make the Le Cornu government collapse. And even though the socialists have said they will not support this motion of no confidence, there is a bunch of rebels within the Socialist Party. At least 4 of them will still support the motion of no confidence. There are also at least a couple among the Republican parties. So Le Cornu should survive, but by less than 20 votes. So you can imagine how difficult it's going to be as well over the next few weeks, over the next few months, to vote on anything and to pass any kind of budget.
And so we get the updated ratings, Caroline, of French sovereign debt, both from Moody's this month and from S&P next month. Where the compromise has been is on suspending the pension reform, as you say, but what's the cost of that for the finances of France?
Well, according to Le Cornu, it's going to cost 400 million euros next year, 1.8 billion euros the following year. Of course, the budget impact will be bigger in the longer term, as much as 15 basis points on French debt, according to our own Bloomberg economist. Of course, the compromise will also come on the tax front. You know that the socialists have been pushing for the so-called Zuckman tax, this wealth tax on assets of more than 100 million euros. Even though the National Rally said yesterday they will not support this Zuckman tax, the rally that we saw yesterday in the luxury sector and LVMH soaring might not actually help Bernard Arnault and his luxury conglomerate, because the market cap of LVMH increased by nearly $20 billion. And that's perhaps something that the socialists will debate also when they want to present the Zuckman tax.
Yeah, that made the timing a little bit more difficult, didn't it? That big rally we saw yesterday in LVMH. Caroline, thank you very much indeed. Caroline Conan joining us from France on the latest surrounding the French politics story. With Le Cornu dropping Macron's pension reform but keeping corporate windfall tax proposals in order to win today's vote, French business leaders are feeling betrayed. However, our next guest still has a positive outlook. Matthias Burkhardt is the French CEO of the private equity giant RDN, and that company this morning announced it has raised a record $20 billion for its latest European infrastructure fund. Good morning, Matthias. Thanks for joining us. We really appreciate your time this morning. We'll come on to the French politics in just a moment because there's a number of interesting questions around it. But let's start off with the fund that you've raised and your outlook in terms of the industry. It's interesting. At the moment, it seems as if European private equity funds are maybe able to raise money at the moment because they're European, which sounds slightly counterintuitive. But Europe feels like the diversification trade right now. Is that making your life easier?
Good morning, guys. Yes, absolutely. I think first of all, we are very happy with this success. It's not only a big number, 20 billion, but it's also doubling compared to the previous generation. I think it's some different things explain this very positive outcome. First, as you said, I think there is a willingness of global investors, and we raised more than 60% of the fund outside Europe, to diversify, and probably they were under-allocated in Europe in the past, so they decided because of this current environment, which is very difficult to read, and very difficult to forecast, to be diversified. And Europe, after all, is a stable place, even though the economic growth is slow. The other factor is that we are investing in the mega trends of our economies, which are obviously the connectivity, physical connectivity with transport. As you know, we are the main shoulder of Israel. We recently announced the acquisition of a group of airports, including Venice, but also the virtual connectivity with data centers, fiber, all the digital infrastructure. And the enabler of all this is energy transition. So I think it's both the region and the themes which appear very attractive to investors.
Matthias, we've had a long period, though, when it has been relatively easy to raise money. And you wonder whether that period is coming to a conclusion right now. Do the big get better as a result of that? If you are a big firm, if you are able to attract funds, does it become easier in this kind of environment with the kind of the infrastructure that the big funds have around them to generate money from LPs, whereas in the past, actually, everybody's found it relatively easy? Is that environment changing? And if so, what are the implications?
Not really. Maybe slightly better. But in fact, what we are seeing is that the market, especially the B2B, so the institutional market for fundraising, remains quite sluggish. So it's just the market share of certain players which are growing, which feeds their fundraising. So we see a strong concentration movement. And the reason for that is that basically in the current environment, it's very difficult to bet on financial market to create value. You really have to have specific expertise. You should be able also to raise in the private investor market, and this requires really strong capex, strong investments, and just the leaders can afford that. So that is really what is driving the market. First, the concentration of the market, so the biggers raise even more than before, and the mid-size or the mid of the cap or the smaller managers struggle probably to raise. That's the first factor. And the second factor, which on driver, is the private wealth, and this market is really the new frontier for all the large private equity players as Ardian.
Matthias, can you tie this fundraising, this deal activity? I heard, or at least it was reported, that 40% of this new fund has already been deployed. So you have 60% of the new cash raised looking for deals. Are you perhaps deterred by what's going on in France? We just heard from our reporter there that they are considering things like a wealth tax across the nation. Does that deter you from looking at French companies?
Well, as French citizen, I am obviously very frustrated by this instability, French instability. But I think we should not take too much this instability in the economy. And you see that basically the market has been sanctioning France after the presidential decision to dissolve the chamber. But in reality, the market has factored that, and we are just experiencing what was already anticipated by the market. France has strong institutions, and for example, we don't have such a shutdown, so in case there is no budget or there is difficulties to find budget in the coming months, what will happen is that we will take the existing budget and we will extend it until the next presidential election. You know that in France, what drives really the politics are the presidential elections, and that's what really will lead to again a stability and a new I would say economic plan.
Matthias, it's also, you've raised this fund to invest in things like energy, transport, and digital infrastructure. Which of those buckets are you most excited about potential returns?
But the beauty of that is that those three buckets are very synergetic. There is no data centers if you don't have energy, if you don't have cheap energy, and if you don't have decarbonized energy. Connectivity, as I said, for me, infrastructure, and you know that private equity firms have very different definitions of infrastructure. Our definition is very consistent, is capital-intensive asset in what I call connectivity. Connectivity, real connectivity, like transport, airports, roads, but also virtual connectivity, obviously. But to basically to feed and to all this, you need energy. That's the enabler. So all this is very consistent. So there is synergies between them, but also they are counter-cyclicals, meaning that, for example, if you are exposed to data center, you are sensitive to the cost of energy. But if you produce energy, then you balance this reality. So all this means that portfolio construction is more than ever something which is very important. And that's also something I think that our clients have valued, not only the strong absolute performance, but also the consistency across the cycle, the ability to deliver performance across different cycles.
Matthias, good morning, it's Lizzie here. Are you worried about what's happening in private credit? We've had Jamie Dimon, the JP Morgan CEO, of course, warning that with Tricolor and First Brands, there's never just one cockroach, there's almost more to come. Are you worried that there are going to be more collapses in the pipeline?
I think we should have yes, we anticipate that the cost of credit, as the bank speaks, will increase. I mean, we have been experiencing a decade which with the capital and the debt was flowing massively at almost zero cost. We are entering now in a more, I would say, normalized environment, as if we look back to the history. And we will see that some companies, some borrowers who have bet excessively on capital markets and excessively on the ability to grow will experience difficulties. But I don't think we will have a massive, I would say, systematic problem. It's more that we will see the cost of credit raising, and discipline and capacity to analyze risk and have a disciplined approach will make the difference between different managers and different banks as well.
Okay, really appreciate your insights. Matthias Burghardt, Ardian's Head of Infrastructure and France CEO. Really good to have you on. Well, coming up on the programme, we've got another top interview. We're going to be speaking to BYD's Stella Lee about the Chinese automaker's ambitious global expansion plans. And another thing to look out for, the Canadian Prime Minister Mark Carney appears as the first guest on the Michelle Hussain Show, our new Bloomberg podcast, which launches tomorrow. Don't miss that. This is Bloomberg.
of politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
Welcome back to the opening trade. Now, BYD's overseas sales have soared 130% in the first 9 months of the year, even as other Chinese car makers ramp up overseas production. With plants already in South America and in Europe, BYD is now growing its retail presence in South Africa, which is where Bloomberg's Jennifer Zabazaja is with one of the company's top executives. Jen?
Yeah, thanks, Val. I am standing by with Stella Lee, the Executive Vice President of BYD. And as you mentioned, of course, we know the company globally, but of course, the company is making quite a big push into the region and specifically South Africa. So let's get to her. Stella, it's great to meet you. Great to have you here in Johannesburg. Let's just start here because October, a very important month for BYD, as most months probably are, but you're trying to meet the sales target. We know that BYD recently revised down 2025 sales. Can you still maintain pricing power amid mounting competition that you're seeing domestically, but also internationally?
Yeah, BYD will continue to play a very strong position. Why? Because BYD is a technology company. So anytime you have a different solution, different competition, we always bring different strategy here. So we're going to play very strong in China. We're going to play super strong in overseas market.
Do you worry, though, about some of the competitors trying to take some of your market share?
No. You think about in the auto industry, nobody like BYD. We have 120,000 R&D engineers. Then we submit 45 patents per day. So BYD is not really just a car company. We are a technology company. Also, BYD not just have a car. We also have a battery storage. We have solar panel. We have everything. So BYD is a tech company.
Have regulations, though, made it a little bit difficult for you to maintain that strength?
Exactly, but it's fun because it always my first trip to here, then I suddenly found BYD can bring a lot of solution here. We can build up a solar panel flash charging station here. We put a solar panel on the top of a flash charger. Then we can power our electric car here.
Give us a sense of your long-term strategy across the continent.
So I think we will bring all the technology here, not just the car, but including the total solution. We're always talking about the 3 green dreams. I think here is the place we're going to realize, and then you're going to see the power of these 3 green dreams.
What would Africa and South Africa mean for the company? Get into some of the numbers if you can. What are the positioning that you're seeing long term?
Yeah, I think we are a little bit new to here, but this is a very important market because we feel this continent, especially also South Africa, need BYD technology to bring the solution, to bring also innovation here. Then they need a company like us to bring more valuable storage and solution here.
Do you plan to manufacture in South Africa?
We are in the initial stage for the double down and triple down on dealer networking and the building flash charging infrastructure here. So we don't have that plan yet.
What is your investment play, though, across the continent? How much are you willing to put in to make sure you're successful in this market?
Yeah, so one thing is BYD is a tech company, so we bring the electric car here. We also bring DMI super hybrid car here. This is all this technology is a game changer. So for example, our DMI, we call the DMI technology dual mode intelligent. It's a super hybrid. It means in the daily drive is rely on is a EV. So per charge you can get 50 or 200 kilometers.
Right.
And then once battery is empty, then it's become like a HEV. So but one charge, one tank of gasoline for our vehicle, we can run 1,500 kilometers, 2,000 kilometers. Nobody can do that.
How do you convince the markets that are used to internal combustion engines to buy into EVs, especially when you think about the price point?
This is the solution where I just mentioned, right? Then for BYD car, it's a more intelligent car. We don't need too much sales work, convincing work to customer. The only thing we need to bring customer to our dealer store and then let them do the test drive. Themselves will be convinced by BYD car. And also, when they drive, use for a while, you will see the a saving they have per month. Then this will make them convince them.
Do you think EVs could potentially be just as popular here as we see elsewhere?
If we don't invest on flash charger, then this will be challenged.
Right.
Because here we still is a big country here, and then still EV range and the infrastructure are the two big concerns. So that's the reason the big news for us in here is we're going to officially announce to invest flash charging infrastructure here in South Africa.
How much?
We're going to put maybe 200 to 300 before end of next year.
How much are you willing to put in though for that?
This is big money because each flash charging costs a lot of money. So this is a big investment as our step one.
Let's talk about other expansion plans. You haven't been in the U.S. at this point. Are you talking to the Trump administration at all, potentially, about moving there?
Well, we didn't have plan to into the U.S. market.
What about Europe? Let's talk about your play there. How do you mitigate some of the risks that the regulators are maybe putting on your company to expand?
I think we're doing very well in Europe, and also our facility in Hungary will start operation by end of this year. Then in Q1 next year, we will start to do ramp up to produce our car over there. So BYD already in the position turning ourselves to be local producer over there. So then BYD is doing very well, and then on dealer networking, on after-sales service, and the people just enjoy our car.
There's some reports that potentially Spain could be the next hub in Europe. Can you give any validity to those reports?
I don't really follow that. My big more follow is really satisfy our consumer, our customers needs, and then for a lot of politics, a lot of topic is for us is a short-term play, but the BYD is a long-term player. We need to focus on where original market. If we produce in Europe, we hire 10,000, 20,000 local job, then we'll become European manufacturer. We're part of this party. Yeah.
All right, we'll leave it there. Stella Lee, Executive Vice President of BYD, joining us here in Johannesburg. Guys, back to you.
Jen, great stuff. Thank you very much indeed. Fascinating interview. Another fascinating interview. 2 days in a row. Amazing. Jennifer Zabajanja joining us out of South Africa. Let's talk about what is happening in France right now. I am watching what is happening out of the corner of my eye in the National Assembly in France. We've had quite some interesting to and fro between Le Pen this morning and Le Cornu. We are expecting that ultimately we do see these no confidence votes failing today, and the government will continue. But for how long remains the open question here, and there's an awful lot of negatives that come with this in terms of pension reform and also windfall and wealth taxes. So it's not all great news this morning.
Yeah, if you delay the pension reform, it sounds like you're just delaying any progress on bringing in that wide deficit ratio that we know in France is the widest in the euro area at the moment.
Well, let's see when the bond market kicks in about that. But before we get there, you don't want to miss a key interview later on. We've got a conversation with the Fed's Christopher Waller. That's coming on Bloomberg Surveillance at 12:30 p.m. London time. He's also going to be sitting down with Tom Keene for an hour, no less. Good luck, Governor. That's it for the opening trade, though. The Pulse is coming up next. Stay with us. This is Bloomberg.
Middle East, and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Jumana Versace in Vienna, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
President Trump acknowledges America is in a long-term trade war with China. Treasury Secretary Scott Bessent warns Beijing of a coordinated response to its rare earth restrictions. The world's largest chip maker, TSMC, delivers stronger than expected earnings, a sign that global demand for AI infrastructure remains red hot. And Nestle plans to cut 16,000 jobs worldwide as a new chief executive of the Swiss food giant moves swiftly to accelerate a turnaround. Now, there is quite a lot going on. Happy Thursday, everyone. I know it's been feeling like it's been Friday since the beginning of the week. There's quite a lot also in terms of IMF. There's a lot of Fed talk, but stocks seem to be rising. There has been quite a lot of robust tech earnings. If you look at S&P futures, they're getting some 0.2%. Brent 62.67, and then gold just on a tear, 4,231. If you look at the European markets map, now there's quite a lot of European earnings, and they're really getting the cue from a lot of global stocks that are advancing. Again, it's the strong technology earnings that are shifting focus away from, I guess, this lingering threat of U.S.-China trade war. CAC 40 pretty much unchanged. We're seeing maybe a little bit of profit taking in other indices such as the FTSE and the DAX. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Our earnings season in full swing, from Wall Street banks to the world's biggest manufacturer of semiconductors. We discuss the equities and macro outlook in just a moment with our guests. But first, the White House has floated the potential for a longer-term truce in the trade war with China. Now, the U.S. Treasury Secretary Scott Bessent says a possibility of extending a pause of import duties on Chinese goods for longer than 3 months does exist, but only if China halts its plan for strict new export controls on rare earth elements.
Right now, we are currently in a 90-day roll on the tariffs. So is it possible that we could go to a longer roll in return for a delay? Perhaps, but all that's going to be negotiated in the coming weeks.
Let's get more with Ross Matheson, our chief Asia correspondent. So, Ross, where do we actually go from here? It's unclear if this escalates a little bit or it just stays as it is, but for a very long time.
Well, what we've had, of course, is a rolling series of extensions of a trade truce, and what Scott Bessent is floating is you could make that longer, but China would have to retract some of its rare earth moves. The most recent one was that if you export pretty much anything, even with the trace element of rare earths, you've got to get permission. And maybe China walks that back and they get a longer truce out of it. But really, rare earths are the ultimate leverage for China. This is their big bargaining chip. Would you be willing to do that just to get a longer extension of a trade truce, or do you want something more fundamental? And do you want something more fundamental, particularly out of a meeting between Xi Jinping and Donald Trump? Are you going to give everything away on rare earths just to get this truce rolled over for a bit longer? I mean, maybe they can walk some of it back, but it's also worth noting that China has made lots of promises on rare earths and said they're going to open the spigot and then not really followed through. And so maybe they can promise stuff and see if they can just push that further down the line. But, you know, Scott Bessent was saying the main thing here is like when the two leaders, or if the two leaders sit down, that's when you're probably going to get that proper negotiation happen.
Is it likely, actually, that the two leaders sit down?
Well, Bessent seems to say so, and so do other US officials. And they're saying despite all of these tit-for-tat actions and all the rhetoric between the two countries, which is ratcheting up, you know, that there is a line of communication open. There are still meetings going on between US and China officials. Scott Bessent says that he's going to meet the Vice President, He Lifeng, before the end of the month, perhaps before this meeting. As far as he knows, the meeting is on. You know, does it come down to the last minute whether Xi Jinping and Donald Trump decide it's in their interest to have the meeting? Will they get something out of it? That will be the ultimate question. But it seems as though, you know, despite all of this noise and actions, they are still talking to each other.
Okay, which is always a good thing. I mean, there's just a lot going on. There's also earnings. We're in full swing. We've had a lot of U.S. banks reporting. The other main focus, AI-related stocks. Yesterday, ASML added to optimism that artificial intelligence boom can still power corporate earnings. And today, Taiwan Semiconductor Manufacturing also hiked its projection for 2025 revenue growth to the mid-30 range. Again, a strong signal of confidence in demand for components like the NVIDIA chips that power AI. On the flip side, a company like Pernod Ricard faced extra tariffs around the world. It reported worse than expected sales on a sharp slump in demand in China, but also clearing out of excess in the U.S. And then the other big story, Nestle, cutting 16,000 jobs as a new chief executive officer seeks to accelerate the turnaround. So to talk markets, let's also bring in Simon Kennedy, our senior executive editor for macro markets. Simon, we're just talking about U.S.-China. I mean, I guess the market is focusing so much on earnings, maybe they're not fully pricing in what's happening in this trade war.
Yeah, I think there's three things going on. You've got these earnings, and you've got the bank earnings earlier in the week, which were pretty robust. So you've got the bank earnings and technology earnings, all pointing in a good direction for equities. Secondly, you've got this AI boom. Is it a bubble? That's perhaps a longer answer on a different day, but you've got this AI boom. So you've got those two things that are exciting the markets. And then you've got the China issue, the tit for tat, the kind of the headlines. It's one step forward, two steps back. And so the market's kind of assuming that at some point the China-US trade deal will be made and that they'll all move on, and the whole idea that the president speaks robustly and then pulls back a little. You've seen that a few times in recent days. So they're able to kind of put the Chinese situation aside a little because they're so excited about the earnings, they're so excited about AI.
So is it also fair to say that they're kind of that markets are brushing off any concerns about tariffs, or they've moved on from the tariff concerns to fully focus on the Fed?
I don't think they've moved on from the tariff concerns. They know they're there. They're certainly seeing them in on their screens with all the different headlines, first from the White House and then from Beijing. So they're alert to it, but they're also thinking they don't quite know the full story yet, and they think, given past performance, that there'll be some kind of concessions at some point, and we'll get this Trump-Xi meeting, and other pullbacks will occur, as indeed the Treasury Secretary was talking about last night, in speculating about the opportunities for long-term truce. And yes, obviously you've got the Fed. We're reporting today there's some people in options markets starting to price in a supersized Fed cut in at some point this year, which would probably require some economic data, which clearly we don't have, but also you'd then be pivoting into recession concerns. But yeah, the feeling now is that Jay Powell certainly didn't changed those feelings the other day that more cuts are coming in the next few weeks, and that'll be another fill-up to this bull run.
I mean, data we don't have because of the government shutdown, which is talked about a lot less. But Ross, there's been quite a lot, going on with President Trump. I don't know whether the perception of the U.S. has changed globally also because of what he's achieved for Gaza.
Well, it's interesting because, of course, he's touting himself as the president for peace, and he really did, arguably push a ceasefire in Gaza. There'd been months and months and months of negotiations that were struggling to get a deal, and it arguably was Donald Trump that helped facilitate it and get it over the line. Does it hold is another question entirely. What are the longer-term challenges for Gaza? Another question entirely. We're going to get into some very tricky territory about governance and so on and the future rule of Gaza. And tensions in the Middle East haven't just magically dissipated completely because we have this deal. There's still big questions around Iran, but Donald Trump can say, well, I helped facilitate that, and arguably other ceasefires around the world, Thailand, Cambodia, in Asia, we've got Pakistan and Afghanistan now taking pot shots at each other. So you've got that aspect of it, but you've also got a US that has pulled back from the kind of a values-led, behaviour globally, cuts to USAID, cuts to organisations around the world, including those that are pushing for peace and for freedom of the press. And so you've got these dueling aspects of a very transactional presidency. Again, what is Donald Trump doing is not just necessarily what he sees as good for the world, but good for the US.
Also joining us, thank you, Ross. Also joining us is Jimmy Muchachetre, a senior equity analyst at Investec. Jimmy, welcome to the program. We were just talking a little bit about, the U.S. stock market and stock markets in general, U.S.-China, and actually, I guess, this renewed clout for the Trump administration. We have a lot of earnings. The market, is it frothy? I mean, they have good earnings, but are a lot of stocks priced to perfection?
There are certainly pockets where things are quite frothy. One interesting stat I came across this morning was that the median S&P 500 stock is 13% below its 52-week highs, and 1/3 of S&P 500 stocks are 20% lower than their 52-week highs.
So expensive.
So there's a bifurcation. They've got the really, really expensive stocks, anything AI, nuclear, power related, and then everything else.
So where do you see, I don't know whether you're looking at earnings season or you're, looking at what we were talking about, U.S.-China, to see where you put your money and the best investment opportunities?
Yeah, 100%. For us, it is earnings season. We are in hyperdrive right now. As we have seen, the companies that have reported so far, the financials, they've done really well. They've traveled really well into the earnings season, and they have delivered. And that's, I think, where we think things will continue. So if the AI stocks continue to deliver, whether it's earnings growth, free cash flow growth, some semblance of returns on AI investments, then we think those will continue to work.
But Jimmy, I'll ask Simon in a second to have a roundup of the U.S. economy. But if you look at AI, the big question is, are we in a bubble? Because when you invest a lot in AI, if you don't get that return, then maybe these valuations don't make that much sense.
100%. We think there are pockets of frothiness, particularly in some of the neo-clouds, some of the private debt deals that we're seeing, some of the power stocks that I've mentioned, the nuclear stocks. But in terms of the hyperscalers themselves, we don't think we're in a bubble. We think we're in the early stages. So if you look at the average cost of a gigawatt is something like $50 billion, and we expect a cadence of 20 gigawatts per year for the next few years, really. That's $1 trillion capex that's being used. That can easily be covered by the operating cash flow of the big hyperscalers, the co-locators, as well as the sovereign AI. But that's not to say that there aren't pockets where we think there's a bit of frothiness.
I mean, I want to ask you about U.S. corporates specifically, but how difficult, Simon, is it to read the U.S. economy right now, given we are lacking data?
Well, yeah, we're flying blind. We've got the private sector data, obviously, but we've not got the government data. And when we do get the government data, it's all going to land quite quickly, and so the markets are going to spend. There's been a low volatility period, certainly in bonds, and suddenly you get all this data, and you're trying to work out very quickly what it means. And as Jerome Powell has talked about, it's a kind of no hire, no fire kind of labour market. And if one of those changes, we suddenly get firings, then it's going to be off to the races for the Fed and the recession concerns, which have been dormant for most of this year. You wouldn't have maybe predicted that this time last year. The recession fear of last year has kind of gone aside, which is great, but also kind of sets up for the fall at some point.
Jimmy, what's your take on U.S. stocks specifically?
No, we agree 100%. I think as long as they continue to deliver, which is what we are saying, we think they'll continue to perform. And, right now, we've got an environment where there's more liquidity, there's less regulation. Yes, there's political noise, particularly with the government shutdown. But, once that's out of the way, we are going to get legislation going through. We're going to get Clarity Act, for example, following on from the other stablecoin X that we're seeing. We're getting more deals and IPOs in the market. I cover healthcare. We're starting to see that going on. The financials have reported. Goldman Sachs had, the highest ever investment deal revenue they've ever had in their history. So did JP Morgan. We're starting to see, a lot of financial activity happening. So, the brakes are still on. But to his point, as soon as those are released, we think the U.S. market will continue to.
But I think, and correct me if I'm wrong, but a lot of the M&A or IPO activities in specific sectors. Yes. It feels like there are specific sectors that are just powering ahead and the rest is kind of lingering.
Yes, 100%. So you look at biotech, for example. In 2023, we had 140 deals, including IPOs. So far, we've had 10. So, there's a lot of pent-up demand. There's a lot of money waiting in the wings. The big pharma companies need to infill their pipelines, and there's a lot of very solid technology that's sitting in the wings. And so what we just need is, for the regulators to stand out of the way, and then, this money will come into the market.
Do you see value in Europe? I know there's many question
100%.
marks on the competitiveness of European companies.
Yeah, 100%. I mean, we were looking at companies like LSEG, companies like RELX, SAP. They really lagged their US peers, and, we continue to see them as winners pre and post AI, and we think there is a lot of value sitting there. Yeah, I mean the defense companies are slightly different.
The defense company. Why do you think they're different?
Well, the valuations have run up, and there are questions emerging as to the sustainability of Euro defense spending. Yeah. You were seeing a lot of turmoil in France, for example. There are challenges here which are going to be aired out when the UK budget comes in a few weeks' time. So, is that defense spending really sustainable? There are question marks, and a lot of the European stocks have already moved to price that in.
And I guess because of national pride, it's very difficult to see that sector also consolidate, which it probably needs it in Europe.
Yes, 100%. Yeah, I mean, in the past, valuations used to be much cheaper than the U.S. defense primes, but now that gap is closed. In fact, Europeans are actually trading at a slight premium to the U.S. defense primes. So, yeah, deals will be hard to get in the Europe.
Question marks. Thank you all for joining us. Jimmy Muchachetra there, Senior Equity Analyst at Investec, and Bloomberg's Simon Kennedy and Ross Matheson. Now, coming up, the world's biggest chip maker, TSMC, reports better than expected earnings, underscoring robust spending on AI infrastructure. We'll discuss that next, and this is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders.
It's the conversation around your company.
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
What is going to be the consequence for U.S. markets?
we are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets. Welcome back, everyone. Now, TSMC has raised its revenue growth outlook after posting better than expected quarterly earnings. Now, the results underscore how TSMC, the go-to chip maker for Apple and most of the world's largest chip designers, remains one of the biggest beneficiaries of a spending spree on AI infrastructure. Now, OpenAI, the world's most valuable startup, has already struck deals for data centers and chips that top $1 trillion. Well, we're joined by Matt Bloxham, senior technology analyst from Bloomberg Intelligence, and Parmi Olson, who covers tech for Bloomberg Opinion. So thank you both for joining us. Matt, let's start with you just on the earnings. I mean, TSMC today, like ASML yesterday, it feels like we talk about valuations, but they can't do any wrong for now.
Yeah, that's right. We're still very much in that kind of growth surge, and there's a huge amount of investment going into AI, and these guys are the primary beneficiaries of that. You know, TSMC is by far and away the most advanced manufacturer of chips, and so in huge demand from the likes of NVIDIA and Apple. And I think, you know, today probably actually because they reported the revenue number for Q3 last week, so maybe not so much of a surprise that we saw that revenue guidance upgrade. Yeah. And I think analysts have got a little bit of a way to go to get there, but not much. I think the more encouraging thing today margin, so they're essentially getting more efficient at the chips that they're producing.
Pardon me, what can you tell us? I mean, I know you spend quite a lot of time, to try and think exactly what AI will become and how they make money out of it. So we heard from Ken Griffin. I mean, there's been so much spending in AI. When are we actually going to see some returns? Is that one of the big overarching questions that we should really be asking ourselves?
Well, it was interesting. Ken Griffin's points are really about how banks are using AI, and I think that's where it's still a little bit of a gray area, and there's a lot of caution in that industry, of course, because these models still hallucinate, they make mistakes. But there's other industries where we're seeing huge changes in the legal field, in marketing, customer service. It's massively being used, and we're seeing a huge decline in job openings for graduates. There was just a stat I saw yesterday from Reed, which is the recruitment company here in the UK, and they were saying that graduate jobs had fallen by 2/3 in just openings in the last 3 years, from like 180,000 to 50,000 last year. You can attribute that to lots of things: the economy, hiring freezes, the hike in national insurance here in the UK. But there is a real tendency when companies use AI to use it for the tasks that the entry-level workers use. And I think that's a little bit of a sign. And the other thing, of course, is that consumers are absolutely embracing this technology. ChatGPT has 800 million weekly users. That's like 10% of the global population. It's probably going to hit 1 billion by the end of this year. Where things are slow and kind of fraught is in business, which, of course, where all the money's going to be for OpenAI. But I think that's just going to take years to come through, if it does eventually. Even that is not kind of guaranteed.
So, I mean, and this is actually that goes back to valuations, but we're also hearing, for example, from TSMC and others that the spending is definitely there and increasing.
It is there, but as I say, it's kind of being spent by the likes of OpenAI, and in this slightly circular way to kind of build the capacity for demand that maybe is evolving, but isn't fully there yet. And I guess the big missing piece for a lot of people is what's the actual revenue model attached to this. You know, OpenAI doesn't really have a revenue model. Google doesn't really have much of a revenue model either. And I think obviously maybe it's all going to come back to advertising again. But if ChatGPT needs to make a return on this huge investment, up to $1 trillion of investment from advertising, that's going to be a massive disruption to the existing digital advertising ecosystem.
Parm, you have a really interesting piece that I have to say caught me by surprise, because it's not something that people write or have figured out. But you basically say that, ChatGPT has engaged in erotica, right, with verified adult users. And that's actually, is it a way to make money, or is this a business model?
Oh, 100% it's a way to make money. Just as you were saying, they're probably going to have to resort to advertising to monetize these 800 million users they've got, because most of those people don't pay for ChatGPT. So it's not just the erotic content that's coming in December. It's also this new app called Sora, which is like TikTok. That's a perfect place to put ads. And OpenAI has hired executives who have real experience in creating ad businesses. So all the signs point to that being directionally where they're going to go. And the erotic content thing, which I think feels a little bit distasteful, but it's a very lucrative business. Chatbot companies that take that away, that put restrictions in, lose millions of users. We saw that with Replica, with Character AI. And I think what OpenAI is hoping is that if they add that, they're going to get more subscriptions and they'll just get many, many more users.
And again, the numbers, I mean, you were, in your piece that I think everyone should read, it says roughly 30% of prompts typed into some of these AI assistants are of a romantic or sexual nature.
It's that stat blew me away when I heard that, and that I heard that from a company who has been in this field. It's the longest sort of reigning chatbot company called Pandora Bots, based in San Francisco, and that's just what they've seen across the board from speaking to companies and investors and founders, that 30% of the inputs into these general-purpose chatbots are sexual or romantic in nature. It's just some sort of base human instinct, I suppose you could say. But what I kind of find fascinating about all this is that we talk about the transformative effect of AI on business, how it's going to uplift civilization. But right now what we're seeing is this effort to kind of capitalize on these basest, these human instincts and make money from it.
So I mean, there's definitely a mismatch, right? And again, it goes back to kind of when do you capitalize on some of the investments? Mm-hmm. I mean, is there, when you look at different business models, what are companies saying?
I mean, obviously, companies, it's a kind of more straightforward kind of monetization. If you're a big corporate and you're kind of calling APIs into large language models, you're being charged for it, and you can afford to pay for it, and you're at least looking to try and create a return on investment, whether it's kind of by fewer graduate jobs or other efficiencies. But that's a much more complex value chain. You're not going straight to OpenAI. You've kind of got Microsoft or another service provider in there. There's Oracle sitting there somewhere in this. So it's a very complex value chain, and everybody's taking a bit of that money. And I guess one of the pressures maybe for someone like OpenAI is that although a lot of their investment has come from venture capital firms and people that have got kind of patient capital, they are now actually having to turn to less patient capital, kind of more traditional debt. They want their money back. You have to pay interest on it, and so that's maybe where some of the pressure's coming to actually kind of accelerate some of these kind of revenue generating opportunities. I'm sure Sam Altman doesn't want ChatGPT to kind of be synonymous with erotica, but kind of filling this gap before it becomes this kind of grander thing that they hope it to be mid to long term.
And pardon me, I mean, you were part of like a team of three that put together these three big questions that we should be asking ourselves. And it's, can Europe fix its investing problem? Will AI's U.S. copyright war be its undoing? And will China's AI dragons eat each other alive? Like, after, if you look at these three questions, what's the hardest one to answer?
Well, the one that I thought was hard to answer and that I cared about was, why isn't Europe making money from its incredible tech and scientific innovation? I mean, this is a region where we had the World Wide Web was invented here. Alan Turing, the father of artificial intelligence and computer science, was here. DNA sequencing happened. The struggle in this country and in Europe widely is commercializing that at scale. And sometimes that's cultural. Tim Berners-Lee chose to give away access to the World Wide Web and not monetize it. That was his decision. But I think a big part is we're just not getting the spending, the large-scale spending that we need for startups here in Europe. And what you hear in the public discourse is it's regulation. Let's blame the tight regulation from the European Commission, from the CMA here in the UK. That's what's holding everybody back. I think that's a huge red herring. I don't think that's actually what's holding back the environment here. I'll give you an example. Last year, a fantastic UK startup called Wave tried to raise $1 billion, couldn't raise any of it locally, had to go to the US for it.
There you have it. Thank you both. Matt Bloxham there from Bloomberg Intelligence, Bloomberg opinion columnist Parmi Olsen, also author of one of my favorite books, Supremacy, AI, ChatGPT, and the Race That Will Change the World. This is Bloomberg.
Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning, everyone, and welcome back to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. President Trump acknowledges America is in a long-term trade war with China. Treasury Secretary Scott Bessent warns Beijing of a coordinated response to rare earth restrictions. Now, the world's largest chip maker, TSMC, delivers stronger than expected earnings, a sign that global demand for AI infrastructure remains red hot. And Nestle plans to cut 16,000 jobs worldwide as a new chief executive of the Swiss food giant moves swiftly to accelerate a turnaround. Now, Wall Street's biggest banks are taking advantage of rising stock underwriting after a powerful equity rally reignited the IPO market, fueling double-digit percentage gains in advisory revenue. So joining us now is Jenny Serrain, our finance editor. Jenny has been all over the U.S., of course, earnings. It's been a big couple of days. Stock trading, Jenny, was the real standout performer this quarter. What's driving these huge gains?
Yeah, I think it's a couple of different things. So obviously you still have a lot of volatility around the trade war that you were just talking about. You've got clients looking to really get in on this action, and so the banks are taking advantage of that. A lot of them are also pointing to their prime brokerage units. So you see hedge funds and other big asset managers really looking to kind of take advantage, get bigger in this environment. And so this was kind of a boon all around for these revenues. We did hear, though, from the folks over at Morgan Stanley, that was something that could be a risk. If you start to see equity prices come down, then that sort of impacts the prime brokerage unit. So it wasn't all good news on the stock trading front in terms of the outlook, but for the most part, these banks are really excited about this business and, gearing up for what's more ahead.
What can you tell us about AI, what Chief Executive said, how they're using AI in their business? And I think one of our most read stories is Ken Griffin on Gen AI.
Yeah, no, it was interesting because that was definitely the big, the talk of the town on all these earnings calls this week. So even though we haven't quite seen AI impact these banks on a headcount front quite yet, it seemed like they were all preparing for that in the future. So you heard them talking a lot about how this technology is transforming the way they work. They're getting a lot of the efficiencies out of it. It's going to help them on the cost front later down the line. And so while headcount was largely stable across the industry, we do think that that's something that we'll probably see more of to come.
Yeah, and then Jamie Dimon, of course, never disappoints. If you look at the blow-ups in the credit market, they've definitely then sparked this war of words between, banks and private credit on who's better positioned to basically deal with this downturn, possible downturn.
Yeah, it was interesting because it was such a an unusual quarter where provisions and just credit costs overall still look really pristine. So we obviously had this 2 high-profile bankruptcies over in the U.S. of First Brands and Tricolor, but still, for the most part, these banks are managing okay. And so that's why I think you see these comments like the ones that Jamie Dimon made about, we're worried that there's other cockroaches to come. I think they really take off because it's just such a hard environment to make sense of, where you have these headline-grabbing instances, and yet at the same time, the earnings are still so stable. And so I think everybody's just kind of waiting for that next shoe to drop.
Yeah, it's so difficult. I mean, as soon as you have a blow up, you kind of think, is it a real blow? Is it a canary in the coal mine? Is it something that can actually, all sorts of animal analogies, or is it just something like 1 or 2 and done?
Yeah, no, I think that's exactly right. And it's the provision numbers that we're seeing are still showing that things are broadly stable. Corporates are keeping up. Consumers are charging ahead. But definitely everyone's just worried and waiting. So.
Jenny, thank you so much. Jenny and her team really, really working hard this week. Our finance editor, Jennifer Serrain. Now, from Wall Street earnings to the changing nature of investment management and how some of the top players are advising clients during these times of macro volatility. Well, joining us now is Brian Lake, Global Head of Third-Party Wealth at Goldman Sachs Asset Management. Brian, you win the title of the week. Oh. And this is something that we wanted to chat about. First of all, thank you for coming on. But third-party wealth is basically the idea that you package up some of the products that clients want.
Yeah, so we sit within the Goldman Sachs Asset Management, so it's the asset management arm of the broader bank, Goldman Sachs, and we have our own investment capabilities, and we deliver those to investors around the world. In the third-party wealth business, me and my co-head focus on clients that are like private banks or deal with individuals that have wealth there. And so those are the clients that we're serving.
And our clients are asking for different products. So it used to be stocks and bonds, maybe 60-40, then you had a couple of the quirky stuff. Maybe you mentioned the CDSs, but actually the nature of finance is really changing.
Yeah, absolutely. I think not only is the nature changing, but we're at this inflection point where how investors are getting exposure to the market is changing as well. So yes, of course, stocks and bonds on the public side, and increasingly investors are looking to get that exposure through the ETF wrapper. It's been really well talked about, and I think investors are understanding how they can deliver great outcomes for their clients using the benefit-rich ETF wrapper. So we know it trades throughout the day, it's transparent, it tends to be lower cost. But what we're really seeing is the interesting part right now is you can take active management and deliver that into the ETF wrapper. So you're getting the benefits of the ETF wrapper plus active management.
So how does that change the nature actually of risk appetite across your clients' profiles?
Yeah, so I mean, a lot of clients right now are watching these markets. It's obviously an AI kind of led market, but what they're also seeing is that some of these individual tech names are becoming bigger parts of the benchmark. And so when you're thinking about using active management, where you have either a quantitative approach or a fundamental approach to think about how you're weighting those companies within the portfolio, that can really be a differentiator. And so if you think that these tech names have become a too big a part of the benchmark, maybe active management can help you manage that risk in a slightly different way, where you can still get exposure to names that have great potential going forward, but you're not overexposed to 1 or 2 different names.
I mean, Ken Griffin just said it very plainly, like, Gen AI at the moment is not delivering alpha.
Yeah.
Does that change some of the, the products that clients will want once we get to that point, or are we assuming that in certain parts of the market is already happening?
Well, I think anybody that's interacted with AI can see the potential.
Yeah.
And so I think we're at this moment where the potential is there, but how it pulls through the system and impacts things in a very material way is still being worked out. Where we've had success implementing AI within Goldman is on very specific use cases where you can do targeted things with somebody that owns that within the system, and it actually is having significant unlock to our platform. So we're really excited about that, and we are seeing AI actually have an impact on what we're doing.
Talk to me about private markets.
Yeah, perfect.
I mean, that's changing. It's changing everything.
Exactly. Yeah. So if you step back for a second and think about Goldman Sachs Asset Management, we're actually the 8th largest asset manager in the world. We announced earnings earlier this week. We have $3.4 trillion in assets under management. We're a top 5 public active manager, so public, stocks and bonds, to your point earlier. Yeah. We're also a top 5 private manager, so private equity, private credit, infrastructure, real estate. these are all different alternative or private investments that can play a big part in investors' portfolios. So, maybe you use private equity to enhance returns.
Yep.
Maybe you use private credit to enhance yield. Maybe real estate or infrastructure as a diversification or a yield play. And so similar to the ETF story being a how do I get exposure to these and what's the way that I access that, you're seeing that happen in the alternative space as well with more evergreen products.
Do you have any concerns in certain types of actually private credit tools that are being used? I mean, there's, we go back to the risk appetite, it's some of these valuations. Again, if there's something that blowing up, what's the repercussion of that?
Yeah, well, of course, we encourage everybody to make sure that they're doing their due diligence and understanding what it is that they're investing in. I know that we've been talking about, the industry's been talking about private credit a lot more over the last couple of years. Yeah. Goldman's been in the business for 30 years. And so we have a long track record of thinking about this. And so we're really focused on making sure we have good underwriting and making sure we're focused in the right sectors. And so how we construct this portfolio, we're incredibly intentional about doing that. And so, of course, do your due diligence. But on our side, that's something that we're extremely focused on when we're thinking about the management of these portfolios.
So what sectors do you focus on, given also everything that's being thrown at a lot of corporates? This could be U.S. trade. Yeah. It could be, China's structural fundamentals changing.
Well, I think the way that I would answer that question is that we try to stay away from the overly cyclical sectors, right? Like we want durable sectors that we think can navigate through this. And then I think on that point, it's more on the credit by credit issue, the different companies that we like within the portfolio. And so the team does an excellent job of thinking through what they're doing there.
Brian, at what point will some of the offerings on private credit or private markets become bigger than the public ones?
I don't know that it'll become bigger. I think what we're seeing is this convergence. And so when I think about being an investor and sitting in my portfolio, I think about all the options that I have on the public side and all the options that I have on the private side. And depending on the market environment that we're in, I may want to use one of on the private side. I might increase that allocation, or I might want to be on the public side. And I think that what we'll see is that that'll ebb and flow as the markets give us different environments.
I mean, Europeans traditionally, because of regulation, have just been more, I don't know whether you'd describe it as more hesitant or not as enthusiastic as, for example, American investors, be it institutional or retail. Is that still the case?
I don't know. I think what investors are looking at is they're always thinking about the risk-reward profile, right? And so when I'm having conversations, particularly on the active ETF side, for example, Europe's having a record year in the adoption of active ETFs within their portfolio. So I think that adoption's actually happening at a faster rate here in Europe than it is in the U.S. It's bigger in the U.S. It's been going for a little bit longer time.
Because of the tax breaks?
Well, the tax efficiency is one of the benefits, but the intraday trading, and not everybody's a day trader, but everybody's a risk manager. And so in this day and age where real time, the numbers are scrolling at the bottom of the screen and news is breaking, it's important for investors to know what's going on in their portfolio. And so the nature of an ETF giving you real-time pricing throughout the day, allowing you to manage that risk on a real-time basis is one of the big benefits of ETFs. So in the U.S., there is some tax advantages to that. But when I talk to investors here in Europe, and we've been traveling across the region, I was in Italy earlier, Berlin yesterday, and we're on to France tomorrow, they really like that intraday trading where they can watch what's happening and manage that risk real time. They also like the transparency. I know exactly what I own. I can go on Goldman Sachs' website, see every single one of the holdings on both the equity and the fixed income side. That gives them a great deal of understanding of what's happening in their portfolio.
Sophisticated investors. Brian, thank you so much for joining us. Brian Lake there, a global co-head of third-party wealth at Goldman Sachs Asset Management. Now, on to other corporate news, and Swiss food maker Nestlé has announced plans to axe 16,000 jobs, 6% of the workforce over the next 2 years, as a new CEO seeks to fast-track a turnaround. We're also joined by Jennifer Creary, our global business reporter. Jennifer, thank you for joining us. I mean, 16,000 is a big amount, but also means that the CEO is moving fast.
Yeah, exactly. So this is all part of the ambitious cost-saving program, which actually today Nestlé raised its cost savings up from 2.5 billion Swiss francs to 3 billion Swiss francs. And 16,000 jobs, that's 6% of the overall workforce. Nestlé said that it's going to spread this out over 2 years, concentrated in white-collar jobs. So certainly the new CEO is moving fast, bearing in mind he only took the helm last month. So a lot of these moves arguably were made under his predecessor. But certainly he's looking to carry that forward. If you look at the share price reaction this morning, investors are pretty happy.
Yeah, I mean, the results weren't great, right? It's been like that for a couple of quarters, which is also, you know, one of the concerns that a lot of these big consumer groups have.
Yeah, exactly. So, I mean, Nestle is in turnaround mode. I think one quote from the new CEO that really encapsulates this is, you know, the world is changing and Nestle needs to change faster. So its third quarter results actually beat analyst estimates. There was no change to outlook. Certainly, you know, Nestle has a lot of challenges on the horizon. So they've got the potential sale of their vitamin business, finding a potential partner for its bottled water business. So there's a lot of challenges that the new CEO has to tackle, and it's really just the start.
Jennifer, thank you so much. Jennifer Creery, our global business reporter. Coming up, the latest insight into diversity in the boardroom. We discuss all of this with Miranda Braun, author of a new report from the Braun Review. This is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Bersetchi. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Earnings season is here.
European earnings in focus. We'll break down the results.
Bloomberg is first to break the numbers.
And we bring you some earnings that are coming through a Nordea Bank.
LVMH reporting a surprising return.
And BP.
The earnings story, I think, is really fascinating.
There's just so much news.
With the smartest insights.
It has been a record half-year result. We are committed to capital return. We were even able to increase our outlook. It's very good news, I think, for our shareholders.
Continuing coverage on Bloomberg.
Now, the conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacroix here in London. Now, as earnings season gets underway, corporate board members will be reviewing their company's performances and deciding what they do next. My next guest argues that in order for boardrooms to make the best decisions possible, corporate board members need to represent a wide range of views and backgrounds. Now, the Braun Review report published today provides 50 recommendations to help organizations to become more inclusive and sustainable. Joining us now is Miranda Braun, the author of the report and founder of the Braun Review and Miranda Braun Diversity Leadership Foundation. Miranda, first of all, congratulations. The report is out. I know you and the team have been working really hard on it. Yeah. So what exactly have you seen?
Yeah, so in terms of the findings, there has been, so I came on at the start of the year when we were talking about this back in January 2025. And so we were talking about the potential backlash. There has been a backlash. There has been a decline when it comes to sustainability, diversity, inclusion within the boardroom and across organizations. But there has also been a rebranding, and that's one of the findings that we found. And the report also covers not just the corporate boardroom, but all different boardrooms. So we're covering lots of different sectors, from the listed to the private to the public to the third sectors. And so it's really a case of lots of organizations are rebranding. So rather than they call it diversity, equity, and inclusion, they are calling it people, culture, talent. So the work is still happening behind the scenes, and I hope I'm not revealing any secrets here, but there is work still happening, but it is definitely happening at a slower pace. Okay. And even with the...
And does this depend on industries, Miranda, or is it just across the board?
It's across the board, but I think particularly within the corporate industry, that has definitely slowed. But with all of the global organisations that have contributed, and we've had over 1,000 board members around the world who have contributed on lots of different organisations. And so the feedback is that they do want to support sustainability and inclusion and diversity. They know there's more that we need to do. When we look at the statistics, 78% of the contributors within the boardroom have said that they know more needs to be done. 86% are not sure on the next step. So the Braun Review provides you with 50 recommendations. But what makes us different than any other review out there is that we're not just focusing on gender or race or social mobility, but we cover all of the diversity strands. So we've got age in there.
Ryan, can I just go back to a point where you say people feel like they need to do better? I mean, there's a lot. We cover it on the show every day. It's U.S.-China. It's, a lot of U.K. politics, actually, some of the NICs going up. Is it because people are overwhelmed, or what is the reason why they feel like they need to do better because they're not doing it now? Like, if you feel like you need better, you should just do it.
Yeah. I think it's a combination. So we've got various regulations, legislations coming from the US, and I think that's having a ripple effect within the UK organisations, especially the global organisations that might have their headquarters in the US. So you've got that aspect. But even before that, we still were not on point. So there's a lot more that we need to do. We are behind, and my charity, the Miranda Braun Diversity Leadership Foundation, we're 10 years old today. And yes, there has been progress. And I think we really need to be encouraged to know that there has been progress over the years, but there's a lot more that needs to be done. And so with the recommendations within the Braun Review, this really does highlight across all the different diversity strands, all the different sectors, in terms of what organisations can be doing to take the next steps to actually make that change so that we can have progress at a faster pace.
Miranda, I want to talk about the recommendations in just a second, but let's also quickly just go to France because there's a lot going on. Alan Katz, our bureau chief, is looking at Parliament right now to try and figure out whether the French Prime Minister once again stays on, whether he can or cannot. Lawmakers voting on 2 no-confidence motions against Sébastien Lecornu after flagging plans to suspend controversial pension reform. So Alan Katz, our Paris bureau chief, is watching the conversation right now. What do we know, Alan, and actually what do you think happens next?
So the discussion is actually sort of wrapping up at the moment, and parliamentarians are about to go out to vote. So it's been 2 hours of discussions, some angry words from both the far left, the France Unbowed Party, and from Marine Le Pen early on. And from Éric Ciotti, also an ally of Marine Le Pen, I guess some more stabilizing words from the government supporters. And the socialists who said they will not vote for the censure today or vote to oust the government today, but that in no way prevents them from doing so down the road should they come to real disagreements with the government. So the way it looks at the moment is still the way that we have it in our story, which is that it looks like the Prime Minister, Sébastien Lecornu, is set to survive this vote. There are a few socialists who are probably going to disobey party recommendations and vote in this no-confidence motion anyway, but it shouldn't be enough to actually push him out. That's at least the way it looks at the moment.
Alan, I mean, how big is this tax debate in France? I know we also heard from people close to Bernard Arnault about the wealth tax.
It's really big. I mean, that's fundamentally, it's really what's going on here right now is the question of how does France pay for basically many of its social services, including retirement, and who pays for it. And so the question is, how much of it comes from regular French people, how much of it comes from the very wealthy like Bernard Arnault. It really is sort of it's a crux issue in France right now and becoming ever more so, and it's going to be the issue around which the debate over the budget, should Le Cornu survive, that debate turns.
Alan, thanks so much. Alan Katz, Sarah Paris Bureau Chief, of course, with that debate in Parliament. Now let's go back to Miranda Braun from the Braun Review. I love it, Miranda. We talked about why there's a problem, and now you can give me the solutions.
Yes.
So what I love about your report is that you basically say, look, these are the 50 things that you should be thinking about that would make a real difference.
Yes. Definitely. So some of those recommendations include actually having an age-diverse board. It provides better strategic decisions in terms of the decision-making. They also, and this is a controversial point within the recommendations, but then the majority of the contributors have said have board champions, but in particular a menopause board champion. So that's a really interesting, going through that journey with the findings. But it's having a board champion across all the different diversity strands. So not just menopause, women's health, but also disability, LGBTQ+, and so on. But there's also, when we're looking at sustainability, one of the other recommendations is to actually redefine it. So I think when people think about sustainability and ESG, the environment, the social and the governance, they think about the environment. And it's really important to define that. So you've got the social and the financial aspect as well. But then there was also, one of the findings was that if you have a more inclusive board, 10 times more innovative and productive in terms of the boardroom and the organisation. So it's really important to focus on these aspects. But Lord Davis, he was the founder of the Davis Review that started all of these reviews back in 2010. And this was a UK government-backed research to help increase gender diversity by 25% within the FTSE 100 companies. He's backing this report and all of the next steps. And his feedback within this is we've really got to look at the headhunters, because what he found was that the board recruiters, they were showing the same names and the same faces. And so what he did, he went beyond that and he located himself his own diverse board member. We've got Baroness Doreen Lawrence, who has also recommended that there needs to be more focus on race within the boardroom and having those difficult conversations. We've got Dame Fiona Woolf, who's the former Lord Mayor of London, who also said, you need different people for new ideas.
But we've been talking about this for a long time, right? Yes. And if you take the 50 points of recommendation, and I think people are reading it and will hopefully change something.
Yes.
But actually, is there any low-hanging fruit that they can do to make a meaningful impact, and then get on with maybe things that they see as more immediate crises?
Yes. The very first thing would be, and we have a lot of male listeners on here, it's that male advocacy. So it's having that male allyship. And there's a big focus on mentorship, but the report also highlights that there's an importance for sponsorship. So having someone within the room, but also coaching. How I got into the corporate boardroom was talking to my male allies who actually put my name in these rooms, and I went for the interview and I got the corporate board role. So I think it's really important to have that. And this is something that everyone can start right now today.
Miranda, thank you so much for joining us.
It's my pleasure.
Miranda Braun, there from the Braun Review. Now, it is a big day in terms of news, in terms of markets. Global stocks today, of course, advancing. Look, a strong technology earnings has definitely seemed to be shifting away the focus of investors, away from the lingering threat of U.S.-China trade war, into some of the good news that we've been seeing in technology earnings. We had TSMC today, we had ASML yesterday, and gold. Gold is a huge one because gold's soaring to as high as $4,242 an ounce. Again, taking gains this year to more than 60%. Now, why is gold on a tear? Partly trade frictions, but also expectations for further Federal Reserve interest rate cuts that seem to be luring buyers. The big story, of course, with the Fed is that we also have a government shutdown, and so we just do not have that data. There's a concern that because markets are a little bit dark, that the Fed does something that maybe it'll regret. A reminder, Mark Carney, the Canadian Prime Minister, is the first guest on the Michelle Hussein Show, a new Bloomberg podcast that launches tomorrow. We'll also have Michelle on the show to talk to us about the thought process, and looking forward to some great interviews from her and the team. Up next, Bloomberg Brief, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
A cidade estava sitiada.
Nisso eu começo, eu tremia, não sabia o que fazer.
Foi o que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Trade friction drags on. China blames the U.S. for causing, quote, unneeded panic. Secretary Bessent floats extending a pause in tariffs. AI confidence alive and well. TSMC boosts its sales outlook, signaling confidence in demand. And that tech optimism outweighing concerns around trade, it would seem. Stock futures pointing higher as investors await a raft of Fed speak. So we might be breaking our trend of up day, down day here because we obviously finished higher yesterday, even though we tried not to, but the S&P 500 was up 0.4%, the NASDAQ 100 up 0.7% by the end of the session, and we look to be pointed higher once again today. On the equity side of things, have to say it's earnings. It's TSMC talking about strengthening its conviction in the AI mega trend. It's all the bank earnings, beating estimates and so on. But let's take a look at the bond board. We are seeing yields just that tiny bit higher, particularly at the front end. We're at 349 now, 402 on the 10-year. We are in a data vacuum, obviously, but we got the beige book and it confirmed that trend of gradual slowing in the U.S. economy. Let's take a look at gold and oil as well, because stories there continue too, with gold hitting more than 50 records this year. It hit another one this morning. It's just off that record now, about $8 off that record. But as you can see, continuing to rise. As for oil, we are putting on a few cents, but New York crude still below 59. This idea that President Trump is saying India might back off Russia imports of oil, maybe there's a little skepticism in the market about that. And I did want to point to the VIX as well, because we're still above 20 on that score. All right, let's take a look at some individual market movers now. And for that, we'll go over to London and Valerie Teitel. Good morning, Valerie.
Good morning, Bonnie. Let's start with a check on tech. TSMC out with some decent results overnight. We're seeing the ADRs trade higher in the pre-market, up over 2%. And this comes after the world's largest chip manufacturer booked a 39% surge in profits. And net income for the quarter coming just shy of $15 billion. Now, TSMC covets Apple and NVIDIA as its main customers. This is really showing the health of the AI trade. The beats from TSMC fall on from the beats from ASML fell yesterday. Let's move on to the airline industry. United Airlines coming out with a pretty decent set of results, Bonnie, but shares are trading lower in the pre-market, down just shy of 2%. We had a note from Bloomberg Intelligence saying that perhaps their results are showing some signs of saturation, especially when it comes to those premium seats. But remember, United has been on a tear since the hot Delta earnings last week, so probably just showing a bit more about the enthusiasm for the airline industry of late and that recent stock rise more than disappointment in the earnings. Lastly, I want to touch on American Battery Technology, not one we normally talk about, Bonnie, but this one is kind of a sign of the times. The shares are down 24% after they lost a key government contract after an audit, and this is just another sign of the Biden-era green policies being rolled back under the Trump administration. Bonnie?
Yeah, absolutely. Valerie, thank you so much. Valerie Titel there. Later this hour, we're going to be speaking with Lauren Seidel-Baker of ITR Economics as she sees rising inflation risks in the United States. Let's get back now to our top story. Treasury Secretary Scott Bessent floating a calming measure in the trade war with China.
Right now, we are currently in a 90-day roll on the tariffs. So is it possible that we could go to a longer roll in return for a delay? Perhaps. But all that's going to be negotiated in the coming weeks.
Still, Beijing's Commerce Ministry accusing Washington of the escalation in the dispute, saying in the latest briefing that China was forced to take countermeasures against the U.S. due to the U.S.'s negative attitude. Joining us now is Bloomberg Chief Asia Correspondent Roz Matheson. Roz, did we just get some kind of confirmation, at least from the U.S. side, that this truce will be extended? The deadline, once again, is next month.
Well, certainly the US seems to be opening the door to extending it. And as you were just hearing Scott Bessent suggesting that if China walked back some of its measures on rare earth restrictions, that the US would be willing to perhaps entertain a longer role for that trade truce. But beyond that, the real question is, at what point do we get to a fundamental trade deal between the China and the US? Is that something that's really going to have to require Xi Jinping and Donald Trump, the two leaders, to sit down later this month in Asia and hammer out the terms of a proper trade deal? Do they really want this thing just to keep rolling over and rolling over every 3 months or more, and always with the threat, of course, that tariffs then do really come in on either side? I mean, China's leverage in this really is in the rare earth space. This is the thing that they have on the table. Would they really want to pull back some of that just to get an extension of the truce, or do they want that to be their leverage for something more fundamental and long-term in terms of the trade relationship between the countries? I mean, obviously the risk is these tariffs do really come in force at some point, and that's always there when you don't have a proper trade deal. But with all this noise and rhetoric and accusations that are going back and forth and tit-for-tat action, are you at the point where you don't create the space for Donald Trump and Xi Jinping to come to a proper agreement later this month in Asia? It seems that meeting is going to go ahead, but is there space for it?
Well, there's so much aggression right now, and if we need those rare earths, if we don't have an alternate supply yet and we can't recycle our own rare earths, where is the carrot in all of this? I'm seeing sticks on both sides, but no carrots.
Well, that's the thing. I mean, obviously, China does want things from the US. It's not just an entirely one-way street here. China has that leverage around rare earths, but the US does have some skin in the game, and that's also for China in the tech space and some of the access to high technology. And China does need markets. It has diversified a lot. You can see that in its latest trade data. It's been selling a lot more to other parts of the world, but nothing really truly compensates for having the US buy Chinese goods. And so there is a need there and an imperative for Xi Jinping to keep his domestic economy on a stronger footing, because that's all about his power and control at home. So there is an aspect of that. But again, the problem is with all this noise and rhetoric, is it just negotiating tactics, or is this going to create space for the two leaders to come to some kind of agreement?
Roz, also happening this week, a meeting potentially with He Lifeng between Tim Cook and some other global CEOs. They're on an advisory board at Tsinghua University. And this happens every year, but there will be a message either delivered or taken away this year, surely.
Well, that's right. And you've got, of course, executives with a lot of skin in the game, too, in how this relationship plays out. Big US companies wanting access, market access, and Chinese companies wanting the same. And, of course, Donald Trump has formed quite a close-knit group with some of these senior US executives. Again, in the tech space, do they get in his ear and say, this is what we really need from this. And so do you see He Lifeng pass a message potentially from China to these executives and onwards? I mean, we should also note that Scott Bessent says that he plans to meet with He Lifeng one more time before the end of the month. So what it does show is that despite all of this noise and rhetoric, the lines of communication are kind of open, and there's been periods in the past where they've been completely shut. So at least there are those exchanges happening and the ability to at least sift through the noise and get a proper message delivered to each other.
A silver lining. Roz, thank you so much. That is Roz Matheson there for us. Over in France, Premier Sébastien Lecornu appears set to survive 2 no-confidence motions today after planning to suspend a pension law to win support. Take a listen.
C'est pourquoi je proposerai au Parlement dès cette...
This fall, I will propose to Parliament to suspend the 2023 pension reform until the presidential election. No increase in the retirement age will take place from now until January 2028, as specifically requested by the CFDT Union. In addition, the duration of work taken into account will also be suspended and remain at 170 quarters until January 2028.
That vote ongoing now. Joining us from Paris is Bloomberg's Julien Pontus. So, Julien, he did manage to win the support of the socialists. He obviously will probably never have the support of the National Rally or other extremist parties. But does he survive? Does France at least have a government?
Yes, well, the vote, we've been very busy doing the math with our bureau chief, Alan Katz, and making sure that there are enough votes. It's still a bit of a gray zone, so expectation is that the government will survive this vote. But it's a big gamble to get the socialists on board, even though they have offered to suspend the pension reform. The big question is whether they can keep the backing of the socialists throughout the budget process, which is actually really not a given.
Very briefly, Julien, we have a credit ratings agency review next week. Does France keep its credit rating?
Probably not. There will be some kind of downgrade down the road. That's a given. The big question is, will markets care? Because the rating won't reveal anything particular. Everyone knows that France has dire problems in terms of its public finances. So at the moment, I think markets could actually see if the government pulls this through. As you know, they would rather see the glass half full with some stability than the glass half empty with the suspension of the pension reform, which is going to weigh on public finances.
All right, well, that OAT bond spread still at 78, so better than it was. That is Bloomberg's Julien Pontus. Thank you. One stock we're keeping an eye on today, TSMC, hiking its projection for 2025 revenue growth to the mid-30% range, sending a strong signal of confidence in demand for components like NVIDIA chips that power AI. For more, we're joined by Matt Bloxham, Senior Technology Analyst for Bloomberg Intelligence. So it seems to be all go on AI. Is there anything that can stop this train, according to TSMC, Matt?
At least not in the short term, no. I mean, obviously, at some point, there needs to be a much bigger natural demand for all this AI technology investment. But yeah, for now, encouraging signs. And I don't think it's really so much the revenue number that people were kind of really cheered by today, although it's encouraging, and there's certainly some upside to estimates for Q4. I think what really took the eye was actually the kind of profitability. So both gross margin and operating margin exceeded analyst expectations in the quarter by maybe 2 to 3 percentage points, and by a similar level for the 4Q guide. So I think that's really encouraging for people. Not only is revenue outperforming, but they're making more money off of that revenue too. And I think that's down to the fact that they're getting their fabs much more kind of efficient in how they're producing these chips for their core clients.
We'll watch how it trades today. ADRs are up around 127% since Liberation Day. Matt, the other story I wanted to ask you about is that Apple has lost its head of ChatGPT, the AI search effort for its phones. That person is leaving for Meta and had only just replaced another person that left just some weeks ago. Is this a ding to Apple's reputation, or is this actually something that will be very material in Apple trying to effectuate this change?
Yeah, so this is almost kind of a bit of a throwback to a story from a month or two back, when Meta was really spending big money to attract as much AI talent to Meta as it could. And I think this kind of really reflects on that trend. I think at the time, Apple said that they weren't really in the market to kind of match these big payouts that Meta was offering. And obviously, there's been a huge number of shakeouts in staff and the focus of Apple's AI strategy. And I think this is really just a kind of reflection of that still kind of working its way through the system. Obviously, Apple's AI strategy has kind of shifted significantly from the early days, and they're kind of much more partnering with third parties than developing their own internal technology. And yeah, I think this is a reflection of that and just aligning the staff with that revised strategy.
Matt, thank you as always. That is Matt Bloxham of Bloomberg Intelligence. Now to other top stories trending on the terminal this morning. Nestle shares are surging after the food maker posted stronger than expected increase in quarterly sales. It also announced plans to cut 16,000 jobs. That's about 6% of its workforce over the next 2 years. Citadel founder Ken Griffin says generative AI is not helping hedge funds produce market-beating returns. Speaking at a conference in New York, he said Gen AI falls short in uncovering alpha. Griffin has previously made other skeptical comments about AI, calling it a limited tool. President Donald Trump says Indian Prime Minister Narendra Modi has agreed to stop buying Russian oil, signaling a possible resolution to an issue at the center of the diplomatic and trade rift between Washington and New Delhi. Here's what he told reporters at the White House yesterday.
If India doesn't buy oil, it makes it much easier. And they're not going to buy. They assured me they will, within a short period of time, they will not be buying oil from Russia. And they'll go back to Russia after the war's over.
Coming up, we'll bring you our conversation with IMAX CFO Natasha Fernandez, the latest episode of Bloomberg's Chief Future Officer. Next, this is Bloomberg.
Countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season. Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. In the latest episode of Chief Future Officer, Bloomberg's Scarlet Fu profiles CFO Natasha Fernandez of IMAX. She's spearheading the company's efforts to grow its network of film systems and to expand its content offerings, as analyst sentiment for the shares is the most bullish in at least 5 years. Take a listen.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no. I don't. When I think about cameras in general and what we
You know, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
Making challenging CapEx decisions is an annual exercise for the CFO.
We do sit with the R&D and technology teams and look at what would be the amount of capital they need in a year. So say I earmark them and say, if you had $15 million, what would you spend the $15 million on? And then they would allocate and say, and then you start to pressure test the projects that they say. And then you bring the 15 million down or up, depending on if there's a special project.
I heard the term pressure test from you, and I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Down the hall from the camera facility is the Network Operations Center. In this room, IMAX stays on top of real-time system performance data from around the world.
Our NOC Center essentially monitors our worldwide global network to make sure everything is working, that the reliability rate is maintaining a high percentage, and that our quality standards are being met. To me, it's all a very good investment, and actually it's a very healthy part of our business when you think about our maintenance margins. January 1 every year, I know we have $60 million of revenue. And how do I know that? Because we charge a fixed fee to our exhibitors, and so as our network grows, that dollar value immediately goes up, but it's a recurring revenue stream to us as well. So it's not, it funds itself, it is a high operating margin business, and it also protects our brand.
Our final stop required a costume change. We put on hazmat suits to enter a clean room, where IMAX assembles optical components for projectors. Fernandez oversees financials for a manufacturing operation that sends equipment to some 90 countries.
We do everything here, so even if something is getting sold by IMAX China or IMAX Ireland or one of our other entities, it is all getting built here, shipped out to those entities, then shipped over to the customers.
IMAX is a Canada-based company, and the manufacturing is done in Canada. How affected by the U.S. tariffs are you?
We've always been subject to tariff risk, currency risk, geopolitical risk, supply chain volatility, because we're a global company. And we actually source components worldwide as well. And so working through all of that, we've spent decades already building out and assessing what our risks are and weighing those. The immediate risk, obviously, with the U.S., I have been working closely with the supply chain group and working through what strategies could we do.
That was IMAX CFO Natasha Fernandez speaking to Bloomberg's Scarlett Fu, and you can find the full episode on YouTube. Now let's look at these markets going into the Thursday session. We are pointed higher for futures. This on the back of earnings. TSMC, the latest, come out and give a very, very upbeat forecast for AI demand. As you can see, S&P futures higher. We might even break the streak of up day, down day, because we had an up day yesterday, although markets did try to sell off. Didn't quite make it, though. The dollar index weaker once again today. We have sterling stronger, the euro stronger, albeit at 116.60. And we have the yen weaker. It is at 151.32 today. The 10-year yield at 4.02. We did see just a little bit of a gain at the front end, more particularly after the beige book yesterday signaled continued weakness in the outskirts economies of the United States. Coming up, the Trump administration planning an IRS overhaul. More on that and what else is making headlines in your front page news next. This is Bloomberg.
key issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. And Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in GBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something. Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Earnings season is here.
Earnings season begins once again.
So much going on.
Bloomberg is first to break the numbers.
From Snowflake, from Pure Storage, from Urban Outfitters, and yeah, from NVIDIA.
Coming up, we'll talk about some of the other earnings that are coming out.
With the smartest insights.
Third quarter numbers are going to be really important. The commentary is going to be important. It's all going to be about margins because margins lead to earnings. And if earnings come down, we have a problem.
You have to come back again soon. This is really excellent.
Continuing coverage on Bloomberg.
For your front page news. First up on the Wall Street Journal, the Trump administration has a plan to overhaul the IRS. This according to sources. The changes would allow the administration to pursue criminal inquiries of left-leaning groups more easily, according to those sources. A senior IRS official says it is to be drawing up a list of potential targets that includes major Democratic donors. Next up on the Washington Post, President Trump says he has authorized covert CIA operations in Venezuela. It's a sign of escalating pressure on President Maduro following a string of lethal strikes against alleged drug trafficking boats off Venezuela's coast. And on the New York Times, President Trump is considering an overhaul of the refugee system that would favor white people. The proposals would transform a program aimed at helping the most vulnerable people in the world into one that gives preference to mostly white people who say they are being persecuted. Trump had suspended refugee admissions on his first day in office. This is Bloomberg.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were gonna probably just hit it, and so far we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is gonna get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Trade friction dragging on. China blames the U.S. for causing what it's calling unneeded panic. Secretary Bessent floats extending a pause in tariffs. AI confidence alive and well. TSMC boosts the sales outlook, signaling confidence in demand. And that tech optimism seemingly outweighing concerns around trade for the moment. Stock futures gain as investors await a raft of Fed speak. So we're pairing those gains ever so slightly, but we are seeing the Nasdaq 100 and the S&P and the Russell for that much pointed higher, which means that we might actually break our string of up-day, down days. Now, the VIX is still above 20, so anything could happen, obviously, throughout the session. We've seen very choppy sessions recently, but we are seeing confidence from better than expected earnings reports for the most part, even as we just really begin earnings season. Let's take a look at the bond universe, because the front end did move up just a little bit. In fact, the 10-year yield up to 4.02 now as well. Softer data out of the beige book, just underscoring that gradual softening narrative. And then if we take a look at gold and oil, we've had more than 50 highs for gold this year, and we continue to rise today. We're off the record that we set earlier, 4,240 plus change. But we're not that far off it. Crude just putting on 30 cents after Donald Trump said India might suspend Russian oil buys. And as I said, the VIX still above 20. Let's get to some individual movers now. Over to London and Valerie Teitel. Valerie.
Good morning, Ivani. Let's start with a check on TSMC, the latest technology company to be out with results. Shares are higher in pre-market trade, just shy of 2%. The company had a decent string of beats here, Ivani. They had a profit rising by 39% in the previous quarter. Net income just coming shy of $15 billion. This enthusiasm around the AI trade really doesn't feel done yet, with these earnings from TSMC coming after some strong earnings from ASML. So it does seem like the AI trade and the demand behind it is holding up quite well. Let's move on to the airline industry. United Airlines also out with earnings after the bell yesterday. Now, it was a decent beat when it comes to their earnings, but the shares are lower this morning, down 1.6%. Bloomberg Technology noting that their earnings did show some signs of saturation, especially when it comes to their premium seats. But Vani, the airline industry has performed very well since the big Delta beat of last week. So keep that in mind with United Airlines on a back foot. Lastly, let's end in the alternative energy space with a check on American Battery Technology. This is not normally one we talk about, but they lost a key government grant due to an audit, and shares are down 23% in pre-market trade. Vani, this is just another sign of Biden-era green policies being rolled back under the Trump administration, and some losers and winners off the back of that.
Absolutely, for sure. ABT, a big loser in today's session. Valerie, thank you so much. Valerie Teitel there.
Lauren Seidel-Baker of ITR Economics seeing inflation rising into next year, writing, quote, a still tight labor market keeps upside pressure on wages, energy costs build, and previous fiscal and monetary policy spur higher inflationary pressures. She joins us now. She's economist at ITR Economics. So, Lauren, just let me ask you first of all about this tight labor market. So, for sure, we're not getting, official data. We're maybe going to get it late, but we haven't got it for now. And we are seeing softening data, and we have the Fed chair talking about what he's seeing as fragilities in the labor market. The latest just now, searches for seasonal jobs up at the end of September compared to a year ago. So, obviously, people are looking for jobs for the holiday season, and there are few full-time roles to be had. Why do you think this labor market is tight?
That's exactly right. On the one hand, we do see reduced hiring needs from companies. There's just so much uncertainty out there that there is some amount of pullback in the types of roles being created. But on the other hand, we also have a pullback in labor availability. So beneath the surface, there is a lot going on. The types of roles that are out there, skill sets, I think there is something of a mismatch between where we need jobs and where we have available workforce. But at the end of the day, if we just take all averages, today there is still about a 1-to-1 ratio between the number of jobs posted out there and the number of unemployed job seekers. So to say this labor market is looser, yes, that's true. Back in 2022, that was a 2-to-1 ratio. There were 2 jobs for every 1 worker. But today, I see this as coming a little bit more in balance with just hesitancy on both the job creation and the job seeker side of the equation.
So what does that mean for the Federal Reserve? Because clearly the chair is concerned about that side of the mandate. Does it mean that perhaps we do get more cuts?
At the moment, that seems to be consensus. So members of the Fed, a lot of Fed speak, it's really shifted toward that labor side of their dual mandate. I'm personally more concerned about the inflation side, as you led with in that note. There are pressures building beneath the surface. They're not on our doorstep quite yet, but they are really coming in the tail end of this year, certainly in 2026. So those two forces, those two sides of the dual mandate, they're in opposition at the moment. That's a tough place for the Federal Reserve to be, and it really just comes down to the choice. Where do you see the greater problem?
So would you have the Fed cut more then? What would be your preferred rate path for the next 3 to 6 months?
I'd never presume, but at this point, I think we'll probably see 1, maybe 2 more rate cuts in the very near term. Again, inflation is coming in broader strokes next year. So by late 2026, I would not be surprised if rate hikes are back on the table, if we're talking about an upward movement in interest rates, not continued downward movement, given that we expect net outflows of immigration this year, given that the labor market, again, it's not in the best position we've seen, but it isn't that the bottom is completely falling out. I think that inflationary pressure is really what we're going to have to focus on in order to keep somewhat balance on the two sides of the dual mandate.
And Lauren, I want to point out that you see this inflationary pressure building, even putting tariffs aside. So, that's definitely one extra part of it. But before we even get there, you're talking about the tight labor market, wage pressure, previous fiscal and monetary policy, and energy costs building because of AI.
Yes, AI and data centers are really spurring higher energy costs, higher electricity costs. The U.S. has historically been a place of relatively low electricity costs. Our plentiful natural gas has been keeping those costs low, especially for businesses, manufacturers, for example. I read one estimate that pre-2020, the average cost of electricity in the U.S. was half the level of Europe, 1/3 the level of Asia for a typical manufacturer. So this is still an advantage that we have here, but not so egregious as it had been. And these data centers are just so power hungry. We do not have enough capacity really to keep pace, especially where the interest is, which is not fossil fuels, but new, cleaner types of resources.
Well, if that is part of the inflationary pressure that we get and that we see into next year, does the Fed have cover to focus more on the labor side of things and cut rates even into that environment? Because it has tended in the past to look past any kind of inflation that comes from energy inflation.
That is certainly one component now. To say they can look past that, look past say it's a one-time step up. That's the wording we sometimes hear in terms of tariffs. Then we still have this wage cycle happening. Again, there is so much liquidity out there. If you look at things like Treasury issuance is highly correlated to future inflation, and that is quite elevated today. Things like the money supply on the rise again, things like even the velocity of money picking up steam. So there are more broad-based inflation drivers. It's not just one thing happening right now.
Lauren, what happens if this, truce doesn't get extended on tariffs and the China war becomes, lengthier war? Maybe we don't get fully 130% tariffs on China, but maybe relations are not that warm still.
So China's share of our imports actually has already been decreasing. So I would say the overall exposure is not quite so high as it would have been 5, maybe 10 years ago. However, all of these tariffs since the Trump administration came into office, it's been, I call it 2 steps forward, 1 step back, right? We've had an announcement of tariffs, then a renegotiation, then tariffs are back on, then a court pause. So it's almost part of the process at this point. I think businesses know that. They're being a little bit more tactical than they have in the past. At the end of the day, this is all upside on pricing, but it's taking a lot longer for that pricing to flow through to final goods.
So, Lauren, if you were to look into the weeks coming up to Christmas, and obviously, we've been placing a lot of store by earnings beats, do we get another quarter like this, or is this the last quarter where we can enjoy this kind of beat on corporate America's part?
I think the challenge for businesses going forward, it's just going to be margins. We see that building pricing pressure. I think it will be easier to push higher prices through, but on the cost side of things, that is getting dicier and dicier. So I fully expect a little bit more divergence between the winners and the losers, those companies that really can manage that margin pressure and those that are maybe focused too much on the top line and missing something beneath, down in the weeds.
Lauren, thank you so much for your time this morning. So appreciated. Lauren Seidel-Baker of ITR Economics. Now to other top stories trending on the terminal this morning. Nestle shares are surging after the food maker posted stronger than expected increase in quarterly sales. It also announced plans to cut 16,000 jobs. That's about 6% of its workforce over the next 2 years. Citadel founder Ken Griffin says generative AI isn't helping hedge funds produce market-beating returns. Speaking at a conference in New York, he said Gen AI falls short in uncovering alpha. Griffin has previously made other skeptical comments about AI, calling it a limited tool. President Donald Trump says Indian Prime Minister Narendra Modi has agreed to stop buying Russian oil, signaling a possible resolution to an issue at the center of the diplomatic and trade rift between Washington and New Delhi. Here's what he told reporters at the White House yesterday.
If India doesn't buy oil, it makes it much easier. And they're not going to buy. They assured me they will, within a short period of time, they will not be buying oil from Russia. And they'll go back to Russia after the war's over.
All right, coming up, Secretary Bessent mulling an extended tariff truce with China. Your trade update next. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
We have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. and we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Some breaking news out of France. French Prime Minister Le Cornu has survived that first no-confidence motion. So once again, France's Prime Minister, Sébastien Le Cornu, surviving that no-confidence motion. We are seeing French bonds pare their losses, and the OAT Bund spread is now below 78 basis points, 77.40 to be exact. So there is a little bit more enthusiasm and optimism that at least the government looks to be surviving. It is not going to be toppled. So the first of 2 no-confidence votes now passed. There will be a second one, but with the support of the Socialist Party, it looks like Sébastien Le Cornu will stay on as the French Prime Minister. Treasury Secretary Scott Bessent floating the possibility, meanwhile, of an extended trade truce with China.
Right now, we are currently in a 90-day roll on the tariffs. So is it possible that we could go to a longer roll in return for a delay? Perhaps, but you know, all that's going to be negotiated in the coming weeks.
This as Beijing accuses Washington of having a, quote, negative attitude and acting to restrict China. Let's bring in Bloomberg's John Harney in Washington and our chief Asia correspondent, Roz Matheson. Thanks to you both. So, John, the war of words just continues. Do we expect to hear more out of Washington today?
Almost certainly. Here we have yet another extension in this trade disagreement, negotiation, confrontation, and it's somewhat analogous, I think, to the shutdown, the government shutdown we have here in Washington. It is now in its 3rd week. Neither side wants to be perceived as weak or do anything that would give the other side an advantage. So both, as this whole disagreement over rare earths proceeds, both sides are digging in for the moment, but yes. we have perhaps this new extension.
So, Roz, how much intransigence, to John's point, is there actually? Is there any willingness behind the scenes for either side to move?
Well, what we do know, despite all this rhetoric and these accusations and these tit-for-tat actions, is the lines of communication are open. Officials between the US and China are continuing to talk to each other and to do so, at a fairly high level. So at least there are messages being passed back and forth. But to John's point, they're each very much coming into this saying they need to be emerging as the winner. Xi Jinping cannot appear weak at home. Donald Trump will want a victory. And as they get very much in their corners on this, and as these retaliatory actions pile up, it does make it harder to create the space for a fundamental conversation around a more lasting trade deal, let alone extension of the truce. And as China's coming out today, again accusing the US, saying it's you who are pushing us. Your actions are forcing us to take these retaliatory responses. And so putting the ball back in the US court yet again. But through all of this, just to make the point that dialogue is going on, it does seem as though there is a belief that the meeting between Xi Jinping and Donald Trump will actually happen later this month. And is that the point where we do finally get a proper deal?
And then we have Bessent showing his temper once again and trying to sow maybe discord within China. Somehow he lashed out at a top Chinese trade official, saying he turned up in Washington back in August uninvited and behaved in an, quote, unhinged fashion. Just take a listen.
perhaps the vice minister who showed up here with very incendiary language on August 28th has gone rogue and said, quote, China will cause global chaos if the port shipping fees go through.
So we have his side of things, Roz. We can't know exactly what happened, but is taking pot shots at Chinese Communist Party officials like this wise?
Well, it's interesting because, of course, this is the China Vice Commerce Minister Li Changfeng, who is a very experienced trade envoy. He's known as a man of substance. He's a hard negotiator, but he's certainly not the type to go off on sort of random comments. And it's interesting to see that Scott Besson has latched onto things that he said that Li said and accusing him of essentially wolf warrior diplomacy, which is a pretty big comment to make. I mean, China is sort of brushing this off today. They're saying they don't agree with the characterization of Li, who again is probably their most important trade envoy, and certainly not someone to fly off the handle. But if he did make comments like that, that would have been unlikely to be done without the understanding and the agreement of people even above his head in China. He's unlikely to say something that would be characterized as rogue unless he was pretty confident that Xi Jinping would endorse him. So again, is this kind of just part of the soup of all these rhetorical statements being made, accusations flying, and we need to look, beyond that a bit in terms of fundamentally what is it that Xi Jinping and Donald Trump might be able to achieve if they do sit down later this month.
Exactly, and he's also, by the way, the executive who met with Tim Cook, as you know, this week, so, very high up there. John, let me ask you about the US government shutdown as well. We're now into day literally 16. The military is getting paid, but that's about all we know. What's the latest? Any signs of hope?
Well, as with China and the U.S., both sides are pretty intransigent, are pretty, pretty firm in their positions right now without too much negotiation or talks between Democrats and Republicans, the White House and Senate Democrats. It could well go on for some time. Now, a judge yesterday said that the Trump administration could not fire government workers as it has been doing during the shutdown, and put that off at least temporarily. So here you have another attempt by the Trump administration since its beginning, the second Trump administration, to diminish the size of government by getting rid of workers and even entire agencies being suspended temporarily, perhaps, by the courts.
John, thank you so much, and thanks to both of you. That is Bloomberg's John Harney there and Roz Matheson. Thank you. Turning to tech now, TSMC reinforcing hopes in the longevity of a global boom in AI spending by raising its 2025 revenue growth outlook for the second time this year. Matt Bloxham of Bloomberg Intelligence is back with us. So Matt, where is the custom coming from? How are we continuing to get positive outlooks like this?
Yeah, that's right. So just for context, they've now saying revenue growth this year will be around 35%, and previously they've been talking about 30%. Now, I think there's a little bit of upside to consensus, but I think to a degree anticipated given the backdrop of strong demand. Now, most of this incremental demand is really coming from the AI boom, and in particular, NVIDIA is a big customer of theirs. So it's really those kind of AI chips that's driving it, but obviously big customers like Apple, important part of the demand mix too. So it's a mixture of things that are coming through. Yeah, I think the other thing that was interesting and encouraging in the results was the profitability, both at the gross margin and at the operating margin level, was better in Q3, and they raised the guidance on that for the fourth quarter too, by about 3 percentage points for both on average. So that's encouraging to see that not only is the demand there, that they're making more money off the revenue that's coming into them.
You mentioned Apple, and another story that's catching my eye is that the head of its ChatGPT-like AI search effort has left for Meta, and it's not the first time that we've seen a story like this, even in recent weeks. Does it really hurt Apple's chances at being efficient about doing this, about getting its AI search effort up and running, or can his boss just take over?
Yeah, I mean, obviously, Apple's made a lot of changes to its AI strategy over the last 6 to 12 months, and we've seen some people depart, and obviously Meta's paying big bucks to people to secure the best talent in the market. And I think Apple's been happy to let some of these people go, partly because it's not prepared to match the huge salaries that's on offer at Meta, but also because their strategy has changed. Also, they're working much more closely with third parties to deliver a lot of their AI capability. And so I think this is a reflection of that shift in strategy and realigning their staff and their key leaders around that revised strategy.
Matt, thank you so much. That is Matt Bloxham there of Bloomberg Intelligence. Coming up, a slew of Fed speak on deck in your day ahead. We'll get you prepped. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Matt Miller, the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
Now, a look at what's ahead for your Thursday session. Earnings continue. We have BNY Mellon, US Bancorp, and KeyCorp. They're all coming before the bell. A host of Fed speak today with Waller, Barr, Bowman, Myron, and Kashkari all on deck. Plus, ECB President Christine Lagarde is speaking at the IMF at 12 p.m. Eastern, so we'll be watching for comments on the European economy. Let's get to some earnings movers now. Salesforce adding to gains post-earnings, up 6% in the pre-market. It obviously projected a return to double-digit revenue growth, and that's very much pleasing investors. Hewlett-Packard Enterprises, well, it's down. Its annual profit forecast missed estimates on that margin crunch that is so sensitive right now. And United Airlines, although we have had a run-up for the airlines, it is down almost 2%. It fell despite forecasting resilient demand. Bloomberg Intelligence noting that results show signs of saturation. This is your macro picture for the day, so get strapped in. That's it for Bloomberg Brief. Surveillance continues the conversation. This is Bloomberg.
America today, has value investing been a profitable thing to do over the last 10 years or so, or has it been hard to do?
The market structure has changed, and there has been what I consider it to be a broken market, or the value investing industry, I think, is defeated, so to speak. It used to be that most money was invested by these long-only investors, these big mutual funds and stuff like that. And they had money coming in every day, and they were getting nice fees on all of that money, and they had large research teams. And they would sit around following all of the companies with teams of analysts, and they would say, this company we think is undervalued by 30%. And it might be a growth stock or a value stock, a Magnificent Seven or otherwise, but they would say, I think this is undervalued by 30%, and if I buy it and I hold it, I'll make the S&P plus 30. Now, as we've moved to passive, they've lost their customers, and the remaining customers are paying them lower fees, and they have reduced their research staffs, and they don't have new money coming in to make new investments in any case. And so most of the investing these days is no longer done by people who are buying something because they think it's worth more. They have opinions about price. Like, what is the price going to be tomorrow? And so the result is most trading that is going on right now has nothing to do with value. So it leaves us sort of as a dinosaur.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
We still think we're in a bull market.
We've got to accept the fact that we're in a narrative-driven market.
We do wonder if we're starting to get to peak levels of sentiment.
We've got price-earnings ratios which are close to the dot-com bubble peaks.
There probably should be some kind of a pullback. My guess is it'll be lighter than you think.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Thursday as stocks advance, equity markets inching higher after TSMC lifts its outlook for revenue. Equity best and floating the prospect of a long-term trade truce with China, and Fed officials keeping the door wide open for another rate cut when they meet later this month.
So basically right now what you have in the market, potentially investors breathing a sigh of relief that there is going to be an outcome that they like when it comes to the most recent heated rhetoric between Washington and Beijing. Remember in May we had that truce when tariff levels were as high as 145%, and then it was 90 days rolling basis. Well, the Treasury Secretary is signaling we might want to do something more than 90 days. It doesn't mean we're going to get a full agreement between these two economies at the end of the month. This likely is going to bleed into 2026. But what we do know is that we might have more clarity, and it's not just going to be these 3 months increments.
I'm pleased you remember May, because I remember very little about the last 6 months. 6 months since April 2nd and Liberation Day, and this market has just ripped. We've been waiting and waiting for a Federal Reserve decision about leadership, not just about whether they cut rates, don't cut rates over the next couple of meetings. Secretary Besson's narrowed it down to 5. We know that one of them is this guy right here, Governor Waller, joining this program in 90 minutes' time, 7:30 Eastern time. A lot of questions about the future of this institution.
Absolutely. Who is going to lead the Fed in a post-Powell environment? Also, a lot of questions for him regarding what we just heard from the Fed yesterday when it comes to the Beige Book, Jonathan. This quote stood out to me. Prices rose further during the reporting period. Tariff-induced input cost increases are reported across many districts, but the extent of those higher costs passing through to final prices varied. What is he seeing in terms of that inflationary story potentially with tariffs at the same time that we have the President of the United States saying out loud what you and I have been talking about since April? We're in a trade war with China.
That conversation, 7:30 Eastern time. Don't miss it. Equity futures so far this morning up a third of 1%. Coming up this hour, we'll catch up with Brian Levitt of Invesco, with equities pushing higher on stronger earnings. The former senior White House trade official, Kellyanne Shaw, as U.S. stocks look to extend on the China trade truce, and Frank Lee of HSBC with a street high price target on shares of Nvidia. We begin this hour with stocks inching higher following some big earnings beats. Brian Levitt of Invesco writing, it's not a significant surprise to see the banks reporting good results. It's reasonable to expect 7 to 9% earnings growth this quarter. There will be clear haves and have-nots. Brian joins us now for more. Brian, good morning.
Good morning.
Banks were solid. Any reason why the tech won't follow in 2 weeks' time?
No, I don't think so. I mean, the tech results are likely to continue to be very robust. I mean, particularly you look at the semiconductor businesses, they're talking about demand that's almost insatiable at this point. Can they even continue to deliver or meet the shipments for all of this demand? So no, this is a very robust period. We've heard about all the AI infrastructure investment, and that's continuing to drive earnings.
They're the haves. Who are the have-nots?
I would say the have-nots. I mean, we've certainly seen what's happened with energy prices. So, you may have some challenges in energy. You just talked about some inflation. There could be some challenges in particular consumer groups. So it's not a rising tide that's lifting all boats, but it's certainly an environment where the macro still looks good. Fed's going to ease. Earnings are continue to be good. It's still a good backdrop for risk-taking.
But what has been impacting the market, and we saw this on Friday, we saw this on Monday, is Trump's truths about trade. How are you thinking about the heated temperature brought up between these two economies, even though the Treasury Secretary is signaling we will at some point get to an agreement that might be more than 90 days long?
Yeah, I'm trying to use recent history as my guidepost. We get this market volatility.
Recent history this year or Trump won?
Recent history, maybe a little bit of both. I mean, in Trump 1, I think the key thing to remember is that inflation did pick up on tariff-impacted goods, but quickly returned lower following that, and the Federal Reserve actually cut rates in 2019. So that's critical. But with regards to the policy uncertainty, we're going to get volatility in markets. You'll get a spike in the VIX anytime there's policy uncertainty. But this market's gotten used to the administration putting these announcements out there as trial balloons or opening salvos in negotiations, and then ultimately getting to a better place for markets. So until that changes, I will continue to try and look through the noise of these big announcements that are being made.
So you don't think this time is different, which is a question we've been discussing on this program for a few days?
I don't think this time is different. I think that ultimately it's in the best interest of the U.S. and China to come up with some agreement on this. It doesn't mean that you get to the most optimal trade agreement. And I think that's, a challenge that we've all had this year is you have to realize it may not be optimal. Right? Tariffs result in less optimal outcomes. Consumers will pay a bit of it. Corporate margins may be hurt in some places. But what's going to matter most for the markets is this idea of clarity. Let's set the rules of the game. Countries and businesses will adjust, as we've seen this year, and the markets, I think, will continue to move on.
Well, let's talk about where we do have clarity. Earnings have been decent so far. Early days, I know. We've only had the financials, but you expect more of the same from tech. The Federal Reserve has cut interest rates. Based on the communication from Chairman Powell this week, it looks like we'll get another reduction at the end of this month. It feels like payrolls and the softness we've seen in payrolls is a little bit of an outlier compared to what we see elsewhere. Is that fair?
It hasn't been a robust economic environment. I mean, you're certainly seeing the AI infrastructure spend offset some of the weakness you're seeing in other places. And I would presume that a lot of the weakness in payrolls has to do with this AI build-out. There's this uncertainty on businesses on how many more workers are they ultimately going to need. What you also see is you haven't seen jobless claims jump significantly. So the unemployment rate has remained relatively low. But, the weakness in payrolls is ultimately why you're getting rate cuts. So I sit back and I look at all of this, and I've got the real economy doing okay, not robust, but okay. Earnings look good. Yields have come down. Oil prices have come down. The Fed wants to cut interest rates. I've got a lot of people bearish to me or very concerned, and I'm sitting here looking at this saying that's a pretty nice macro backdrop. I don't know if my compliance department wants me to say Goldilocks, so I won't, but that feels like a pretty nice...
Sounds like you're pretty close to saying it.
Yeah, no, I didn't say it. That feels like a pretty nice macro backdrop.
Let's talk about the energy story as well. So energy has come down. Yeah. Crude's had a big correction. On top of that, we have had that loosening in the labour market too. Is that sufficient enough to sit here and say we don't have to worry about inflation, given the trade story?
I'm watching the inflation break-evens, and I'm watching expectations in the bond market to give me a sense about it. So I know that the consumer price index is going to tick higher. I know that we're going to get these reports that perhaps scare the markets on certain days. But ultimately, if I have a 3-year inflation break-even sitting in the 240s and not budging, then to me, that is price stability.
right? That's price stability where I come from, and that's what the bond market, that's what the Fed's going to be focusing on. And so if you've got weakening in payrolls and price stability, then it makes sense to bring rates from what is generally a restrictive stance right now. Let's not think of this as significant easing. We're just getting rates back towards what I think a lot of us would consider to be neutral.
What does it tell you that a non-yielding asset has rallied 60% so far this year? And I'm talking about gold.
Well, a lot of that is, in a world of real yields, I mean, you and I know this, in a world of positive real yields, you're not supposed to love gold. So there's something else at play here. I keep hearing about this debasement trade that, the U.S. dollar is going to be debased and you have to own gold and Bitcoin. The reality is since July, the U.S. dollar is up 2% on a trade-weighted basis. So, gold is central bank diversification. That's really been happening since 2022. There's a lot of geopolitical uncertainty. I think gold makes sense in a portfolio as a hedge against some of these risks. What I worry about is people speculating on it now that you've had a pretty big move. But for all this talk about debasement, Jonathan, I've seen interest rates in the U.S. go from 4.80 to 4% this year. I've seen the S&P 500 advance mid-teens or wherever we are year to date. That is not people running away from the U.S. dollar.
If we go back to energy for a moment, you're right. Some energy is coming down, but not all. What's going to be the inflation picture when you have electricity prices continuing to rise next year as we have massive CapEx on AI data centers?
Yeah, so part of the challenge is, and what the Federal Reserve is going to do is try and strip out some of these more volatile categories to get a better understanding of what core inflation looks like. And, and I think of things like electricity or gasoline, those tend to not result in inflation spirals. They tend to be more of a tax on all of us. So if you get these spikes in your utility bills or what you're paying at the pump, you're less likely to spend on more discretionary items, and other core goods tend to see inflation either stay flat or even moderate some.
But whether it's the Fed reaction, the market reaction, how is it going to look at the end of the month when we don't have potentially the labor market report, but we have a higher inflation?
Yeah, I guess that's a little bit of a challenge. I mean, we're going to have to lean a little bit on private sector employment reports right now, and I'm focusing on the inflation break-evens. I'm not worried about consumer price index because we know where it's going, right? Tariffs are going to lead to higher prices. The question is whether this is becoming unsustainable or a sustained inflation spiral. Yeah. If we have price stability, the Federal Reserve is going to cut in a weakening payroll environment.
Market-based inflation expectations haven't broken out, not in a material way.
Not even a little bit. If you looked in 2022, when you saw the market-based inflation expectations start to move above 2.75%, 3%, that's when the Federal Reserve had to start to signal significant rate hikes, and that's when you saw a sell-off in markets. We're not even close to that right now.
Brian, it's good to see you. As I often say, my favourite FOMO guy, Brian Levitt of Invesco. Thank you, Brian, for dropping by. I'm with you on the electricity prices. It's going to be more and more important, maybe not for this Federal Reserve, who will strip out energy, of course, from the way they look at inflation. We can debate whether that's a good or bad thing, but certainly for the politicians down in Washington and across this country.
Absolutely. It's already coming to roost for some of these individuals that are hearing from their constituents, especially places like Texas. We're seeing a ton of money go to the AI data centers and the build out of the supply chain when it comes to supporting the AI industry. Electricity prices are going higher. If you're a consumer, you're paying higher electricity bills, guess what? You're not spending on other things.
Later on this morning, 8:30 Eastern Time, so 2 hours and 20 minutes away, we'll catch up with the U.S. Energy Secretary, Chris Wright. Look out for that conversation later on this morning. We'll talk about AI, electricity prices, and what they can do to support energy in this country. Before we get to all of that, let's get you an update on stories worldwide with your Bloomberg Brief. Let's cross over to Lizzie Burden. Hey, Lizzie.
Hey, John. U.S. Treasury Secretary Scott Bessent proposed a longer pause on high U.S. tariffs on Chinese goods. That would be in return for Beijing putting off its recently announced plan to tighten limits on critical rare earths. Speaking at a news conference in Washington, Bessent said there's a very good chance that he travels to Asia to meet with his Chinese counterpart, Vice Premier He Lifeng. Elsewhere, President Donald Trump says that he's authorized the CIA to take covert action in Venezuela to stem what he says is the flow of drugs and illegal migrants into the U.S. He was responding to questions about a New York Times report which says the agency would be enabled to carry out lethal operations in Venezuela. And Apple's been hit with another high-profile exit from its AI division, with the executive leading its Siri search project leaving for Meta. Qi Yang headed the team developing ChatGPT-style features for Siri in a major revamp due next March. His departure adds to roughly a dozen key losses from Apple's AI group this year as Meta continues its big money hiring spree. And that's your Bloomberg Brief, John.
Hey, Lizzie, thank you. More from Lizzie later this hour in about 30 minutes' time. Up next on the programme, decoupling with China.
China wants to be an unreliable partner to the world, then the world will have to decouple. All that's going to be negotiated in the coming weeks before the leaders meet in Korea.
On the prospect of a long-term truce, we'll speak to the former senior White House trade advisor, Kellyanne Shaw, live from New York City this morning. Good morning.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Coming up on Bloomberg Surveillance later on this morning, 1 hour and 15 minutes away, this guy right here, Governor Chris Waller of the Federal Reserve at 7:30 Eastern Time, following a pretty cool speech yesterday on the innovation at the speed of AI. We'll get into that and what it means for the labour market, the broader economy, what it means for policymakers, and hopefully get some insight into the race to replace Chairman Powell in May next year.
I'm just interested to know, what has been the tone and tenor of these conversations when you walk in? Based on what we know, how Trump handled hiring of Powell in Trump 1, the one question the President of the United States had was, are you willing to cut interest rates? Yes? Okay, you got the job. But what has been the rapport between him and the Treasury Secretary? Because that's almost just as important to get to the next leg to then get in front of President Trump.
We'll give Governor Waller some space to answer those questions a little bit later this morning. Let's find some time to talk about this market, equity futures, and this market more broadly over the past 4 sessions, whipsawed by trade tension between the US and China. We're positive by 1/3% this morning on the S&P, on the Nasdaq up by 0.5, on the Russell up by 0.3. Under surveillance this morning, decoupling with China.
China wants to be an unreliable partner to the world, then the world will have to decouple. Right now, we are currently in a 90-day roll on the tariffs. So is it possible that we could go to a longer roll in return for a delay? Perhaps, but all that's going to be negotiated in the coming weeks before the leaders meet in Korea.
So here's the latest this morning. US Treasury Secretary Scott Bessent floating the prospect of a long-term trade truce with China if they walk back plans to curb rare earth exports. Bloomberg's Jack Fitzpatrick joins us now for more. Jack, how are things shaping up, going into month end?
The Trump administration wants to give themselves some carrots and some sticks. And so while you heard some dramatic talk about the damage of these Chinese plans on rare earth minerals and start discussing what they might do with India and Australia and Canada to try to move them away from Chinese influence over that kind of trade. You also heard the possibility come up of some sort of truce, at least longer than the 3-month periods that they've been relying on now. As they look towards the beginning of November, a possible meeting between President Trump and Xi Jinping, as they look towards just the deadline to decide what they're going to do with the current truce, you see them stacking up trading chips, stacking up opportunities to say we can make this better or worse for China, to at least at this point over the next couple of weeks give themselves options in those negotiations. It seems like an administration that's keeping their options open and making sure that in a couple weeks they have something to say that could be good or could be bad for their Chinese counterparts.
I think, Jack, you're absolutely right. We've all got to acknowledge that this is positioning for negotiations month end, but pretty interesting that yesterday the Treasury Secretary essentially revealed private conversations with a Chinese negotiator, a lower-level diplomat, sure, but still revealed just how contentious some of those comments actually were late in the summer.
Yeah, they got into it early in the press conference yesterday regarding a Chinese diplomat who they didn't want to be in Washington, who they said used very contentious language. On one hand, any news from the Trump administration on what they're doing to continue communication with China and not simply walk away, it could be characterized as good news. But the tenor and the description by Scott Bessent about some of the lower level kind of behind the scenes conversations definitely revealed tension and frustration. So again, this is an administration that's willing to push back hard and to publicly express frustration with their Chinese counterparts. The stick is certainly on the table, as well as any carrots they may be offering up.
Without a doubt. Jack, it's good to see you. Jack Fitzpatrick down in Washington, D.C. Joining us now to extend the conversation, the former White House senior trade advisor, Kellyanne Shaw. Kellyanne, welcome back. China flexed in the last week. They flexed their superior rare earth refining capacity. How should the U.S. and the rest of the world respond?
Good morning. Thanks for having me back on. Well, this is certainly what has dominated the last several days of my life, is trying to understand exactly what's happening, the dynamic here behind just the headlines and the top line messaging. But what seems very clear to me is China reacted in a way that was much more aggressive than anyone on the U.S. expected. And the real question for me is whether this is an overreaction, a miscalculation by China, in which case we might see them pause some of these measures, potentially look to change the way that this is implemented, if not roll back, or if this was indeed very strategic and an intentional action by China to say, we're going to just solidify our chokehold on the rare earth magnet supply chain, and we don't care what that means for the trade talks. And so we'll really see what China does here to truly understand what their motivation was.
If it's the latter, does China walk into the negotiations with a lot more leverage than the United States, which seems to be talking about cooking oil and soybeans?
Well, cooking oil aside, what the U.S. administration has said is they have their own choke points. I mean, what we are talking about are the world's two largest economies, whose economies have been interlinked for the last several decades. They're world superpowers. They each have chokehold and choke points on one another. And what we're seeing the administration do is give China a very long leash. You're hearing them say, we're going to work this out. We think China's going to come to the table. We think we'll be able to de-escalate. That's a salvo to China to say, we don't want to have to pull these triggers, but we will if we need to. And I don't think that's going to be good for the world if that's where this ends up.
When the Treasury Secretary signals the potential for a longer truce, more than 90 days, what kind of off-ramp could you see both sides agreeing to get to that point?
Yeah, and so this is where this relationship and this negotiation becomes very hard. And this is where we've talked about the fact that managing the relationship, effectively keeping that status quo of trade in some sectors continuing while both sides continue to take national security measures, is effectively the best outcome we can get to. Again, these are two very difficult positions. In some respects, they might be intractable. But here, I think you heard very clearly the administration say publicly that they're looking for China to, at a minimum, pause the moving forward of these rare earth restrictions and pushing for them to roll this back. Now, I don't know if that's what China is going to do. I think things are going to effectively fall off a cliff if they don't. But the administration is relatively optimistic that they can at least get a pause. And so that's really what you're hearing play out here.
Kellyanne, you were there in the room for Trump 1. That took 18 months when it comes to the agricultural purchase agreements. How long do you think this is going to take? Does this story bleed into 2026?
My own view on this is effectively the status quo. I think that we will continue to see potential progress in some areas, maybe relief for individual companies who are facing issues, small wins, maybe things like soybean purchases, which the president has talked about publicly as something he's expecting as a potential deliverable. But what I don't think you'll see is a broad phase 2 agreement. Again, you've got the world's two largest economies with very different economic models, very different foreign policy models, who are just really trying to manage this relationship without it totally falling off a cliff. I don't know that we're going to see a grand bargain. I think really just seeing a pause here, seeing a little bit of progress, that's the best case scenario.
Kellyanne, it's been interesting to follow the markets. They've got a new proxy just to take the temperature of this phase of tension between the US and China. It's anything to do with rare earth minerals. And on days where there is clear tension between the two countries, the two sides, those names, those stocks absolutely explode. They rally really hard. When things start to die down, they start to roll over. And Kellyanne, I'm just sitting here, I get it. It's a bit of a game in the market at the moment. But is that ultimately inevitable that more money's going to that sector anyway? More money's going towards those names to try and build out that capacity here in America?
Well, I think this is an issue that should have been addressed with more earnest years ago. And different U.S. administrations have tried to deal with the critical mineral and rare earth challenge, the fact that China manipulates the market, the fact that anytime a new entrant goes in, China will crash the price to make that a less profitable business. So clearly there is a need for more significant government intervention in the sector to try to correct this market distortion and, frankly, like secure U.S. national security interests. I do think that this is what it's going to be. It's going to be a U.S. takes a step, China responds, China takes a step, U.S. responds. That's going to have implications for the companies who are trying to dig these minerals out of the ground, to refine them and to process them. So I agree. I think the market's going to follow a lot of this geopolitical drama.
Kellyanne, good to see you. Kellyanne Shaw, the former senior White House trade advisor on the latest situation between the US and China. It's like trade war on, trade war off. That's how the market perceives things. But ultimately, you just have to look across, say, several years, where we were and where we are now. Look over several months, where we were and where we are now. Ultimately, the tariffs are higher, and there's a greater push now than there was 6 months ago to invest here domestically.
Absolutely. And we saw this as well with the Biden administration. They did loans and grants. This administration is taking a much more aggressive approach, taking outright equity stakes in these companies. Intel, MP, what we saw last week, and also the president, the Treasury Secretary, signaling this is going to be more of these types of deals. You can expect more of them. What's interesting, what China is doing is basically telling the United States, yeah, you should keep doing that because we are going to hold on to these rare earths and we are going to have a choke point on this.
As they keep flexing, they'll keep investing here domestically. Futures positive by 1/3% on the S&P. China not looking to make that transition easy. Let's put it that way. Up next on the program, Frank Lee of HSBC on his street high price target on NVIDIA.
you've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive, getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
So here's the state of play this morning. Equity futures positive on the S&P 500 by 0.4%, up 0.6 on the Nasdaq. No idea if this sticks because the swings have been wild over the previous 4 days. On Friday, biggest one-day drop since April. Monday, biggest one-day rally since May. Tuesday, 2 percentage point swing on the S&P. And yesterday, almost as much, just about finishing positive, and we get some positive follow-through on the S&P this morning. The earnings have been okay. The Fed's on course to cut interest rates. This has been about a bunch of things, but really the main one, the US and China and the tension between the two.
And I wonder if potentially there's going to be an amped up rhetoric today. The former global editor of a massive Chinese newspaper, who sometimes comes out and talks about things that he's hearing behind the scenes, is really going after Scott Bessent this morning, saying that the act of publicly revealing unsubstantiated details from the negotiations is deeply unethical. They're saying this behavior shocks them, and I wonder if they take another hit potentially as these negotiations continue, because everyone wants max leverage going into that meeting.
The positioning for negotiations at the end of this month continues. Let's turn to the bond market. Yields slightly lower across the curve, 2s out to 30s. The front end anchored near a multi-year low on 10-year government bond yields, just above a year-to-date closing low on a 10-year, just above 4% at the moment, 4.02% on 10s, down, let's call it a basis point so far this morning. That's the cross-asset picture, 3 hours away from the opening bell. Let's get you some morning moves and cross over to Vonnie Quinn for more. Hey, Vonnie.
Hey, John. Well, it is interesting on a day where TSMC is casting an AI glow over the market that you see Hewlett-Packard Enterprise down precisely because of AI. It's going to miss its annual profit forecast because of a margin crunch. Obviously, machines are less profitable because AI servers and the chips that are in them are much more expensive, and HPE is experiencing that. In fact, it's giving up half its gains for the year. It was up about 17% year to date before this. It did throw some bones to investors, an increase in a dividend, a share buyback, and even some job cuts as it integrates with Juniper Networks. Not enough. Let's move to United, because those shares are lower even as it forecasts resilient demand. Now, that demand is going to come from brand loyal customers as well as the premium segment. And Bloomberg Intelligence is saying with yields lower in every region in the globe, even that premium segment might be experiencing some saturation. We have to say United did get a little boost before this, though. Shares there up 7% this year. And then JB Hunt, well, it was a much needed quarter for JB Hunt. Cost-saving measures really to be credited for its outperformance this quarter, because it has had a tough time. So have its competitors. Freight in general has had a very tough time. It's moving fewer empty containers, so that helps. And obviously, it's a profit beat, and that's what's giving it its 13% increase this morning, but down 19% year to date, so desperately needed, John.
Vonnie, thank you. More from Vonnie later on in the show. We'll get some more stock movers from Vonnie in about an hour from now. Just look out for an interview taking place later as well, just on United. Vonnie mentioned the move for United Airlines in the pre-market. We'll catch up with Scott Kirby. Lisa will be talking to the United Airlines CEO at around 8:15 Eastern Time. On our radar this morning, President Donald Trump confirming the US and China are in a trade war. This comes as the Treasury Secretary Scott Bessent is floating the idea of extending the 90-day tariff pause on goods from China if it holds rare earth curbs. Elsewhere, a California judge temporarily blocking the Trump administration from firing federal workers during the ongoing shutdown. An immediate restraining order halts the termination of over 4,000 employees. And finally, a major blow to Apple's AI ambitions. Executive Qi Yang is leaving to join, guess who? Meta. Yang was the leading driver of the effort over at Apple to develop a ChatGPT-like web search for Siri. His departure is the latest in a string of high-profile exits from Apple's AI division.
What's so interesting about this is he was just tapped to lead this team, Answers, Knowledge, and Information, to develop this ChatGPT-like Siri infrastructure for Apple. So he was just given this role and pretty much was like, I'm going, because there is something better going on in terms of development at Meta. Apple is clearly not, show me the money. They're not showing you the money.
Obviously, Apple, based on some of this as well, and from what we're hearing, is that Apple is looking externally and not looking to build this themselves anymore. So if you're an executive leading this effort over at Apple, you're sitting there thinking, I want to build somewhere else, get paid more for it. Why wouldn't I leave? Is it that story or is it something else?
Well, if that's the case, then how far behind is Apple going to be if at some point they want to do these things in-house, which normally Apple likes to build from the ground up within, in-house. This is really the first time when it comes to AI that they're outsourcing all of this. If they decide one day to build this in-house, they've lost so much of the top talent to others, most notably Meta.
Meta and Apple inching higher in the pre-market and early trading. Let's stick with tech. HSBC upgrading NVIDIA, expecting AI to drive 80% upside for the stock. Analyst Frank Lee now has a street high price target of $320 on NVIDIA shares. Lee writing the following: we now see further potential upside to full year 27 estimated earnings that can surprise the market. Frank joins us now for more. Frank, welcome back, sir, and thanks for making time for us. This is a big upgrade, a big move in the price target for you and the team. Frank, what's changed? Did you change, or is it something the company's changed?
Sure. I think, we first got a little bit more cautious on NVIDIA early in the year because one of the things that we looked at was that the roadmap wasn't seeing the big ASP increases that we saw for the first 2 years of the AI cycle. But I think as throughout the year, what we're starting to see is that the narrative isn't really about the product cycle anymore, but it's more about how big the TAM market can be, especially for the GPU side. So I think that was a big debate in the first half of the year. And you see, if you look at NVIDIA, they've relatively underperformed year to date versus some of the other names because, I think if you look at the hyperscalers, it's been clear that they're moving into more ASIC. So Broadcom has become a big focus now. There's been also focused on AMD trying to gain some share. But I think what we've also seen is that Jensen has been very vocal about, there's a bigger market emerging in enterprise, sovereign, and I think that those markets have been hard to quantify. But I think the last couple of deals we've seen from OpenAI has really kind of expanded its TAM opportunity. So that's one of the things we see is that this TAM now could be a lot bigger than we anticipated previously. And secondly, I think the other thing that we also saw as a positive is the capacity allocation at TSMC, which has been a good indicator of overall momentum, it's been kind of stagnant since the end of last year until very recently. So as we go into 2026 next year, we see a very big increase in their wafer allocation at TSMC. So that also gives us confidence that NVIDIA is seeing perhaps a much bigger market than previously expected, and that's what's driving their more bullish forecast at TSMC as well.
Frank, help us understand a couple of things. So it's been known for a long time that some of their biggest customers also want to become their competitors and develop their own chips. Frank, what's the strategy that NVIDIA is developing to counter that?
Yeah, so I think this is something they've been alluding to quite a bit, which is they need to enhance their market beyond these 4 or 5 hyperscalers. And as you just alluded to, these guys want to start doing their own chip. But if you think about enterprise and sovereign, these markets, there's not going to be an opportunity for ASIC in those areas. You need a lot of resources to big companies like hyperscalers to drive that. So I think that's the market that NVIDIA is looking a lot more closely now. NeoCloud is another group of customers that is going to expand NVIDIA's TAM market while reducing their dependency on these hyperscalers.
So Frank, I just want to build on the NeoCloud. So NVIDIA's strategy effectively is to sponsor these so-called NeoCloud companies. Now, Frank, some people might just describe that as vendor financing. Why isn't it that? Why is it something different?
I don't think it's wrong to say that is vendor financing. But I think at the same time, though, the market opportunity seems to be bigger and bigger. There's more application usage. If you think about, in some ways, the biggest potential vendor type financing company is OpenAI with all these deals they've done, right? Especially with AMD, they're getting equity to fund for future, future orders at AMD. So I don't think there's anything wrong inherently with that, as long as the market can continue to grow.
Frank, we have the market whipsawing as of late regarding the hot rhetoric between Beijing and Washington. And an analyst on the call with TSMC was asking the CEO, how can you fare if you don't have as big as access to the Chinese market? And I want to ask you how you think NVIDIA will fare if potentially they have less access to Beijing.
Yeah, that's a good question. We actually first highlighted that in August, that the Chinese market was going to be more uncertain. I remember, I think at that time, everybody was quite excited that U.S. government was allowing NVIDIA to go back into China with a 15% rebate. But the feedback we got from a lot of our channel check was that the Chinese weren't as willing to take on the NVIDIA chips in the near term. Now, it could be part of the overall, strategy in terms of the trade, the trade deal between the U.S. and China. We do think that China is trying to localize more, but at the same time, the self-sufficiency is not going to be anywhere close to max level in the next 2 years. So China will still need to depend on the chips from NVIDIA. It's just that I think the H20 chip, which is what NVIDIA was allowed to sell, wasn't the chip they wanted. They wanted a better chip. And so I think right now we're waiting to see that. And as far as the actual earnings contribution to NVIDIA is concerned, while China is a nice to have, it's not that big of a driver. Ultimately, it's hyperscalers, and now, these sovereign and enterprise guys like OpenAI are becoming, and NeoCloud is going to become a much bigger customer than just China itself.
Interesting. Frank, thank you, sir. Appreciate the update. Fantastic to get you on the program following that call. Frank Lee there of HSBC. Street high price target, 320 on shares of NVIDIA this morning, south of 200. That's a lot of upside for that stock over the next 12 months, according to Frank Lee and the team at HSBC. Let's get an update on news worldwide. Let's cross over to Lizzie Burden for your Bloomberg brief. Hey, Lizzie.
Hey, John. French Prime Minister Sébastien Lecornu has survived the first of 2 no-confidence votes after announcing plans to suspend a contentious pension law. A second motion, tabled by Marine Le Pen's far-right National Rally, will be voted on later today. It's also expected to fail, with socialist lawmakers backing the government. Elsewhere, President Donald Trump says that the Indian Prime Minister Narendra Modi has promised to halt purchases of Russian oil. Trump said that Modi made the commitment to him during a Wednesday conversation, but did not describe an exact timeline for India's curtailment. Washington has repeatedly criticized New Delhi over its Russian oil buying, saying it was fueling the war on Ukraine. And shares of Nestlé rising in European trading. The company's new CEO, Philip Navratil, announcing plans to slash 16,000 jobs to build on a stronger-than-expected increase in quarterly sales. The job reductions will occur over the next 2 years and are part of Navratil's plan to increase Nestlé's target for cost savings to 3 billion Swiss francs by the end of 2027. And that should be my brief, John.
Lizzie, thank you. Appreciate it. More from Lizzie in about 30 minutes' time. Up next on the program, a crucial question for AI.
A crucial question is whether AI will contribute to a resurgence in productivity growth. Layoffs and reduction in hiring plans due to AI use are expected to increase from everything I hear.
That was Governor Chris Waller. We'll catch up with him in about 50 minutes' time. Up next on the program, Jason Thomas of Carlisle. From New York City, you're watching Bloomberg TV.
In case you missed it on Bloomberg Surveillance.
We heard from Restoration Hardware, and the RH CEO was on the earnings call dropping F-bombs. And I imagine a lot of people are having similar issues at the moment trying to sell furniture. You're at a different price point. What's your experience this year?
People have less money. You can say still recovery from the pandemic when it comes to inflationary measures. But then again, our line of business is really about human basic needs. It's about the bunk bed when the kids grow up. It's about the chair and table and so on.
Anne-Marie had one final question.
How are the meatballs? And you're lowering the cost of the meatballs.
I am myself, I'm an intellectual vegetarian. I normally say down here I struggle. I love the meatballs. We actually are running today about 40% of our sales is actually vegetables and plant balls. And personally, I don't love the vegetables, but the plant balls is a great exception. But meatballs is part of our legacy, so there you go.
I love your honesty.
Don't miss Bloomberg Surveillance live every weekday.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Equity futures positive by 0.4% on the S&P 500, on the Nasdaq up by 0.5, on the Russell, small caps up by 0.3. Under surveillance this morning, a crucial question for AI.
A crucial question is whether AI will contribute to a resurgence in productivity growth. Any sustained productivity growth above 2% will tend to support rising real incomes and living standards without inflationary pressure. Looking ahead, however, layoffs and reduction in hiring plans due to AI use are expected to increase from everything I hear, especially for workers with a college degree.
So here's the latest this morning. Federal Reserve Governor Christopher Waller remaining hopeful about the impact of AI on the U.S. economy. More Fed policymakers questioning whether AI will contribute to a productivity resurgence without fueling inflation. Lisa joins us now from Washington with a special guest. Good morning, Lisa.
Good morning, John. Thank you so much. Yeah, this is the crucial question. Exactly what are the ramifications of AI going to be, not just when it comes to tech stocks, but also the broader economy? Jason Thomas, who is head of global research as well as investment strategy for Carlyle, joining us now. And Jason, you talk about this. It's maybe the wrong side of the equation, or not the only side of the equation, to just look at tech stock valuations, but also how it's really affecting how policymakers are thinking about the economy. Can you explain what that ramification or how that influence really is percolating through policy?
Yeah, when you ask policymakers or people in the administration or just other advocates of low rates, how is it that you can cut rates by 150, 200 basis points in an economy where we still have above target inflation? The answer always comes back to AI. And essentially what they're saying is, sure, the Fed may miss its inflation target for another few months, but whatever residual price pressures are there are going to soon be overwhelmed by this massive disinflationary shock from AI. So I think that that's embedded in expectations. And again, that provides the path to the lower rates. My worry is that this may confuse today and tomorrow. What I mean by that is what we've learned over the past few years, which is very obvious today, is that our path to this disinflationary agentic AI future is paved with trillions of dollars of investment in what are essentially massive, energy-hungry supercomputers. And that's extremely resource intensive. You have the demand for data centers, for infrastructure, for construction, GPUs, servers, other hardware, and especially, of course, power and generation capacity. And, you know, the last time we had anything like this, in terms of a concentrated CapEx boom of this magnitude, we had real interest rates that averaged nearly 4% from 1997 to 2,000. What people are talking about today is taking rates down further, real rates to effectively zero. That does not seem at all consistent with an inflation target.
If you do have an inflationary ramification from the AI build-out, what does that imply for where rates should be, what the neutral rate is for the Federal Reserve?
Yeah, you know, well, first, it implies that a neutral rate is higher. Anytime that you have an increase in fixed investment relative to savings, we have this shift since the pandemic in investment savings propensities. You know, the fixed investment boom in manufacturing, it was, you know, after the supply chain crisis, the need for redundancies, for additional warehouses. Then, of course, you had a green energy boom. Now this is transitioned really almost entirely to AI and the data centers, again, these supercomputers. So I think that this insistence today that the neutral rate is lower than where it is today, you know, I don't know that there's that much evidence for that. And I worry that this insistence that you can move rates down closer to neutral, the neutral rate's unobservable, right? It's just an estimation. And I think that, again, it seems curious in the context of core PC inflation that's at 2.9%.
So this is a speed question. This is a question of whether we can get the efficiencies quickly enough to overwhelm some of the investment costs and the potential inflation to create this equilibrium where there can be this lower inflation. Ken Griffin was talking about how he's not seeing AI really create so much better in terms of pricing models for bonds. Do you see the same thing? I mean, is the efficiency not coming as quickly as you think the inflationary boom is going to come?
Well, so again, the boom in inflation, or at least, again, this resource intensity, that all this demand for construction, for the hardware, for power, is today. And again, we're talking, yes, in the future, I do suspect that there will be a disinflationary shock, but the timelines matter significantly. Of course, when we're thinking about the return on all this capital, timeline to matter quite a lot, as you see throughout history, you know, whether it was the internet or electrification or even the railroads. It's not a question of whether the technology is transformative. It's a question of when the revenues associated with the investment in the technology actually arrive. And I think recently what you've seen, some of the AI integration programs in the corporate sector, there has been some, they've fallen short of return on investment targets. In many cases, I think that is simply because you have essentially a solution in search of a problem. You know, you have teams that are, here's the AI tool, figure out what to do with it. And I think sometimes that just takes time. Sometimes you realize that you have to learn by doing. And so I think that is a risk today, that this is just the timelines are being extended. And that's a very different story than whether this is, whether these gains ultimately don't materialize.
Given this backdrop, if the Fed cuts rates 2 times, which a lot of people are expecting, do you expect that long-term rates will rise significantly, potentially, if we do have an economy that is not only chugging along, but potentially reaccelerating?
I think that right now, the risk for the Fed is to have a repeat of last year. They cut rates by 100 basis points in 2024, and you had effectively 100 basis point backup in long-term yields. So I think they want to be cautious of that. Today, though, I think they also need to look at the foreign exchange value of the dollar. They need to look at this meteoric rise in the price of gold, other commodities. I think that a lot of the people talk about a debasement trade. So I think that these concerns about policy perhaps being too easy, not today, but could be moving in that direction, is actually manifesting outside of bonds today. It could, of course, there could be a backup in yields that should be a concern, but I think that there are some worrying signs outside of the fixed income markets that there's concern about the direction of policy.
How concerned are you about some sort of rapid fire reassessment of how quickly some of these tech companies can invest in AI? And I just wonder what we saw, say, with Oracle a few months back, and this sort of tremendous plummeting in their shares, trading like a penny stock. Do you foresee more of that coming down the pike if right now AI, for a large extent, is a solution in search of a problem?
Well, again, I think that right now, the most fascinating part of all of this, from a market perspective, from at least the way I view it, is that you have these mega cap tech companies that have effectively exercised an option to change strategy. What I mean by that is really for the last decade longer, they've been essentially virtual companies, asset-light businesses. You know, very common to generate $60 billion in cash from operations, maybe invest only 12 or 15 back in the business, this huge free cash flow to fund acquisitions, to fund special dividends, to fund share repurchase programs. Now 70% of the cash from operations is going into AI. This can continue. I mean, the amount of money that is generated by these companies means that you have a 15, 18-month timeline. Oracle went into a negative free cash flow position. That was partly just this concern that, of course, they have this very large contract with a company that has only $13 billion in revenue. So a $13 billion revenue company pledging $300 billion in spending. Oracle had to increase their CapEx by about 47% annualized rate over 2 years to build the infrastructure necessary to make good on those commitments. So I think there was a reassessment there. But much, again, of the spending is by companies that have the cash to do it.
Just real quick, are you getting more cautious as you look at the potential for both rates going up and potentially a reassessment of how quickly AI adoption can take place?
I think that any time you have a market that is as concentrated as it is today, 40% of the market capitalization of the S&P 500 in 10 stocks, 8 of them have their financial future really hitched to AI. So you're talking about an AI bet that accounts for about 25% of the total market capitalization in the U.S. I think that in and of itself is a reason to be cautious. Look for other ways to diversify. Of course, we recommend private markets. But again, I just think in general, having a sense of caution is very prudent at this juncture.
Jason Thomas, wonderful to speak with you. Thank you so much for your time. That was Jason Thomas. And John, I will send it back to you.
Lisa, thank you. Appreciate it. Fantastic conversation. More from Lisa later on this morning, 8:15 Eastern Time. Lisa's catching up with Scott Kirby of United Airlines. Look out for that a little bit later this morning on the program. Fantastic conversation about AI and what it might mean for Fed policy. A conversation we'll have with Governor Waller in about 34 minutes from now. Could this be a source of tension for the dual mandate? Could it hold back employment, but also simultaneously boost and push up prices too?
Treasury Secretary was talking about this yesterday, the fact that he says when there's CapEx booms, usually there's employment booms. But how do you have an employment boom when the underlying technology's goal is to make life easier and at the end of the day, reduce the labor market, reduce the amount needed in terms of labor capacity to get a task done? There's a tremendous amount of inflation. And does the Fed even have the tools to deal with artificial intelligence?
Governor Waller's talking about the short-term versus the long-run costs, saying we must let the disruption occur and trust that the long-run benefits will exceed any short-run costs. Economists are typically techno-optimists. We'll get into that conversation in the next hour. Joining us next, David Lebovitz of JP Morgan Asset Management, Alberto Gallo of Andromeda Capital Management. Look out for that. Plus, Governor Chris Waller joining us in just a moment, and reaction with Neil Dutta of Renmac. From New York City, the second hour of Bloomberg Surveillance. Up next.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something. Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Estava sitiada. Isso, ao começo, eu tremia, não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering, and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
nisho tanya ki kon ahma ta chuara pang manchang le ngai kon mananya.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
We've got a tortoise of an economy. We're slowing down to a crawl. There's no doubt that there is weakness in the jobs market.
The Federal Reserve is worried about the downside risk to employment.
It gives them kind of a free pass to take the cut here in October.
We've baked in what we can bake in at the moment, knowing what we know.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your scores look like this. Big swings over the past 4 sessions or so. Equity futures this morning pushing higher by 1/3% on the S&P. On the NASDAQ, up by 0.5. On the Russell, up by 0.3. Up around 1/3 as we count you down to the opening bell. About 2 hours and 30 minutes away. As we look ahead to the week ahead, this is the data you're missing this morning. We would have had claims, PPI, and retail sales. Not getting that with the government shutdown, but next week, next Friday, we're looking for the CPI report going into the Federal Reserve decision at the end of this month.
It's why this decision is so uncomfortable, because we could have a hot CPI print, but we might not have the weakening data from the labor market, because we will not have the labor market report because the government is still shut down and neither side is blinking right now. So how does the Fed communicate why exactly they are cutting interest rates into hotter inflation and no update on the labor market report when they consistently said to us, at least Governor Jay Powell, Chair Jay Powell has consistently said we are data dependent.
How much clarity can you get from the private market indicators? We'll have that conversation too, of course. This is all setting up to be an interesting end to this month. Plenty of volatility over the past few days as the US and China position for negotiations. Just build up a little bit of leverage here and there, going into a conversation between the leaders at the end of this month. At the same time, we'll have that Fed decision and we'll have some key earnings from the biggest tech players on the planet.
Exactly. We want to hear what the mega cap tech companies are saying when it comes to their AI investment, what the Fed has to deal with and think about that, and how actually all of this is tied up in the trade war. The Treasury Secretary yesterday doing what the president has said he likes him to do, go out there, soothe the markets, because he said this, it's possible that we could go to a longer roll in return, perhaps, but all that's going to be negotiated in the coming weeks. What does he mean? We might get more than a 90-day extension, which potentially would give this market a little bit more structure and clarity on the direction of travel for this relationship.
Some positive follow-through to the price action this morning, at least. We're higher by 0.4% on the S&P. Coming up this hour, David Lebovitz of JP Morgan Asset Management as stocks rally on hot earnings. Alberto Gallo of Andromeda Capital Management as Wall Street weighs credit concerns. And a Fed Governor, Chris Waller, as a divided central bank navigates the day to darkness. We begin this hour with stocks moving higher as earnings outperform expectations. David Lebovitz of JP Morgan Asset Management writing, in the absence of government-provided data, earnings season has taken center stage. We'll be watching for significant margin impacts and how quickly they materialize. David joins us now for more. David, good morning. Good morning. We're all familiar with the arc of earnings season. Starts with the banks. We wait a few weeks, then we get tech. When you're talking about margins, what kind of industries are you thinking about?
So I think it's really across the board. Obviously, the big tech names are going to be the primary driver of what happens to the level of margins for the S&P overall. But what we're really looking for is whether there's any cost creep, particularly in those more cyclical and goods-oriented sectors from the tariffs that have come into play over the course of the past couple of months. I think if you see some modest margin pressure, that's not necessarily the worst thing in the world. It's more so a reflection that the tariff impact is finally showing up, and that makes the management commentary that much more important. How are they going to deal with that persistent pressure should it prove to be persistent, which, recent news flows supports.
Do you think this is the make or break quarter where they've got to make a decision, pass it on or cut costs and take it on margin?
So I'm not sure that this is the make or break quarter. My assessment of the tariff issue has been that it's more of a slow burn than a big bang. And so there's kind of this mosquito buzzing around, bothering you a little bit, but it's not a big fly where the bite might actually hurt. And so as long as we don't see a huge surge in prices, I think that companies can eat some, consumers can eat some, and we can move forward to the beginning of next year when growth should reaccelerate. But if you were to see a big shock to the system, that's where I think the tariff issue would become much more problematic.
Fair to say the market's moved on, and moved on pretty quickly. 6 months since April 2nd and Liberation Day, we're higher by, close to 40%? This market's pricing in the reacceleration. Why do you think we're actually going to get it in 26?
So to us, the biggest thing is really the state of the consumer. And the big, beautiful bill is going to benefit consumers, some more than others, and we've all seen that analysis. But coming into it, what we're seeing from the alternative data, the government data that we were getting, our own proprietary Chase data, we're seeing that the consumer is frankly in pretty good shape. There is a divergence between income levels, lower income consumers more focused on value, but still out there shopping and proving to be resilient. That's something that's come through in a lot of the earnings announcements and conversations over the past couple of months, and guidance suggests that businesses are expecting the consumer to show up into the end of the year. And so you get that benefit in the beginning of 2026. To me, that's how you get growth above 3% in the first half of next year.
You get the benefit from the one big beautiful bill, but do not get the negative downside from what the Beige Book called yesterday, the tariff-induced input cost increases across all these districts in the United States.
So I think that the interesting thing about the Beige Book, and at least we're getting some data that when all is said and done, it was very evenly split. So yes, you had the commentary on tariffs, but you also had commentary that regional economies were looking more resilient. I think at the end of the day, the issue here is that consumers are continuing to see wages come in, wages grow at a reasonable clip, wages grow, importantly, back to the Fed conversation at a level and a rate that's consistent with a 2% inflation target. To me, the risk isn't really around tariffs. To me, the big risk is that the Fed does too much too quickly. You end up seeing the labor market tighten at the beginning of next year as consumer demand comes back, and that puts the market in a tricky spot given what's being priced in terms of Fed easing in 2026.
What do you mean by too much too quickly?
I think that while 1 to 2 cuts between now and the end of the year is a reasonable expectation, when I look at what markets are pricing, kind of the 1 per quarter over all 4 quarters next year, to me 6 cuts from where we are is just the economy doesn't need that. And productivity has been helping out. Given the revisions to payrolls we saw in 2024, there were months of negative payroll growth, yet economic activity was 3%. That means productivity is beginning to show up.
I get the feeling from speaking to people, David, that they are pricing 2 different Feds, the Federal Reserve May and a Federal Reserve that might change after may or may not change, depending on what the leadership looks like. Do you get that sense as well?
I think at the end of the day, one of the things that keeps investors coming to the United States is that rule of law and that structure, particularly on the financial side of the equation. And so, by my lights, will there be a change in Fed chair? Absolutely. I mean, that's been very well telegraphed. But do we need to worry about the tails of that distribution? To me, that's less of a concern. I think when all is said and done, you get somebody that is pretty much down the middle, because putting in too radical of a candidate, I think, would undermine confidence in the U.S. markets and therefore the U.S. economy.
And certainly based on inflation-based expectations, market-based inflation expectations, we haven't seen them break out in a material fashion.
Exactly. What the Fed's worried about at the end of the day is that reacceleration in wage growth. There isn't a really strong relationship between manufacturing goods prices and manufacturing wages, but there is a strong relationship on the services side. And so for people that are worried about the tariff impact, that's where I would focus, because that's where you could see that feedback loop materialize, putting the Fed in a trickier spot.
Where we have seen a breakout, though, is outside of fixed income. We've seen it in gold. Stocks have broken out, they've rallied hard. Gold has too. Is that a different trade, a different signal, or the same trade?
So I think it's two shades of gray, if you will. I think that the equity trade is really driven by expectations for robust profitability and an environment with a little bit more inflation, where because stocks are nominal assets, they should be able to handle that fairly well. We've seen that over the past couple of years. The gold trade is worried about debasement, but also that inflation. And so inflation is the common variable between the two, but focusing on very different things. One trying to preserve your purchasing power, the other trying to benefit from better nominal activity.
So we had a guest on the program yesterday was talking about where the speculative fervor might be. A lot of people pointed to AI and a stock market bubble, and he pointed to, I'm talking about Alex Holtman over at Barclays, he pointed over to gold. And essentially what he was getting at, and I got some comments on the Bloomberg terminal at the same time that conversation was happening, is we've got to think about why a non-yielding asset has rallied 60% and outperformed stocks in a bull market. Where's the speculation? Where's the froth here? How are you thinking about that?
So to me, it's bad speculation, right? People are speculating because they're worried about all of these things that are happening around the world. In our long-term capital market assumptions last year and in the edition that'll be released this coming Monday, two of the themes that we focus on are these ideas of fiscal activism and economic nationalism. And when you think about the impact of those, right, it generates more inflation, but it also generates more investment. And I think people are just worried about this new equilibrium that's being established where governments are looking inward, governments are spending more than they did in the post-GFC environment, and frankly, inflation is above where central bankers would like it to be. That's a very different setup from where we were for the 10 years after the financial crisis.
But do you think it signals de-dollarization?
I don't. I think at the end of the day, the dollar is the world's reserve currency. I think that the volume of transactions that occur in dollars make it very difficult for another currency to take its place overnight. And I think some of the interesting conversations that we've all been having about the development and growth of the stablecoin market could potentially even reinforce that, because the underlying assets there are things like treasuries, money market funds, so on and so forth. When you look at what's happening in emerging markets, it's much easier to move stablecoins around, get around capital controls, than it is to move physical currency. So some of these trends may actually reinforce the dollar's role as a reserve currency, which is certainly a contrarian.
Have you got a tease for us for the LTCM assumptions?
So what I would say is that we are more excited than you are worried. This is one of those environments where clearly the market is not the economy, but there's more to come on that on Monday with some of my colleagues. I'm
not going to ruin that. I won't go there. David, thank you, sir. Appreciate it. Thank you very much. David Lebovitz there of JP Morgan Asset Management, more excited than you are worried. Let's get you an update. I like that. On stories worldwide with your Bloomberg Brief. Here's Lizzie Burden. Hey, Lizzie.
Hey, John. A federal judge has ordered the Trump administration to pause plans to fire thousands of federal workers during the government shutdown. The order isn't a final decision on the merits of the case, but temporarily prohibits over 30 federal agencies from sending out layoff notices. Some 4,000 notices had already been sent out since last week. Elsewhere, TSMC shares rising after hiking its 2025 revenue projection for the second time this year. Boosted by AI chip demand, the chipmaker's third-quarter revenue beat expectations. TSMC's CEO noting geopolitical uncertainty is weighing on the sector and that large swathes of China are closed thanks to US tariffs. And United Airlines reporting resilient demand fueled by its premium passenger class. The airline expects its brand-loyal flyers to continue to drive profits. However, operating revenue for its third quarter fell just shy of street expectations, pulling shares lower in pre-market trading. The CEO, Scott Kirby, will join us at 8:15 a.m. Eastern. And that's been my brief, John.
Looking forward to that, Lizzie. Thank you. Scott catching up with Lisa. Lisa's down in Washington. You'll hear more from her in about an hour from now. Up next on the program, cockroaches on Wall Street.
I guess he's saying there might be a lot more cockroaches at JP Morgan. It's not a private credit issue. There will always be bankruptcies.
David's just really happy we didn't ask him about that. We'll ask Alberto Gallo instead of Untitled Capital Management. He joins us next from New York City this morning. Good morning.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Equity futures this morning, positive by 0.4% on the S&P 500. The main event about 15 minutes from now. We'll catch up with the man himself, Governor Chris Waller of the Federal Reserve at 7:30 Eastern Time, live right here in the studio here in New York City. The data blackout, if we can call it that, continues ahead of the Fed blackout that starts later this weekend.
Yeah, it's a data desert. We don't have official government data. So I'm also interested to hear from Governor Waller what he is relying on in this moment, because the Fed needs to also make an excuse as to why they're cutting interest rates. Maybe they do see a weakening labor market. We know that from September. We know that from the previous labor markets report. But if they are data dependent, we don't have the latest updates, and we might have hot CPI. It'll be interesting to see what he's exactly seeing right now in the labor market and what secondary tier data he's looking at.
In the data elsewhere, we'll get to that in about 15 minutes' time. Look out for that conversation. Equity futures on the S&P then advancing potentially for a second day, higher by 0.4% on the S&P 500, on the Nasdaq by 0.6. I say potentially for a second day because the last 4 days have all been about one thing. It's not been about the earnings. They've been okay. It's not been about Fed policy. Doors still open for a rate cut. Almost exclusively, it's been about the tension between the US and China.
That's why I have alerts on for the Chinese Commerce Ministry the second they come out and say something. Or President Donald Trump's Truth Social post. Is he going to come out and potentially talk again about the fact, yes, we are in a trade war, we know that, but he made it very clear yesterday, talking about 100% tariffs potentially on China. When will we get any sort of clarity? It might not be till the end of the month. So every single day, we could see potential for a whipsaw in financial markets.
The Treasury Secretary, Scott Bessent, saying the leadership talks are a go. So it's still on for talks between Xi Jinping and President Donald Trump. Under surveillance this morning, a focus on one thing, cockroaches on Wall Street.
Jamie Dimon at JP Morgan, worth mentioning what he said on their earnings call. He said, my antenna goes up when things like that happen. When you see one cockroach, there's more. Everybody should be forewarned at this point. What do you make of his warning?
So I guess he's saying there might be a lot more cockroaches at JP Morgan, or I'm not sure I know what he's saying. I mean, it's not a private credit issue. I mean, it's a liquid credit market. There will always be bankruptcies. There are thousands of credits in the marketplace.
So here's the latest this morning. The JP Morgan boss, Jamie Dimon's cockroach comment, reviving fears about the health of the credit market. Alberto Gallo, the CIO of Andromeda Capital Management, writing the following. First Brands and Tricolor are a warning sign. We believe there's a turn in the credit cycle. Alberto joins us now for more. Alberto, good morning.
Good morning.
Welcome to New York. It's been too long, my friend. A warning sign, a turn in the credit marketplace. Whereabouts? Where do you think the so-called cockroaches are right now?
So we're at a 30-year tie in credit spreads, and this has been fueled by monetary liquidity and fiscal spending. The problem is investors have been used to this environment of low volatility because governments are spending a lot, and they're spending a lot for geopolitical reasons, and the Fed is cutting with inflation, way above target. So the volatility, the price discovery in the market is being suppressed for a very long time, and investors have misallocated capital to vehicles that don't have mark-to-market. Now, why would you lend to a company that has something to hide, that is funding from a fund that doesn't have mark-to-market? There's a lot of conflict of interest around that area, of the private credit world. 80% of LBOs, for example, are funded by private credit funds right now. So we've seen this developing in the last 2-3 years. Right now, when spreads are really tight, we're in an elongated cycle. We have the Fed deploying record stimulus, cutting to a very low neutral rate. Why would you invest in those areas of the credit market? There's other ways to hedge from debasement. There's other ways from hedge from a declining dollar, if you're worried about that, or to chase the AI returns. But credit is not the place to do it. So you've got to be really cautious now and avoid those weak credits. Where are they? Well, they're in the private credit market, in low-rated credit, in companies that rely on low rates to survive, companies that have done very little restructuring, for example, only a 5 or 10% haircut, amend and extends. There's a lot of those names, and we have avoided them over the past few years.
It sounds like you don't think that these two names, First Brands and Tricolor, are idiosyncratic. Are you expecting more of the same thing?
Typically, when we have seen firms, we've seen a lot of firms that cannot fund in the public market going into private markets. When we have seen that, we've seen like signs of adverse selection. So yeah, we have seen many examples of firms that have very complex capital structures. They have opaque governance. They're in private hands. They don't have disclosure, and they have most of their funding in private markets. So definitely, we have done a lot of work. We have those firms on the radar. Some of them we are short. And we believe there's going to be more pain in the coming quarters in those areas of the credit market. It's not inconsistent with equity markets going up. You can have Fed liquidity pushing the dollar down, gold up, S&P up, and at the same time, these firms going down. Fed liquidity is not going to save the next First Brands.
Do you think there's a channel for contagion risk that we should be considering? And what is that channel?
The channel is, there's different parties that have been in the ecosystem of private credit and generally these exuberance in credit markets. The behavior reminds me a little bit of what was happening in 2006, 2007. So you have the arrangers, you have the funds, and you have obviously the companies. Not everything is tradable. You definitely now want to avoid those areas. Again, credit spreads are really tight. You want to be capturing opportunities in credit. If you're locking your capital for 5 years, and there is a crisis or dislocation, you can't capture that. The current valuation premium between private and public is just 1% to 2%. And if you adjust for quality, that's really very little. So you're not really getting paid, and you're locking your capital. You lose optionality.
You keep referring to credit spreads. Now, IG credit spreads are near multi-decade tights. I believe that's what you're referring to. You're seeing tight spreads across the board as you go down quality, go down to high yield. Are you seeing the same thing?
There's been a widening in the worst bucket in the triple C names, which is symptomatic of some of these low-quality credit being avoided by investors. So, after these two large-scale bankruptcies, obviously, risk managers are patting on the back of portfolio managers, and they are going through all the exposures. So there's been a widening. But, overall, credit spreads are still at a 30-year tight or a multi-decade tight. And in the U.S. market, we are at a 15-year record long positioning in credit. So what is happening in the world is investors have been buying risk assets for capital preservation. They've been buying risk assets because they believe inflation is above target, and I'm sure you'll talk more about this, and will stay above target. But this has created some misallocation of capital. Investors have been targeting these all-in yields to try to beat inflation, but in the process, they've been lending to firms with that capital.
Just hang on a minute, Albert. You say investors are allocating.
Yes, because essentially the top firms in the S&P are monopolies. So if you're thinking about going to a regime where the dollar is very stable, to a regime where there's a multipolar currency world, and governments continue to print money, there's various ways you can get out of too much public debt. That's the problem we're talking about. The West has too much public debt, not enough productivity, and demographics are not great either. It's a bigger problem in the UK and France, but it's also a problem in the US. So what do? You try to grow out of your problem, but it takes a long time. You can't restructure. You can't do austerity because it's very politically difficult in an environment where inequality is record high. Millennials have only 15% of wealth, and they're the median voter now. So you try to make other people pay. The Trump administration is trying to do that. Or you print. And the reason why investors are worried about this is the administration is toying with a lot of monetary experiments, stable coins, 100-year bonds, bank deregulation, in the UK, reducing the reserves interest rate that the Bank of England pays to banks. So a lot of easing measures, and also ending quantitative tightening, doing quantitative easing again. discussions of yield curve control. So if you think about this, this is financial repression. It means keeping interest rates below inflation. Government bonds are clearly, overvalued here, but credit is the second most overvalued asset because it's been extremely stable for that reason. And I think that we're not going to escape that world. But the reason why gold is going up, the reason why the Mag 7 are going up, and the reason why credit spreads are very tight is the same, is high government spending and central banks accompanying that spending with easing.
But aren't the Mag 7 going up because these companies are talking about basically a revolution in how we live in society and the CapEx boom they're going towards them, while gold is really just a place to hide? You think Mag 7 is also a place to hide?
We think it's the same trade. Right now, think about Microsoft, think about Windows. You could imagine a world where we have another operating system that's maybe a little bit better. Probably humanity would have gone to Mars already. But Microsoft is a monopoly, and we have to buy Windows every 2-3 years, right? Do you see a lot of, is Windows 2030 going to be, much better than the current one? Maybe. But a lot of the capital flows in these companies are also, in part, obviously they bet on future innovation, but in part, they are a way to preserve capital because of the monopolistic nature of these firms. So if you have a situation where tomorrow, I'm sure you've seen the New York Fed paper on gold revaluation from August. If tomorrow the US Treasury Secretary decides to revalue gold and passes the profits from the Fed to the Treasury and decides to spend more because debt to GDP looks lower, then what happens? You'll have a dollar down, S&P up, and gold up trade. So that's what investors are worried about. So what do you buy? Do you buy art? Do you buy the Mag 7? Do you buy gold? They are essentially, at the extreme, they are the same trade.
Alberto, it's good to see you, sir. Thanks for being here. Alberto Gallo of Andromeda Capital Management. How many times have you asked Secretary Bessent that very question?
A ton of times, because right now on our balance sheet, it's a little over $42. That's what gold is. And ahead of the midterm elections, could you not see this president remarking it?
Yeah, gold's north of 4,200 at the moment. Up next on the program, Fed Governor Christopher Waller, a front-runner on the short list to replace Chairman Powell. We'll talk to him about this economy, the impact of AI, and what it means for the next decision at the Federal Reserve and beyond. From New York City, you're watching Bloomberg TV.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Stocks are positive, some positive follow-through from yesterday. Equity futures higher by 0.5% on the S&P 500. On the Nasdaq 100 so far this morning. After a really volatile 4 sessions, we're higher by 0.6% as we count you down to the opening bell 2 hours away. With your morning movers, here's Vonnie Quinn. Hey, Vonnie.
Hey, John. Well, TSMC casting a nice halo over this market today. That's one of the reasons we saw futures higher this morning, because it raised its outlook for the second time this year. It now sees revenue growth in the mid-30%. Although I have to say, the CEO, C.C. Wei, did reiterate that the industry is grappling with geostrategic and geopolitical uncertainty, and also talked about those U.S. sanctions and that how they've begun to close off swaths of China, which is still the biggest chip market. So we're seeing shares up more than 2% of the pre-market. Important to note, though, ADRs trade at a significant premium to shares listed in Taiwan, and ADRs are up 127% already since Liberation Day. Let's move to AEP. It is moving just very slightly in the pre-market. News just out a few moments ago that the Trump administration has finalized that $1.6 billion in financing for one of its subsidiaries. So you'll get 5,000 miles of upgraded utility transmission lines across Oklahoma, West Virginia, Indiana, Montana, Ohio. So this financing is just one of many to come. It's part of $23 billion in conditional loan guarantees started under the previous administration. And finally, remember when we were talking about lithium all the time? Well, JP Morgan, the latest to downgrade Lithium Americas, although it has still had a 200% gain so far this year. Apparently, analysts have been souring on this name because the deal that was done with the government for 5% equity and a 5% stake in the Thacker Pass mining project, well, it's not quite as good for shareholders, so that stock down. It's still, though, trading at a 40% premium to the average analyst price target.
What a rally. I think it's fair to say a lot of analysts missed that. Vonnie, thank you. Vonnie Quinn there with some of the movers. Just a programming note, in about an hour from now, the Energy Secretary, Chris Wright, joining Bloomberg Surveillance first to respond to that story. Turning to the Federal Reserve, the list of candidates to replace Chairman Jay Powell reportedly down to the final 5. The list emerging following extensive interviews with the Treasury Secretary, Scott Bessent. On that list, Fed Governor Chris Waller, who joins us now. Governor Waller, good morning.
Well, good morning, John, and good morning, Anne-Marie.
Welcome back, sir. It's good to see you. How's the process going? Let's start there, and then we can get into all the other good stuff. How's the interview process going?
It's going well. As far as I can tell, the Secretary has a very systematic way of going down the list and doing the interviews. As I said the other week, I had a great interview with Secretary Bessent. Talked a lot about economics, Fed policy, the Fed, balance sheet, just general stuff in the economy and financial markets. It went very quick. It was about an hour and 45 minutes. The next thing I knew, it was over. So it was a great conversation. Of course, I love those kind of conversations. I can do that all day long.
The Treasury Secretary has spoken about in the past, he wants almost a visionary, someone who looks forward, like an Alan Greenspan type, open-minded. Do you get a sense of what he means by that?
I think it's the idea of if you're looking at the data and it's always looking back at the data, the data is always kind of old and you have to think forward, like where are you going with this stuff? I've managed to do that a couple of times with thinking about this beverage curve argument back in May of 22, that we could have the soft landing earlier this summer with the weakness in the labor market, which turned out to be true. People doubted it at the time I said it, but so I think it's, I don't want to, brag, but, it's that kind of being able to look at the data and see forward where things are going. And I think that's a critical thing he's looking for.
You were certainly vindicated. The president was obviously excited about the fact the Fed finally was cutting interest rates. Have you spoken to him at all?
No, I have not. I have not.
Is that on the schedule?
I don't know. That's up to Secretary Bessent.
We're going to find out soon, hopefully. We'll talk to the man himself, the Treasury Secretary, hopefully later on in a month. I want to talk about the meeting that takes place at the end of this month as well. You were pretty clear going into the last meeting. You delivered a speech, and I believe the title was "Let's Get On With It."
Yeah.
Are you advocating for the same thing at this meeting?
Yeah, I think it's the right thing to do. Back then, there was an issue of whether you go 50 or 25, and I argued we could do 25 and see how the data comes in. Of course, we're not getting much data, and then we can think about the next 25. So in the last 6 weeks, I don't think a lot has changed. We're not getting the public data, but all the private sector data that we're getting, Beige Book yesterday, everything we're getting is telling roughly the same story. The labor market's weak. Growth seems to be on the stronger side, which is a bit of a puzzle right now because you can't have a really strong growing economy and negative job growth or zero job growth. And, people talk about productivity, but AI hasn't had that effect yet on the labor market or productivity. It will down the road, I think, but not right away. So I don't think that's the story that's driving it. So in that case, one of these things has to move, right? Either GDP numbers start coming back down or the labor market rebounds. You just can't have growing economy and, very weak labor market. They just don't go together.
In the meantime, do you just continue to reduce interest rates meeting by meeting as you wait to see what's going on? What's your overall approach, and how do you think about that?
That's exactly what I've been arguing, is since we don't know which way this is going to break, if the labor market rebounds, there's less of pressure for cutting rates. If the growth comes back down, there's more pressure for cutting rates. You don't want to make a mistake. So the way to avoid that is to go, cautiously or carefully and do 25, wait and see what happens, and then you can get a better idea of what to do. But if you've already started the process, you're providing whatever initial support for the labor market that you feel is necessary.
So we've had this obvious step down in payrolls growth. It's pretty clear. Yeah. It feels like that alone, though, might be an outlier compared to everything else that's going on in the economy. You yourself just acknowledged that. What do you think is behind that? And can that persist?
That's the thing. When I've talked to private sector CEOs about hiring, we typically get a couple things. Maybe early part of the summer, there was a lot of uncertainty about tariffs. We're just holding off on doing anything. One of the things I heard is firms were going to have to pay the tariffs. One easy way to do that is just not hire. Take all the labor savings to pay off whatever the tariffs were. So that was one thing. Then you have this AI story, which was people like, we don't know if we're going to need to hire, but we're going to wait and find out. We're not going to go out and hire a lot of people right away. So I think the tariff uncertainty, paying for tariffs, trying to sort out what AI really is going to do, kind of put firms on their back foot. Now, that's what I mean. Either they decide the AI is not going to be in the near term the big job replacement that they thought, and they're going to have to start hiring, and it comes back, tariff uncertainty goes down. All of those things could lead to a rebound. On the other hand, if GDP starts softening, it's not as strong as we think, that somehow the data is a kind of a mirage right now. Then the labor market is telling you things are just not as good as you think. No, the financial markets are the big puzzle. I'm not the only one. How much of this is just a big boom in AI and everything else is marginal? I've kind of been arguing there's a big difference between the financial conditions for corporate America and financial conditions for Main Street America. If you're Main Street America, you're looking at mortgages over 6%, very expensive housing, car loans over 7%, credit card interest rates in the 20s. These are not loose financial conditions for American households. So when we look at the financial markets, you're seeing a lot of when people talk about credit spreads and all that. I don't think most American households care what the credit spread between corporates and treasuries are. That doesn't really, unless it shows up in mortgages. So I think there's this is one of the things that I find kind of puzzling right now, is there's just always these dichotomies between things. If you look at AI, if you take out anything data center AI related, business fixed investment is turning down. It's not widespread. All this investment is not widespread across. There's a real reallocation from kind of everything else into AI. So there's this bifurcation in so many ways that make kind of reading the economy tough right now.
How much influence do you have on one versus the other? Financial conditions on Main Street versus Wall Street. Wall Street's immediate. Wall Street's gone. It's off to the races. Yeah. Can you really influence financial conditions on Main Street?
Well, that's kind of what we hope. If you think about cutting rates, which we're doing, and I think we'll continue doing, that does have a pass-through to the 10-year. And the 10-year is often the anchor for pricing mortgages. So the 10-year is down to like 4%. It's come down from 4.5%. That's about 0.5% off. If it were to continue drifting below 4%, you'll start seeing some downward pressure for certainly mortgages. Auto loans are kind of a different thing. They're trying to figure out how to deal with tariffs on the auto industry. One thing I've heard is they got rid of a lot of cheap financing that they used to subsidize for consumers. That's going to raise the cost of financing. All these things are more tightening for mainstream America. So hopefully these things, as we go on through the rest of the year, start loosening up some.
You've been watching the program, so you know some of the things that people say on the show. I'll just go over it briefly. Ultimately, equities at all-time highs. Gold's ripped 60% this year. You mentioned credit spreads.
Yep.
IG credit spreads at multi-decade tights. High-yield spreads near the tights of the year. And there's a theory out there that the Federal Reserve and some officials on the Fed, perhaps yourself included, have anchored their view of this economy around the step down in payrolls growth and are going to be lulled into reducing interest rates when maybe they shouldn't. And all that's going to do is fuel financial market excess. Just to give you the chance to respond to that, how would you respond to that? This idea that you run the risk of being lulled into reducing rates when maybe you shouldn't.
Well, the mandate I have from Congress is maximum employment, stable prices. It's not the financial markets. So I look at, that's why when I'm looking at the labor market. The labor market is weak. If all these loose financial conditions are going to cause a boom in excess in the U.S., we should start seeing some of that in the labor market. We're not seeing it. So a lot of this is, I think, just this is where the AI thing is. There's so much speculation on AI that it's kind of, again, this dichotomy. It's kind of overshadowing everything else that's going on. And like I said, my job is unemployment and price stability. And I think inflation will be okay. It's on up, but some of the tariff effects will come back off. But my job is about the labor market, and it's not good. So if you want me to go to Congress and say, hey, tell me to start worrying about financial conditions, and that's how I should set policy, let me know. But until they do that, I'm going to keep focusing.
Well, let's go with the dual mandate, and let's stay with AI. And the potential that introduces some additional tension into the dual mandate, that it holds back employment, but also boosts prices. Anne-Marie was talking about what it could do to energy, all the spending, resource intensive. We had a guest on the program talking about the same thing. Would you see that as a potential that it introduces some additional risk into the dual mandate?
Well, in terms of inflation, I mean, one of the things I was asked this question by some people in the AI sector. It's like, isn't this inflationary, all this spending we're doing? I said, yeah, but you're taking it away from other sectors. So those other sectors are seeing less demand. So this is, in my view, a lot of this is a sectoral reallocation. And if that's the case, then the increase in AI is going to be offset by other things. Now, true, energy may have a bump up, but then you just look at core, because you kind of knock out the energy part of it. And that's really what you want to do. That's why we kind of knock off energy. It's just so volatile, it gives you the wrong signals.
So, Governor,
when we look forward, when we're just looking forward.
What I hear from you is you can look through tariff-induced inflation, you can look at AI-induced inflation. Is there any inflation out there right now that you see that you are concerned about? Because we're potentially going to get a pretty hot CPI print at the end of this month.
Well, we'll see. When we take the data at the board and we have various ways we try to tease out the tariff effects, our estimate is inflation's running about 2.5%. And we're not seeing anything that's going to explode. Like I said, all this attention on AI is ignoring the fact that other stuff is softening. So demand is up in one sector, it's going down in another. Those things often, not completely, but often offset. So that's why I'm not really worried about the AI stuff. And if it really did cause some big problems in energy, like I said, just if you're thinking about future inflation, just look at core, don't bother with headline.
At the end of the month, though, you might not get the labor market report.
Right.
How difficult is it? And can you even provide outlook, meeting by meeting, in this environment?
Well, I have this joke that for those who think we're too data dependent, you're going to find out what non-data dependent policy looks like.
I'm excited.
But that's the point. We do have lots of data. Like I said, we've got lots of labor market indicators that tell us the same story. It's not good. We don't get a lot of other things as, oh, the labor market's great. So I think the data from all the sources is telling you the same story. The labor market's weak. We're getting this data, conflicting data about GDP. Like I said, the Beige Book came out. It was not like everything's rosy and booming. There could be still in GDP numbers, still a lot of inventory pull forward that because the China tariffs weren't finalized, so get them in, get stuff in now. So it may be that we see, GDP start to pull off at the end of the year. I think about the tax bill in that there was a lot of incentives for business fixed investment. That's great, but that applies equally to AI and non-AI. So at the end of the day, you're still deciding whether you want to go into AI investment or non-AI investment, and the AI is winning. So I don't know how much of it, how big of a help it's going to be on the non-AI kind of sectors in the economy.
You've called yourself a techno-optimist. Enjoyed the speech, by the way, yesterday. Thank you for that. I just wanted to finish on this before you run. This feels different to last year. When you came out last year and you made a big step down in interest rates and cut by 100 basis points off the back of the employment scare through the summer, this feels slightly different in your approach. How would you describe the differences between now and the approach of you and what you're advocating for on the Federal Reserve to what the committee did last year?
Well, last year we didn't have all the tariff uncertainty. We didn't have this AI thing. Unemployment was not even remotely talked about. So I'd say those are the two big differences. Like I said, I think the tariff stuff will settle out and it'll be okay. The AI thing is the concern I have with the AI, if it does, and I think it will materialize. Monetary policy is designed to deal with cyclical movements in the labor market, kind of ups and downs that come with the business cycle. But this feels like a structural change. All right, labor demand just drops and doesn't come back. That's something I can't do anything about. The Fed can kind of adjust policy to deal with structural changes in the economy. So it's going to be a challenge to say, is anything we're seeing in the labor market from AI coming down the road, is that something the Fed can do anything about or should do anything about? Or are we just seeing kind of a typical cyclical move where there's a hot sector and then it cools off later and everything's not quite as futuristic as you think it is? So that's, I think, for me, the biggest challenge looking forward is this a structural change or is this just a cyclical change?
Is the prudent thing to do as a risk manager just to assume it might be cyclical and cut just in case?
Yeah, I mean, if you cut and it ends up being structural, you cut. It's not going to undo whatever you did. But if it is cyclical, then you can help rebound and get the economy back on its feet, or the labor market back on its feet.
I think that's a good preview of what the conversation might be like around the table at the end of this month. Governor, I appreciate your time.
Thank you all. I appreciate being here again.
Thank you for being here, sir, and hopefully you come back soon.
Yep.
The Fed Governor, Christopher Waller, on the latest situation in the economy and what it means for policy for October and well beyond. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Lizzie Burden. Hey, Lizzie.
Hey, John. President Donald Trump says that he might go to the Supreme Court to personally watch oral arguments on whether the bulk of his tariffs pass legal muster. The High Court will hear arguments next month over whether import taxes imposed by Trump are legal, with Trump saying that the tariffs are authorized under the 1977 International Emergency Economic Powers Act. Elsewhere, Israel has threatened to resume attacks on Gaza if Hamas does not follow through with all the steps outlined in President Donald Trump's peace plan. Israel's military has been ordered to prepare if the militant group does not disarm and return all the bodies of dead hostages. Hamas has so far released the remains of 7 hostages, leaving 21 unaccounted for. And the US and Canada are reportedly considering reviving the controversial Keystone XL pipeline as part of a bargain to ease some of President Donald Trump's tariffs on steel and aluminum. That's aluminium to you, John. The Financial Times reporting Canadian officials, including Trade Representative Dominic LeBlanc, have been discussing the plan in Washington this week. And that's been my brief. John.
Lizzie, thanks for that. Slowly pulled into Team Aluminum since I've been here. But anyway, up next on the programme, the race to replace Fed Chair Jay Powell. That conversation with Neil Dutta of Renmac. From New York, you're watching Bloomberg TV.
Issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in DBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in DBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Live from New York City. Welcome to the program. Equity futures on the S&P positive by 0.4% on the S&P 500. Under surveillance this morning, the race to replace Fed Chair Jay Powell.
I had a great interview with Secretary Bessent. Talked a lot about economics, Fed policy, the Fed, balance sheet, just general stuff in the economy and financial markets. It went very quick. It was about an hour and 45 minutes. The next thing I knew it was over. So it was a great conversation.
Governor Chris Waller, absolutely fantastic, advocating for another interest rate reduction at the end of this month. The latest on the race, the Treasury Secretary, Scott Bessent, narrowing down the list of candidates to replace Fed Chair Jay Powell. According to reports, Bessent down to 5 names, including the man himself, Governor Chris Waller. Neil Dutta of Renmac, following the race closely, joins us now for more. Neil, good morning. Strong supporter of Governor Chris Waller. Tell us why.
Well, I think you just saw why. I mean, obviously I agree with and sympathize with a lot of what he said, but I think what's important for someone in a position like that is the ability to persuade the people around you, right? I mean, it's a consensus-building institution, and I think he basically told you why he views things the way he does. And if you're trying to build support for looser monetary policy in that committee, that's the way to do it.
At the heart of his argument ultimately is an argument to disregard the inflation fear, that there's nothing to really worry about here. And ultimately, that's something that you share. Can you explain why? Break that down. Why is there nothing to worry about?
Well, I mean, I just find it fascinating that we're even talking about inflation with oil prices collapsing. I mean, call that a peace dividend if you want. Oil prices are falling. Labor markets are cooling. And we also know now that rental inflation is disinflating again. And you're there talking, I mean, people, some hawks are talking about inflation risk because of tariffs that haven't shown up as much as they thought in the first place. So it's a little bit ridiculous in my opinion. So that's why I am a strong advocate for interest rate cuts. But yeah, I mean, I think the risks to inflation are not really skewed to the upside.
But Neil, the tariff story is not done. We are on a truce right now when tariff levels between the U.S. and China went as high as 145%. The story's not over.
I mean, there's the effect. Remember, there's the effective tariff rate. There's what the announced tariff rate. There's the threat of tariff rates. But you have to focus on things as they are. And at the end of the day, if you told someone that the effective tariff rate would be, I don't know, like 12%, whatever it might be at the moment, and that core inflation would be where it is, I don't think most people would have believed that. Most people would have expected it to be higher. So what does that tell you? It tells you that underlying inflation was in fact cooler than you thought going into all this. Again, which is supportive of the idea that you should be loose, bringing interest rates down. At the same time, it's really about the nominal anchor, right? Like the fact that the labor markets are cooling, it just, to me, suggests that consumers don't really have the ability to absorb higher prices. So if a company tries it, what are they going to do? They'll raise prices, people will be forced to allocate more of their household budgets towards that item, and then they'll have to cut back elsewhere, driving down the prices for those things. So that's, to me, a lot of this is just an identity. I mean, whatever doesn't go into P will come out of Q. And so, the fact that nominal incomes are slowing, limits the upside to inflation, in my opinion.
You mentioned lower oil prices, but we're seeing with AI is driving up electricity prices.
Natural gas prices have been moderate, but again, look at household inflation expectations. Look at firm inflation expectations. The Atlanta Fed, for example, still producing data because, and the business inflation expectations series is benign. There's no evidence that inflation expectations among businesses have been exploding, and that's important because those are the price setters in the economy.
So, Neil, how would you explain at the moment? Because I think a lot of people are focused on it. Is it cyclical? Is it structural? And if we've seen a massive step down because of payrolls dropping off the back of cyclical concerns, why are we seeing an increase in slack? That's the tension, I think, at the moment. Why are we not seeing unemployment climb?
We are seeing unemployment
in response to a massive step down in payrolls, a proportional increase in unemployment.
Well, there's probably some supply-side factors to think about, but again, at the end of the day, had the data been released for September, if the Chicago Fed is right, you would have been talking about 3 consecutive months where the unemployment rate rose 1/10, right? So I just keep coming back to this point. We had strong growth 2 years ago, and the unemployment rate rose 0.3%. We had decent growth last year, and the unemployment rate rose 0.3%. And you look at what's happening so far this year, it's likely to be up another 0.3%. And we know that labor demand is cooling. Governor Waller talked about the beverage curve. You're operating on a point along that curve that's where the trade-offs are less favorable. So if you have further declines in labor demand from here, there's a risk of more outsized increases in the unemployment rate. And then look, I do think that we're kind of on thin ice here, right? Because most of the increase in the unemployment rate is really just about job finding difficulty. If you start to see layoffs pick up even a little bit because the hiring rate is so low, again, that'll lead to outsized increases in the unemployment rate. The risk is always, to me, it's always nonlinear, right? The risk with unemployment is always nonlinear in nature, and inflation, frankly, does not move in a nonlinear direction.
Why take that risk is essentially the argument that Governor Waller made 15 minutes ago. Neil, you've been very consistent on the matter. It's good to see you, sir. Thanks for being in studio. I don't think he came to see us, did he?
He came in studio clearly because he saw that Governor Waller was coming.
Can we talk about Gucci right here?
I work for you.
If it's
Are we calling out our clothes today?
If it's a top, John, this is the outfit that did it.
Please.
Let me break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
We have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked, and we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
We still think we're in a bull market.
We've got to accept the fact that we're in a narrative-driven market.
We do wonder if we're starting to get to peak levels of sentiment.
We've got price-earnings ratios which are close to the dot-com bubble peaks.
There probably should be some kind of a pullback. My guess is it'll be lighter than you think.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now, and your scores look like this. Another day of gains, potentially. Up by 0.4% on the S&P 500, up by 0.6% on the NASDAQ. Busy morning already here in the studio. Caught up with Governor Waller of the Federal Reserve 20 minutes ago, making a case for another interest rate reduction at the end of this month.
And he said the one puzzle, of course, is what's going on in the financial markets. But that's not his job. He made it very clear. His job is what is going on with the labor market and inflation. And right now, he continuously sees labor market weakness. He said it's not good, and it doesn't even matter to him that we don't have the recent labor market job report. He doesn't care if he doesn't have it. He's looking at everything else. He says the direction of travel is pretty clear.
At the midpoint for October, we're set up for a really interesting back half. 2 weeks away, we're going to get tech earnings. Going into month end, a meeting between Xi and Trump, and then this meeting for the Federal Reserve sandwiched in between. That's quite an end to the month of October.
And the Federal Reserve may be cutting into a scenario where that meeting could blow up. I don't think it's going to. I think the Treasury Secretary was trying to smooth the market and explain we're going to go for a longer-term truce. But the rhetoric is going to be really, really hot. And mistakes could be made in these moments. So you might have, at the end of this month, higher levels of tariffs when it comes to China, the two most important economies in the world, potentially having a more hostile behavior towards each other, and the Federal Reserve cutting in interest rates to worry about the labor market, even though hawks are still concerned on this committee about inflation.
We've got an interesting 2 weeks coming up. Next Friday, a week tomorrow, we will get that delayed inflation report, CPI, October 24th. If you're just joining us, welcome to the program. Equities near session highs, up by 0.4% on the S&P. A big 60 minutes coming up. We'll catch up with Michael Roberts of HSBC Bank as stocks are edging higher. United Airlines CEO Scott Kirby on the back of his latest earnings report. And the US Secretary of Energy, Chris Wright, as national power costs are on the rise. We begin this hour with stocks rallying as traders shift attention from the US-China trade war to the start of earnings season. Lisa standing by with a special guest. Hey, Lisa.
Hey, John. Yeah, thanks so much. And Anne-Marie was talking about China and the U.S., and there's no one better to talk to than Michael Roberts, CEO of HSBC, a bank, and CEO of the Corporate and Institutional Bank at the region. I'm just curious, given the fact that HSBC, and welcome, is such a central bank in both trade as well as in both China and in the West.
Right.
How significant do you see this latest eruption of trade tensions between the U.S. and China? Does this feel different?
Yeah, no, first of all, thank you for having me today. Look, I think the world has gotten used to a lot of these tariff changes, although certainly this newest round is yet another bit of unpredictability. I think companies have been now looking for different ways to manage their supply chains. We have a survey that we did right after Liberation Day, which I think still holds true today. We surveyed 5,000 clients, so big survey, and they all said, one, all of these tariffs are going to cause a lot of issues. Prices will go up. Two, most of them now are looking at their supply chains. And the word, I think, supply chain has now come to be one of probably the most discussed terms in any C-suite today. And thirdly, they're going to change, and they may even change business models. So this next round, this current round, I think just tells you that they're going to have to significantly change what that is, because 100% tariffs, you can't absorb 100% tariffs. So that means there'll be a greater acceleration to where those new supply chains will be. However, it has been a bit of a whack-a-mole because you have to constantly look at where the next tariffs will come from. And that's been a challenge for many companies. They really have to figure out what is the least vulnerable place they can be or the most tariff-proof place they can be, and how do they then export into the U.S. or, frankly, anywhere to make sure that they can do so as effectively as possible.
How much of the extra costs from tariffs been realized? And not just tariffs, but also the rejiggering of supply chains.
Yeah, so rule of thumb, when I've talked to most people, probably 70-80% is borne by the producer versus the importer. The last 20% now is starting to seep into end buyer, the customer. I think most are saying we can't continue to absorb that much additional costs as the importer or the distributor. Therefore, it will start shifting more and more to the end buyer, the client or the customer. So that there's been I think a strong effort, however, to try to absorb as much as possible. So I talked to a retailer, high fashion retailer, saying, me and the distributor or the producer out of Asia and me as the distributor are absorbing as much as we possibly can. We understand we could do that, but it will come to an end soon.
John and Anne-Marie were talking to Fed Governor Chris Waller and about the balance between inflation and the labor market. And there's this feeling that any kind of inflation is going to be short-lived and the effect on the labor market could potentially be pernicious. Are you seeing that companies, instead of raising prices, laying off workers or trying to revert to artificial intelligence to bridge the gaps?
Not yet. However, there is a lot of cost pressures. I think there's a delay, a lot of investment. I mean, that's the flip side of that, because I do think people want predictability. The companies need to understand where they're going to put down a lot of capital, that capital is going to produce good returns because of more predictability. I've seen slowing of hiring, but not real firing today. And so that's kind of, again, the flip side of that coin. But really, it's the capital and the investments that you're starting to see slow down quite a lot.
Meanwhile, we've heard a lot here at the meetings in Washington, D.C. about a number of themes, AI, which we'll get to in a second, but also this question around credit froth and an AI-related bubble. How much are you getting concerned, akin to what J.P. Morgan's been talking about, of a real turn in the credit cycle or some sort of later innings that give you pause and make you more cautious?
Yeah, look, I do think this is not the first instance of what is inventory financing fraud, which is essentially selling, or using the same bit of inventory to finance multiple times. We've seen that in Europe a couple times as well in the last, say, 9 months. So I am more concerned, and something that we're very focused on. So in fact, we're using technology we developed in our trade business and using that throughout all of our lending platforms now to try to go through and be very specific that everything we finance is good collateral. It doesn't have multiple liens on top of it, which is really what happened at First Brands. It's tough to do, and I think, the fraudsters are getting better at it. So we're going to have to respond to being much better on due diligence. We were not involved, obviously, directly in First Brands, so don't know how much due diligence was done, but I think these type of financing arrangements are going to require much more due diligence, much greater technology, much more specific understanding of exactly what you're financing.
The other aspect has been just sort of how much AI has actually boosted productivity, boosted profitability versus been a real cost center for the most part. Ken Griffin came out of Citadel saying that he's not seeing evidence that AI programs can really make an edge in financial markets. I know that HSBC has been big in quantum computing and has this test. Are you seeing real gains? Are you actually deploying quantitative strategies from quantitative computing on your trading floors?
Yeah, so just for those who don't know, we had a partnership, still do, with IBM. We developed quantum computing really for financial markets, focusing on the bond market. And we use both quantum computing and more traditional computing, brought them together, changed the way we looked at data. There's this thing called representation data that we actually flipped into a more of a quantum computing type of mode. That led to a 34% improvement in our ability to predict a trade. So if you were going to make a trade, we get to understand that trade 34% better to see the matching between buyer and seller is really what it comes down to. So that was very effective. It's an initial study. We did, however, test it on multiple quantum computing machines. We did all the statistical analysis. So we really do think there's something there. It can be used for any traded asset, so any asset class. I think the power that brings is going to give an edge. I don't know how it wouldn't give an edge, but I think it'll be, once we roll it out and others roll it out, there'll be quick adoption by, I think, the industry. I mean, it's the same industry that tries to reduce latency to its, smallest possible amount. So I do think technology does bring a substantial edge.
Do you think it's going to replace traders?
That I don't know. I mean, I think there'll always be humans involved, but I think it'll help traders quite a lot. And I think it'll change really the way traders think about it, because when you have that much compute power and you could really use it, I think today, we use a lot AI, as you said, through algorithmic trading. This will just be one more substantial boost to the power of algorithmic trading that we see today. So will there be less traders? Don't know, but are they going to have powerful machines? Definitely so.
The other theme here, and this is something that comes up in pretty much every conversation, is the debasement of the dollar. And this question of how much the dollar is losing its heft as a reserve currency. Internationally, do you see any signs that people truly are moving away from the greenback?
Yeah, it's a great question. So I happen to be traveling to Asia right after Liberation Day, and I would say that was probably the #1 conversation that I was having by very big, very sophisticated, large holders of dollars. And they were quite focused on this idea of de-dollarization or debasement of the dollar as a reserve currency. And the mere fact that they're talking about it in the terms they were tells you something is different. Now, if you look at where the dollar is today, trade flows, reserves, the primary currency of invoicing for most commercial flows, the markets flows, it's all well north of 50%. It's 60, 70, 80% in all those various metrics. It will take a long time to find another reserve currency. And the other biggest question is, if you're going to go away from dollars, what are you going to do? And what will be that reserve currency that replaces it? There is no other alternative today. And so that's the twin issues that you have, the conundrum. Maybe go away from dollars, but what are we going to go to instead?
To wrap it all up, there is this feeling that the center of finance has shifted. And it's not so clearly in the United States. And it's something that you've been focusing a lot. How do you see the sort of tentacles of finance in terms of where they are flowing from, transforming really over the past couple of years?
Yeah, no, I think there's significant transformation going on. And if you think there was a unipolar world with the U.S. right in the middle of it, still is. And, the U.S. capital market is the most liquid of the world, still the dominant place to trade. However, you need to look at where trade and commercial flows are going, where financial flows are going. I would look between the Middle East and Asia as an example. Substantial increase of flows between those two regions. And they're not flows that are necessarily coming from the West, just being transshipped through those regions. They're actually wealth that is being rechanneled in that region itself. I think you'll see that more and more. I think you'll see Asia, Middle East coming together more and more. And I think you'll have a much more balanced equation. I don't think there'll be as a dominant, source of financial flows that you've seen before. And great for us because we have to be very strong in those two regions. But I do think people need to understand that there's a significant change going on. And those flows will not just go through New York as they used to in the past.
Michael Roberts, thank you so much for taking the time. Really wonderful to speak with you. And John, that was Michael Roberts of HSBC on some of the key topics here and the idea of how much that financial center has shifted.
Hey, Lisa, thank you. Appreciate it. More from Lisa in just a moment, so stay tuned. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Let's cross over to Lizzie Burden. Hey, Lizzie.
Hey, John. U.S. Treasury Secretary Scott Bessent proposed a longer pause on high U.S. tariffs on Chinese goods. This would be in return for Beijing putting off its recently announced plan to tighten limits on critical rare earths. Speaking at a news conference in Washington, Bessent said there's a very good chance that he travels to Asia to meet with his Chinese counterpart, Vice Premier He Lifeng. Elsewhere, Bank of America and Bank of New York Mellon Corp were hit by lawsuits over alleged ties to Jeffrey Epstein's sex trafficking scheme. The lawsuit accusing the banks of knowingly providing financial services that enabled the scheme for years and failing to report suspicious activity until years later. And Apple's been hit with another high-profile exit from its AI division, with the executive leading its Siri search project leaving for Meta. Qi Yang headed the team developing ChatGPT-style features for Siri in a major revamp due next March. His departure adds to roughly a dozen key losses from Apple's AI group this year as Meta continues its big money hiring spree. And that should be my brief, John.
Lizzie, thank you. Appreciate the update. More from Lizzie in about 30 minutes' time. Up next, the morning calls, plus United Airlines CEO Scott Kirby on the back of his latest earnings results. That conversation up next, live from New York City this morning. Good morning.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
NVIDIA is seeing perhaps a much bigger market than previously expected, and that's what's driving their more bullish forecast. What we're starting to see is that the narrative isn't really about the product cycle anymore. The market opportunity seems to be bigger and bigger. There's more application usage.
That was Frank Lee of HSBC looking for 80% upside on shares of NVIDIA. Price target 320. Right now in the pre-market, about 182. Big move. That's what him and the team are looking for. Equity futures on the S&P 500 firmer at the moment, up by a third, up by 0.5 on the Nasdaq. That's the price action into the cash open, 1 hour and 14 minutes away. Here are your morning calls. First up, Citi raising its price target on Micron to 240, expecting AI to boost long-term contracts for chips. That stock is up by 3.6%. Barclays raising its price target on Morgan Stanley to 183, citing its third quarter earnings and revenue beat. That stock inching higher by 0.25%. And third, and finally, Deutsche Bank, raising its price target on United Airlines to 125, citing a higher earnings outlook. That stock doing better as the session progresses. We're down just 0.1% of 1% in the pre-market. Let's stick with United. The airline seeing operating revenue for the third quarter fall just shy of analyst estimates, but did post better than expected full-year guidance. With the latest and with the company's CEO, here's Lisa with more. Hey, Lisa.
Hey, John, thank you so much. Yeah, I would love to welcome in Scott Kirby, the CEO of United Airlines. And Scott, it's really tremendous to see not only what you did, but also the fact that you see significant upside to the fourth quarter. And I want to just start there. Where do you see the acceleration in demand?
You know, actually, you look across the full year, the first three quarters were really good for United in a lot of macro volatility that happened for the aviation industry. That demonstrates the resilience of our revenue diverse, brand loyal business model. But you look to the fourth quarter, it's even more exciting because as the economy is starting to get back to a solid footing, at least for aviation, demonstrates a lot of upside. We think we're going to be able to grow earnings for the full year, even in this environment. So it really is creating value for all of our customers, all the way from basic economy to winning much higher market share in the brand loyal customers. Really is a great resilient strategy when times are difficult, but a lot of upside as the economy recovers here in 4Q.
I guess I want to drill into the economy because, Scott, earlier in the year, it had been the economy section that had struggled the most. I'm just wondering how much it's picking up, whether you've had to discount tickets to bring people in to compete or whether consumers are willing to absorb higher prices and just and take their trips.
Yeah, well, as we've talked about before, Lisa, the airline industries are a pretty good real-time indicator of the economy. And, you know, we saw for much of the first half of the year economic stress and ticket prices were lower as a result of that. But as we got into the third quarter, bookings, at least for future travel, the economy started to pick up, bookings started to pick up. And as we finished the quarter, you know, we've set records each of the last several weeks on most corporate revenue that we've ever booked in a single week, and a number of records, particularly in business travel. Really kind of strong across the board, though. International's come back stronger. The period has extended. Premium is obviously stronger than main cabin. But really, we've seen improvement, you know, as we've moved through the third quarter, kind of across the board on revenue streams, with the biggest strength in the corporate segment.
And that's actually something that we see across the board, particularly because there are all these deals. So people have to actually get on a plane and go see some of their clients. I am wondering, are you seeing international travelers, tourists come back to the United States? I know that was kind of a soft spot and a sort of a tell in terms of the international reputation of the country.
Well, our business is about 80% U.S. point of sale. But we saw a drop in international traffic earlier in the year. It's not quite back to last year's levels, but it has recovered and it's close to last year's level. So we did see a dip, but even that has come back, and we think that's on the trend to getting back to normal pretty soon.
Are you planning to keep capacity pretty much the same? Are you planning to expand or cut back? I know that it was constrained earlier this year just because of demand, but as demand picks up, are you going to bring more planes on deck?
Well, we've been growing, you know, in absolute growth, actually faster, I think, than any airline in the world has ever grown for several years in a row. And that's worked really well for United, and that's been successful. So we really haven't much changed our capacity. We tweak it here and there. The biggest change we're going to make for next year, I think, is actually to reshape the seasonality of the year. You know, one of the things that's happened that's good for our business is this third quarter peak has extended into the fourth quarter. And it's made the fourth quarter actually a better quarter from a margin perspective than the third quarter. And what we think is as that, particularly that international demand has extended into the fourth quarter, there's an opportunity for us to actually fly less in the peak in the third quarter, which will be good for our RASM. But it turns out it's going to actually be good for our cost structure too, because we have to build staffing and infrastructure, everything up to that peak for 6 weeks of the peak summer. And so next year we're going to actually try to reshape our schedule some to lower the peak and let the demand spread across more of the year.
I know earlier this year when we were talking, you said that you do expect to raise prices by, single digits just to compensate for higher costs. Do you see that on track, the same type of price increases, and are consumers okay with it? Are they absorbing it?
You know, this year prices have come down, as we talked about, just, you know, as there was macro volatility, at least for aviation. I do expect them to normalize next year, and I think just over time that you should expect to see airfares grow consistent with inflation is likely what's going to happen over time.
How much do you see staff wage increases also playing into this? The idea that a lot of the people who work for United are also saying, okay, well, things are going up. We want a pay increase.
Yeah. Well, our people are the best in the world, and they deserve industry-leading contracts. Every time we sign a new contract with one of our union groups, they expect and deserve and will be, paid at the top of the industry. So that's built into our forecast. That's built into everything that we're doing. One of the great things that we're doing, though, at United is I think we're the best in the world at managing our real core costs and being more efficient at the airline. We've invested heavily in technology to helps us run the airline better. But like you look at the third quarter, there are a number of airlines that have talked about missing their cost guidance because of storms, and there were storms in the quarter. But we've invested so heavily in our recovery tools that we had, best in the industry cost performance. And we're driving our costs lower, not by taking things away from the customer, but by actually investing in technology that lets us run a better operation for customers and is lower cost at the same time. And that also helps fund investments for the customer. We're spending over $1 billion a year in incremental investments for the customer, but also importantly, investments in our people and having them have the best pay and the best contracts in the world.
Scott, I love saying that you're my favorite economist to speak to because you do have this real-time view of the economy. And right now, what you're saying is kind of flying in the face of the weakness and some of the worries that we're hearing, whether it's from the government shutdown is going to cause disruptions or whether it's the employment picture that people are increasingly worried about. How do you square those two things, this reacceleration that you're talking about, with the weakness that policymakers seem to be so worried about?
Well, uncertainty really is, I think, what drives the economy in one direction or another. And there was a lot of uncertainty to start the year. As we kind of got into the third quarter and some of the macro issues, the reconciliation bill passed and geopolitical situation improved, tariffs settled into having some confidence what they were going to be, we saw that improve. Now, we do now have, new issues, that things that pop up all the time. What's happening with the shutdown could become an issue. So far, it hasn't been. First, the FAA is doing, I think, a great job of running the system. We have our lowest cancellation rate in the last decade, our second best on-time performance. The controllers are professionals. There's not news about it, but the controllers are professionals, view their job as safety, view their job as taking care of the public, and kudos to them. Almost all of them are showing up to work and doing their job. And the first couple of weeks of October hasn't really affected bookings. I think if this goes on for too long, certainly the risks escalate in the economy as it goes on. I think the economy is better than most people think, but it's still tenuous. It's still a little balanced on a knife edge. And we shouldn't have, unforced errors. So let's get the shutdown settled.
Scott Kirby, thank you so much for your time. I really appreciate it.
Thanks,
that was
Lisa.
Scott Kirby, the CEO of United Airlines. John, I'll send it back to you.
Lisa, thank you. Great work. Look out for Lisa's work down in Washington, D.C., tracking the IMF World Bank meetings. Amazing to pair that with what we heard from Governor Waller a little bit earlier, concern about the labour market at the Federal Reserve, paired with United Airlines and Scott Kirby, pretty bullish about the future for this economy, at least for their company.
As well as Delta. They're seeing, and it's not just the premium business class seats, they're seeing demand as well from individuals that are booking economy. So they are seeing a pretty optimistic outlook. And then also when it comes to potentially travel delays, which I still think is this huge pressure point for this administration and members of Congress, right now they're saying they're able to basically muddy along, get through it. They're not seeing massive impact from the government shutdown, even though they obviously want it to end.
Up next on the programme, we'll catch up with the US Energy Secretary Chris Wright as national power costs are on the rise. Plus, Vonnie has your morning movers. Snowflake surging on a new AI partnership with Palantir.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. It's the world's second-largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
The opening bell about 60 minutes away. Equity futures into that firmer, just about by a third of 1% on the S&P 500. On the Nasdaq, up by 0.5. Outperformance on the small caps gives way over the last few weeks. Small caps this morning up by 0.37. As we count you down to that cash open, let's get you some morning movers. Let's cross over to Vonnie Quinn for more. Hey, Vonnie.
Hey, John. Well, it's Thursday, so we have a partnership. Snowflake and Palantir this time reporting an AI analytics partnership. So apparently it's Snowflake's cloud and Palantir's AI Foundry operating system and its AI platform. They're coming together, and if you're a customer of both, there's interoperability. In practice, they say it's going to help you with things like AI order recommendations and also AI connected to supply lines and manufacturing lines and so on. Let's move on. Praxis Precision Medicines. This could be a very exciting one. A phase 3 study on a potential medication has met its key endpoints. Now, this would be to treat what's called essential tremor. I'm sure we all know people that have suffered from this. It's a nervous system condition, and it means essentially uncontrollable tremors. This company is looking for a meeting with the FDA to potentially start that regulation process, and you can see the stock up substantially after those stage 3 results. And then American Battery Technology. Well, this is another victim of a string of alternative energy rollbacks from the Biden-era green policies and supports. This lost a grant, a key U.S. government grant. But the interesting thing about this is that part of what it does is recycle battery materials. And if we're not going to be getting rare earths as much or at all from China, we need to start learning how to recycle battery materials if we still want to have batteries. Anyway, that aside, this stock has been up 260%, perhaps for that reason, in the last month. It's getting dinged today, though.
Vonnie, thank you. Some of the movers to look for going into the opening bell in the pre-market this morning. Let's turn to energy. As the AI chips race heats up, the Department of Energy is fighting to keep electricity prices from skyrocketing. Today, the DOE announcing a $1.6 billion loan to a subsidiary of American Electric Power. The goal is to strengthen grid reliability and, of course, lower energy costs across the Midwest. The U.S. Energy Secretary, Chris Wright, joins us now for more. Mr. Wright, Mr. Secretary, welcome back to the program, sir. Let's just start with giving you some time to explain what brought us to this moment and what the broader strategy is.
Yeah, the broader strategy is to use funds to better the American experience, lower cost of ratepayers, lower taxpayer expenditures. I mean, in short, President Trump got elected to get rid of the nonsense. We're not about climate politics now. We're about energy for the American people. How can we lower their cost of energy? How can we enable AI and manufacturing to reshore in our country? And this program, this loan is a perfect example of that. This is to reconductor 5,000 miles of transmission lines. Existing right-of-ways, existing towers, just put better conductors up so you can get more juice through the same corridors you already had. This is the kind of things that helps American people and American businesses.
Secretary Wright, your department is saying that and projecting that data centers, commercial customers are for the first time ever going to use more electricity next year than households. Is the federal government going to have to step in and help American people, consumers, foot the bill?
Well, the American government's doing everything we can to enable the growth of electricity production in this country. You know, the last administration was about energy subtraction, trying to get rid of things they didn't like and subsidize things that are unreliable, that use a lot of land and drive up electricity prices. So yeah, we're trying to reverse a tidal wave. That's a challenge, but we're gonna do it. And ultimately, AI is not gonna make electricity more scarce and more expensive in the country. It's gonna make electricity more abundant, more reliable, and ultimately more affordable. So we can walk and chew gum at the same time. It's a challenge, but we're gonna get it done.
Well, the administration, though, has purged some clean energy projects. Do you want a whole of energy approach or just specific types?
We care about affordable, reliable, and secure energy. Yeah, I get asked all the time, aren't you all of the above? No, I'm not all of the above, and I've never claimed to be. If you put, it's not just more electrons on the grid. To collect more wind power in the middle of the night in Iowa, that doesn't increase the capacity of our grid. That doesn't drive down anyone's prices. It doesn't allow us to reshore manufacturing or data centers here. The electricity grid's very different than your gas tank. What matters is having reliable power to meet peak demand times. If you're not there at peak demand time, you don't add any value to the grid, you just add expense.
Well, when it comes to reliability, right now, the U.S. government is shut down. Are you speaking directly with senators about when the U.S. government could reopen? How is it affecting your department specifically?
Oh, that is a great question. And yes, I am speaking to U.S. senators on both sides of the aisle. The shutdown is definitely destructive. Everything we're trying to do is lower American energy costs and enable American businesses to build more manufacturing facilities in our country. Losing workers, having uncertainty, having funds frozen or uncertain, that's not helpful. If I can give one example, we are modernizing our nuclear weapons stockpile at the Department of Energy. That's done by about 100,000 contractors. They're not government employees, they're contractors. So they're not gonna get back pay. We've been paying them to date, but starting tomorrow, Monday at the latest, we're not gonna be able to pay those workers. If that continues on for long, they may get other jobs. They're gonna stop their efforts to modernize our nuclear weapons to guarantee the sovereignty of our country.
Secretary
That's not
Wright?
something we should mess around with.
Are you saying you are furloughing employees at the National Nuclear Security Administration, which keeps our nuclear stockpile in check?
We have not furloughed anyone yet, but we will be out of funds by tomorrow or early next week. So we will be forced to do that if this shutdown continues. I desperately do not want to do that, but I have to follow the law.
Well, what does this mean for our national security posture?
Of course, we keep people for emergency services. Our existing nuclear stockpile will be secure and will be ready. But the modernization program to replace our older weapons with new modern weapons, that's a key part of my job. We're just ramping those efforts up. We're just getting momentum there. To have everybody unpaid and not coming to work, that will not be helpful. I'm adamantly in favor of ending this shutdown as soon as we can. Unfortunately, Chuck Schumer's worried more about AOC than America's nuclear safety. That's just deeply un-American. I'm very disappointed with the Democrats. We have a clean CR to just continue the Biden-level spending we had before. It's got bipartisan votes in the House and the Senate multiple times. It's just a small number of Democrats that are standing out thinking they're going to win new subsidies by holding our modernization of our nuclear stockpile hostage. This is deeply irresponsible.
We also have at this moment a current trade war between the United States and China with a lot of hot rhetoric the past few weeks. What is the department doing in terms of sourcing rare earth minerals that come from China? And China right now is trying to really put a chokehold on them.
Yes, that is another critical effort at our department and across the Trump administration. We have made ourselves far too dependent on, as you say, critical minerals and products that come from them, that come from China. We have an across our department and across the administration effort to reshore the mining, the processing, the manufacturing for these critical projects in our country or in our friends, neighboring countries or close allies of ours. This is an absolute critical effort of the Trump administration, but it's going to take time. It's years that dug us in this hole. It's going to take us many months, hopefully not many years, to get out of it. We will achieve it during the Trump administration, but you're right, we're vulnerable today, and that's at a loss to Americans. 4 years of unserious government focused on climate change and energy subtraction, outsourcing anything that consumed energy out of our country. That was deeply destructive. It angered Americans, and it elected President Trump. We need to fix it.
You come from the private sector. Are you comfortable with the president taking stakes, equity stakes, in some of these companies that he deems critical for the U.S. national security?
I am, and let me tell you why. China has used market forces to push us out of all these critical industries. As soon as we invest money, or American businesses invest money, to mine samarium or process that in the United States, they flood the market, drive the prices down, and people can't raise equity capital. They can't develop those resources. China has used manipulation of markets to keep us and the rest of the world out of these critical materials. We need to do things differently to make it so it does work for American businesses to do these things in our country. That means the government providing loans, the government's providing equity capital, the government's providing other out-of-normal market mechanisms to make it happen.
Are you not concerned of distorting the market, though? You're a capitalist. Is this not distortion? It feels like the U.S. government is doing what China does, which is picking winners and losers.
Yeah, we don't want to do this broadly in our economy, but China has effectively distorted the market to push everyone out of these critical industries. The only way for us to get back into those industries is to respond to China's market distortion, and it does require things out of the normal market mechanism. But that's in a narrow area of these critical minerals and materials, but they matter for our national security, and they matter for our economic security.
Mr. Secretary, thanks for making time for us this morning. We appreciate it, sir. Chris Wright there, the U.S. Energy Secretary, on a range of issues, including how to support the energy grid at a time of increased demand, let's put it that way, from a lot of data centers being built in this country.
Tons of increased demand. What they are projecting is, in terms of AI data centers, commercial users are going to outpace what households are using. And natural gas, these prices, electricity, are going to go up. And this is where it's going to become incredibly problematic for politicians in Washington, D.C. The issue with the Trump administration, they say they want a whole of energy approach, but they seem to be picking energy they like and the ones they don't, because they have gutted some clean energy projects.
If you are just joining us, welcome to the program. Moments ago, we also had some economic data. It came from one of the regional Fed business outlooks, the Philly Fed Business Outlook Index, a big downside surprise on that particular read, much softer than expected. Bond yields down off the back of that, just by a touch. We're down by about 2 basis points on 10s now to 4%. 2's down by a basis point at 348. Equities staying just about positive on the S&P 500, higher by 0.4%. That's the setup going into the opening bell, about 45 minutes away. Let's get you an update on stories worldwide with your Bloomberg Brief. Here's Lizzie Burden. Hey, Lizzie.
Hey, John. A federal judge has ordered the Trump administration to pause plans to fire thousands of federal workers during the government shutdown. The order isn't a final decision on the merits of the case, but temporarily prohibits over 30 federal agencies from sending out layoff notices. Some 4,000 notices had already been sent out since last week. Elsewhere, President Donald Trump says that he's authorized the CIA to take covert action in Venezuela to stem what he says is the flow of drugs and illegal migrants into the U.S. He was responding to questions about a New York Times report which says that the agency would be enabled to carry out lethal operations in Venezuela. And finally, Israel has threatened to resume attacks on Gaza if Hamas does not follow through with all of the steps outlined in President Donald Trump's peace plan. Israel's military has been ordered to prepare if the militant group does not disarm and return all the bodies of the dead hostages. Hamas has so far released the remains of 7 hostages, leaving 21 unaccounted for. And that's your Bloomberg Brief. John.
Hey, Lizzie, thank you. Appreciate it. Thanks for this morning. Up next on the programme, we'll set you up for the day ahead. Plus, we'll catch up with Subhadra Chapter of SocGen, looking ahead to a Federal Reserve meeting at the end of this month. We'll break down the latest from the Fed and our interview with Governor Chris Waller. From New York City this morning, good morning. You're watching Bloomberg TV.
You've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive, getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
In terms of inflation, I mean, one of the things, I was asked this question by some people in the AI sector. It's like, isn't this inflationary, all this spending we're doing? I said, yeah, but you're taking it away from other sectors. So those other sectors are seeing less demand. So this is, in my view, a lot of this is a sectoral reallocation. And if that's the case, then the increase in AI is going to be offset by other things.
Thoughtful conversation with the Fed Governor, Chris Waller, on the future of policy, the meeting that's taking place at the end of the month, and the force of AI and all the spending taking place in this country, and whether it complicates the outlook for monetary policy or not. See more on that on Bloomberg.com and on the Bloomberg terminal for the full interview here on Bloomberg Surveillance. From New York City this morning, good morning to you all. Equity futures on the S&P 500 firm are going into the opening bell 43 minutes away, up by 0.6% on the NASDAQ 100. As we count you down, a sneak peek at a week ahead for you is shaping up as follows. Today, a slew of Fed speak, plus an announcement from President Trump at 3 p.m. Eastern Time, so stay tuned for that. On Friday, President Trump meeting with the Ukrainian leader in Washington. Then into next week, tech earnings begin. Numbers from Netflix on Tuesday, Tesla on Wednesday. Plus, we will get that CPI report on Friday.
And that might actually be very complicated for the Fed, because they might only have that in terms of the government data. Because if the government continues to remain shut, which, I mean, we just heard from Secretary Chris Wright, it doesn't sound like they're making progress, no side is blinking, then they're going to potentially have this hot CPI print and not the labor market data to back up the cut. Governor Waller, though, made a very succinct argument as to where he's seeing weakening labor markets outside of the BLS reports. So likely the cut's going to happen, but it's going to be a little awkward.
It's slightly awkward. It's uncomfortable. You might be cutting interest rates when inflation's at 3%. You haven't got clarity on the jobs market, complete clarity on the labour market, given the shutdown and the lack of data. Let's stick with the data. Subhadra Jaffer of SocGen writing the following. Treasuries are in a bit of a holding pattern as we wait for the government to reopen. While there are some alternative sources of data for the labour market, it is hard to get a good read on inflation. Subhadra joins us now for more. Subhadra, good morning.
Good morning.
We will have the inflation data next week. Will we have some clarity once we get that?
Definitely better than what we have right now, which is nothing. So I would say that we need the inflation data. I'm more concerned about inflation read for the subsequent months because the surveys will not be able to be made on time. There's going to be delays for several months, perhaps, on the data front. So that's really going to muddy the picture for the Fed. So as far as the employment picture is concerned, I think that they have a pretty good read. The Fed, especially the regional Fed presidents, talk to all of their constituents. They have a good sense of where employment is headed. I think inflation is a little bit more tricky.
I'll ask a slightly provocative question, and you can give me a serious answer, of course. But does it matter if they have the inflation data or not? Because the way Chairman Powell set us up, he's set us up to ignore it, hasn't he?
For the October meeting, it probably doesn't matter. The December meeting, I'm sure they will definitely take all the data that they have into account before they proceed. The market, of course, is pricing in a very aggressive path of cuts between now and the end of next year. We have the terminal Fed funds rate that the market's pricing in is below that long-run neutral rate that the Fed has penciled in. So that's a very aggressive policy easing without not much by way of data. So the market, I think, is reflecting a relative level of caution and perhaps of a feed-through from this government shutdown into the broader economy, as well as a change in leadership next year.
When it comes to the pass down of what's going on with the government shutdown, most economists just brush it off. When do you think we would see long-term impacts?
You will see long-term, typically what happens is that the impact tends to be quite minimal because of the fact that the shutdowns never last that long. This is a very unusual time frame. Even back in 2013, where you had that sort of debt ceiling deadline as well, the shutdown itself wasn't that long. And last time it was a partial shutdown, so we were getting a lot of the data that we needed. This time around, I think that the impact could be a little bit more profound. Although a lot of that, when the government reopens, you give back a lot of that, but there will be some permanent losses. So it is worthy of our attention.
When Fed officials speak, and Jay Powell speaking, Governor Waller speaking, it sounds like they're talking exactly like they did in the setup to the September meeting. You're saying December's more important. What are you going to be looking at between now and December?
So to me, it feels like it's a little bit of a K-shaped economy, right? Where even in the Beige Book, if you look at some of the data points you got, I mean, luxury spending is still very healthy. The high-end consumer is spending a lot. You're seeing that in general, the upper half of the economy or the consumer is doing really, really well. The lower half is really struggling. So in some respects, the Fed seems to be more focused on that, on the lower half, if you will, on the job front as well as on the broader health of the economy. But financial conditions are extraordinarily easy, so that makes it very, very tricky. Inflation is going to start becoming a concern if financial conditions remain as easy as they are, and the Fed continues to preemptively cut rates. So to me, inflation is still a concern, and I think the Fed's going to have to be very cautious.
It is really peculiar to have the conversations we've had in the last 60 minutes, to hear from Governor Waller legitimately concerned about the step down in payrolls growth, and then for Lisa to speak to Scott Kirby of United Airlines talking up this reacceleration of the economy into year end. I understand the explanation for it. It's just peculiar. Now, when I look at market pricing, clearly we're priced for more interest rate cuts. The 2 years anchored around 350, has been for a while. Tens have come down to 4. It's the longer end that I think is a more interesting conversation. If, as you expect, inflation becomes more of a problem, if I can call it that, what does that mean for the longer end of the curve?
So you should expect the yield curve to continue to steepen as the Fed is cutting rates, but inflation expectations really haven't reflected that concern. If anything, survey-based measures have shown some level of concern, but market-based measures of inflation have remained relatively contained. So the market is very aligned in thinking that maybe you don't see core CPI go above 3%, maybe core PCE stays between 2.5% and 3%. So there's a case to be made that the Fed focus more on employment. But we haven't really, in my view, seen the impact of tariffs feed through into inflation. You are seeing higher goods inflation. You're seeing inflation feed through into certain sectors, but it's not really as broad-based as you would expect.
What explains the spread between survey-based inflation expectations and market-based inflation expectations? What explains the difference?
So to me, I feel like the market-based measures of inflation reflect a level of Fed credibility. The Fed's been very, very credible. So if there is a turnaround in inflation, they're going to actually either pause hikes or pause cuts or perhaps even hike if necessary. So the Fed has a lot of credibility in fighting inflation. So I think that that's part of the reason why the market-based measures of inflation have remained relatively contained. The survey-based measures of inflation reflect a variety of factors. It is the prices that the corporations are having to pay. It's also the fact that energy's been a little bit volatile. Energy prices are going to also be reflected in the survey-based measures of inflation. So it's a bit more of in some respects a better read in my view of inflation.
When you say tariff impact hasn't been we haven't seen the full effect, when will we?
That's a very, very good question, and it's been very, very difficult to answer because you've seen these staggered, tariff announcements. I mean, over the last, I'd say, week, we've been focused on tariffs on China, how that feeds through, and the impact in the stock market. But it's not been really a consistent story, and the average, tariff rate's been somewhere around 15%, which is still a relatively low rate. And we've been kind of delaying some of the tariffs on China. So, it's very, very hard to get a good read on what that impact is going to be.
I'm counting the amount of equity strategists that have come on and said the same thing. David Lebovitz of JP Morgan in the last hour or so. Laurie Calvasino of RBC has been so consistent on that matter too. They're waiting for it to bite. Waiting and waiting and waiting, and they expect at some point in the next few quarters you're going to see corporations have to make a decision.
Have to make a decision. There's also a recent survey by Deloitte talking about the anxiety around shoppers going to the holiday season. Some of these shoppers are saying they're actually going to pull back. And if we see higher prices, say, going into Christmas and the holiday season, will that be the shoe to drop when it comes to tariffs? But how do you even know when the two biggest economies are negotiating right now, and that story has a 2026 potential end date, not 2025?
Could change all again at the end of this month. Subhadra, it's good to see you. Thanks for dropping by. Subhadra Rajappa there of SocGen. Rounding up the programme this morning, plenty to talk about. A Federal Reserve on track to reduce interest rates again at the end of this month. The conversation with Governor Chris Waller teeing up another 25 basis point move.
Teeing up another 25 basis point move. And Jonathan, once again, he said he didn't want to brag, but he is vindicated. Jay Powell basically took his entire analysis and thesis at Jackson Hole, and then that was it. They were off to the races to cut interest rates. Even without the data, they can fly blind for September. I think it makes it a little bit more challenging as we go towards the end of the year.
We certainly want some more data. Coming up tomorrow, we'll catch up with Matt Miskin of John Hancock Investment Management, Liz Ann Saunders of Charles Schwab, Steve Rasciuto of Mizuho, and Mark Haefele of UBS. From New York City this morning, good morning to you all. A special thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey. Wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it, and so far we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
In case you missed it on Bloomberg Surveillance.
We heard from Restoration Hardware, and the RH CEO was on the earnings call dropping F-bombs. And I imagine a lot of people are having similar issues at the moment trying to sell furniture. You're at a different price point. What's your experience this year?
People have less money. You can say still recovery from the pandemic when it comes to inflationary measures. But then again, our line of business is really about human basic needs. It's about the bunk bed when the kids grow up. It's about the chair and table and so on.
Anne-Marie had one final question.
How are the meatballs? And you're lowering the cost of the meatballs.
So I am myself, I'm an intellectual vegetarian. I normally say down here I struggle. I love the meatballs. We actually are running today about 40% of our sales is actually veggie balls and plant balls. And personally, I don't love the veggie balls, but the plant balls is a great exception. But meatballs is part of our legacy, so there you go.
I love your honesty.
Don't miss Bloomberg Surveillance live every weekday.
Bringing you up-to-the-minute news whenever and wherever it happens, I'm Matt Miller at the Circuit de la Sarthe in Le Mans, and this is Bloomberg. All right, looking at some gains. Could be 2 days in a row. Enough of these fluctuations. 30 minutes until the cash trade. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now. Coming up, stocks shake off trade jitters as tech optimism and strong earnings keep momentum going. While the U.S. continues to play hardball with China, global CEOs, including Apple's Tim Cook, meet with Beijing's top trade negotiators. And Fed Governor Christopher Waller comments on the careful cuts that he wants to see, weighs in on the economic impact of AI as well. Danny, what are you watching? It's another day where we have some other great news about AI that's lifting up every day, but we keep putting stocks up. It doesn't matter. I guess it's not in the price this morning, Matt. It was TSMC. The ADR is trading 2.2% higher. They raised their projections for 2025 for revenue growth for the second time this year. They continue to benefit from that spending spree on AI infrastructure. I'm sure like in another couple hours, we'll get another news of some other AI
Absolutely.
deal.
And I'm overwhelmed with pitches for AI guests. I get it. There's AI happening every day. Salesforce expects revenue growth to return to double digits in the coming years, forecasting $60 billion in annual revenue by 2030. And as a result, we can see CRM up more than 6%, Danny, in the pre-market.
A lot to be excited about for tech this morning. Let's get more on TSMC and Salesforce. We're joined by Bloomberg Tech co-host Caroline Hyde. Caroline, just looking at TSMC, again, I'm surprised that this isn't already kind of priced in. It feels like there's already a lot of hype, but TSMC says things are good. The AI hype is real, and we send shares higher.
It's real. And what's important is also they're only increasing their revenue expectations by 1 or 2 percentage points more broadly. But this is just setting the record straight that even with China pulling away from wanting to build its own chips using the Taiwanese TSMC. Remember, TSMC is the leader in the most sophisticated chips when you're thinking 2 nanometer, 3 nanometer, the nodes as well as then packaging. They have just owned the space when it comes to NVIDIA, when it comes to Apple, when it comes to any consumer good as well as your AI accelerator. But they have seen revenue from China, and now that might be pulling away. But really, the CEO managed to steer the market to say, look, even with China pulling away, in a similar echo to what we heard yesterday out of Samsung and others, is the like that even if we don't have that strength of market, we will still be there to grow and accelerate. Look, ASML was with a similar pitch yesterday. Even with China at the moment making 42% of its revenue and it pulling away, they will still see the momentum. The mega trend is what TSMC is calling it. That's why TSMC is up so much this year, why it's worth more than $1.25 trillion if you convert it into United States dollars, and why they're at a record high today.
You know, it's interesting. On the same day that we get a Ken Griffin statement that AI makes no difference for them, right? And it makes no difference for us. Salesforce says it makes a difference to them, but we should have known this. Why is this not already priced in?
Well, Salesforce is saying 100 million is how much they are saving. What I think is kind of a red flag here is that they're having to use their own self as the case study. Yes, they're trying to talk about the work that they've done for PepsiCo and some other key companies, but this is a business that's trying to persuade others that, look, OpenAI and the startups aren't coming to eat my lunch. Software is still in there. We've already got our tentacles into so many businesses. And when we've managed to train up that workforce, they will be able to see the superpowers of Agentforce. This is really, once again, Mark Benioff trying to play the trend, but really convince people that his stock shouldn't be down almost 30% on the year, that actually he can see a return to growth. And the CFO, COO, who's combined role, Robin, she's trying to say that actually they are at that pivot point. By 2030, they can almost double their revenue. But the proof is going to be in the pudding. We need revenue growth to actually go back to double digit, because it did sink off to single digits.
By the way, I am going to be speaking to Citadel's Chief Technology Officer around 4 p.m. today. I'm going to ask him about those Ken Griffin comments, but he also said to me that they are using AI, it just helps with productivity. It just doesn't give them alpha.
No, exactly. Like, I get that it can help them in the back office, but they're not beating people in the market because of it,
Yeah,
which I think
correct.
was Griffin's. You're to do another conference today?
Yeah, because I haven't had enough. I haven't had
You've
my fill.
never said no.
I don't know those two words.
All right,
two letters.
Caroline Hyde, looking forward to your program at 11 a.m. This morning. She co-hosts, of course, Bloomberg Tech. Now, United Airlines said it expects demand for premium seats to drive profit through the end of the year. The company's CEO, Scott Kirby, joined Bloomberg TV in the last hour.
First three quarters were really good for United in a lot of macro volatility that happened for the aviation industry. That demonstrates the resilience of our revenue diverse, brand loyal business model. But you look to the fourth quarter, it's even more exciting because as the economy is starting to get back to a solid footing, at least for aviation, demonstrates a lot of upside. We think we're going to be able to grow earnings for the full year, even in this environment. So it really is creating value for all of our customers.
For more on United, we're joined by Sid Phillip, Bloomberg's chief correspondent for aviation and transportation. Sid, you and I were sitting here last night breaking down these earnings. They looked really good, and yet the shares are down in the pre-market. What's going on?
I think everyone's looking to see what United's going to basically do for the rest of the year, and also they're spending a lot of money on their upgrades and their capex. I mean, they said they're going to spend $1 billion on cabin upgrades and basically improvements next year. I think that's sort of weighing in terms of, are they spending too much on upgrading the aircraft, upgrading the in-flight experience, and essentially there is concern about whether that premium boom is going to keep going.
Because that is a big risk, right? If you have this scenario where they've spent a lot of money and then all of a sudden the cycle turns, are they prepared for any sort of backstop? Have they talked about concerns on the broader macro environment if the feel-good times cease to exist?
Yeah, what if there's a government shutdown, for example?
So far they're saying that there's no impact from the government shutdown, but I mean, we're looking to see as this prolongs how it's going to affect air traffic. I mean, not just United, but across the industry. Air traffic controllers are already sort of calling in sick, and that's sort of causing delays. We could see more of that, and that's sort of a concern across the in terms of the economy and in terms of the aviation industry. As will airports continue running? Will TSA continue to operate?
Can I just, so first of all, we pointed out yesterday that they had the best third quarter for the least cancellations in any third quarter in the history. Plus, you know, you've flown to the Dominican Republic, you've flown to Los Angeles, you've flown back here. How many of those flights were delayed?
Half of them. Half of them were in like monster delays, like 5-hour delays. And they blame weather for a lot of these things. But how much of it is also just like there's a government shutdown and things aren't functioning as smoothly as they should be because of that?
I mean, we've seen instances of it. Like last week, we saw instances where Chicago was sort of having staffing controls, and that was sort of causing delays. We've seen instances in Dallas where delays have been caused because of air traffic control staff shortages. And so it is across the board, and it isn't very prevalent at the moment, but the longer this goes on, that's probably going to increase, and we're going to see more impact on the ground.
I'm going to Austin this weekend, so I'll get ready for even more delays and even more time at the airport. Sid, thank you so much for your reporting. Bloomberg's Sid Phillips. Now, elsewhere, global CEOs, including Apple's Tim Cook, met with China's top trade negotiator as tensions simmer between Beijing and Washington. Bloomberg senior editor Mike Shepard joins us for the latest. Shep, what do we know about this meeting and what was discussed?
Well, we don't know what happened behind closed doors there, but the timing of this get-together is unusual, mainly because of the rising tensions between Beijing and Washington over trade, and the fact that it's coming less than 2 weeks before Presidents Donald Trump and Xi Jinping are set to meet to try to sort out this growing list of differences between the world's two largest economies. And companies like Tim Cook's Apple have so much at stake in all of this. China is a market that they have been betting on for for years, but now the Trump administration and even its predecessor, the Biden administration, have been pushing companies to maybe de-emphasize, if not decouple altogether from China over national security concerns and economic competition concerns. Earlier this week, ahead of this meeting that Tim Cook had with He Feng, Apple made two announcements that were curious. Tim Cook, on one hand, pledged greater investment in China. Yet on the same day, Apple was also unveiling plans to produce its home hubs and some robotics products in Vietnam in a pivot away from China. So, Danny, this signals that companies like Apple are really at this crossroads caught between two economic superpowers.
All right, Mike Shepard, thanks so much for joining us. Mike Shepard out of Washington, D.C. Earlier this week, the IMF warned that the global economy is showing signs of strains from sweeping U.S. tariffs and protectionism. Bloomberg's Lisa Abramowitz is at the IMF headquarters, also in Washington, for the annual fall meetings, and she's there with the managing director, Kristalina Georgieva. Lisa?
Thank you so much, Matt. I am here with Kristalina Georgieva, the managing director of the International Monetary Fund, at a time when the world leaders are all coming together. We spoke back in spring, and you seemed just a little bit more concerned. So did everybody here. There seems to be a more optimistic tone. Why is that?
Because since the spring meetings, we have seen the world economy being quite resilient and, very important, we have seen countries acting responsibly towards their own interests and the interests of the world. Let me unpack this. One, we have upgraded our growth projections since April. Why? Because performance across the world is quite strong. Why is it strong? Because the tariff shock from the United States is not as dramatic as we feared in April. In April, if you recall, the announced tariffs were 23%. Today, U.S. tariffs nominally 17.5%, but what is being collected is somewhere around 9%. So smaller shock from the U.S. Two, what did the rest of the world do? With the exception of China and initially Canada, that retaliated against the United States, the rest of the world said, no tit for tat. We are not going to engage in retaliatory action. So we have 191 members. 188 of them decided to trade by the rules that exist. And the third very interesting thing is, you now see the value of strong fundamentals. Countries have built good institutions, they have built good policies, especially in the emerging world. Now we are seeing the payback from that investment.
So is this the reason why you think that it's legitimate for the market to be looking through some of the recent flare-up in tensions between the U.S. and China? Because ultimately trade keeps going, and the world has sort of shown that it isn't really willing to escalate to that degree.
That is exactly the reason why everybody's calmer, even if China-U.S. tensions go up and down, because there is no spillover. But let me say this, we shouldn't be complacent. What we see is that Chinese goods that used to come to the United States are now redirected to Asia and to the European Union. If these recipients of Chinese goods feel the heat and decide that they too should impose tariffs, we may still have the risk of a trade war moving from one place to another. So our message to everybody is be calm, and to China, be careful. Do not provoke other countries to see you as a threat to their economies.
You talk about emerging markets and the resilience that we've seen there. You talk about the potential lack of resilience in the developed world because of the fiscal overhang. Are you starting to see EM-like dynamics in the developed world?
When we look at the prospects for the world economy, they're underwhelming. Growth is slow, debt is high. And who leads on the debt front? Advanced economies. They have borrowed to meet the needs of people during COVID, when we had the shock from Russia's war in Ukraine. Now they need to pull back what they're providing as support, and it is very difficult. People like receiving, they don't like losing what they have got. So we see everybody recognizing that that needs to go down, that fiscal consolidation needs to take place. Here in the United States, Secretary Bessent says we need to get to 3% deficit. But acting on these intentions is hard. Where I want to shout bravo to Italy. Traditionally, Italy was a country that was seen as having real difficulty to tighten up. Now they are very likely to go below 3% deficit next year. So there are some bright spots. Greece is a fantastic story. There are some bright spots, but still bright spots on a dark horizon.
Well, and they had to get to a pretty dark place before they got to that bright spot. And I do wonder, I mean, how much it's screaming into a void, you know, reduce your debt and everybody wants to keep getting their benefits. But I do wonder whether you see the ramifications of this in the price of gold, in this conversation that we have here about the debasement of the dollar. Do you think that those threats are real?
The price of gold is going up because uncertainty has shot up and it is staying very high. What do you do at a time of uncertainty? You try to anchor yourself in something that has proven value. When we look at the dollar, over decades, the share of dollar in reserves globally has gone down somewhat, mostly because other countries have presented a good alternative, but they are all medium-sized countries. Australia, Sweden, Switzerland, even Eurozone is not that big to present an alternative to the dollar. And we need to remember, people go for the dollar because of the depth of the capital markets in the United States, the liquidity, the size of the economy, the productivity of the American worker, which is unmatched in other advanced economies. So yes, it is likely as the world becomes multipolar, it is likely to see this trend, but it is a slow process.
I also want to ask you about Argentina. The U.S. recently had this $20 billion swap line. How is the IMF involved in that effort, if at all?
We work hand in hand with the Argentine authorities and with the partners of Argentina. First and foremost, U.S. Treasury, because of the size of their support, but also the World Bank, the Inter-American Development Bank. And we do it because we see a genuine change for the better in Argentina. Over the last 2 years, what have we seen? From negative growth to 4.5% this year, and this is slower than last year. Inflation from triple digits down to 28%. Deficit gone. Instead of it, there is surplus. Very important. Poverty trending down. That means that there is something happening in Argentina that is good for the future of Argentina.
If Javier Milei does not win the election, do you still have that optimism?
Well, he will be there. He will be the president for some time to come. And I think that there is a still fairly strong support in Argentina for getting the country to be a normal economy in which regulations are meaningful and for purpose. There is a very big regulatory house cleaning that is taking place in Argentina. So I expect that even if we are in a somewhat different place, and frankly, we don't deal with politics. It is for the people of Argentina to decide. But when you look at the strength of the economic position of Argentina, it's good to sustain the country going on that path.
Kristalina Georgieva, thank you so much for taking the time. Always a pleasure to speak with you. That was Kristalina Georgieva, the Managing Director of the International Monetary Fund here in Washington, D.C. Matt, Danny, I'll send it back to you.
Sending the message of calm. Lisa, thank you so much. Bloomberg's Lisa Abramovitz speaking with the IMF's Managing Director. A quick look at futures this morning. Up again this morning, very much so matching my jacket. I guess I picked the right outfit today. Up for a potential second day with some of the volatility in yields easing out. There were some bad numbers from the Philadelphia Fed index this morning. We started to get back down to 4% for the bond market. That has ceased. We are up mostly with tech, Matt, thanks to TSMC, thanks to Salesforce. The AI megatrend is still alive and well, says TSMC.
I will say you're going to see a red arrow if you look at bonds today,
True,
right?
yeah.
Price down, yield up, and that Philly Fed number gave us a really sharp reversal because we'd been coming down to the lows on the 2-year, right? We were at 348, and now we're back up to 350 on the 2-year. The 10-year not moving, well, neither moving very much. It's just that if you look at the GIP chart,
right.
Here you see the very sharp reversal. So definitely a space that we want to keep our eyes, our collective 4 eyes, Danny, and then all of our viewers as well, trained on. Coming up,
many eyes.
Robinhood's Chief Investment Officer, Stephanie Guild, shares her market outlook. She's bullish on cheap tech, if you can find it, defense, and regional banks. This is coming up next.
And happening right now, Fed Governor Christopher Waller sitting down with Bloomberg's Tom Keene at the Council of Foreign Relations. Stephen Myron, Governor Myron, hitting back at Waller's insistence for 25 cuts, saying 25 basis points of cuts is making adjustments slower than need. Will Waller respond? You can watch that conversation live go on your terminal. This is Bloomberg.
That view was echoed in the Federal Reserve's recently released Beige Book, which is a survey of business contacts. The consensus view across the country is that while consumer spending inched down,
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television. The belief for climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Let's get now to high interest and look at what's making headlines around the world. Israel and Hamas are clashing now over the return of dead hostages. Hamas says it handed over all the bodies that it can locate and reach in the deep rubble of Gaza, while Israel insists it's still owed at least a dozen more under the U.S.-backed ceasefire deal. The dispute comes as the fragile truce enters its next phase, with questions mounting over reconstruction aid and the future security of the Gaza Strip. Billionaire Paul Singer's Elliott Investment Management is raising billions of dollars in new cash as the hedge fund readies a war chest for new trading opportunities. The firm is going to take in up to $7 billion that will need to be called as needed, a private equity-style mechanism the firm has used in the past to invest gradually in emerging opportunities. And billionaire investor Ken Griffin, we were talking about this earlier, he says generative AI has not helped hedge funds beat the market and remains overhyped for finance. Speaking at the JP Morgan Robinhood Investors Conference, the Citadel founder said the technology boosts productivity but still falls short at finding alpha, and it won't trigger sweeping changes across the industry anytime soon.
Let's get a quick check on futures because everyone is excited about AI, even if Ken Griffin isn't. We are higher by 0.5% after TSMC talked about the mega trend of AI alive and well. We're up by 1/3% for the S&P, Matt.
Let's take a look at some of the other movers on our radar and the I can't speak this morning.
That's okay.
It's
Speaking's
tough.
overrated.
I won't have to soon enough because a robot will take my job. DoorDash customers in the Phoenix area may soon have their orders delivered by an autonomous vehicle from Waymo. DoorDash shares jumping on the news of this new partnership while Uber shares are down.
This to me is kind of sad, because we've created this economy where so many people have had to change and become gig workers, whether it's delivering for DoorDash, driving Ubers. I look at this news and I think, okay, we're also taking those jobs away now. We're going to be replacing those jobs too. What happens to this labor market?
Yeah, well, eventually we're going to sit on mechanized chairs drinking ices on the deck of a ship.
The universal income.
The universal basic income.
Yeah, exactly.
I think this is interesting in another sense, and that is I heard on surveillance radio this morning about people ordering in. It's almost half of all eating is done by ordering from out. This came in a Torsten Slok email, and now everyone's talking about it at the water cooler. So I never eat out.
I do maybe on the weekends, but I wonder if it's also just like we got so used to ordering things at COVID. We all got super lazy, and we decided that that's how we live now, and we will continue to order in, even if some incomes are starting to get stretched.
All right, HPE also delivered a disappointing profit forecast after ringing the bell yesterday, reflecting a margin crunch in the AI area. The company said it's planning to cut jobs as part of its integration with Juniper Networks, but the shares are down almost 8% in the pre-market.
We also had JB Hunt reporting better than expected earnings, citing better cost controls, and we will get more on those results later this hour with Lee Klasko of Bloomberg Intelligence, with shares skyrocketing up 15.6%.
Less than 4 minutes until the opening bell. Robinhood's Chief Investment Officer Stephanie Guild joins us next. Could be a day of double gains. This is Bloomberg Open Interest.
Hey, I got her a little something. A little something, Dad?
Oh, hi. Walt rolled his 401k accounts into an Empower IRA and planned for times like this. So I say, let a Gramps be a Gramps.
Okay, just promise me it doesn't make a lot of noise.
Starts in Sydney and in Tokyo. Get ahead as the global trading day begins. The Asia Trade, weekdays only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show.
Do you know what to tell people about what the tariffs are going to do on the United States economy and the investment environment, or is it not clear yet?
If you look at the impact of the tariffs, they were much more significant and broad than I think the market expected. looks closer to 19% on balance versus 2 and change last year. So effectively, it's a 20% increase on 10% of household goods that are imported into this country.
And do you think it's going to lead to a recession?
Well, we think that it's going to impact both inflation and the economic growth scenario. So we were coming into yesterday expecting the real economy to grow at 2%. And inflation to be closer to 2.8%. If you just go through the math, it would suggest there's probably 1 to 2 points upward increase on inflation and a similar amount on economic growth. So it could put us in a position where we're teetering.
So the tariffs will likely depress the GDP growth rate and increase inflation. So what's the advantage of tariffs?
From our standpoint, we have a hard time seeing the benefits of tariffs. They do tend to be inflationary in the short term. As you're pointing out, the longer term impact on economies is probably the greater downside.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. We have had some amazing market gyrations in the last few sessions, kicked off by concerns about the trade war that President Trump yesterday acknowledged in those words with China. However, we closed higher, and now we're looking at futures gaining as well. So we could have a little bit of stability back in this market. S&P futures up, NASDAQ futures gaining, Russell 2000 futures up as well on this Thursday morning. You've got the Susan G. Komen Foundation ringing the opening bell at the NASDAQ. Just to point out, it is Breast Cancer Awareness Month, so they are all wearing pink and trying to raise awareness there. Down at the NASDAQ, you've got an Asian fintech company, Owl Ting, ringing the bell, and they're doing a direct listing on the NASDAQ. The ticker is OWLS. Danny, what are the stocks that you're watching today?
I'm watching tech and AI, as we are literally every single day, because it's another day where there's positive news that's juicing this equity market and tech stocks in particular. TSMC, the ADRs, though, I have to say they're trading off of what we were in the future session here at the open, only up 0.6%. They were up more than 1% in the pre-market trade, but it raised its projection for 2025 revenue growth for the second time this year. They keep benefiting from a spending spree on AI infrastructure. All right, there we go. Now we're up by more than 1%, Matt.
All right, Salesforce as well is an AI story. It expects revenue growth to return to the double digits in the coming years. It had dropped below that, obviously, and now it's got this agent force, I think that's what it's called, that it hopes is going to boost revenue to $60 billion annually by 2030. Citi strategist Beata Monte warns that the equity bull market could be headed for a choppier phase amid a complex path to a resolution of the U.S.-China trade dispute. That is indeed what we've seen over the past couple of days. Worries about rare earth magnets need to lead to threats about less recycled oil, cooking oil. Joining us now to discuss is Stephanie Guild, Robinhood Chief Investment Officer. I didn't properly illustrate the picture, but it's the rare earths and then the soybeans, I think, is what made us want to buy
rare earth cooking oil,
less recycled cooking oil. In any case, it's really driven these market gyrations. Yeah. So how does this get resolved?
I don't know if it does. I mean, I think China's the only country that can actually stand up against the U.S., right? It's why the other ones haven't. I saw the other day that China had put that announcement that they had put out there that had gyrated the markets in their own word processing system. So you couldn't actually read it if you were using any of the ones that we use. And it just shows you how independent they've tried to become. And it's why I think they have leverage here. The only, cooking oil, I guess, is the leverage point. Yeah. But it's why actually we've been invested in China tech in our portfolios in Robinhood Strategies, because we we think that's that's a place that can give the U.S. tech market a run for its money.
The bulls for U.S. equities, though, would say, look at their earnings this week. They've been really strong, banks and United and otherwise. AI trends still going strong. We were just talking about TSMC. Does it surprise you that trade still has the ability to rock this market and cause volatility, despite the fact people looked at Trump and just said he'll always back out and maybe don't necessarily trade on it? The fact we are still trading day to day on the latest trade machinations?
Yeah, I think it's just because of where we are in terms of like the valuation cycle. Like it is, you have to see a much bigger, everyone expects high growth from the tech sector. Everybody expects, I think, things to go well. Like JP Morgan had good earnings. It didn't move materially higher that day because the expectations are already there and they are everything. We also have a government shutdown. Like there are things to worry about. And the one area that I'm actually watching very closely is like the credit markets and some of the things that are starting, like Zion's provision.
The great cockroach debate.
I actually agree with that.
So what do you think? By the way, Danny got deep into that.
I did get deep into
yesterday.
it. Well, there was this whole argument. I talked to Mark Lipschultz of Blue Owl, who was like, I'm not the cockroach, you're the cockroach, saying it's not private capital, private credit, it's public credit. But maybe it's credit as a whole that has an issue, and we shouldn't be making these distinguishing factors.
Is it a problem?
I mean, if you look at the details, like tons of private money has flowed into private credit, like tons. It was all private banks could talk about. And there had to be some point, a space where the due diligence got a little light. Let's just get this money invested. Like that's what I'm worried about. I'm worried about it in the private credit market, private equity markets as well, in certain spots, not everywhere.
I have to say, I was looking at this comment from Mark Nachman, the head of global wealth at Goldman Sachs at GSAM, who basically said that so much money was flowing in that there had literally been IC meetings. He said, of course, not Goldman Sachs's, but investment committee meetings where the IC got overruled because they were like, it doesn't matter how good this deal is, you have to put the money to work. If that's happening, Stephanie, what's the logical conclusion to that? And is it just a private markets issue, or do we need to start worrying if you're invested in public markets too?
No, I mean, I think there always will be some sort of follow through somewhere in the public markets. So far, the issues in the credit space have been, everyone's blaming fraud, which brings it back to due diligence. It's been more in the auto sector. So I just wonder if there's like that consumer, you couldn't buy a car during COVID, like everyone jumped into used cars, and that's kind of where you're seeing it so far.
So much money in private equity that someone's making a bid for Papa John's. Is
that a sign at the top?
I mean, it's like if you have a choice of where to order pizza.
It's cheap.
Is that?
Hey, Blackstone bought Jersey Mike's. That was exciting.
But
Jersey Mike's is delicious.
I mean, if you can order it through OpenAI and then your Waymo driver gets it to you, like.
Hey, I teased that we were going to ask you about cheap tech. Is there any? Worth buying?
I mean, we've found some. That's where, I mean, it's riskier for sure because it's not like the most obvious places, but I still think it's kind of the picks and shovels. So NetApp is one name, for example, that's priced at like 14.8 times, which is a discount to the S&P, discount to obviously the sector. It's under the radar. Only 30% of analysts have a buy rating. It's not, as I said, not for the faint maybe of heart, but it feels like there are some names that are under the radar.
Well, I was talking to one of our in-house quant strategists, Stephen who basically said he had built this strategy that's looking at unprofitable companies that have momentum to becoming profitable. And he said a lot of it was in unprofitable tech. There's been so much noise this year made about how that sector is outperforming. Are there actually maybe some gems in there, to your point, that yes, it's unprofitable now, but seems like they're improving?
Yeah, I mean, I think that's always the case. It depends on where they're focused. I think, but if they're able to create some sort of niche area, I mean, you could also say CRM is cheap.
True.
Right? Because it just hasn't delivered on, like they haven't leveraged as much as kind of their customer base.
Do you like CRM after the earnings yesterday?
It feels a little bit still like a show me stock to me because obviously the stock is up, but it's been doing nothing for a while and they just keep like saying, yeah, it's coming. So now for us, it's a show me stock, but we liked it for a while. We just didn't make any money in it. So we just kind of said, well, wait and see.
What about software in general? I mean, does AI just eat software?
Maybe. I don't know. I think AI still has things to improve on. I don't know. The mention that you said before in finance, like I still think a human plus help from an AI is like a better balance than just completely trusting it.
So you're not rolling out like AI alpha for Robinhood users, basically. We're not there yet.
We definitely have AI things on the way, but it hasn't been like, you know, make a decision for you.
Right, fair enough. Stephanie, thank you so much. It's good that we still need humans. Stephanie Guild for now. Stephanie Guild of Robinhood, thank you so much. All right, a check on your equity market this morning, 8 minutes into your trading day, and we are moving higher by 1/3 of 1%. 315 names moving higher, as a matter of fact. NVIDIA, top of the pile. It's still the AI, still chip stocks leading us higher. Salesforce is up there too. Stephanie was just talking about them. She says it's a show me stock. Those shares up 7.8% after an earnings yesterday. To the downside, it is Apple leading the pile for the negative stocks, Berkshire Hathaway, Marshall McLennan, and Walmart too. Walmart down 1.3%. Let's take a look at some of the sectors, what those are doing this morning. Would it surprise you that communications and tech is at top of the pile? Probably not. Thank you, TSMC, for saying the mega trend is still here. Financials looking a little bit weaker despite those really strong earnings we've had earlier this week from the banks. Maybe not huge moves off the back of those, but elsewhere you do see most sectors into the green. Again, the only negative one this morning, Matt, is financials, and we're up 1/3 of 1%.
All right, interesting that financials, because earnings have been so fantastic, but I guess buy the rumor, sell the news has been a theme. Coming up, more on TSMC's bullish outlook, further fueling, can you believe it, continuing to fuel AI optimism. That's next. This is Bloomberg Open Interest.
Now, your co-headquarters is in Miami. You spend a lot of time in Miami and Florida. People often think the hedge fund world is centered in New York or London. Do you have enough access to talent and information in Miami, or does it make a difference anymore?
Information is, everywhere at this point. So information's not the challenge. I think young talent tends to want to be in New York. I'd say 75-25, just because the ecosystem of young people and social reasons. But we are having more big hedge funds, obviously Citadel being the most prominent, come down to Miami. And that causes management teams to increasingly come through Miami. So it is a perfectly good place to run a hedge fund, and there are many good hedge funds down there.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg. Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
headed for a second day of gains. In fact, we are now above the levels of where we were on Friday when Trump had that tariff announcement. We have shaken off the nerves, with Scott Besson saying a meeting between the two world leaders is still on for this month. Shares up by 1/3% for the S&P, while tech leads. Let's get you some top calls in the analyst action we're looking at this morning. First up, Lululemon getting downgraded at Bernstein. The analysts there say U.S. momentum is slipping despite a temporary lift from its Amex promotion. Those shares down 0.7. The firm says that growth is hinged on an untested strategy that won't show results for another 6 months. Next up, T-Mobile, that gets upgraded to a buy at Wells Fargo, and it's being called the firm's top telecom pick. They highlight the network's leadership, steady market share gains, and a strong outlook for free cash flow. Those shares up 1/3%. Tesla was initiated underperformed by BNP Paribas Exxon, citing valuation concerns. The firm sees its AI ventures like Robotaxi and Optimus driving 75% of Tesla's value, despite generating 0 sales. Tesla will report its earnings next Wednesday. Those shares are down 0.2%, Matt.
All right, really interesting moves. Now let's get back to TSMC, posting an almost 40% jump in quarterly profit. Another sign, if you needed one, of robust AI spending. Joining us now is Mandeep Singh, Global Head of Technology Research for Bloomberg Intelligence. We get it, dude. We get it. I mean, when these big hyperscalers are spending 60% of their free cash flow, understandably, it's going to benefit a company like TSMC.
Yeah, and look, I would draw attention to 2 factors. One, like, everyone is concerned about what happens to China sales. Even if China was to open an internal foundry, they still can't match, TSMC when it comes to the manufacturing capabilities. So I feel like there's a bigger threat to NVIDIA from, China doing something on their own with accelerator chips than it is to TSMC on the manufacturing
Or China
side.
doing something with Taiwan, right?
Well, that's a geopolitical angle where if something was to really go bad, then yeah, all bets are off in terms of what happens to Taiwan. The other thing I would mention is just, there's a lot of debate right now in terms of what OpenAI is doing with NVIDIA, with AMD, with Broadcom. Well, whether it's ASICs or GPUs, it doesn't matter for TSMC. Even if, let's say, Broadcom is more successful with OpenAI and Google, TSMC benefits. If it's GPUs, then also TSMC benefits. Whereas in the case of NVIDIA, you need GPUs to be the accelerator that everyone uses. So I feel they're somewhat more insulated when you compare them to NVIDIA, and they have a steadier growth path, and that's what shows up in their earnings.
So for our purposes, right, here in New York, as journalists, we're like, yet another bullish headline on, AI spending. But for you, for someone steeped in this, does TSMC actually look like it's being pretty conservative here?
They are, and they have guided to mid 40% AI growth till 2029. So clearly, when I look at that base growing at, almost at a 40% CAGR, it tells you they will not have the fluctuations that an NVIDIA may have. Yes, NVIDIA grew triple digits, but there is a risk that growth can decelerate sharply. In this case, you will see a steady compounding from a company like TSMC.
And maybe the price action currently makes more sense off the back of that, too. The fact that we are unchanged this morning versus in the pre-market when it was up a lot higher. But is there not some tension there? The fact that they're being conservative, but you also have a CEO coming out being extremely bullish saying, yeah, the mega trend, it is here. We have conviction that it will last.
Yeah, and look, in their numbers, when you parse through that 41% growth, 22% wafer growth, 15% ASP growth. So everyone is paying more to TSMC for manufacturing the accelerators because they are the only ones who have the CoWoS capacity, and they have the best yields. I mean, even an Intel is a customer of TSMC on the foundry side. So clearly, I just feel like the moat is a lot more stronger, and there is no other place to go.
In terms of the chances for Intel to grab some of this business, I keep thinking about it, but it hasn't materialized. I know it's early days. Do they have a foundry business? Do they have a chance in that business?
I mean, the government really would have to push one of these hyperscalers to, source some of their capacity from Intel. Until that, happens, I just feel like, by preference, TSMC will always get that nod. But if it comes down at the government level, then clearly there is a chance that Intel will get some of the business.
Mandeep, you're one of the best. Thank you so much for joining us. Mandeep Singh of Bloomberg Intelligence. Elsewhere, happening right now as we speak, Fed Governor Christopher Waller in conversation with Bloomberg's Tom Keene at the Council on Foreign Relations, talking about keeping steady policy to keep yields in. Let's take a listen.
Not less. A huge body of America doesn't agree with that. And to your point on innovation, with a Nobel Prize, a celebration of the last 48 hours of Schumpeter and McCraw's prophet of innovation, this new innovation, the gains are going to go to a narrow group, or do you think they will, this is a cliché word, they will diffuse out across America?
Well, the history of technology is that they do diffuse. I mean, one of the things I pointed out in the speech yesterday, if you look back to Karl Marx's theory of capitalism, machines, robots would replace labor to produce all the output. Everybody would lose their jobs, be unemployed. There'd be this mass army of the unemployed. There'd be a social revolution. Capitalism would die, and we'd have a socialist utopia. That doesn't happen, right? I mean, when capital goes up, machines and technology go up, it makes labor more productive. And firms like productive workers. And that's why they want to hire them, because they don't want to keep their output constant. They want to produce more. And they need both of these things to produce more output. This is what we've seen in the history, certainly of the U.S. in the last 200 years. The capital stock in the U.S. is 7 times larger than it was in 1950 in terms of machines, equipment, everything. The unemployment rate is exactly the same. So employment grows with technology. It doesn't go negative with it.
But to the president's point, and arguably his election, a huge body of America feels let down. We had productivity, we had capital deepening of an extraordinary amount, and the jobs went to China. That's his theme.
Yep.
With AI, are we going to replicate that in some unknown way, and the jobs are going to go to you name the place?
Well, even with the China shock, total employment in the U.S. has grown ever since the China shock. It hasn't gone negative or fallen. It's just go look at this, the employment rate. Go to Fred, my favorite data series. Pull up employment. Look what it does. It just goes up. So, yes, there are reallocations. Jobs get lost and they go somewhere else or they get eliminated. But that's my point. New jobs, new things came up. People reskill, go into new areas. So when the China shock was hitting manufacturing, we had a whole IT, software, phone, technology revolution, information technology that created thousands and millions of jobs.
Is Fred an unfair advantage for the St. Louis Fed? Do they wake up every day different than any other bank?
Fred is one of the greatest gifts from the Federal Reserve to the planet.
There we go. Ma'am, please.
Hi, Ginger Cutler. I'm a term member at CFR. Governor Waller, just what you just said about how unemployment is the same as it was in 1950 and the China shock didn't really necessarily affect employment. I guess I want to harken back to what you said about where wealth is concentrated in the hands of Americans, right? And how you said that the bottom 60% of households own 15% of wealth and 45% of spending. I'm curious how that figures into what you just said about unemployment being the same as it was in 1950 and the China shock ultimately not really having an effect on the labor market. I'm curious how inequality factors into that.
Yeah, so like I was just trying to get at with employment, you get sectoral shifts. Some sector goes down, some other sector goes up. In my speech yesterday, I said, look, when automobiles came up, if you were making saddles or wagons, your jobs were going away. But those same skills got transferred over to producing chassis for cars, making car seats. The same skills, they just had to transfer them. So those jobs went away, but other jobs came up that took their place. That's why you can't just look at one sector and say, oh, that's going to kill the entire economy. I don't believe that's going to happen with AI either. In terms of wealth and income inequality, this has been an issue in the U.S. for the last 40, 50 years. There's been a tremendous increase or a reasonable increase in wealth inequality, income inequality. For me as a policymaker, I have one instrument. I can't deal with inequality. It's really not in my toolkit. I can't say, here's an interest rate for this group, as Tom was saying. I can't say, here's an interest rate with that R-star and here's an interest rate with that R-star. That's not in my set. I have to look at the aggregate. It's really my only choice. Mm-hmm. Can I look at these discrepancies and think how I might want to lean one way or the other? Sure, I can. You know, we kind of got criticized for that before with our last framework, that we were kind of leaning a particular way. There's nothing wrong with it. It's just there's very little we can do about it. And that was my issue with our last framework. I could care about this, but there's very little I can do with it for particular groups.
I think we have a question here in the digital world.
We'll take the next question from Chris Thomas.
Good morning, Governor Waller. Thank you for the time today. Ex-Intel, ex-McKinsey. Now I help global companies think about their global footprint and where they put advanced manufacturing facilities. And the constant refrain is that no matter how high the tariff, the U.S. is just completely uncompetitive, and now it's the most expensive place in the world to do business, especially if you're building something. To what extent does this matter for the growth and success of the U.S. economy, and is there anything that could be done about it? I've heard that even if it's 100% tariff, it's still cheaper to manufacture in Taiwan or Vietnam or Japan or Korea or China than in the U.S.
Yeah, I mean, this is way outside my wheelhouse, I have to say. You know, trade policy, you know, particularly worrying about one sector over another, manufacturing versus others. This is just something I can't make those decisions. That's what the president got elected to do, and he's following through on his promises. Whether you get stuff onshoring or not, I don't know. We'll see. We did learn something with the pandemic, that supply chains stretched across the globe are pretty fragile. And there was a lot of emphasis on getting nearshoring, maybe not onshoring, but nearshoring as a result. Over time, you know, if tariffs were big enough, I'm pretty sure you'd bring your factory back. There is a price at which you will bring it back. It's not infinite. So that's what I don't know. We'll see how this all works out, whether there's a lot of incentives to bring stuff back or not, or whether the people that, you know, you bring these jobs back, whether people want to do them or not. I mean, in the U.S., we've moved into much more of a service sector mentality, and the idea of screwing lug nuts on a tire for 8 hours a day is not something most Americans typically want to do.
Well, I'm not going to ask you about bananas and tariffs, because I don't think we're growing bananas. Sir, over here, please.
Hi, Andrew Watrous with Morgan Stanley. Governor Waller, thank you for your comments. I want to ask you to say a little bit more about what you are intending to convey with the phrase "to a more neutral stance of policy." In a sense, if you're restrictive, just cutting once is moving to a more neutral stance of policy. Or is this describing sort of a process where over several meetings you have an idea of a range in mind that is more neutral, and you're describing a process of moving towards that range?
Yeah, I'd say it's the latter. It's really the process. So if you're at neutral and you think you're restrictive and your policy rate is set up here, what's going to cause you to bring it down? You think inflation's coming back to target? You think the labor market is either stable or weakening? You want to kind of bring it back towards neutral. It doesn't mean you go below and you want to stimulate the economy. Things would have to really get bad. We're not seeing that in the labor market, that we want to go below neutral. Or I'm not seeing it. I can't speak for anybody else. But the debate right now is about inflation. Inflation's running 3%. It's way over our target. It's been above target for 5 years, 4 years. Why are you lowering rates? So you have to say, what is the outlook for inflation? And that's what I've argued, that any tariff effects are going to be temporary. You look, this is a classic line in central banking. You look through those things. You think about what is going to be inflation 12 months from now, not when the next 12 months. So that's what I'm doing. And in that world, I see inflation coming back down to target. I see a softening labor market. So I want to bring things back to target. I don't want to go below target right now.
cidade estava sitiada.
Isso ao começo eu também não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
This is one of the brilliant aspects of the design of the Fed. I've studied the structure of the Fed for 40 years now. The whole idea was to say, look, you need some political accountability in D.C., but you want to have a lot of this outside of D.C. That was the typical grassroots, get people away from D.C., talk to the American public. I always say we're the one government agency that has contact with all parts of the U.S. through our 12 districts and all the branches in those districts. Everybody can come talk to a president of the bank. They go out regularly, speak to the public. You can come talk to them. You can have a conversation with somebody. I mean, the only other institutions that have that kind of contact are the IRS and the post office. And we typically don't want to have them knocking on our door. So that's one of the big advantages of the Fed in our structure of having people on the outside. There has been debates forever of moving more political accountability to the Fed or moving it away. Sometimes people's views shift back and forth depending on what the situation is. But I believe the basic structure that we have has served the country well by representing all the country in the decision-making process, just not a few handful of elites in Washington, D.C. So that, I think, is important. I would say, like I said, for me, one of the critical things, I'd change the S&P. I would encourage dissents. I'm not somebody who's afraid of like, oh, if you're dissenting against what I'm pushing, that lowers my confidence or my credibility.
It'll be so much better for us. 5-4 votes, it'll be, it'd be, I highly recommend lots of dissents. Yeah. It'll make the Fed show better.
Well, I just think that's the whole point of it. That was the idea of the structure, was you put 19 members so you get this diversity of views from around the country coming in, different points of views. If everybody comes in, no matter what part of the country, no matter what the situation is, and you always say the same thing, we don't need it, Just have 3 governors and that's it at the board and you're done with everything.
Governor Waller, thank you for joining the Council on Foreign Relations.
All right, that was Fed Governor Christopher Waller speaking at the Council of Foreign Relations in an event moderated by Bloomberg's Tom Keene. So we had some comments there, some Q&A, lively discussion there about Fed policy. I'm Paul Sweeney, alongside Scarlett Fu. This is the Bloomberg Intelligence Program. And we got a lot coming up over the next couple hours. We're going to focus on earnings. We're going to focus on this market. We're going to focus on a lack of economic data. That's still the case here.
What is it, day 14, day 15, day 16?
But we were supposed to get some retail sales today, some PPI inflation data, initial jobless claims.
Woulda, coulda, shoulda.
Woulda, coulda, shoulda. So, all right, let's get a reset on what's going on out there in the market, and we can do that with Bloomberg's John Tucker.
Okay, so you want data. Well, this isn't government data, but I'll give it to you anyway. The NAHB Housing Market Index, a little better than expectations, 37. And economists surveyed by Bloomberg were looking for a number around 33. Anyway, this Bloomberg Business Flash brought to you by IBKR. Will the Fed leave the rate unchanged at the October 29th, 2025 meeting? An IBKR forecast trader, the yes was recently at 38%. Start predicting today at ibkr.com/forecast. Last trading day for this contract is April 29th. Technology shares giving a lift to the market today. NVIDIA up 1%, Broadcom up 1.5%, Amazon right now up 1.2%. You also had an olive branch from the Treasury Secretary, Scott Bessent, calming trade war worries. He floated the possibility of a longer tariff truce with China if Beijing puts off a plan to tighten its grip on rare earth metals. And then you have to start out with Taiwan Semiconductor. Those shares right now, TSM, they actually are down, but the biggest tech company in Asia did raise the projection for revenue growth for the second time this year. And United Airlines slipping today. Analysts note the airline's results show signs of saturation, even for premium seats. The shares right now down 1.8%. Overall, the market is higher. S&P 500, 14 points higher. That's up 0.2%, 66.85 in the index. The Dow Jones Industrial Average up 36 points. The NASDAQ 100 up 133 points. And Amazon launching a new pay-per-visit telehealth option for kids' visits through the Amazon One medical service. Message visits start at $29. Amazon says the pay-per-visit service can help treat things like bug bites. Bug bites. I got shot by my brother once. My parents didn't even take him to the doctor. We bug bites. We check the market for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your that's the scar right here. I kid you not.
He's pointing right next to his eye, and that's a story for another day. We're just going to have to store that away.
Yeah, I mean, the statute of limitations has run out, so I can go public with
But
that.
clearly you're not bitter.
I'm just saying.
Who's a brother? All right, John Tucker, thank you so much. We appreciate that. Scarlet Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Market Drivers today is brought to you by IBKR. Will the U.S. economy enter a recession by the end of Q4 2025? At IBKR, forecast trader, the yes was recently at 6%. Start predicting today at ibkr.com/forecast. Last trading day for this contract is March 26, 2026. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Scarlet Fu. We're joined by Bloomberg's Denitsa Sakova. Denitsa, what are you looking at today?
Let's start with Hewlett-Packard. Pretty rough day today. The ticker is HPE. The stock fell 8% and more in earlier trading. The company gave an outlook for profit and cash flow for the upcoming year that fell short by a large margin. Earnings, excluding some items, will be $2.20 to $2.40. This is way lower than what the street was expecting. And more importantly, the cash flow number was between $1.5 billion and $2 billion projection. And that was the result, and the projection was $2.4 billion. So massive gap there. Hewlett-Packard is dealing with tighter margin. A part of this is the company has been building servers with expensive AI chips. HPE is betting on networking as a major area of growth. The company intends to achieve greater profitability in the future, but it has seen a big drop today. The company is still up 7% year to date, but some pressure on this high AI spending we're seeing from the company.
All right, and HPE is the ticker there for Hewlett-Packard. Let's move on to Salesforce, which did not report earnings because its earnings report is not due until later on, but I guess it gave guidance.
Yeah, guidance, and we're seeing quite the reaction there. The stock is up nearly 7%. The company forecasts that revenue growth will accelerate to double digits. Salesforce expects $60 billion in annual revenue. This, of course, excludes some numbers, but this is by January 2030. Salesforce has had a really tough year. It was down about 29%. coming into this, Salesforce, of course, is a leader in customer management software, but it seems like the street has been cooling on that part of the industry. Salesforce has been going through a period of slower revenue growth. It's been going into those single digits, and now there is potentially some growth there, and investors are pretty excited. Still, there is a concern that customers are spending more money on artificial intelligence tools from startups rather than those big traditional vendors like Salesforce. They, of course, have a major growth bet like Agentforce, so some optimism there, but still, year to date, down more than 20%. So even today's optimism is not enough to get it anywhere close to gains.
All right, the next one you've got here is one of the first stocks I traded as a professional trader back in the 80s. JBHT, JB Hunt Trucking Company. Stock's ripping today.
It's not going back to the 80s, but it's the best intraday jump since 1998. It's up 18%. The ticker is JBHT. The transportation and logistic company reported third quarter earnings, and it's beating the average analyst estimate by a large margin. So the analysts were expecting $1.46. And what we got is $1.76. And the optimism about logistics is way beyond just the company. We're seeing Knight-Swift, Old Dominion, Saia, so many companies jumping off the news. And so far, it's been the best day in nearly 30 years. Stock is still down year to date, despite the massive jump. The results are a positive sign for the industry. It's obviously there have been quite a few years of weak shipping demand, excess trucking capacity. So we're perhaps seeing some of those issues being mitigated. And yeah, a lot of optimism from the industry. We saw so many upgrades today, Truist and many others.
One of my first client dinners as a young professional was with JB Hunt, the management team. We, at the desk at Painware, we had became the #1 trader of the stock. So when they came to New York, we went out for dinner.
I was going to say, did you do this in Arkansas? Because they're based there.
No, they came here, the Lowell, Arkansas. Wow. I learned a few lessons that night, what to do and what not to do.
Right. Yeah. That's a story for another time.
I was 23 years old. What did I know? So
you should check in with them now.
Yeah, so, wow, that's big. Okay, yeah, JB Hunt, we'll see about that. All right, very good. Anything else? Are we all good there?
That's all. That's all we have today.
All right, so if you want more conversations like this with Denitsa Sakova, subscribe to our new Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcast, Spotify, or anywhere you listen. We need to get the latest from what's happening in the world with U.S. and China, because that is a fluid situation.
It's just going back and forth and back and forth, and I'm not sure who has the advantage anymore.
I just think that President Trump and President Xi just need to get together when they go to Korea, sit down, iron it out. Let's get as President Trump would like to say, let's get a deal done. But there's a lot of rhetoric back and forth in between. Brendan Murray joins us. He's global trade editor for Bloomberg News. He joins us from London via Zoom. Brendan, where are we here? I know there's a lot of rhetoric going back and forth, but is there any substance going along underneath the surface?
Yeah, I mean, things were moving along, progressing pretty well for a number of months there, and markets seemed to look the other way when it came to U.S.-China relations. But this week they turned pretty sour, and it even got personal. Both the Treasury Secretary in the U.S. Calling one of his Chinese counterparts unhinged, and so it's always been a point of tension. The differences between the two, but they're definitely heating up now, and they're a long way from a deal for sure. But as one of you guys mentioned, the first thing they need to do is the leaders need to sit down and kind of get things back on track. Currently, they're kind of gone off the rails, so to speak.
Yeah, name calling is definitely not a positive development if you're looking for some kind of deal to come along. I guess the issue here now is China's latest moves on its rare earth supplies, adding some curbs to those exports. And it sounds like the bottom line is China has something every country needs, which is this supply of rare earths, and it's not afraid to weaponize it in the same way that the U.S. has weaponized its end marketplace.
Yeah, exactly. So the U.S. is arguing that this is going to hurt most major economies, not just the U.S. And China would say, well, you're kind of overinterpreting this. It's not going to be that bad. So there's a real disagreement about the impact that these rare earth restrictions that China announced last week would would have. The bottom line, though, is they're still not seeing eye to eye on the impact, and the U.S. is trying to rally other countries together to form a sort of united front and some sort of group response to what China has announced. And China is basically sort of exploiting the fact that the U.S. has gone around the world in the past several months and put tariffs on everybody, and that that doesn't really win you friends if what you want is to get a consensus to stand up to China. So it's going to be a real test of the U.S.'s protectionist policy that we're going to see play out. We only have another 3-4 weeks until the ceasefire on higher tariffs between the U.S. and China expires. So they've got a lot of work to do to get things back on track and not a long amount of time to get there.
And Brendan, it seems like just from some of the rhetoric from some of the U.S. officials, including President Trump, that looking to line up some support amongst our quote-unquote allies. How tough is that going to be after the most recent 9 months where the president's rhetoric was not necessarily supportive of our so-called allies and tariffs not really supportive of our allies? How tough is that going to be?
Yeah, I mean, it's, most of the world didn't retaliate against Trump's tariffs. And so, you could say to some extent that was a successful, deployment of tariffs from the Trump administration. But there's a lot of bad blood still. These tariffs are hurting European industries, and they're hurting, Indian companies, and they're they're going to leave, kind of some economic dislocations in places that are going to hurt these politicians that had to basically swallow these tariffs and not retaliate. So what the U.S. is going to try to do is try to unite the countries that it's pretty much, tried to, disconnect some of and protect their own industries. And it's going to be a real test of whether can you have it both ways? Can you punish countries with tariffs and then ask them to be your friend in allying against China? There's a big question about whether that's going to be possible.
Yeah, and it marks a pretty stark U-turn from 6 months ago when China's Xi Jinping was rallying other countries to stand together against those Trump tariffs. I want to bring up another element to the global trade debate and story, which is that CEOs of companies that are effectively global companies, like Tim Cook of Apple, met with China's top trade negotiator, He Lifeng, at a gathering. And I'm curious how much work or how effective these kinds of gatherings are. Who's lobbying whom when they meet to try to hammer out some areas of agreement?
Yeah, well, the optics of this and the timing of it is interesting because, if you're the U.S. government, the Trump administration, you're looking at, these tech companies are the world leaders in what they do, and if they're going to China and trying to strike deals and pledge investments in China. It's a real difficult thing for the U.S. government optically, because China says, look, your companies want to be here. They know we have a huge consumer market for them, so it puts leverage in China's hand, at least in the public relations end of things. So President Trump would say, Tim Cook from Apple, you need to start making iPhones in the U.S., not in China. So yeah, adds a dynamic to an already complicated and fraught one that doesn't work in the advantage of the U.S. government.
Brendan, what's the thinking now? Will President Trump meet with President Xi at this gathering at the end of this month?
Yeah, we've seen this play out before. There's a lot of tough talk, and it's both sides kind of pushing back hard on the other. But ultimately, the leaders will meet. Whether it's in 2 weeks, who knows? But that's really where this is headed. It's just a matter of can they get to a point where they can have it be, as a Chinese analyst said in one of our stories today, can it be more than a photo op? Can they agree on some things? China's not buying U.S. soybeans right now, and U.S. farmers are harvesting their soybeans and need to sell it. And can each side get together, the leaders, and offer some concessions where they can walk away and say, look, we're getting along with our biggest rival rather than arguing with them still, and everybody's happy with that result.
All right, Brendan, thanks so much. Appreciate the update there. Brendan Murray, he's a global trade editor for Bloomberg News. He is based in London. I believe he's in D.C. today. So just getting the latest here. And again, I think you just want to get to that meeting in Korea and hopefully have some face-to-face time and some substantive negotiations between the U.S. and China and maybe kind of start to move forward a little bit.
Well, it sounds like the Treasury Secretary, Scott Bessent, did appease the markets by saying that Xi and Trump are scheduled to meet. Good. He also added that there's a pretty good chance, a very good chance, that he himself would go to Asia to meet with He Lifeng. So maybe to set the groundwork for everything.
Very good. That sounds pretty constructive to me. To the markets we go. A little bit of gains out there in the marketplace. So we'll take that. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash, and we're brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/ Bloomberg. Major stock averages right now, they are higher, but not by a whole heck of a lot. There is some renewed tech optimism. This follows the positive results from Taiwan Semiconductor. Hewlett-Packard Enterprise issuing a full-year forecast for profit and cash flow. That fell short of analyst estimates. In fact, right now it's the worst performing stock in the S&P 500. It's down 7.4%. Salesforce, they're getting a boost. Ticker symbol CRM. Salesforce up 7%. The company forecast revenue growth is going to accelerate to double digits in the coming years. Right now, the S&P 500 up 23 points, 66.94 on the index. The Dow Jones Industrial Average up 83 points. NASDAQ 100, 176 points higher. That's a rise of about 0.7%. Pink slips being handed out at food giant Nestle, slashing 16,000 jobs. Maker of Kit Kat candy bar says reductions will happen over the next 2 years. Remember the 90s? I don't.
Sure.
In London, there's a new bar called Bunga 90, themed on nostalgia, with an entrance through a mock-up Blockbuster-esque video store and bands like the Cranberries blasting up with
Why is it called
speakers.
Bunga?
I don't know. Anyway, nostalgia. This is a great story. Sarah Rappaport writes it on the Bloomberg. Nostalgia for the 1990s is back, now dominating pop culture.
The 90s were good to me.
You should not have thrown away my outfits from the 90s.
Were you born in the 90s?
Yes, I was fully enjoying life in the 90s.
I was already here for like 5 years in the 90s. So. In the same seat, in fact, Scarlett. We check the markets for you right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash, Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney were live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. You know, let's get our consumer preferences straight here. I'm a Coke person, but you put Pepsi in front of me, I'm just as happy. Same thing on the chocolate front. I identify, as the kids say, as a Hershey bar person, but you put a Nestle's Crunch in front of me, boom, I'm very happy.
I don't know about either of those. I'm snobby and I like European chocolate or Japanese chocolate. I don't like this Nestle stuff.
All right. Well, I mean, now John was just reporting they're slashing 16,000 jobs. I went to the DES function. They have 277,000 jobs, so not that big. But let's check in with Duncan Fox. He covers all the consumer staple stuff over there in the UK and Europe. He's at Bloomberg Intelligence. They had pretty good numbers, Duncan. But there's still, this new CEO is taking some headcount out. Talk to us about what you learned at Nestle.
Well, he certainly grabbed the headline with that sort of 16,000 headcount cut. But as you said, it's 6% of the overall headcount, so it's not huge in the context of the group. But I think the main thing today was that there was not a nasty surprise in that you've had he's the third CEO in a year. And obviously the chairman left about a month ago as well. So I think there was fears that maybe there was something underlying in the business that was going wrong. So the 1.5% organic growth, albeit not huge, is a relief. And I think that's why the shares have really bounced today rather than the wonderful headline of the job cuts.
Tell us a little bit more about this new CEO strategy overall. I'm curious whether he is rolling out something new completely, or is he just kind of doubling down on the existing strategy that his predecessor had laid out?
I think he's doubling down. Excuse me. I think there's no doubt they were trying to become a lot more focused on their key brands, but he sort of broadened that out to sort of the broader categories. So rather than just looking at, say, cold coffee with Nescafe, he's putting it out to the whole of the coffee brands that they have. So he's definitely being far more aggressive on trying to make sure that the market share on their key brands goes up rather than sort of flat or down. And it looks like he's probably pulled forward some job cuts as well and pushed them into the year to 2027 rather than sort of keeping them maybe for later in sort of 28 and 29. So yes, he's definitely, I think, accelerated the process that was probably being discussed anyway in the business.
Duncan, I'm just looking at the stock here, and over the last 5 years, Nestle's compounded annual return has been about negative 2.5% per year, lagging the Swiss index here. What's the story? What's the challenge for a company like Nestle with such a great brand?
Well, it's such a big big company in the food industry, it's got to innovate very, very quickly or it's going to die. They did quite a bit of vegan innovation about 2-3 years ago. Unfortunately, pretty much every one of those products failed because they just didn't taste very good. And I think, to be honest, that was the industry had the same problem, not just Nestle. You've then got threat of GLP-1 drugs coming through, so they pushed out a whole new bunch of products on that, so that you can have them in conjunction with the drug that you're using, so that you don't lose muscle mass and actually could be malnourished. So there's a lot of things they need to do, but they've probably not done them quickly enough. And that's part of the problem when you're such a huge company. You've got to make sure that innovation comes out straight away. You're first to market, it's at the right price. And then you can win. But and when you've had inflation that's been sort of 15, 20%, 2 or 3 years on the trot because of costs, it's very, very difficult to get that right and get the pricing right so that we, the consumer, buys it consistently. And as I say, that's not just nothing, that's an industry issue which they have to address.
All right, good stuff. Thank you so much. And of course, we have been talking about Nestle with Duncan Fox, Bloomberg Intelligence Senior Consumer Staples Analyst, on these cuts made at the company. 16,000 jobs being removed here. 12,000 of those will be office jobs, white-collar jobs.
Yeah, I'm just looking at the PGEO function. It shows you where the revenue comes. Candy's like the smallest source of their revenue.
Oh, really?
Yeah, it's different kinds of food, pet care, nutrition and health.
But I think of candy first.
Yep, go figure. Sorry, want to switch gears here?
Yeah, let's switch gears and talk about the overall economy, the fixed income market, the credit market as well. Peter Chur is head of macro strategy at Academy Securities. And I know that there's a lot to discuss when it comes to the Fed, but I'm not sure that anything's new here because there's no data. So I want to get to the credit markets, Peter, and to the big debate that's happening right now, which is the recent blowups of First Brands and Tricolor has led to this war of words over who's not doing their due diligence here, whether it's the big banks or private credit. What's your take here?
You know, I think there were some one-off things on both of these. One, as we learned the hard way back with Enron and WorldCom, it's hard to detect fraud. People, you know, if they're making, so I think there's some element of that. And then certainly I think in the case of Tricolor, the crackdown on migrants and illegal immigrants probably affected some of their business. So I think there were mistakes made. I think it's just a tiny fraction. I think people are really overreacting here.
Just a red headline crossing the Bloomberg terminal. President Trump and Mr. Putin to speak today. That's according to a White House official. So we'll have further reporting on that. Peter, what do you make of just overall when you talk to your clients about the whole private credit business? I think for generations, we've come comfortable with private equity and whatever controls or regulation there is in private equity. How about private credit?
You know, I think private credit's a bit of a misnomer. Credit's always been relatively private, right? You go back to the 90s, bank lending, you didn't really know what the banks had. They did their work. I think this is just a transition of who owns it. I don't find anything nefarious. I think companies are able to get, you know, deals that they might not otherwise. And part of it, some of the big entities, you know, they're not in position necessarily to do a hands-holding exercise with a smaller company. So I think some of the smaller companies benefit from these relationships. So it reminds me more like banking of the past than anything, you know, completely new and innovative.
But there's a weird role here for the big banks, which missed out on the whole private credit boom and are now trying to make up for some lost time. And it's not clear whether they're bitter or whether they, you know, are just, again, trying to scramble and come up with something.
You know, again, I think one is people are willing to put money back into the market. I think there was a fear post-COVID. Banks were kind of, you know, nervous across the board. You had the Silicon Valley banks, so I think there was a lot of scrutiny. I think banks just now have money and they want to be aggressive. They see some of the things that's happening with the economy, whether it's the build-out of rare earths and critical minerals. So I think it's more just a competition for getting money out, lent out, seeing what advantages you can get. Again, some of these private credit deals early on, you got warrants, you got things that gave you real upside. So I think maybe the big banks missed out on that. I just think it's very healthy competition. I think like all credit and private equity itself, it's all going to come down to deal flow.
Has the easy money been made then in private credit?
I think there's always money to be made in credit. You lend and you make sure you're getting paid for that lending. And to be honest, I think the opportunities are always slightly better in the private side of things. They're not as scrutinized. You don't have as much competition. Companies are maybe a bit more eager to deal with you. So I think there's good money to be made in credit. I think, you know, despite what happened in the GFC, credit just tends to be a good business. You lend, you get your money back, and you are fairly overcompensated, I think, for the idiosyncratic risk. I think when I look at the credit markets, I always come back to you're probably never paid enough for any individual credit because of that idiosyncratic risk. Because you're charging everyone for some element of idiosyncratic risk, you get paid way more than you should otherwise. So credit tends to be a very good business. And where it gets into trouble was in the GFC, there was leverage on leverage. So you're making risky bets, but then you're leveraging those risky bets. I will get nervous when I start seeing funds offering 3x private credit. Then I'll know, okay, this starts getting toppy.
So one of the businesses I was in back in the day, leverage lending at the Chase Manhattan Bank, we do a $500 million loan, take an underwriting fee, probably a couple of % up front. We charge LIBOR plus 2 or 3, make that spread. And then we'd go syndicate $500 million down to about 50 on our balance sheet and go out and do it all again.
And this is why he loves the 90s.
If I could pile in, my starting business at Bankers Trust was doing total return swaps. So we did total return swaps with hedge funds, which was a way to pay them the total return of these bank debt that they could not hold on their books. And I'll go back and steal from David Tepper, but I think his people at the time said they felt leveraged loans, this is in the 90s, were the most misrated asset class there is, because they would take a high yield company and if you put a bunch of collateral on it, and they might only give you 1 notch or 2 notches, so you wouldn't get to investment grade, so it eliminated a lot of potential investors. But if you looked at the security and collateral you had, you probably should have been AA or AAA. So I think that's really the catch, is if you're getting good collateral, you're looking at this, part of the market can't invest because it's unrated, but you might be getting significantly good returns for the credit risk you're actually taking.
Let's go back to your actual title, Head of Macro Strategy at Academy Securities. What are you doing these days? There's not a whole lot of data to sift through. There's not a whole lot of tea leaves to read when it comes to the Fed.
No, so I think the Fed's on their path. They're going to cut 25. What I'm looking for, I think, 2 things. On the positive side, what we've been calling PROSEC, or this production for security, where we see both our country, I think other countries will start doing this. They're scouring the universe for what do we need to produce here to be safe and secure. So whether it's chips, whether it's certain pharma, whether it's rare earths and critical minerals, not the minerals themselves, but the processed and refined version. I think those are going to get a jump start. The Trump administration is looking at this. I've had frustrating conversations with England in particular, where they're like, oh, we want to be data center capitals of the world. Like, but you don't produce your own electricity. Like how, right? It's just, you need to produce cheap electricity and do that. So I think you're going to see things like nuclear do well. I think ultimately Trump's going to pivot on solar. The flip side of it is, I think China is actually aggressive this time and not the U.S. on the trade war.
Yep, we'll see that. All right, Peter, always appreciated. Peter Chirp, Head of Macro Strategy at Academy Securities, joining us live here in our Bloomberg Interactive Brokers studio. We appreciate that. This weekend, listen for the debut episode of the Michelle Hussein Show. In her premiere episode, Michelle speaks with the Prime Minister of Canada, Mark Carney. Each week, she'll make sense of the world with one essential conversation, bringing her signature blend of curiosity to conversations with world leaders, business titans, cultural icons. Listen and watch the Michelle Hussein Show each week on Apple, YouTube, Spotify, or anywhere else you listen. S&P 500 higher this morning by about 0.3%. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We're being brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. treasuries, and more. Your timetable. Learn more at ibkr.com/around the clock. Right now, with 8 of the 11 major industry groups in the S&P 500, they are higher, as being led by information technology and also communication services. So that's home to NVIDIA. And those shares up 1.8% right now. That's the positive results from Taiwan Semiconductor earlier. That's giving just an overall boost to technology today. And then we have the best performing stock in the S&P 500. That belongs to J.B. Hunt Transport Services, the ticker symbol JBHT. That is jumping right now 17.5%. Better than expected third quarter results and sales results as well. Then you have United Airlines slipping right now. That is down just about 3%. Analysts know the airline's results show signs of saturation, even for the premium seats at the airline. Right now, the S&P 500, 29 points higher. That's up 0.4%. We're at 6701 on the index. The Dow Jones Industrial Average is up 98 points. The NASDAQ 100, 220 points higher. That is up just about 0.9%. We did have some data, private data. Confidence among home builders rising this month, the most since early 2024. This is an index of market conditions for the National Association of Home Builders, and Wells Fargo increasing 5 points in October to a whopping 37. Remember, a value below 50 means more builders see conditions as poor than good. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
All right, thank you so much, John Tucker. Paul Sweeney and Scarlett Fu here on Bloomberg Intelligence on Bloomberg Radio. And you know, we look at tech as the best performer in the stock market right now. Financials are actually the worst, due mainly to weakness in some insurance companies. It is earnings season after all, and we do have results from the regional banks after the blockbuster numbers from the biggest banks earlier this week. Herman Chan is Bloomberg Intelligence senior analyst for U.S. regional banks. And Herman, when we look at the regional banks, they're much more of a read, a proxy for the overall economy, the health of companies and consumers, as opposed to how trading desks are doing.
Sure.
What's the takeaway from results from U.S. Bancorp, KeyCorp, and M&T Bank?
Yeah, so I would say that overall the credit quality is really pristine across those banks and the banks like PNC that reported yesterday. On the other hand, we're seeing, as Jamie Dimon said, some cockroaches, and we're seeing them on a few bank balance sheets today. Zions and Western Alliance has disclosed some exposure to a non-bank financial institution, and that's really hitting their shares today, and it's taken down the entire regional bank group.
So our regional banks, when I think about them catering to small and mid-sized businesses, the backbone of this U.S. economy. Are they writing loans these days?
They are. They are writing loans, not much on the commercial real estate loan side, but they said they're open for business. They just have a lot of payoffs and paydowns from some of the loans that they've done over the years. And so they're looking to backfill that, but it's been the slow go. On the other hand, there's a lot of pent-up supply for lending on the commercial front. So if you're a small, medium-sized business, corporate business, the banks are open for business and looking to generate loan growth on that front. That's probably the primary driver for lending across the regional bank space today.
So I'm curious to just kind of dig in a little more to the credit problems over at Zions. Was that idiosyncratic and specific to Zions, or do you look for more instances of this as we continue to get numbers out?
Yeah, it's really interesting because we've had a couple shoes drop already this quarter, right? We had the Tricolor issue, we had First Brands, where a few banks were involved in that. And now there's this third one, which is something called Cantor, which relates to mortgage loans. And we're digging deeper into that today. It's something that wasn't on our radar screen until Zions flagged it yesterday. And it looks like a couple of lenders, Western Alliance and Zions, have exposure to this. And Zions specifically noted about a $50 million credit loss related to this relationship.
But overall, given credit quality better than it was prior years?
Yeah, I think it's been slowly normalizing after the pandemic, where we had just an influx of money coming in from the government that was propping up the credit quality for consumers and businesses. But it's been really strong across the board, and banks continue to talk about improving credit quality in 2025. That being said, there have been these one-off issues that's really raising a lot of eyebrows for the market today.
And of course, when we talk about regional banks, there's so much anticipation that there's going to be consolidation. There's going to be M&A. We saw Fifth Third, of course, make its own purchase. We saw Pinnacle and Synovus. Do these results shed any light on who's likely to be a target versus buyer?
Yeah, I would highlight First Horizon yesterday as probably the biggest potential for that and M&A, because historically, First Horizon was viewed as a seller. Remember, it tried to tie up with TD Bank before TD ran into some regulatory issues, and that merger failed to gain approval. Yesterday, they talked about potentially being a buyer instead of a seller, so that really whipsawed the stock price yesterday, with it down about 10%. So it's really interesting to see who's a buyer and who's a seller, and First Horizon's comments yesterday really highlighted that.
How about the valuation of the banks? Where are the regional banks? Where are we now in terms of overall valuation?
Yeah, so we're talking about price to adjusted tangible about 1.3, 1.4 times, which is a fair price. It's not super attractive. Back during the worst of the SVB issues, we were about 0.9 times. So they've had a good run up over and have recovered over the past few years, but there's still a more of a valuation premium on the largest names like the JP Morgans of the world versus the more economically sensitive names like the regional banks that I cover.
What will you be watching for going forward here? I mean, in terms of, you said you're going to dig into some of the issues Zion's brought up, but what else do these results point you towards in terms of what could be a factor in the fourth quarter and next year?
Yeah, so the banks continue to tout really strong top-line growth, which is interesting, given a lot of uncertainty about what's going on with the economy and rate cuts. There's something called fixed rate asset repricing, where all of those securities that they added when rates were zero are now paying off, and so they're adding new securities at higher rates. So that's a positive. And then there's some loan growth that I talked about earlier as well. So that's driving the top line trajectory, and banks seem pretty constructive on that front.
All right, very good. Herman Chan, thank you so much. We appreciate that. Herman Chan, Senior Analyst for the regional banks here. I mean, Scarlett, the numbers we're getting from the banks seem generally pretty solid. I kind of feel like the consumer's in decent shape. We're getting Fed cutting rates. We're not seeing we're not seeing inflation really kicking in. I mean, it seems like a pretty solid backdrop for risk assets overall.
Yeah, and I wonder to what extent that was priced into regional bank shares. We know that was definitely factored into the big banks, and all of that was driven by the volatile markets increasing trading volume overall. They were big beneficiaries of that kind of spike in activity in trading overall. But for the regional banks, it really does come down to the kinds of loans they're making and how good those loans are on their books and whether they have to write off anything.
Yep, and I think that's important for the markets. I think we're going to be waiting for the tech numbers, obviously. Yeah. That's going to be big. And then even in the back end of the earnings cycle, when you get some of the retailers talking about the consumers as we go into the holiday season.
Yeah, although the retailers have basically prepared for the holiday season in that they built up their inventory before the tariffs took effect. So really it's about the forward look and how they see things shaking out, because at that point they're going to have to start buying things and paying the tariffs.
Yep. So again, we haven't necessarily seen much, if any, inflation from the tariffs, but we'll see if that plays out going forward or not. So we'll have to keep an eye on that, and that's why we're paying such close attention to earnings and the forward guidance from a lot of these companies. Looking at the markets, a little bit of green on the screen here today. The S&P up 28 points, that's 0.4%. The NASDAQ up 180 points, that's 0.8%. So once again, the tech companies leading this market higher. I know that the Russell trading off a little bit here, so the small cap stocks not participating today. We're going to have more coming up. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Well, United Airlines reported better than expected earnings, citing demand for international travel and premium customers. United CEO Scott Kirby joined Bloomberg earlier this morning, breaking down 2025's earnings outlook.
First three quarters were really good for United in a lot of macro volatility that happened for the aviation industry. That demonstrates the resilience of our revenue diverse, brand loyal business model. But you look to the fourth quarter, it's even more exciting because as the economy is starting to get back to a solid footing, at least for aviation, demonstrates a lot of upside. We think we're going to be able to grow earnings for the full year, even in this environment. So it really is creating value for all of our customers.
All right, that was United CEO Scott Kirby, a graduate of the United States Air Force Academy. He joined Bloomberg earlier today, breaking down the results for the company. Let's check in with George Ferguson. He covers the airlines and aerospace companies for Bloomberg Intelligence. George, what'd you make out of the United numbers here today and some of the commentary from Mr. Kirby?
Market looks pretty saturated. So
what's that mean?
There's a lot of capacity in the marketplace, and fares are falling. So if you look at yields at all of United's markets, they're falling year over year. So the price paid per mile flown is falling anywhere from sort of 2% in domestic up to mid-single digits in international. Atlantic was a bright spot in prior quarters. Again, down, I think it was roughly around 5%, if I recall correctly. So they've put enough capacity in that marketplace that fares are starting to fall. United grew at like 7% during the quarter capacity. It's pretty aggressive in an economy that's growing, I don't know, 2 to 3%. So I think that, you know, to Scott Kirby's benefit there and Delta as well, you know, the full service carriers really having a good time of it lately. Loyalty programs are really, you know, putting some wind in their sails. Premium is still outperforming basic economy. Although it seems like it's sort of, we're seeing the revenue growth from premium about the same as capacity growth, maybe a little bit less, which tells me there's a little bit of price sort of, you know, weakness maybe starting to show up in that premium world, and basic economy is still underperforming. That means Scott's competitors are going to get banged up in the budget world.
Right, competitors that are not named Delta specifically.
You got it.
United is always mentioned in the same breath as Delta, but kind of as an also-ran in comparison to Delta. What would United need to do to beat Delta at this premiumization strategy?
You know, Delta really gets a lot of revenue and more than United out of this, you know, the co-branded credit card agreement. I think, you know, one, Delta sort of in there with American Express. It's got, you know, maybe American Express lives in its own special world of credit cards. I don't know, it feels, you know, to me, I think most of the maybe younger consumers carrying around things like Visas and MasterCards, I don't know, but it seems like that agreement with American Express really drives a lot of revenue for Delta, and I think is a big differentiator. And I think Delta has used that as well as sort of, you know, their premium seating and lounges to put some distance. But when you look at the revenue number, it's all about that credit card agreement with Amex.
I'm so glad you bring this up because my current obsession is to look on Reddit and look at people who are talking about Amex Platinum versus the Chase Sapphire Reserve. These partnerships with credit card companies, building loyalty for these passengers. How costly is it for Delta to maintain this relationship with Amex? How costly is it for United to maintain its relationship with Chase?
I think it's not costly. I think it's lucrative for them, right? Because it seems to me that the American consumer, I don't know that I fully understand this, but it feels like people go out and buy the credit card for the airline they love. They go put all their groceries, all their Starbucks, all their dinners out on that card, take those points, accrue them for their summer vacation, pay $500 so they get lounge access. They're not like Paul Sweeney and just get, you know, lounge access because of who he is, so they got to pay for it. And so they're willing to spend and hold that card, and the credit card companies sort of taking down those, what, 4 or 5% per transaction, and buying those miles for the consumer. You know, those miles are, some of them do waste away. People don't use them in time. Others, right, the airline provides you the opportunity to get a seat. They don't put all the, you know, they don't put all sort of benefit travel in one airplane, right? They give you the opportunity in airplanes that aren't sold out to get benefit travel, so that kind of juices up their load factors. They upgrade you if they have space. So I think it's super lucrative for the airlines. It's really important what credit card deal you cut right now for your bottom line.
How much do the airlines talk about this with analysts on their earnings calls? The intricacies of this?
So you're hearing, I mean, look, nobody likes to give away the total intricacy, right? Because, they make it hard for us to figure out what the wastage numbers are, but you can see how this flows to the bottom line quite well. But Delta and United talk about it a lot because it really works for them, or maybe I should say talk about it the most in the industry because it really works for them. I think that it's telling that we do hear the budget low-cost carriers talking about their loyalty programs too, but they just pale in comparison. They typically don't give us numbers, but they pale in comparison with what can get done up at Delta and United.
All right, George, always good stuff. George Ferguson, Senior Aerospace, Defense, and Airline Analyst. If it flies, he covers it for Bloomberg Intelligence. He's based down there in Princeton. He lost his train card up to New York, so he's down in there in Princeton.
I think he's happy down there.
I think they're all happy down there. That's the problem. So there you go. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121, access the world's only global audio business network, coast to coast 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now. They have great lunches and breakfasts in the Princeton offices for Bloomberg.
I'm missing out.
That's coming up. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Live from Bloomberg's Interactive Broker Studio in our global headquarters in Midtown Manhattan, this is Bloomberg Intelligence with Paul Sweeney and Scarlett Fu. We are streaming live on YouTube. We've got a lot coming up on the second hour of Bloomberg Intelligence. We're going to get you started with Mari Shore. She's a senior equity analyst at Columbia Threadneedle Investments to get her take on U.S. retail. We know those earnings don't come out for a couple of weeks, but it's never too early to get a sense of where the consumer is at. Mandeep Singh, Bloomberg Intelligence senior tech industry analyst on the talent brain drain, especially when it comes to AI from Apple, and TSMC raising its outlook, certainly a vote of confidence for AI trends. As well, we have Elizabeth Hunt of Nomura joining us. Excuse me, Liz Hart of Newmark. I can't read. I need my glasses right now. On the state of commercial real estate, give us a sense of the office buildings, because everywhere you look in Manhattan, there are people everywhere. And finally, Fed Governor Chris Waller will be in conversation with Tom Keene, and we will bring you highlights of that conversation. First, though, let's get things started and check in with John Tucker for our Bloomberg Business Flash.
All right, Scarlett, we're brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost trading and turnkey custody solutions. No ticket charges, no conflicts of your interest. Learn more at ibkr.com/RIA. Wall Street kind of focused on artificial intelligence today. the China trade relations kind of moving to the back burner at this point. You had Taiwan Semiconductor delivering results better than expected. They also gave an outlook that's seen underlying strong demand for trends of artificial intelligence. That's all you had to say. S&P 500 up 24 points. That's up 0.4%, 6694 on the index. The Dow Jones Industrial Average right now up 79 points. That's a rise of about 0.2%. And the NASDAQ, the tech-heavy NASDAQ right now is up 156 points. That is up 0.7% right now. CVS has completed the acquisition of more than 60 Rite Aid stores, plus the prescription files from about 600 locations across the country. The pharmacy says it's adding more than 9 million patients to the database. Rite Aid, of course, went out of business earlier this year. Some of the stocks that are driving the S&P 500 right now focus on NVIDIA. Those shares up 1.4%. Also among the most actively traded, Broadcom, that's up close to 3%. Alphabet, parent of Google, up 1.7%. Oh, here's one for you. I can't remember the last time I was in IKEA. I think it was during college. Not to buy furniture, but they were serving Swedish meatballs.
I knew it was that, yeah. That makes sense.
No, it was, good place, good source of protein.
Sure.
The furniture retailer piloting a new store format called Lada. That's the Swedish word for barn. Smaller towns, an untapped market for the company. So they're looking to small towns as a new engine of growth for that Swedish furniture that you put together.
But will there be meatballs served?
I would have to think that there would be. So
have to lead with that.
Anyway,
yeah, it's a calling card, right?
Yeah.
Absolutely. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. Yeah, that is your Bloomberg Business Flash. Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate that. Markets, as John was just reporting, trading higher. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Scarlett Fu. We're joined by Bloomberg's Carmen Reinke. Carmen, what are you looking at?
Yeah, so it is really a full earnings day today. We're in full swing. First stock I'm looking at is JB Hunt, ticker JBHT.
Lowell, Arkansas.
Yes, transportation and logistics company. Shares are up 19% right now. This is the best intraday move since 1998. So the company reported a quarterly profit that beat estimates. Cost-saving initiatives such as moving fewer empty containers helped boost operating income by 12%, led to that beat from the Wall Street estimates. So it's a positive sign. The company, overall in this industry has had sort of years of weak shipping demand and excess trucking capacity. So investors clearly really hoping that this is sort of a sign of a turnaround.
You know what the turnover is for truck drivers in this country?
Remarkably short or long?
Turnover. It's nearly annual turnover. Very close to 100%.
Oof.
They're in hiring mode every single day.
And they have to train everyone too, so it's a lot of money.
It's tough.
I think it pays well, but it's a tough job.
It's a tough job.
Absolutely.
Actually,
that's why
rates are down. Rates are down, so the truckers aren't making as much as they used to.
And that's why everyone's so focused on these self-driving vehicles.
Yeah, it's a great point. Great point. So, all right, so that's interesting. I could talk trucks all day.
Clearly.
All right, what else you got?
So Salesforce, which is ticker CRM, is up about 4.6% right now, best day since August. The company eased some investor concerns about a slowdown. They projected double-digit revenue growth in the coming years at an investor event yesterday. So the company now expects $60 billion in annual revenue by the fiscal year that ends in January 2030. And this stock has been really beaten down this year. It's a software company. It was down 29% through Wednesday's close. So people have really been looking for sort of similar expectations of a turnaround, sort of when are they going to get AI right and start making more, having that drive revenue. So also sort of a positive sign for that.
Weren't they targeted by activist investors? I wonder, are those guys still in the company, in the stock?
I don't know.
I would think if they are.
Stock for a long time.
Yeah, and Benioff did make some changes to address all those concerns that activist investors had cited, but clearly it's not working this year, it seems. Let's talk about the banks. Regional Bank Western Alliance reporting.
Yep, so Western Alliance, ticker WAL, shares are down 6.4% right now. So the company said that it filed a lawsuit in August alleging fraud by a borrower, which failed to provide collateral loans in first position. It also affirmed a 2025 guidance and outlook it gave in July. Regional banks across the board, though, are also being hit because of growing sort of credit concerns after Zions Bancorp said it will record a $60 million provision and charge of $50 million when it,
Not a good sign if you were looking for credit quality to remain consistent and kind of back up what the big banks were reporting.
Exactly right, and where you might see it is in the regional banks first. What we haven't seen though? We haven't seen a lot of people calling out real estate loans.
Yes,
we thought that was really going to be an issue.
That was going to be the other shoe to drop.
Yeah, and we have not, and it was going to be at the regional banks, but we just haven't seen it.
Yeah.
So, all right, very good, Carmen. Thank you so much. Appreciate that, Carmen Reinke. Covering all the markets for Bloomberg News. For more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple, Podcast, Spotify, or anywhere you listen. I'll tell you, one area of the economy that continues to surprise me to the upside, and I should not be surprised anymore, is just the consumer. The consumer kind of just hangs in there, even during the pandemic. So we're going to hear from the retailers
We love
later.
to shop, whether we feel good, optimistic, sad, upset, worried, stressed, doesn't matter.
One of our
Shop.
One of our go-to voices on the retail space is Mari Shore, Senior Equity Analyst at Columbia Threadneedle Investments up there in Boston. Mari, what's the state of the consumer and retail sales, and what are you hearing from the companies you cover?
Yes, great. Thank you for having me. There is a lot of nervousness among the companies as we head into holiday, given the expectation for rising inflation from tariffs. But all the data that we've seen year to date has been very positive, and everyone continues to speak about the consumer as being more resilient than expected. Even with warmer weather in September, we heard from Costco, we heard from Levi's, that the consumer is still spending in a healthy way. And of course, you just mentioned some of the large banks that continue to sound very positive on the consumer. So despite the nervousness among the companies and investors as we look to holiday, I would take the over on that. And I still lean positive and stay optimistic in terms of consumer spending. Of course, there's always pockets of strength and weakness, and we can talk a little bit about the category and the outlook by income demographic. But overall, I would expect a strong holiday.
So, Mari, that means we're not going to get sudden promotions and lots of last-minute deals being rolled out in middle of December to get people into stores, are we?
I wouldn't expect any large markdowns, but remember, all the companies are expecting to take up pricing as they, in part, pass through tariffs. And so I do think they are factoring continued discounts and promotions to help offset some of that price increase and continue to drive traffic. But again, those promotions are planned. They're baked into the company's margin guidance. And so I would not expect to see any unplanned promotions or higher markdowns, given that all the companies are planning inventory units very conservatively.
So what is the holiday shopping outlook here? What's the number we should be thinking about?
Well, we always see the very high level. I think it's a little over 3% now. But, again, it's very hard to take that, high level aggregate number and kind of translate that into company specific numbers. But I would say overall, I feel good about the middle and higher income consumers' ability to spend. I think lower income is still going to be feeling the pinch from higher inflation. And in terms of categories, we've talked a lot on this show, categories like apparel, beauty continue to outperform on a relative basis. I do think some of the larger, bigger ticket housing related categories like electronics, appliances, I would expect a lot of those categories to remain relatively weak through the end of the year and into 26.
All right, Mari Shore, thank you so much. Senior Equity Analyst at Columbia Threadneedle Investments, joining us from Boston, giving us her read on the consumer as earnings season rolls on and we get ever closer to the retailers reporting their results in the absence of any real official data telling us how retail sales are going. Let's switch gears and take a look at tech. We can't stray too far from tech, given that it's the driver of this stock market rally. And today is once again the best performing sector as well, up 0.9%, led by the chip makers. And in large part, that is because Taiwan Semiconductor Manufacturing, TSMC, has raised its outlook once again. And I say once again because it did it not so long ago. Mandeep Singh is Bloomberg Intelligence's senior tech industry analyst and joins us now. So it seems like very little is stopping TSMC's momentum.
Yeah, and look, it's the AI demand that gets reflected in TSMC's margins, like gross margins nearing 60% for a fab maker. I mean, look at Intel in its glory days. They were around 60 to 65% gross margin. So clearly, TSMC is kind of hitting its stride from a gross margin perspective. But I think when it comes to TSMC, it's obvious to everyone, regardless of whether the accelerator is a GPU or a Broadcom custom chip, everyone has to go to TSMC to manufacture the chip. And you want to be in that sort of position because you don't want to pick, okay, is NVIDIA demand going to sustain, through 2030? And everyone is kind of trying to reach that point where they have a substitute for NVIDIA. So even if there is a substitute, you still go to TSMC, and that's where I feel they are in an envious position when it comes to the moat that they have developed.
Is ASML the direct competitor to TSMC?
No, ASML is one of their suppliers. So TSMC's CapEx goes to ASML. And TSMC, by the way, they raised their revenue outlook. They also raised their CapEx because they're saying we need to expand capacity to fulfill all the demand that the 26 gigawatts that OpenAI has signed up for in the last 1 month.
Yep.
They need more capacity at TSMC, and they need to buy more ASML equipment. So I think it's that chain where TSMC suppliers also benefit because of that insatiable demand.
Okay, so TSMC plays this critical role in the supply chain, and I guess the idea is to get Intel to become kind of like a TSMC.
Yes.
How long of an effort is that going to be? I mean, this is not something that can be done before the end of President Trump's term, is it?
Well, so the way things work in the semiconductor manufacturing world is you go, step by step. And Intel, for the longest time under Pat Gelsinger, tried to jump, 3 steps and directly go from like 12 nanometer to 5 nanometer.
I see.
That didn't happen. So you really have to go step by step. And that's where Intel has struggled because there is no shortcut that you become a leading node manufacturer overnight. Even if you buy the best ASML equipment, it doesn't happen that way. And you need that expertise both on the human talent side as well as the latest equipment, which is where Intel faltered. So I don't see a shortcut. But that being said, there are parts of that AI chip ecosystem where Intel may get some business if the government pressures, all the hyperscalers and these guys to say, okay, you have to use Intel capacity because we want to onshore manufacturing. And that should help Intel.
All right, let me ask my question another way.
Yeah.
Who is the competitor to TSMC? Is there a viable competitor to TSMC today?
Well, so Intel is the closest competitor on the foundry side.
So that's not very close, though.
Yeah, it's not very close. You have some Chinese foundry competitors, too, which China wants to be self-sufficient in everything they do when it comes to the chip side, from accelerators to manufacturing. They have their own foundry, but it's the same problem. Even if you switch to internal foundry, they're way behind in terms of leading node manufacturing. That's where
How did we get here? How did we get to a place, if I'm an Apple or whatever, how did I let my industry get to the point where I have to depend upon one supplier?
Well, Apple helped them get there because before this AI wave happened, smartphones is where you needed the latest manufacturing capabilities.
Yep.
And Apple, clearly they had such a big ramp when it comes to their smartphone install base. And they did the entire thing in Asia with the help of TSMC and Foxconn. So it's really led by Apple while we are here.
They're chasing growth. That's what you do. You go for the most efficient way possible, and that was TSMC.
See, I pretend that I know about technology.
No, these are great questions. These are fantastic.
I'm like John Tucker territory level.
Wait a second.
Fortunately, we have Mandeep here with us.
Exactly.
Mandeep, very quickly, just tell us about what's going on with Apple's AI efforts, because every day it seems to be some other executive who was doing something AI at Apple has moved on.
Yeah, and so Apple is great at making hardware, but when it comes to AI and LLMs, they've missed the boat. And right now, the researchers are saying Meta or Google has a lot more compute to offer in terms of, being a researcher. And that's where, all the deals that OpenAI is doing, that Meta is doing, it's basically getting the compute for the researchers, not for deploying AI, but for the researchers. So it's a great magnet for all the researchers to come in and, use that compute.
Yeah, well said. Kei Yang is the latest Apple executive leading an effort to develop AI-driven web search at the company, stepping down and moving over to Meta.
When does this become a problem for Tim Cook?
Tim Apple, as President Trump has called him?
I know.
Yeah, no, it's a good question.
I
and I
mean,
think...
You've missed...
Yeah. And the stock has, kind of lagged behind as a result. So there you go. Mandeep Singh, thank you so much. Mandeep Singh is Bloomberg Intelligence Senior Tech Analyst here with us, talking about the big moves in TSMC and, of course, Apple and its brain drain. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We are brought to you by Oracle. Attention, growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. So we had a strong outlook from Taiwan Semiconductor. That's boosting confidence in the artificial intelligence boom, and as a result, lifting tech shares as well. Right now, the S&P 500 up 26 points. That is a 0.4%, 66.97 on the index. And of the 11 major industry groups in the S&P 500, it's information technology that is in the lead right now. The Dow Jones Industrial Average up 150 points. The Nasdaq 100, 187 points higher. That is up 0.75%. Software provider Salesforce seeing double-digit revenue growth in the coming years. They're betting on the Agentforce AI tool that lets businesses automatically handle some work. So it sounds like a commercial, such as customer service and early stage sales. And then you have Hewlett Packard Enterprise. They gave an outlook for profit and cash flow for its upcoming fiscal year that missed analyst estimates. That's a margin crunch in the AI area there. United Airlines shares right now down 0.7%. Yet analysts at TD Cowen and Raymond James saying challenges at Newark Airport are weighing on third quarter revenue. That's one of their big hubs.
We always take the rap.
And then George Ferguson, he's noted the airline's results show signs of saturation, even for the what did he say saturation was again?
Too many seats.
Too many seats?
Yeah,
and
overcapacity.
Okay.
I don't see prices dropping enough to really show that, at least for me.
All right. Uber giving some drivers in the U.S. the option to earn money by completing certain tasks. There's a new job category called digital tasks that will appear in the Uber driver app for some workers later this fall. So the option is going to offer existing registered drivers the chance to make a few dollars if they take on simple assignments that can be completed within minutes. Once again, the S&P 500, 23 points higher, and we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. I could probably make a few bucks while doing the business flashes, doing that simple tasks.
That's what you're looking to do, huh?
Well, anything.
John Tucker, thank you so much. We appreciate it. This is Bloomberg Intelligence. Paul Sweeney here with Scarlett Fu. And of course, we're keeping an eye on these markets with the S&P gaining 1/3 its second day of advances. Now, Fed Governor Christopher Waller joined our Tom Keene this morning at the Council on Foreign Relations in New York City. They had a wide-ranging conversations, and of course, they discussed the current issues facing the central bank. So we're going to give you a portion of their conversation where here they're discussing Waller's view on Fed members' choice to dissent on rate cuts. Take a listen.
I mean, I personally think there's nothing wrong with dissents. It's a way to communicate differences in policy stances. You know, the whole complete consensus largely comes out of the Greenspan era, where it was like, if you have a 12-0 vote, there's no doubt about what policy should be. Everybody agreed with the chair at that time, and that kind of tradition continued. But as the Bank of England has showed, there's no point of having 19 of us if we always do the same thing. So at that point, what's wrong with having a few dissent? I dissented at the July meeting. I don't personally think that shows anything about loss of faith in the chair or not the right policy, but that's the whole point, is to say, look, I'm on this committee to have my own independent view and make these points. And that's what people are doing.
We welcome all of you again, particularly worldwide, with Christopher Waller into this audience. Ed, can I call on you first for the first question in a bit? I'll let you come up with it, but I think we need to hear from Ed Cox.
I'm giving you a little time to think about it.
He's got a little time to think about it, and I don't want to get in the way of his good first question. I'm going to ask some questions about the speech. I got to keep the assembled press happy, or they won't show up again at Council on Foreign Relations. But I want to come out of this with a little bit more knowledge about who is Christopher Waller. We'll get to that in a minute. Number one question I get, the unemployment rate's 4.x%. Is a 4.x% unemployment rate now the same as a 4.x unemployment rate when you were at Washington State?
No, I think this is where we're in this unusual situation where we have this kind of zero net immigration instead of roughly, say, 400,000 a year. Actually, people leaving the country. And this is kind of, I've said this before, it's masking this decline in labor demand. So just think about, if it's all immigration and you have a decline in labor supply, then the following things should happen. Employment will go down. Wages should be bid up if you have a labor shortage. Vacancies should go up. Quits should go up. That's what you should see with a very tight labor market and declining labor supply. When did we see that? 2022. 2021. That's what we saw, and that was a very tight labor market. If things are driven by a decline in labor demand, just kind of thinking about labor supply as constant, you'll see jobs fall. There'll be downward pressure on wages. There'll be downward pressure on vacancies. Quits rates will fall. That sounds to me more like what we're seeing in the data. So all that's happening with all the labor supply stuff is it's kind of masking the weakness of labor demand. And I've seen some estimates that if you had just kept the labor force participation rate where it was earlier, unemployment would be 4.95%.
All right, that was Fed Governor Christopher Waller speaking with our own Tom Keene this morning at the Council of Foreign Relations in New York City. One of the areas that we'd like to keep our fingers on the pulse of is commercial real estate, because it's such a good indicator where this economy is going. So one of the folks we really like to chat with is Liz Hart. She's the president of leasing for North America for Newmark. She joins us live here in our Bloomberg Interactive Brokerage studio in a different seat in the studio. We're trying to throw her off her game a little bit. Liz, talk to us about, we've got interest rates coming down, mortgage rates coming down. What's the feeling out there in the world of commercial real estate? Is it sector by sector still?
Well, absolutely sector by sector, but what we're seeing is that continued story of demand, up 45% year over year, 145 million square feet of demand we're tracking in the office segment of the market.
That's just office.
Just office alone, and we can cover industrial and retail too, but starting with office at the top, Trophy continuing to outperform, starting in New York City, seeing major leases from Deloitte, from BlackRock, from Guggenheim, from Salesforce, who you were just covering, from WeWork. So we're seeing great cross-sector, big transactions leading the day, deals over 100,000 square feet, and also great performance from those smaller segments of the market, deals under 20,000 square feet. So good demand.
Wow. So is the worst behind us here for office?
I do think the worst is behind us for office. Yes, most certainly.
So it feels like that return to work mandate is certainly working in places like New York City. What about San Francisco, which felt the brunt of the work from home phenomenon a lot more and has been slower to recover? I imagine AI is giving this office market a big boost.
You are 100% right, Scarlett. We're seeing our fourth consecutive positive quarter in San Francisco, mostly driven by the technology industry, but also a really good size lease from Latham & Watkins. So seeing again, good diversity from the financial services sector, the legal sector, the tech sector. But it's not just San Francisco and New York. Also Hasbro making a really big commitment in Boston, Petty Mac in Dallas. And one interesting thing, I think one of the more interesting deals most recently was ServiceNow doing a really large transaction in West Palm Beach. Not something you'd necessarily see as coming, but they decided that AI talent is also in South Florida, and they did a large transaction with Related, creating a center of talent there. So we're seeing really good demand across the entire country right now.
How about the B and C quality offices? What's going on there? Are they clearing the market? Are they, because I've seen sometimes when these properties do sell, big discounts.
Yeah, I think that's right. And there's still some distress in those markets. We're a little bit too early to tell what's going to happen. I think really what this is a story of repositioning. Okay. And with the One Big Beautiful Bill, there is some tax depreciation to do that. So that's probably the story we're going to see into 26 and 27. But do you want to cover some of the industrial and retail segments of the market as well? So on the industrial side, look, it was a little bit of a rocky start. We had some big headline news, which you guys are very familiar with, that may have slowed it down a little bit. And there was a lot of new product delivery. And so that did cause a little bit of negative absorption. But we don't think this is a negative story. We think it's a recalibration. And that recalibration is going to lead to more absorption that we're looking to at the end of the year in 26 as well. And we think that in industrial, obviously robotics, AI, that the demand is just getting smarter. And we think that there's a really positive story happening here. But similar to what you were saying in the office side, that older product, it's going to need to change, right? And really what people are doing they're going to is that newer product, the stuff that's really delivering more purpose-built for their business in the future. And that's something that's happening across all three categories, office, industrial, and retail.
Does data center fit into industrial?
That would kind of be the most, overarching segment of it, but really data centers is in its own category alone, especially right now, and certainly it has been a very, very strong performer this year.
So what are we doing on retail space? It's been an area where a lot of the department stores for the last 15, 20 years are saying we have to lower our reduce our footprint. Where are we now? Because I see the malls kind of full.
Yeah, I think, this is what I call the quiet outperformer. Okay. So Class A malls doing extremely well. They have been 95% occupied or higher. Yeah. There hasn't been a lot of new construction in the retail category, as you're probably well aware, right? So when you have good demand and not a lot of new construction, that creates really strong fundamentals. And so we continue to see retail as a very solid performer. But similar to the other asset classes we've covered today, that B and C category, they've got some repositioning to do, and hopefully, that will continue to occur to try to compete with that more trophy or high-end product, because that's where the demand is going.
what's the number one thing the owners of that B and C space can do to make their space more attractive?
Well, I mean, the hard thing about it, as you know, is really location.
They can't
They can't move that, right? So they can't move that. So that's the hardest thing to change. But other than that, it's really about, creating a sense of place. And that's true across all, office and retail categories as well. Amenitization is very real. People want to have a place that's really driving performance for them as a business. And so getting people to be excited in that, look at where you guys are in your office is a great example of that. And right on your street, great example as well. People are excited to be in New York City now.
Are there certain markets that are weaker than others, or notably weak? Because I know from the residential side, we're starting to see the backside in Florida and Texas from all that demand that we saw earlier in the building that accompanied it.
Yeah, I don't think there's anything that's particularly standing out as weak right now in the office market. I think we are seeing, pretty good performance across the major urban cores at the moment.
What are you worried about, Liz? What gives you pause when you look at the commercial real estate market?
Oh gosh, I was worried for so long from 2020 to 24 that I don't feel too worried in 25 comparatively. Maybe this is comparative worry that there isn't as much in 25 compared to what we were experiencing prior. But I think we're really in a great resilient moment right now. If I was worried about anything, look, I think some of those B and C repositionings, that takes a lot of capital to do it. And I think what I would be worried about is making sure that local governments allow the resiliency in those zonings to make sure that happens, right? Like not every building is going to stay the same condition in the same zoning that it is today, making sure that there's going to be good cooperation to work with the investors of those markets to reposition. That's one thing that I think would be great advice for for everyone out there to listen to.
All right, Liz, thanks so much for joining us. Always appreciate getting a few minutes of your time. Liz Hart, she's a president of leasing for North America. The firm is Newmark, joining us live here in our Bloomberg Interactive Brokers studio. Clearly, it feels like it and looks like here in New York City that the worst is behind in that commercial real estate biz. This weekend, listen for the debut episode of the Michelle Hussein Show. In her premiere episode, Michelle speaks with the Prime Minister of Canada, Mark Carney. Each week, she'll make sense of the world with one essential conversation, bringing her signature blend of curiosity to conversations with world leaders, business titans, and cultural icons. Listen and watch the Michelle Hussein Show each week on Apple, YouTube, Spotify, and anywhere else you listen. S&P 500 up about 15 points off the high of the day. That's about 0.2%. The NASDAQ up about 108 points. That's about 0.5%. Yields are pretty steady here. The 10-year Treasury 4.02%. This is
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. You have technology shares lifting the major average today after the biggest tech company in Asia, Taiwan Semiconductor Manufacturing, raised the projection for revenue growth for the second time this year. The S&P 500 10 points higher, 6681. That's up about 0.2%. The Dow up 69 points, and the tech-heavy Nasdaq 100 93 points higher right now. That is up 0.4%. We've given up some of the earlier gains there, by the way. It's not tech that's actually the best performing stock in the S&P 500. J.B. Hunt, keep on trucking. The freight transportation company reporting a quarterly profit topping expectations. Hewlett Packard Enterprise issuing a full-year forecast for profit and cash flow. That actually fell short of analyst estimates. HPE, those shares 10% lower. A senior U.S. official warning of a potentially catastrophic compromise after the security company F5 said nation-state hackers breached its networks. This is the Seattle-based firm, saying hackers gained long-term persistent access to certain systems. As sources telling Bloomberg, the breach was blamed on state-backed hackers from China. Oh, and job searches for work around the holidays soaring. The jobs platform Indeed says searches for seasonal jobs were up 27% at the end of September compared to a year ago, and surged 50% from 2023. A lot of people looking for seasonal employment around the holidays. Yeah. Not necessarily to make money, but to get the discounts they offered.
Yes, that is a good strategy.
Retailers. So,
no kidding.
I know college grads who get jobs at Aritzia, for instance, a specialty women's apparel company, in order to get discounts on clothes that they will need for their new office jobs.
Really? That's a good strategy.
Very interesting. Yeah. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett and Paul.
You know, we were supposed to get retail sales numbers today, but that's not happening because the government is shut down. But there is an interesting story on the Bloomberg that shows that credit card data and other private sector alternatives to that official retail sales data are suggesting that consumer demand moderated last month.
Really?
Yes.
Okay. Well,
so, I mean, you know, as much as we talk about the bank results showing the consumers resilient, businesses are resilient, maybe there's reason to think that some of the numbers are not coming out just yet.
Yeah, well, I've been, I think, pleasantly surprised about the retail sales numbers and the strength of the retail sales numbers across the board. You know, when you got a lot of the retail executives, when you do hear from them, that they are concerned, but the numbers generally still come through for the most of it. One of the stock is a nice, sleepy old transportation company, JB Hunt, big trucking company, which is really, I think, a great bellwether for just kind of where the economy is or how's commerce out there. You can track it by talking to some smart people who cover the whole logistics space, like Lee Klaskow for Bloomberg Intelligence. Lee, talk to us about JB Hunt. For those of our listeners and viewers that don't know JB Hunt, tell us what this company does and why it's important.
Yeah, sure. They're actually more than just a trucking company. They're really a diversified transportation provider, and they have a lot of different businesses. Trucking is one of their businesses, their truckload business. And they also do, and it's their biggest and most profitable, is their intermodal business. So that is a container that will start on a truck and then goes on a rail and then is final delivered by a truck. And they also, in addition to that, they have a final mile business. So think of getting your exercise equipment or furniture delivered to your home. They have a freight broker business, which is kind of, it brings together capacity providers and shippers. It's a non-asset business. And they also have a dedicated business. So a lot of companies will kind of outsource their fleet to companies like JB Hunt. So their hands are in a lot of different parts of the freight markets. And to your point, they are a bellwether because they do touch on so many different modes and industries.
Who's their competitor? Who's their biggest competitor in doing all of this? Or is the market kind of split up based on geographic location?
Sure. There are companies that are similarly set up to JB Hunt, like a Schneider. Those are those orange trucks that you see on the road. But like a Werner trucking company has a big dedicated business. C.H. Robinson is a huge brokerage business. Hub Group is another intermodal marketing company who does the intermodal stuff. So they have a lot of different competitors within the market. But some of the largest publicly traded trucking companies besides JB Hunt, Werner, and Schneider are Heartland and Knight Swift are some of the large truckload carriers. And there's a whole subsegment of less than truckload, which JB Hunt plays very little, and it's only they're playing in their brokerage business.
So, Lee, based upon your history covering the trucks, how do you look at them and their business models as kind of reflective of maybe how the U.S. economy is going?
Well, what I would say is, their stock is on fire right now, and that's really driven the fact that they outperformed in the third quarter. A lot of that has to do with them doing company-specific, company-driven cost-cutting measures. So it's not so much about the macro; it's kind of more about, what is JB Hunt doing? And they've, increased their productivity or reduced costs by around $20 million, which added 16 cents to the bottom line and helped fuel that beat. What I would say though, to the macro is we are pretty interested in management's comments on the peak season. So, they are expecting a peak season this year, maybe not a very strong one, but, we're going into the peak season. I think it's going to be pretty muted. We still kind of think that, but, we'll see how it ends up playing. Our thoughts are the consumer is weakening, consumer confidence is going down, and you had a lot of pull forward demand. And what JB Hunt would say is some of that freight just got to the ports and now it needs to move inland. So we'll see what transpires, but we're not expecting a very robust peak season this year.
Paul, what were you saying earlier about turnover for JB Hunt drivers?
Yeah, the turnover is super high in the trucking industry, Lee. Talk to us about the state of that part of the business, just, I guess, attracting and retaining drivers.
Yeah, so it's really interesting. I'm going to pivot a little bit because, well, they're not so new anymore. With the Trump administration, they're really focused on enforcing rules that are already on the books. And so, there are certain standards that drivers have to understand and read the English language. And they are really going out there and kind of enforcing those rules. We had Werner's CEO, Derek Leathers, on our podcast. I do a podcast, by the way, called Talking Transports.
There you go.
Available wherever you get podcasts.
Very good.
Anyway, and he said that, that could impact 5 to 15% of supply. And truckload rates have been really depressed over the last 3 years. We've been in a freight recession. A lot of that has to do with the fact that there's so much capacity out there. And this could take some of that capacity out. Also, there's something, the DOT issues non-domicile CDLs. They are stopping doing that. And any non-domicile CDLs that try to get renewed are probably not going to get renewed.
So that's actually the driver's license, right?
Yeah, for non-U.S. citizens. So you're going to see that kind of leave the market as well, and that could be the catalyst to tighten the market. And we don't think it's going to like flip on a dime. It's going to be gradual, and that is a good thing because the capacity that's been out there, the slack capacity, has been really stubborn to get out of the market.
What are the prices or what are the wages for a truck driver? I'm just curious, given all the challenges that you just explained.
Yeah, most truck drivers get paid by the mile. I don't really know what the latest rate is. I think it's like 50 cents a mile or something like that. And so, that's how they tend to get paid by the mile. And being a truck driver, as Paul, as you mentioned, there is a lot of turnover. A lot of that has to do with people get into the industry not really knowing what to expect. It is not an easy job. It's a tough job. It's an important job because obviously most of the things that you and I buy at the stores come via trucks and kind of moves the economy. It's very important to the economy, but it is a tough job because some of these jobs, these folks are away from their friends and families for weeks at a time. And so, the industry is trying to do what it can to, at least if you're a company driver, trying to get them home as much as possible, and at least having a schedule which they can rely on. So if they need to be somewhere, they know, they'll be home in time to go to their daughter's wedding or their son's birthday party or something.
Yep, it's a tough job, but it's an essential job, as we learned during the pandemic. Lee Klaskow, thanks so much for that. Lee Klaskow covers all the transportation stuff. Think rails, trucks, the shipping companies, all that kind of stuff. And it's a great view of how the economy's chugging along there, how far and how fast those goods are getting across the country. We'll get more coming up. This is Bloomberg. Good morning.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney. We are live here in our Bloomberg Interactive Broker studio, and we are streaming live on YouTube as well. Head over to youtube.com, and that's where you'll find us here. All right, we're all trying to get our head around this AI phenomena out there and how to invest in it. It's got to be something more than simply NVIDIA. And a lot of folks have been looking towards the power play angle. How do you power all these data centers, and who's really going to benefit? And the good folks at Bloomberg Intelligence have done a lot of research on this and written a lot of really smart work. One of those analysts is our good friend, Rob Barnett. He's the Senior Energy and Commodities Analyst for Bloomberg Intelligence, joining us here. Rob, talk to us how you guys, from an energy perspective, approach this really newest phenomenon in the U.S. economy, and that is artificial intelligence.
Thanks, Paul. Well, it's really exciting to see something so profound happening in the utility space. If you look back over the last couple of decades, power demand in the United States and other Western countries has been pretty much flat. So kind of a boring, sleepy segment. But suddenly we have rapidly rising power demand in the U.S. and other Western countries because of this data center story And I think the utilities and energy suppliers are scrambling to get all the electrons that are needed to meet this growth phenomena. The hyperscalers are spending something like $500 billion in CapEx next year, which is 3x what it was just a couple of years ago. And they're not building these data centers, buying all these GPUs unless they can power them. So it's a really exciting time to think about how you can get all the electrons you need to meet that rapidly rising demand.
You're the expert, Rob. What do you and your team think about the U.S., its ability to power this stuff? Are we there yet? How much do we need to build, and how are we going to power it?
Yeah, so I think all of the evidence suggests that we are going to be able to meet this need, but the energy piece is sort of a pick and shovel play. And so when we look at the story, we think gas is a critical piece of it. We've just got a couple of notes out over the past few days looking at what the potential there is. And so within just a handful of years, we see gas demand in the U.S. growing 1 to 5 BCF per day because of the rapidly rising electricity demand. And it's you might sort of say, hey, that's a pretty big range, which I think is a fair criticism. But there's so much uncertainty because all of the hyperscalers are, in some sense, begrudgingly using natural gas. It's available. It's there to be used, but they would really prefer a clean, a carbon-free electron. And so part of the calculus that we're trying to unpack is just, well, how much of that realistically is going to come from gas, but also how much is going to go to solar, storage, geothermal. There's a lot of talk about nuclear. Don't expect that to arrive anytime soon, but there are so many pieces of the energy puzzle in play, and gas is certainly going to be part of it, but probably not the only piece of the story.
All right, so on the nat gas front, what are some companies out there that we should be paying attention to, do you think?
Yeah, so we just put out a note looking at the pipeline companies. And so if you think about it, certainly the upstream gas segment is exposed. But there are many drivers of overall gas demand, and LNG is a huge part of the story. But the pipeline operators are actually well suited to be building capacity to meet the needs of these data centers. And you've even got companies really even talking about what's called behind the meter, where they're directly servicing gas turbines and gas-fired operations that the hyperscalers are actually running themselves. So they're basically, if you go read about Colossus 2, this is the XAI facility in Memphis, Tennessee, and they're using gas turbines to help meet some of their need in a behind-the-meter context. So they're not grid connected, they're not gas units that the power plant, the local utility is running, but they're running it themselves. And there's a lot of anecdotes out there in the market like this. So your Williams, TC Energy, Kinder Morgan, these kind of companies are geared towards that type of phenomena.
Rob, about 30 seconds left. If I want to go out and build a pipeline, can I get that approved by this government?
Well, you know, this is a perennial battle talking about how quickly you can get energy infrastructure permitted. I think the current administration, in some sense, wants things to move much more quickly on this front, as long as it's a pipeline and perhaps not an offshore wind farm or solar project. But I do think you spend more years doing the lawyering work typically on a pipeline than the actual construction. So the proof will be in the pudding, but I think it's better if you've already got projects in your backlog and queue that you're executing on versus trying to come out of nowhere and propose something out of the blue.
All right, so I'll put my wallet back in my pocket there. Rob, thanks so much for joining us. Always appreciate getting a few minutes of your time. Ron Barnett, he's a senior energy and commodities analyst for Bloomberg Intelligence. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio, on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment. S&P turning negative right now. We got it down minus 5.6 points there. We got the Dow off 55 points and the NASDAQ still in the green, up 21 points. This is Bloomberg. Good morning.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. The Justice Department's expected to ask a Maryland grand jury as soon as today to indict former National Security Advisor John Bolton, a man who's been a vocal Trump critic since leaving during his first term. CBS's Aaron Navarro says Trump has accused Bolton of revealing classified documents.
Once Trump returned to the White House for the second term, he did strip Bolton of his security protections. After that FBI raid of Bolton's home in August, President Trump said he did not speak to Attorney General Pam Bondi about it, but then added, quote, "I'm not a fan of John Bolton."
A judge has ordered immigration agents in the Chicago area to wear body cameras. Some have been involved in clashes this week with protesters. The judge said TV images of those confrontations startled her. Venezuela's presidents condemned the U.S. over word the CIA is now conducting a covert operation inside the country. White House correspondent Weijia Jiang says it follows military action against boats off the Venezuela coast.
The U.S. military has added about 10,000 troops in the Caribbean, including 2,000 Marines aboard the USS Iwo Jima. Trump warned it could launch strikes on land.
We are certainly looking at land now because we've got the sea very well under control.
The administration recently notified members of Congress the U.S. is in a non-international armed conflict with drug cartels.
President Trump says on social media that he's been speaking by phone this morning with Russia's Vladimir Putin. In Washington, CBS's Stacey Lynn reports it's day 16 of the government shutdown.
House Speaker Mike Johnson was asked,
how will it end?
His answer wasn't one furloughed Fed workers wanted to hear.
We have no idea.
He said that's up to the Dems, but
the Democrats appear perfectly happy to keep the political theater going while real people suffer.
The Democrats are still holding out for health care provisions, but Johnson says they need to reopen the government first.
A judge ordered a temporary stop to federal firings during the shutdown. It's a bad scene in western Alaska in the wake of catastrophic flooding.
2 entire villages had to be evacuated after Typhoon Halong struck.
A lot of houses are floating down the river with people in them.
Alaska Governor Mike Dunleavy says 2 people who were washed away in their home are still missing. The first plane load of victims arrived at a shelter in Anchorage last night.
This may end up being one of the largest airlifts of Alaskans in the history of the state due to a disaster.
In all, 1,500 flood victims will be airlifted out. The governor says he's not sure when residents will be allowed to return to their villages. He'll tour the damage tomorrow. Michael Wallace, CBS News.
Wall Street, right now the Dow is down 43 points. The S&P is down 6. This is CBS News. A new discovery raises some ancient questions in the Midwest.
It's proof people have been walking around Fayette County, Indiana for millennia. The county coroner has determined part of a human skull found along the banks of the Whitewater River in suburban Indianapolis in June dates back to 2300 BC. He says it belonged to an adult, but it's unclear if it was a man or a woman, also undetermined, the indigenous tribal affiliation. The Miami tribe of Oklahoma is working on that one. The coroner says there are several possibilities, including the Shawnee, Potawatomi, Delaware, and Cherokee. Deborah Rodriguez, CBS News.
Diane Keaton's family tells People.com that the Oscar winner's death last weekend was caused by pneumonia. They say they're grateful for messages of love and support they've received, requesting donations in her name to food banks or animal shelters. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
A new call for caution by the man who could be Fed chair. Welcome to the Thursday edition as Federal Reserve Governor Christopher Waller tells Bloomberg quarter-point cuts should be the path to lower rates, as we will hear coming up with insights from Bloomberg's Tom Keene, who spoke with him just a short time ago. It's day 16 of the government shutdown. No off-ramps emerging yet, though there could be some backroom conversations that we'll hear about when we speak with Republican strategist Ashley Davis from S3 Group. And as the Pentagon press corps leaves the building, we're going to talk with someone who just packed his desk and turned in his credential. Bloomberg Pentagon reporter Tony Capaccio on the way forward, how to cover the military from outside the building. It's all after a look at Wall Street, and we start there right now with Charlie Pellet, live from World Headquarters in New York. Charlie, how is it?
Hi, thank you very much, Joe Matthew. We are lower right now on the S&P and the Dow. NASDAQ holding on to gains, but we're well off session highs. The Dow, the S&P, both in the red. 5-point drop right now on the S&P 500 index. 66.66 where we stand. Lower now by 0.1%. We've got the Dow down 43, drop there of 0.1%. The NASDAQ Composite Index up 27, up by about 0.1%. And the Bloomberg Mag 7 Index higher by 0.2%. An earlier bounce in stocks waned as geopolitical concerns resurfaced, and a pair of regional banks got hit, overshadowing optimism about artificial intelligence. The 10-year, 4.01%. The 2-year, 3.47%. Spot gold is surging another $69 the ounce, up 1.7%. 42.77. Indeed, silver rallying as well, up 1.8%. 53.96 on silver. West Texas Intermediate crude up 0.3%. 58.44 for a barrel of WTI, and a further retreat for Bitcoin, down 2.2%, 108,860 now on Bitcoin. A call to settle the government shutdown now in its 16th day from Scott Kirby, the CEO of United Airlines, interviewed this morning on Bloomberg Radio.
The first couple of weeks of October hasn't really affected bookings. I think if this goes on for too long, certainly the risks escalate in the economy as it goes on. I think the economy is better than most people think, but it's still tenuous. It's still a little balanced on a knife edge, and we shouldn't have unforced errors. So let's get the shutdown settled.
United CEO Scott Kirby. By the way, you can watch the full conversation on YouTube on the Bloomberg podcast channel. UAL shares, they're down now by 8.8% after earnings. Recapping, S&P down 2 points. Little change there. Balance of power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, great to see you. Live from New York, Charlie Pellet will have more on the Thursday trade coming up in just about 15 minutes here on Balance of Power. Thanks for being with us here on the early edition of Bloomberg Radio, on the satellite radio, channel 121, of course, on YouTube. And I'm going to tell you right now, Tom Keene's coming in, so search Bloomberg Business News Live. You know how this is done as we watch the radio on TV. At my side, Mario Parker here in Washington for the balance of the hour. And before we get to the matter at hand with TK in New York, it's happening right now, the phone call. And we learned about this first on Truth Social. President Donald Trump, I am speaking to President Putin now. This was roughly, Mario, 40 minutes ago. The conversation is ongoing, a lengthy one, he says, and I will report the contents, as will President Putin, at its conclusion. Thank you for your attention to this matter. Now, this, of course, is the appetizer to the meeting with President Zelensky tomorrow. He's dropping the word tomahawks right now on the phone.
Tomahawks is the name of the game right now with Trump. Trump has been deal making. He's been in deal making mode the better part of the last week.
Yeah.
Right. He got the Middle East peace deal, or ceasefire rather. Now he's turning his attention to this other war that he thought and he campaigned on, saying that he would solve in a few days. One of the things that the president did say, and this is what I was getting at with the deal making, is that he would drop the tomahawk word to Putin and say, hey, if you're not going to end this war, why shouldn't I give Vladimir Zelensky these tomahawk missiles?
Exactly. We talked to Michael McCall about this yesterday, Republican congressman, former chair, of course, Foreign Affairs. He didn't think it was likely that Zelensky would be throwing tomahawks into Moscow anytime soon, but the threat itself might be all that's needed. So we're about to find out.
Yes, absolutely. And a lot of this is just the president's deal making, but also trying to fortify Zelensky, and Zelensky trying to have some type of leverage once. And again, this is optimistic once they're able to get he and Putin to the table.
That's right. Well, we'll have a lot more on this when we learn that the call has ended, and I suspect that there's going to be a Truth Social post coming there pretty quickly thereafter. Our top story at the moment, though, is the man who could be Fed chair. I don't know how much time President Trump is thinking about who's going to replace Jay Powell, but we're narrowing down the list right here all on our own at Bloomberg.
Yes, absolutely. And we're paying attention to the comments from folks like Scott Bessent that says that who's conducting a lot of these interviews. We do know from our reporting that the president is doing his usual surveying. What do you think about this person? What do you think about that person as well? And then obviously a lot of the thought right now is just how deep these Federal Reserve interest rate cuts are going to be going forward. It's a foregone conclusion based off of what Powell has said that there's going to be some cuts, but we still need some of the machinations of that. And we've got my friend, the great Tom Keene, who conducted a superb interview this morning with Fed Governor Chris Waller up in New York.
Yeah, good morning. And Joe, I'll tell you, it's something. Joe, I'm a little bit in shock. I was in Houston 3 days ago, and you'd think they'd be talking about Chris Waller, or, the Fed, or price of oil and all that. No, all they want to know is Bregman going back to the Houston Astros? That's the only thing they wanted to know. Out of Boston, what's it going to take to get Bregman back to the Houston Astros? We'll have to see how that goes.
Tom Keene, always with 92.9 in mind.
92.9 FM in Boston. Good morning. And Chris Waller had 92.9 FM Boston in mind as he looked across the nation. He's fearless, Joe, about saying it is in America. It's not just about the haves. He spent a lot of time talking about the have-nots. He had in there language talking about not one but many rate cuts. And what he really was interesting about was dissent. Christopher Waller on groupthink.
Well, one of the criticisms that's been leveled at the Fed for a long time is we engage in groupthink. Every policy decision is a 12-0 vote. There's no dissents. And that if you're all going to do exactly the same thing and think the same way, we don't need 19 of you. We need one. But what I always try to point out is it's through speeches and public speaking that everybody presents their views, and you can go out and listen, and they're not the same. So all the public speaking, the speeches are the way for us to show a diversity of opinions and thought about the direction of policy. This is a good thing. It's not a bad thing. Despite people saying it's a cornucopia of noise, it's actually signaling where people stand. When you come to the meeting, and I always try to stress this to people, we have to make a decision every 6 weeks. We do not get to kick the can down the road. And what that implies is that to get a reasonable, consistent opinion, we have to kind of compromise. You have to come to a decision. And that's why our votes are often 12-0, 11-1. It's because we all understand we have to compromise somewhat on our positions to have a clear, consistent policy setting for markets and the American people.
Larry Meyer, Washington University St. Louis, had a small book out of his time with Greenspan, a term at the Fed, and he was heated about the consensus vote, the need for consensus. Should we be more like the Bank of England, which seems like a fist fight every 6 weeks?
Yeah, I'd like to avoid the fist fight every 6 weeks. But, I mean, I personally think there's nothing wrong with dissents. It's a way to communicate differences in policy stances. You know, the whole complete consensus largely comes out of the Greenspan era, where it was like, if you have a 12-0 vote, there's no doubt about what policy should be. Everybody agreed with the chair at that time, and that kind of tradition continued. But as the Bank of England has shown, there's no point of having 19 of us if we always do the same thing. So at that point, what's wrong with having a few dissent? I dissented at the July meeting. I don't personally think it shows anything about loss of faith in the chair or not the right policy, but that's the whole point, is to say, look, I'm on this committee to have my own independent view and make these points. And that's what people are doing.
Here in Balance of Power, the governor of the Minnesotas, the Dakotas, and out to his Washington State, Christopher Waller, of course, always and forever associated with the St. Louis Fed. You know, Joe and Mario, I look at this, and Mario, I sort of felt like Mario in the Oval Office, Joe. If I say something wrong, I probably won't be invited back. Mario, it was a little bit delicate talking to Christopher Waller without mentioning the dreaded P word, the president. You know, it was a little clumsy at times because of the uproar in Washington about this selection process.
Yes, Tom, and I mean, welcome to my life where the president hangs over all things. One of the questions I really enjoyed from you was the question that you lobbed at him as a son of the Dakotas, where you asked about these the two disparate economies that are taking place right now, the haves and the have-nots, and how they navigate that. Can you give a little bit of insight of what struck you about Waller's answer there, where he talked about some of that?
Let's go back here, if I have the time, Joe. Joe, I'm interrupting the surveillance nap here. It's a real problem.
I know. That's why you said it's good morning. It's good afternoon.
Exactly. And I look, Joe, at where he is, and he has to meet the criteria of the president if he's to be chairman. He has to represent as governor. And as he repeatedly said, he's got to go meeting to meeting to meeting. And what really struck me, Mario, was we talked about not one R-starred, which is fancy economic babble for where the comfortable rate is, but are there two R-stars? There's an R-starred, Joe, for 3 zip codes of Manhattan, and there's an R-starred for 60% of America flat on their back, like the farmers out in the Dakotas, the soybean crew. And it's this, his insight on 2 R-stars, I thought was very profound.
What does Christopher Waller say when he's alone in a room, presuming that has happened or will happen with the new guy? Stephen Myron described himself as out of consensus yesterday. They're clearly about as far apart as you're going to get here. Do they get along? Does he respect the new guy?
They all do. They're both trained PhDs, and they do get along with respect. I did not bring up a compare and contrast of Myron and Waller, but let's be honest, Joe, they solidly both demand lower interest rates. In that regard, they're on the same page.
And Tom, I mean, one of the disparate parts, I guess, the differences between the two is one is advocating for a much more cautious approach, and Myron is, I mean, he's in some ways parroting the line from the White House for something much more aggressive.
You're gonna get me in trouble here, guys. It's very different. Christopher Waller is much more of a centrist economist. He's talking with a huge humility for being uncertain, for waiting for the data. He continually showed both sides of the coin, if you will. Myron studied under Martin Feldstein at Harvard, and there couldn't be more different. Feldstein is much more like Christopher Waller. Myron has a certitude. This is where we are. This is what we believe. There can be other outcomes, but at the same time, I believe this. And that's a very different tone, Joe, than modern economics. Joe, I got to go back to Red Sox baseball. It's like the people, April 25th that think the Red Sox are destined. I mean, Myron's talking that
See you in
tone.
October.
Yeah.
All right, so I don't get Tom Keene on very often, and I've got to ask you just what you're looking at on the markets here, because you've got a VIX approaching 22 at the moment.
Thank you. Listen to
and
him.
You've got everybody talking about how much froth, how toppy, and if Tom Keene looks the wrong way at the camera, we sell off. You don't think I listen in the morning, do you?
Mario, this is too much. Matthew drank the Kool-Aid. David Brundtland never knew where the VIX was. The VIX, Joe Matthew.
I bet that's true. And he knew the voice of global Wall Street.
He did. The VIX 22.02 now is a shock, and it was addressed beautifully by Jessica Menton today. She did some important research on it. It's highly unusual, Joe, to see these levels to go to the Dow of 46,000. I need a VIX of 15 or 16, as Greenspan would say, a more quiescent number, and we don't have it. And let's drop down my Bloomberg. Joe, you don't even use the Bloomberg terminal, do you? I mean, you know
how they say you only use a fraction of your brain?
Well,
I kind of am like that with the
Joe,
terminal. I use it for what I need.
This Mario did this. We just popped 4,300 on gold. I got a print on the screen, 4300, up $98.50. I am telling you, with all the years, Joe, it's like the Red Sox playing in October or September. Highly unusual. That's where
gold-linked growth stock
right
with
now.
Crude oil at $58 a barrel, and Mike McGlone has taken a serious victory lap because he predicted both of them.
Unbelievable how McGlone's been. It's sick.
How true. We got to give him a victory lap on the program for that, Mario, because I think it's true.
Yeah,
you buying gold yet or what?
I need to. Let me call. I need to call home.
Let us know.
Joe, can I ask you a quick question?
Please, yes.
Mario, have you been over to the building of the ballroom?
No.
I have not, but I've seen the Presidential Walk of Fame, and then I've also seen how they've plastered over what used to be the Rose Garden.
Yeah, the beautiful pavers now. But I'll tell you what, Tom, it's like a construction site over there. It's it's like a brownfield on the next to the east wing of the White House. He got the money last night, though. We're going to talk about this a little bit. Did you see who was in the room? I mean, they've got this thing paid for with money to spare, so they're talking about Arc de Triomphe. Going up now, I guess it would be Arc de Trump. Right at, the Rotary next to the Memorial Bridge there in Washington, D.C., outside of Arlington Cemetery, Tom. It's going to be like the Arc de Triomphe coming into Washington, D.C.
I'm not allowed to editorialize like you, Joe.
Have a great nap.
Thank you.
All right,
Wonderful to be with you, Mario. Great to see you.
Great
Likewise.
honor. Twice in a month, maybe, with Tom Keene. This is super cool. So, if you don't subscribe to the podcast, you might miss moments like this. If you're with us live, welcome to the Thursday edition here of Balance of Power. We're on the radio, satellite radio, channel 121 on YouTube, if you want to back it up and hear what just happened with Tom Keene. Ashley Davis is in town. She's going to join us coming up as we take a look at what is day 16 now of the government shutdown. Yeah, I'll use the word off-ramp at some point when we talk. But first, we turn to Wall Street. Charlie Pellet has the latest on the Thursday trade. Let's go to world headquarters right now. Charlie, what do you have?
Right now, we are lower across the board on the Dow, the S&P, and the NASDAQ Composite Index. We've got the S&P lower now by 1266.59, drop there of just about 0.2%. Tom Keene's VIX at 22, up now by 7.5%. We have got the S&P, as I mentioned, lower by 0.2. The Dow also down 0.2%. NASDAQ Composite Index slumping 12, drop there of 0.1%. An earlier bounce in stocks is waning as geopolitical concerns resurface and a pair of regional banks got hit, overshadowing optimism about artificial intelligence. The 10-year currently yielding 4.01%, with the 2-year 3.45%. Spot gold up $75 the ounce now, climbing to a record. Tom mentioned moving over 4,300, 42.84 right now on the precious metal, up by 1.8%. Not just gold, silver as well. 54.02 right now on silver, up 1.9%. And a retreat for West Texas Intermediate crude, little change, down under 0.1%, 58.26 a barrel. Bitcoin pulling back, down 2.7%. Bitcoin 108,120 on Bitcoin. Uber is giving some drivers in the U.S. the option to earn money by completing tasks relating to the company's data labeling business, an area where the rideshare giant sees an opportunity to shine in the AI boom. Uber shares down 2.2%, rival Lyft lower by 0.7%. Balance of Power continues. Back we go to Washington. Once again, your hosts, Joe Matthew and Mario Parker.
All right, Charlie, many thanks. We'll get back to Charlie Pellet for more on the markets. Just about 20 minutes time here as part of our program. Every day here live from Washington, we keep the markets in the fold, and frequently they collide with policy in Washington driving stocks. And we'll see if that ends up being the case today with the government shutdown that's got the market's attention maybe a little bit more, with lawmakers suggesting that this could be a record. When I say lawmakers, the Speaker of the House now allowing for this, as the White House says it is battening down the hatches. That was the word from Russ Vought. Day 16, Mario Parker is along for the ride again today. Mario, they're going to keep doing this. Another round of votes today, same bill, same result.
No, absolutely. But you did see, I guess what's different here is that you did see John Thune this morning suggest that he'd be open to having some type of vote on ACA subsidies. I don't know if that's tea leaf reading to say that things have gotten warmer, but it's something.
Well, I think it is something. And let's also consider the fact that he said it on MSNBC. So I don't know what kind of an olive branch this might be, but let's let everyone hear what the Republican leader in the Senate said earlier on MS.
I've told him, I've said we are willing to have the conversation. I've said if you need a vote, we can guarantee you get a vote by a date certain. At some point, Democrats have to take yes for an answer. But I agree totally. We are all about getting health insurance down, making it affordable to more people.
So I hear you saying about the program that needs reforms. It sounds like you're guaranteeing that there will be a negotiation on this.
Well, what I'm saying is there's a path forward, I believe.
But yes or
no?
No?
It has to include reforms. And can I guarantee an outcome? No.
Well, this is interesting because the week that we shut down, and now it's a few weeks ago, we had Democrats on this program saying that a guarantee of a floor vote would be enough to get us to a yes, at least enough senators. You only need a half dozen to make this thing work. Then the talk started to really revolve around a deal on extending Obamacare subsidies. Then it became the deal had to come before voting for the CR. So we're trying to keep the lines straight on this, and it does seem significant what John Thune said earlier today, which is why we wanted to talk to Ashley Davis about this, Republican strategist, partner at S3 Group, who spent a lot of time in the Senate recently trying to gauge what's going to happen next. It's great to see you, Ashley. Welcome back. Is John Thune going to be the one to solve this?
Listen, I don't really think what he said was much different than what he has been saying, is that we will have some sort of negotiation on the subsidies. It's just not going to be before we vote for the government to reopen with the clean CR. I mean, listen, I am not a big fan of how this is going down. I think that this is a bad way to legislate on both sides of the aisle. I still think we're a couple weeks away. I think there's two tipping points, one being October 28th, when the government loses their first full paycheck. This past week was a partial paycheck. So the real pain will happen on October 28th, especially when you look at like TSA and FAA, things like that will be impacted. But also November 1st is when open enrollment happens on the ACA subsidies. Yeah. And there's many that think that that's going to be a tipping point as well. But listen, we're just this is all politics and on both sides, and it's not helpful to the American people. But one more thing, Joe, something I thought was very interesting today. I don't know if you saw the Economist poll that only 21% of people in the country feel that the federal government is impacting them at all. That's a pretty low number, which is why there's not much of a tipping point here for people to negotiate. And when you have DOD being paid from, the president finding money under the cushions this week, and then does the same thing happen, say with FAA and TSA on the 28th? I mean, that takes the pressure off opening up quickly.
And Ashley, to Joe's point, the fact that Thune made those comments this morning on MSNBC, known to have more of a progressive or Democratic base or viewership, what does that mean? Are we looking too deeply into that, or is there some type of strategy there? Is he trying to message to Schumer and Jeffries' constituencies?
Maybe. I just don't think, I don't think, first of all, let's take a step back. These subsidies will get dealt with one way or the other. In my mind, they will not stay as they are right now. Obviously, they came into effect at the levels that they are during COVID. There needs to be some sort of reform. You're not going to get very many Republicans in the House or Senate that will vote for just complete extension. But that doesn't expire till the end of the year. And so we've got time. And I think you have the speaker continuing to say that they did their job, they're doing a CR, we're not negotiating until the government opens back up. I kind of feel maybe that's what Thune was saying today. Listen, I'll give a guarantee on a vote, I'll give a guarantee on negotiations, but we're not going to do that until we open the government back up. And again, I just go back to, if you're in Kentucky right now watching our Congress debate over a CR, when it's going to open up. I mean, the only thing you care about is getting paid. And so I think that this is a really inside the Beltway conversation. And but listen, people aren't feeling that they have a lot of pressure right now.
Well, it's interesting, the issue of paying the troops you refer to, Ashley. The president found $8 billion from, I think it was, they said it was from unspent funds from the last fiscal year, unobligated monies. They may have tapped into some research and development cash. We'll see how that plays out. But that gets us through one pay cycle. So you're 2 weeks until the next potential inflection point. Does Donald Trump keep finding cash in the cushions, as you say here, to keep the military paid? Because we can keep this going on for a long time if he wants.
Yeah, I mean, when you think $8 billion's cash in the cushions, that's like, you know, I'm jaded, obviously, in regards to the federal government in general. But maybe I do think, though, when the open enrollment does happen, and I'm sure you've been talking about this a lot on the show over the last couple of weeks, that is going to show people what because that's going to be the private sector kind of pushing what the rates are going to be. I think that's when people are going to not pull at 21%. That's going to be, you know, and I think that the military getting paid. So 2 weeks from now, that would be about the same time of that week of the 28th and the 1st. Maybe that all coincides because, listen, I guess he's not allowed to use the tariff money, the tariff revenue to pay for, you know, people getting paid. I think there's a legal issue there, so you can't use that. But you can reappropriate money. Yes, it happens all the time. It's just going to be more and more difficult.
And Ashley, we're starting to hear some Republicans even mention the prospect of this lasting through Thanksgiving. I mean, at what point do we think that there'll start to be some political consequences? One has to imagine that this shutdown, overtaking many of the Thanksgiving headlines, has to at some point exert some political pressure on one of these sides, right?
I mean, God forbid this happens through then. Again, I think that people are going to get tired of the daily press conferences from both sides saying the other one's to blame. Like, I'm tired of it. I'm sure you're tired of it. I'm sure the American people are tired of it. So I think that there does have to be a tipping point of when people have pain, and so financial pain. And if the president continues to bail out kind of the DOD or FAA or TSA, whatever it's going to be, that takes off less pressure. So I just don't think people can lose their paychecks for maybe one cycle is the max you can do. But listen, there's a lot of people that are living paycheck to paycheck that this is just not something they're able to do. And we're messing with people's lives at this point. It's ridiculous on both sides.
Well, at what point, Ashley, do Republicans need to get more involved in the issue of Obamacare subsidies, realizing that, you know, this has been a big sticking point. They don't want to be forced to the table on this, and you don't want to conflate the issue with government funding. I get that. But as open enrollment does approach and the notices are out, and some people are saying if premiums go up this much, I'm just not even going to enroll, and they'll end up without health insurance. There's potential political backlash for Republicans. At some point, does time force everyone to the table?
Well, yeah, I mean, look how many weeks we have left of the CR that we were, you know, that the Republicans were that passed the House. There's like 4 weeks left, I think, is what we are at the time. But I by the way, I don't think the House comes back again next week. I don't think there's anything to negotiate right now. If people are, if the subsidies, if the premiums, the open enrollment happens on November 1st, and those premiums are shown to go up, that would be a tipping point. However, if it doesn't happen that way, I don't think they have to start negotiating until November. I mean, Joe, you've been around this town as long as I have. I mean, it's just like when you have something expiring December 31st, you start and you go out of recess to say December 15th. You don't start negotiating until December 1st. I mean,
Christmas Eve.
Yeah, wow. Why do I keep doing this? Maybe we need to go like in the arts or something.
Now we're getting more.
And of course, another component here is just the prospect, the White House continues to dangle the prospect of just mass firings. There was a legal setback, obviously, on that plan over the last 24 hours or so. But, I mean, how does that at some point increase some of the political pressure on Republicans at that point and make them have more ownership with the White House threatening these mass layoffs, especially in places, as you mentioned, like Kentucky or Florida or Virginia?
Right. Well, you said, they have 4,000 that obviously were paused yesterday. I'm assuming the administration will continue to litigate this, as they have in the past on various issues that go to the courts. But when OMB said they'll go up to 10,000, there's a part of me that has been saying we shouldn't be surprised because the federal government being scaled back at the kind of inflated government that it is, which I do agree with, that this is something that the president and OMB have been saying from the beginning that they were going to do. I just don't know if that's going to be blowback on Republicans or Democrats. Right now, the administration feels it's going to be a blowback on Democrats.
Great. Well, Ashley Davis, thanks so much for joining us. We're here with more from Balance of Power.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ 100 index, the Russell 2000, and now our Mag 7 index all in the red. Stocks lower across the board. An earlier bounce is waning as geopolitical concerns resurface, and a pair of regional banks, Zions and also another California bank, disclose that they've got some bad loans. Shares of both companies are tumbling right now. We've got Zions Bancorp down by 8.5%. The other California bank, Western Alliance Bancorp, down now by 8%. Bottom line here, a lot of red on the screen. S&P down 48, down 0.7. The Dow lower today by 0.6, and NASDAQ right now down 0.7%. The Mag 7 index down 0.7 with a 10-year, 3.98%. We've got the 2-year currently yielding 3.41%. Gold is surging to $42.62 the ounce. That is a record of 1.3%. And West Texas Intermediate crude down 0.4%. WTI 58.09 a barrel. Earnings news, specifically tech companies. Taiwan Semiconductor Manufacturing is hiking its projection for 2025 revenue growth for the second time this year. Shares, however, lower now by 1.6%. HPE, Hewlett-Packard Enterprise, after earnings plunging now by 10.9%. Salesforce.com after earnings up by 4.3%. So again, recapping here, the Dow, the S&P, NASDAQ all in the red. S&P down 0.5%. Balance of power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Mario Parker.
Okay, Charlie, thank you so much. Charlie will have more coming up at 1 o'clock, top of the hour on Wall Street as we keep tabs on the Thursday trade. Thanks for making us part of your Thursday here on Bloomberg Radio. Streaming live on YouTube right now as we turn back to a story that we discussed at length with our panel yesterday, and we will have our panel with us in a couple of moments as we stop down to consider what just happened on the other side of the Potomac River, Mario Parker. An eviction is a word that some are using. A walkout might be more precise, as the press corps literally unpacked their desks, broke down their computers, and walked out en masse following what was seen as a completely untenable demand from the Secretary of Defense.
Yes, absolutely, Joe. Just an interesting moment, I think, in journalism and democracy, and kind of marks this period that we're in here.
That's for sure.
Right now, as we try to cover and hold the government to account and give taxpayers and readers a view of how their money is being used.
Indeed, it was a demand to not solicit classified information. It was a demand to seek Pentagon approval before publishing. And there were more where those came from in what I believe was a 21-page document. Every news organization, this is not something you see very often, including Fox News, joined together to say no. There was one exception. I believe ON is the agency of record now, apparently, at the Pentagon, sort of a state news service, if you will. And I'm not sure, I guess they'll have the run of the place. I don't know how briefings are going to work with one news agency. But we have a friend of the program here who's right in the middle of this, and one of the veterans covering the Pentagon who decided to say no yesterday, and that's Bloomberg's Tony Capaccio, who's with us in studio right now. Normally he would be across the river in what was known as the Correspondence Corridor, right? This was an area that was, in fact, not only home to reporters who did their work there, but was a tribute to those who, in many cases, had lost their lives covering foreign wars.
The corridor is the OSD Public Affairs Corridor, and the Correspondence Corridor is where we sit. But this has it's got tributes to the power of the media, power of the press, the power of television, the power of technology, the power of pictures, and there's a rolling montage of those journalists who died in the line of combat or coverage. Pretty touching. And even there's a Principles of Information panel, always abused, sometimes followed. I want to bring up a historic moment that fits in today. 63 years ago next week, during the Cuban Missile Crisis, Secretary of State Dean Rusk allegedly said to a fellow official during the Cuban Missile Crisis, "I think the yellow fellow just blinked." 63 years later, 45 news organizations didn't blink, and they said goodbye. less cataclysmic than the Cuban Missile Crisis, but just as consequential in terms of freedom of the press.
Wow.
And Tony, what's one of your earliest memories, I guess, of entering the Pentagon and covering the institution? Can you share some of that?
Well, the earliest memory, back in the mid-'80s, there was a movie called The Day After. ABC was trying to get the script approved.
Yeah, remember it well.
I actually got into the Pentagon, and one of the new motion picture people actually gave me the script with the Pentagon's approval, with the Pentagon's edits that weren't draconian, but he gave me the document. He gave me the file. That's how transparent they did. And I ended up doing a story for Common Cause magazine, I think it was. But I got in there. I was petrified to a point because it's daunting, and it's large, and it's bright. But this Air Force general, a colonel, worked for the film office. He actually walked me through the changes that the Pentagon suggested that ABC...
Pentagon marked up the day after?
They marked it up.
Wow.
It was not... it was ABC script, as I recall. Jason Robards in the movie.
Good memory. That was a national event when that thing.
It was
Everyone stayed up to watch it in prime time.
And I think I was with Jack Anderson's column at the time.
Hysterical.
And we did a story. The Pentagon approved the day after. They modified some of the script, but they didn't say, we're not going to help you at all.
Right.
So that's one of my earliest, probably my earliest memory.
Fantastic. You should get him, by the way, off the air. Ask him about the food court. Nobody will believe it. But I want to hear about what happens now, because the power of no is important. And the images of you guys walking out yesterday, it was an important moment. Now, of course, Pete Hegseth is waving goodbye, bye-bye on social media. How do you now cover the Pentagon without being in the building?
Well, hey, this is a good question, because now it's going to relegate to phone calls and emails. Phone calls, emails, and meeting people outside the building. So I have a good example yesterday of the importance of being there.
Yeah.
There's a number of reasons I'll let you know, but yesterday, I was outside in the corridor leaning on a garbage can area. It was not like a regular can, but just leaning, talking to somebody. There was a rumor that Hegseth's plane had turned back to Europe. I wanted, being there, you could buttonhole people. A guy passed me, an official I deal with.
Yeah.
He confirmed off the record, cracked windshield. I was literally, like, my arm was on, cracked windshield, blah, blah. I went and I messaged our editors from my phone, cracked windshield, more to follow, not endangered. If his plane had a major problem and it, God forbid, crashed or something major, and we were not in the building, you'd be relegated to phone calls that were not answered, emails that would take forever to get back, and a general panic on what the hell happened to the defense secretary's plane. So the value of being there in a crisis is exponentially important. Robert Bales, an Army sergeant, butchered a number of Afghan civilians about 12 years ago. I was in the building. We were trying to get confirmation of Bales' name. CNN broke it. I was able to grab then spokesman John Kirby as he was walking into his office. I said, is it Bales or not? And he nodded. Yeah, it was Bales. We were able to confirm it because we were there.
So you're describing what happens when you're in person. Being out of the building now means you're, of course, not going to get those scoops. But isn't the Pentagon going to start leaking like a sieve?
Now, this whole concept of leaking is you get a piece here, you get a piece there, you pull them together, and sometimes they consider that a leak because it's unauthorized information.
But if they can't find Tony Capaccio in the halls, they're going to get it to you somehow.
Well, yeah, they will through phones, Signal, meet outside the building, or Capitol Hill becomes important. Industry contacts become more important in terms of how to get the information. Online, they do post things that they might not think are useful, but you pull them together, they become important. Can I give a couple reasons why it's important for the press to be in the building that have been lost in the debate?
Yeah, we'll wrap it up.
50% of the discretionary budget that Congress passes, exclusive of Medicare and Medicaid, is spent by the Pentagon. They're asking for like $1 trillion next year. $1 trillion, all-time high. The press needs to be there as a presence to let these people know there's an accountability factor for that kind of money. The other reason, 98% of the United States population has no connection with the military. Us being there is one representation of those 98% with no connection. The other 2%, it's a volunteer force. Their mothers and fathers are look to press coverage, especially on personnel policies, in terms of should my daughter or son go into the military. Very important to be there to explain those policies. Personnel policies resonate a lot more on Capitol Hill than maybe a cost overrun story. So you got to be aware of that. But those are the main reasons that the press should be there. Sure. And then there's one final thing: the influencer notice. Many officials who go in there, spend time at the Pentagon, their exposure to the media may be none, or to regional or local. This way, they're exposed to the national media. The Pentagon press corps is generally seen as the best in terms of knowledge, not grandstanding.
Yes, right.
And eagerness to learn about obscure issues. They go back into the field and they say, hey, I dealt with the Pentagon, the press corps. The press isn't bad. We need to deal with them. This is to an institution that viscerally doesn't want to deal with us because we go outside the norm often.
Well, we have a lot of respect for what you do, what you did yesterday, and at least we get to see him around the Bureau a little more often.
Yes, it's a joy to work with you, Tony. Thank you so much. And we're joined now by our panel, Rick Davis, a partner at Stone Court Capital and Bloomberg contributor, and Aisha Mills, a principal at Community Asset Management and Democratic Strategist. Thank you so much for joining us. Rick, I mean, this was a huge moment, I guess, for journalism. We just heard Tony Capaccio speak about this, as well as just both journalism, but also democracy. I mean, does the White House, does this administration, is it over-torquing here at all? Is there a risk there that there could be some type of blowback here for some of these measures it's taking?
Yeah, it is a bit of a quandary to me. This is a president who exemplifies, his own form of transparency. We've seen more of him in the 10 months he's been president of the United States than any other president in any other time during their term of office. I mean, literally every day, 2 or 3 press conferences, hours of conversations with the media. He's used it effectively as a tool to manage, the public discourse, throughout the country. And then to have a policy at the largest government agency we have that basically is we don't talk to reporters, or we don't want reporters talking to us, is a real dichotomy. I mean, why is it that you can have this kind of discourse in the Oval Office of the White House every day, but you can't have people asking questions of folks inside the Pentagon? Vast majority of the Pentagon funding, all of which comes out of your public coffers, taxpayer money, is not spent on super secret funding. It's spent on a lot of things that have to do with the workforce, the military, the million-man military, the housing, transfers, relationships, new developments and technology. And it's all things that the American public would be curious to know and need to know, and they are not going to hear it from the Pentagon. They have to hear it from the media. And so having them not there does the Pentagon no good. And I just don't understand it in an administration that has this much transparency with the media.
It's a really great point, Rick, and the dichotomy that we're seeing here. I don't know if that means Donald Trump just wants to be the spokesperson for the Pentagon here. But Aisha, I wonder, reporters are really good at what they do, and a guy like Tony Capaccio isn't going to be hanging around the Bureau now that this happened. Is there a chance that coverage of the Pentagon, in fact, is enhanced somehow by this, that the scoops get bigger and the stories get larger?
Rick makes a great point about why is it that this administration that claims to be so transparent and wants to control the narrative through the president is actually trying to hide, essentially, what's going on at the Pentagon from reporters and control how people are able to talk about that. I think that's the real curious thing to me, because the person who is actually running the Pentagon has zero experience in defense, but actually comes from the media. And so it's interesting this shutout, or at least this attempt to censor and control that's happening. And I think that we absolutely should see more in-depth coverage of the Pentagon, just out of sheer curiosity about what it might be that they're hiding and why is it that they're trying to control the message about what's going on there. So I do hope that reporters certainly see this as an opportunity to ask more questions, to be more inquisitive, to bring to the American public as much detail as possible, because there's clearly something that is nefarious that's happening that this administration thinks, the public shouldn't be as close to. And barring the press, is really a blockage of our constitutional rights to know what's going on. So I do hope that the reporters really seize this opportunity to dig deeper.
Yeah, you're going to see a lot of people digging in here, I think, Aisha. It's good to have you back. Aisha Mills, Principal Community Asset Management, our Democratic strategist, alongside Republican strategist and Bloomberg Politics contributor Rick Davis. They'll be back with us for a much deeper dive in our second hour here on Balance of Power as we welcome our global television audience. Mario Parker will be back tomorrow. Thank you, sir, for a great conversation. As always, right here on Balance of Power on Bloomberg Radio, Satellite Radio, Channel 121, and on YouTube. Now you know what Mario looks like. Search Bloomberg Business News Live. We'll meet you in the studio with much more ahead here. We'll get an update on the government shutdown, day 16. Jack Fitzpatrick will be live on the Hill coming up next on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew.
Day 16 of the shutdown, and there may be a glimmer of hope. Welcome to the Thursday edition as Senate Majority Leader John Thune promises Democrats a vote on Obamacare subsidies. We're going to get the latest from Jack Fitzpatrick at Bloomberg Government. He's live on the Hill today. President Trump is on the line right now with Vladimir Putin. As Ukraine calls for Tomahawk missiles, we're going to talk about defense spending and investments across the continent when we sit down with Nadia Calvino, the president of the European Investment Bank, with us in studio on this IMF week in Washington. And we'll have a lot more with Republican strategist Mark Short. He's got his eye on the shutdown, as does our political panel. It's all after a look at Wall Street. Charlie Pellet brings us up to date from World Headquarters in New York, the Thursday trade. Charlie, what do you have?
Right now, looking at a lot of red on the screen there, Joe Matthew, with the Dow, the S&P, NASDAQ, they're all declining. NASDAQ 100 index back in the green. Yes, we're off session lows. S&P right now down 14, though, at 66.57. That is a drop of 0.2%. Wall Street's AI-fueled rally sputtering as a pair of regional banks tumbled. Right now, the Dow is down 92, drop there of 0.2%. NASDAQ lower by 12, a decline there of 0.1%. Those regional banks are Zions Bancorp and also Western Alliance Bancorp. The 10-year yield 3.99% on your 10-year. The 2-year, 3.44%. Gold is at $42.81 the ounce, surging another $73, up 1.8%. Silver, $53.84 the ounce, up 1.5%. And Bitcoin right now, 109,000. That is a drop of 1.9%. So the Dow, the S&P, NASDAQ, all in the red. Among some of the other banks reporting earnings, Bank of New York Mellon's third quarter profit trounced analyst predictions. Shares of the bank right now, they are trading lower by 0.6%. Schwab also out with earnings, up 0.7%. And U.S. Bancorp, little changed on the day, up under 0.1%. Again, recapping, stocks lower with the S&P down 22 now, down 0.3%. Balance of power continues right now. Back we go to Washington. Once again, your host. Here he is, Joe Matthew.
All right, Charlie, we thank you as always. Charlie will have more in about 20 minutes' time as we watch Wall Street together here on Balance of Power. Thanks for joining us for the Thursday edition. We're live in Washington, as always, on Bloomberg TV and radio. And good to have you along as we consider now day 16 of a government shutdown that does not show signs of stopping. And of course, that's been the headline since this all started. But God forbid there be a glimmer of hope. It does seem like we could have fast-forwarded to this moment as the Senate Majority Leader goes on of all networks, MSNBC, to make a guarantee that Democrats will get a vote on Obamacare subsidies. We had spoken repeatedly with Democratic lawmakers to see if that promise of an up or down vote would be enough to get them to sign on to a continuing resolution that would reopen the government. Some said yes, maybe, depends what form, what are we hearing? And of course, John Thune says, well, that has been the offer, at least quietly all along. He said it out loud this morning on MSNBC. Listen.
I've told him, I've said we are willing to have the conversation. I've said if you need a vote, we can guarantee you get a vote by a date certain. At some point, Democrats have to take yes for an answer. But I agree totally. We are all about getting health insurance down, making it affordable to more people.
So I hear you saying about the program that needs reforms. It sounds like you're guaranteeing that there will be a negotiation on this.
Well, what I'm saying is there's a path forward, I believe.
But yes or
no?
It
has to include reforms. And can I guarantee an outcome? No.
Cannot guarantee an outcome, but can apparently guarantee a vote. Does this start to grease the skids, turn the gears? Maybe not, but we do check in with Jack Fitzpatrick. He's talking to lawmakers firsthand and brings us the latest now from Capitol Hill. Bloomberg Government Congress reporter Jack, I know you've probably heard this before, but for some folks it's new and it might be reassuring to Democrats. Does John Thune's posture help the standoff?
Well, that's the right question. It's a matter of John Thune's posture and the specific wording he's using. We had not heard from the majority leader out loud on TV saying, yes, he can guarantee a vote in the future. That is not enough for a lot of Democrats. That doesn't meet the standards set by Hakeem Jeffries even. Generally, it doesn't sound like that's enough to move us towards an end to the shutdown, but it does represent a bit of a change, at least in rhetoric, at least in what Republicans feel they need to make sure they're saying clearly. It looks like there's a big gap still between what Republicans want and what Democrats are trying to get out of them. But if you're looking for some tea leaves, if you're looking for a little bit of movement to see if one side has the momentum over the other, it certainly is notable to see the Republican majority leader say he's comfortable saying there absolutely could be a vote on this policy demand that Democrats are making, even though he wants it to be separate from a vote to end the shutdown.
Got it. In the meantime, we're going to do daily voting on the Republican CR. Jack, I presume that's been the strategy essentially each day, working day, that John Thune has had the membership here. And I ask you that knowing that the president has covered a number of paychecks for active duty military, for federal law enforcement, and they've also helped to reinforce funding for the WIC program, causing a lot of people to say, hey, then there's clearly no inflection point that's going to get everyone to the table, and we could have a record setter here. But the president has only covered one pay cycle for military paychecks. Do you know, for starters, that money will be delivered, and is there a plan for what happens in 2 weeks?
The wording from the White House in the immediate term is so clear that regardless of whatever legal questions about it, it does seem that this paycheck is being covered. But you're very right to ask about the next paycheck, because both sides have been digging in preparation for a long shutdown. And 2 weeks from now, it may not be over. And the announcements from the White House and what we've seen from the Trump administration broadly on making sure troops are being paid does not necessarily cover that. So there may be a whole new round of logistical and legal questions about how they can move money around. I'm not sure there's going to be somebody filing a lawsuit saying don't pay the troops. I'm not sure this is going to go to the courts. So there is layer upon layer of abstraction here that makes it difficult to predict. But you're right that this shutdown could go for another 2 weeks, and that raises the question of troop pay all over again.
Now, do you say 2 weeks because of open enrollment on the 1st of November? Is that the next sort of stop on the calendar that might force a conversation?
The fact that it aligns roughly with another round of questions about troop pay is kind of convenient or inconvenient, depending on your perspective. But yes, Democrats are really focused on November 1st and the lead up to November 1st. Open enrollment is November 1st. The expectation of letters from health insurance companies that could warn of increased premiums next year is another political pressure point. So as we at least get closer to November 1st, that really is the key to the Democratic strategy. And when you hear members talk this much about November 1st, it is clear they are preparing for a shutdown that could go in excess of a month.
Yeah, it sure sounds like it. Batten down the hatches was the word from Russ Vought. So, give us a taste of the culture, Jack. You're up there. What's going on? Are lawmakers hanging around their offices? Are they all at bull feathers drinking beers? Like, what do you do when it's weeks on end of a shutdown with no off-ramp in sight?
It's very different in the House and Senate, obviously. In the Senate, they're voting over and over again. Right. It's Groundhog Day. They do have to make it to votes. They have to make it through scrums of reporters who are asking if there's any change in their position. It is quite repetitive because this is 10 votes now that are failed on the Republican CR. I think we're at 7 that failed on the Democratic measure. It's very repetitive, not a lot of progress. And then in the House, you have Democrats making a point to be here saying we're ready to work, but very, very quiet, almost eerily quiet in the House. Overall, compared to past shutdowns, this is a strangely repetitive but quiet one in which there really are not significant negotiations and backroom horse trading going on.
Does Speaker Johnson keep everybody out then till further notice? Will they be back next week?
He seems determined to keep them out until the shutdown is over. That's what he said over and over again. Clearly, Democrats think that is a pressure point when you see the focus on Representative-elect Adelita Grijalva, who has still not been sworn in. The accusations that Johnson is doing this to hold up progress on the measure to require the release of Jeffrey Epstein documents. It may get more and more uncomfortable for him to maintain that position as time goes on. But he has not wavered. He has said there's no negotiating, no work to be done unless the shutdown ends. And I don't see any signs of him changing his mind at this point.
There you have it from Jack Fitzpatrick. Take it to the bank for now. I have a feeling we're going to be talking to Jack a little more before they have this settled. He's a Bloomberg government congressional reporter and has been knee-deep in this conversation for more than 16 days. It's 16 days of the shutdown now, but we've been talking about this going back weeks before it happened. When the votes take place, we'll, of course, let you know. The other major story that we're following today brings us to the other end of Pennsylvania Avenue. Donald Trump on Truth Social, just before we came to air. This is now almost 2 hours ago. I am speaking to President Putin now, he wrote. We did give a headline a bit earlier that they were expected to speak today. The conversation, he says, is ongoing, a lengthy one, and I will report the contents, as will President Putin, at its conclusion. Thank you for your attention to this matter. This call could still be underway. It may have ended and we haven't seen another post yet. We don't know. But of course, there was a question about Tomahawks, along with other defensive weaponry that came from President Zelensky. He's going to be meeting with President Trump tomorrow. This 48-hour period could be critical in determining the next phase of the war in Ukraine. And it's coming against the backdrop, of course, of calls for additional defense investments across the continent, which is why it's a pleasure to be able to spend some time with Nadia Calvino, the president of the European Investment Bank, which I want you to think of as the financial arm, if you will, of the European Union. President, it's great to have you with us on Bloomberg TV and radio. Thank you for being here. Welcome to Washington on this IMF week. I hope your meetings have been going well.
Yes, they're going really well, very interesting. It's always a pleasure to be back here in Bloomberg.
Well, I appreciate that very much here. According to our reporting, the European Union is laying out a 5-year plan when we consider investment across the continent to help rearm and restrain Russia. To what extent is the EIB involved in that broad investment that will clearly take years to realize?
Indeed, the European Investment Bank, as the financing arm of the European Union, has an important role to play in stepping up Europe's capabilities in the area of security and defense. There are many different needs, and we're very well placed to finance some key large infrastructures, critical infrastructures, military facilities, also research, production capacity, for example, drone manufacturing, and also financial support to small and medium-sized companies in the supply chain of large European contractors. It is unfortunate, I think, that we are living this situation, but Europe has a very clear vision of where to go, and the European Investment Bank is helping get there.
Yeah, it's interesting that we're seeing a lot of these smaller defense companies, in some cases startups, that are reinventing the way that we look at this, and in some cases challenging the old line big defense contractors when it comes to different contracts. You mentioned drones, which is something that is a big deal here in the conversation about defense technology, that the EIB is ready to invest millions of euros in Europe's drone defenses. How would that be doled out, and how are you looking at that as a continent as opposed to a collection of countries?
Well, right now, we have a very robust pipeline of more than 30 flagship projects in the different areas I mentioned. But we're following very attentively the upcoming meeting of leaders, of prime ministers and presidents that will take place next week, the European Council meeting, to see what is their vision precisely when it comes to reinforcing the eastern border of the EU, also drone manufacturing and protection against enemy drones, etc. And we will be ready to help and support in those areas where we have most value added.
I can tell you that the president's phone call with Vladimir Putin has just ended.
Okay.
President, I just want to take a look at what he's writing here. He says, we've just concluded the telephone call, and it was a very productive one, says Donald Trump. President Putin congratulated me and the United States on the great accomplishment of peace in the Middle East, something that he said had been dreamed of for centuries. He goes on to try to connect the Middle East to the war in Ukraine here, even mentions the First Lady. He says they spent a lot of time talking about trade between Russia and the U.S. when the war with Ukraine is over, and said that at the conclusion of the call, we agreed that there will be a meeting of our high-level advisors next week. The United States' initial meetings will be led by Secretary of State Marco Rubio, together with various other people, to be designated, a meeting location to be determined. And then he says he and Putin will meet in an agreed-upon location, Budapest, Hungary, to see if we can bring this inglorious war to an end. He refers to the Zelensky meeting tomorrow, in which he will discuss his conversation with President Putin. So we have another meeting. Does this kind of talk sound productive to you, or more of the same?
Well, I think it's very good to call this an inglorious war. This is Putin's war, a war of aggression, a war of choice. From the European Union's perspective, we want this war to finish as soon as possible. So whatever, can get us to a fair and stable peace, of course, it has to be fair and stable if we want it to be permanent, should be welcomed, of course.
When we consider the need for energy and the war over Russian oil, which I think is its own story altogether, would the EIB help cover Ukrainian purchases of U.S. LNG if that helped to end the war sooner?
We have just signed a 300 million deal with Ukraine. I had a meeting with the Prime Minister Servydenko yesterday. And we're looking into options to step it up even so that they can replenish their gas reserves for the winter. We are also supporting Ukraine when it comes to rebuilding critical infrastructures, including transport and energy. And we are supporting Ukraine when it comes to rebuilding supporting the daily lives of Ukrainians so that they can live lives that are as normal as possible, in this totally extraordinary and terrible circumstance, rebuilding hospitals, schools, kindergartens, protecting the infrastructure so that children can go to school. I think this is essential if we want to protect a strong basis for the recovery once the war is over.
There's so much that we can talk about that is depressing. The idea of rebuilding is the definition of optimism. And I'd love to hear how far you allow yourself to not only think about it, but to plan for it, because obviously this is a war that could end soon. And an enormous amount of work will be done and money required from governments and private industry. How far have you planned this out?
I am very grateful for your question, and I'm going to also smile, and I say, absolutely. I actually think I am very confident that Ukraine will bounce back very strongly once the war is over, because I have seen the determination, the resilience, the commitment of Ukrainians. I have also seen the very strong infrastructures of the country, and we have been supporting them for more than 2 years to make sure that the country has a strong basis on which to build this reconstruction, and also to pave the way for a successful accession to the European Union. So I am confident, we just need Putin to stop the war, and then we can move on to a new phase which can be more constructive.
Is rebuilding Ukraine years or decades?
I tend to think it's years. Actually, because we are talking about a country that continues to live a quite normal life, in these circumstances. The government has managed to keep a financial management which responds to a normal budget, to a normal administration, despite, of course, the immense needs that are related to the war. And so I think that the sooner we can move to the next phase, the better.
That is obviously a best case scenario, I guess, at this point. When it comes to European commitments like the one that we mentioned for buying U.S. LNG, do you want to see a matching commitment from the United States? Or do you think the administration has done what it can, at least financially speaking?
Well, right now, I think we all have to focus in supporting Ukraine, and obviously military support is of the essence. European countries are clearly stepping up their support, not only to protect ourselves, to protect the European Union, but also to support Ukraine. Countries are taking quite novel, quite innovative measures to provide this support. And I think this is the essential thing so that we can see an end to the war. And then we will have to see how everybody contributes to supporting the recovery of the country.
Fascinating to spend some time with you, President Calvino. Thank you so much for being with us today in Washington here on Bloomberg. I hope the rest of your IMF week is productive.
Thank you.
Stay in touch with us and come see us again, because this is a story that's very important to us and one that's not likely going away anytime soon. President Trump's call with Vladimir Putin has just ended. We'll have much more on this ahead, remembering that at this time tomorrow, we'll be talking about his meeting in the Oval Office with President Zelensky. I'm Joe Matthew in Washington. We'll assemble our political panel next, right here on Balance of Power on Bloomberg.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. Wall Street's AI-fueled rally sputtering today. A pair of regional banks tumbled. Geopolitical concerns are resurfacing. The Dow, the S&P, NASDAQ, they're all in the red right now. S&P at 66.47, drop there of 23 points, down 0.4%. The Dow right now down 145, lower by 0.3, and NASDAQ down 45. For NASDAQ, a decline of 0.2%. Our Mag 7 index down 0.3%, with the 10-year at 3.98%. We've got the 2-year 3.43%. The VIX at 22.88. Right now, gold is up $85, $42.92 the ounce, up 2% on the precious metal. Silver rallying as well. $53.90 on silver, up 1.7%. A retreat for crude, now with a $57 handle, $57.63 on WTI, down now by 1%. And Bitcoin is down 2.2%, 108,735 on Bitcoin. United Airlines shares lower after CEO Scott Kirby's bullish predictions about profitability ran into investor concerns about operating challenges and economic uncertainty. Shares of UAL, they are trading lower now by 5%. Among some of the other U.S. carriers with significant overseas routes, Delta down now by 1.6%, and shares of American lower by 5%. Recapping, stocks are selling off. S&P down 23, decline there of 0.4%. Balance of Power continues right now, and back we go to Washington. Once again, your host, here he is, Joe Matthew.
Okay, Charlie, thanks for being here. Charlie will have more on stocks in about 20 minutes' time as we keep track of the markets here with breaking news in Washington. The phone call has ended with Vladimir Putin, that is. Trump and Putin back on the line today, just 24 hours before President Trump hosts Volodymyr Zelensky in the Oval Office. Yes, Zelensky's here tomorrow, having made the ask for Tomahawk missiles. Don't know if the president talked about the Tomahawks as he said he would. But we did get a readout on the call from the president on Truth Social, and it's a doozy of a post. I won't go through the whole thing again. What a moment to be here, by the way, with the president of the European Investment Bank, just as that note hit. Thanks as well to Nadia Calvino for her clutch analysis. At the conclusion of the call, President Trump says, and I don't have a runtime on you, but it looks like it could have gone about 2 hours based on the posts that came before and immediately after. We agree there will be a meeting of our high-level advisors next week, all right? We've got 2 meetings here. High-level advisors, initial meetings led by Secretary of State Marco Rubio with various other people, he says, to be designated. A meeting location to be determined. President Putin and I will then meet in an agreed-upon location, Budapest, Hungary, to see if we can bring this inglorious war between Russia and Ukraine to an end. Viktor Orban rising here today as we assemble our political panel. Bloomberg Politics contributor, Republican strategist Rick Davis, partner at Stone Court Capital, alongside Aisha Mills, Democratic strategist principal at Community Asset Management. It's great to have you both with us today. Rick, Viktor Orban, who of course appeared at CPAC here in Washington, D.C. a couple of years ago, a friend of the president, has somehow corralled this meeting for his backyard, or maybe Donald Trump asked for him to do this. What will another meeting bring to ending this war?
Yeah, I actually wouldn't be surprised that Vladimir Putin didn't ask for it to be in Budapest. I think that's sort of Moscow, in the NATO. So we know Viktor Orban's been opposed to much of the support NATO has given to Ukraine. So it's certainly not a very good indication just from the symbolism of it all to Ukraine to think that somehow they're going to go to a neutral location. Hungary is anything but a neutral location to the Ukrainians. And of course, we saw that the last meeting that Donald Trump created expectations for a deal with Vladimir Putin in Alaska was a massive bust. No matter what the spin was, it turned out to be, maybe one of the worst summits in presidential history. Putin walked away with a lot of fanfare, and a president sort of kowtowed to him and offered nothing in return. So I would expect the White House and the negotiators like Secretary of State would really expect something in return before this meeting takes place. A much more traditional summit where the outcome is preordained and that the optics are the only thing left.
Okay, well, I don't know your thoughts on this, Aisha, but if you're President Zelensky, did you just get a chill down your spine?
I am an American, and I just got a chill down my spine. The fact that the president is literally freelancing with foreign policy right now should give us all pause, and we should have grave concerns about what he's doing on the phone with Vladimir Putin for 2 hours. This, to me, does not sound like diplomacy. It really sounds like he's being coached on how to be a dictator. And the fact that, you know, he kind of is doing this and we're all talking about it like it's normal, to me is really what is most dangerous, especially we're in the middle of, there's a live war that's happening right now. You know, every time we see Trump cozy up with Putin, it is just a reminder that he is more aligned with autocrats than he is with actual Americans. And so I am completely just miffed by the fact that this is happening, that he is on Truth Social posting about it, and that somehow we're all supposed to feel some comfort or resolve in the way that our diplomatic dealings are happening, because this is not okay. And more importantly, the way that, you know, Trump continues to cozy up with and have all of these off-the-wall ad hoc contacts with dictators and autocrats really should make us fearful about the kind of leadership that we see him implementing here in this country.
This is Thursday, Rick, the meeting, or the phone call, I should call it, with Vladimir Putin. What will Friday bring with President Zelensky? We all know that Donald Trump can oscillate from one side to the other pretty quickly.
Yeah, certainly going into this call with Putin, everybody's expectation was Trump's finally landed in the corner of Zelensky and the Ukrainian people, and we're going to fight to try and get something done. With Russia, you had some nice optics around the idea of giving Tomahawk weapons to Ukraine that could reach Moscow. You know, he spent very little time, really sort of re-litigating with Putin the idea of, you know, a peace deal right away. And now we have completely a reversal of that, seemingly. I mean, I don't want to speak too hastily that somehow tomorrow's meeting with Zelensky isn't going to be a good one. Zelensky wants a deal too, right? Zelensky wants peace, and that whether you like it or not, that's going to run through Donald Trump. And so Zelensky's got his own capabilities to influence the president, and certainly is on the right side. So let's see what happens. But you keep your fingers crossed, because the only thing worse than a government shutdown is Zelensky in the Oval Office.
Wow. Does this mean no tomahawks, Rick, or we need to wait for tomorrow?
I think you got to wait. Look, Donald Trump's an unpredictable character. Aisha, makes the point that you really don't know what you're going to get, when you open up that box. And I refrain from saying he's a box of chocolate. And yet at the same time, the wheels have been in motion at the Defense Department to queue up Tomahawks. And so the idea that this could be something that could get done was, I think, pretty acceptable to the defense establishment. So we'll see. I'm not ruling it out, and I'm not ruling out other support that we could give to the Europeans in order to help support the war at this stage.
Aisha, Sisi asked the question, does this come down to whomever speaks to Trump last, who wins the war?
I mean, is this middle school? Like, this is, I don't know, guys. I just think that all of this is just completely frightening and preposterous, that this is how we're literally talking about, we're not talking about peace or the Ukrainian people or the stability of Europe, which are really the conversations we should be having. We're talking about whether our president likes a guy. It's completely, nerve-wracking to me. So I do hope that, this goes well. But frankly, I'm not confident that it will.
We're talking about, of course, the war in Ukraine, but there are a lot of questions about the president's foreign policy this week, with revelations yesterday now confirmed. It was first a report, Rick, in the Wall Street Journal, acknowledged by the White House, that President Trump has approved a covert CIA operation inside Venezuela. They are apparently not armed and engaged, but they are obviously busy there and potentially setting the stage for an operation that could be larger. We've now blown up a half dozen boats coming out of Venezuela, said to be carrying drugs. The Maduro government is outraged by this whole thing. But what do we think the CIA is up to there, if not actually mapping targets for what could be an attack by the United States?
Look, I mean, I think it's, wrong to speculate on what potential CIA operators are doing in a hostile country. The reality is there's a lively opposition there that needs help being organized and supported. So it could be something as benign as, domestic politics. And yet, on the other hand, this president seems to be on a war footing with Venezuela. Not only has he attacked these drug runners coming out of Venezuela, but they've also moved a lot of big military assets, submarines and frigates and destroyers into the Caribbean to be staged near Venezuela. And so, this is a president that means business. I don't think we should discount the fact that he's prepared to pull the trigger on any kind of kinetic effort to engage the Venezuelans. I guess the question that I would raise is, what's the outcome? I mean, what has been asked of the Venezuelans and the Maduro administration in order to solve this problem? Because it is now a shooting war, and the question is, over what?
It's a great question, Aisha. The president said yesterday, I authorized it for two reasons. Of course, he could have taken a pass on this question. He says Venezuelan leaders emptied their prisons into the United States of America. That's one. And two, we have a lot of drugs coming in from Venezuela. Is he seeking regime change or something else?
Here's the issue that I have. Certainly, we want to make sure that there are not drug cartels, flooding the United States. Of course, we certainly wouldn't want that. My concern is that this president is making really broad blanket statements with absolutely zero evidence. It's alleged that these boats that he's shooting up are presumably, bringing drugs or whatever it is. But do we have real evidence and proof of that? Congress doesn't know what's going on. The president has not issued us anything that really will help the American public understand definitively why Venezuela is suddenly the biggest threat to the United States that warrants this type of action. And that's my concern, is the complete and total lack of transparency. Frankly, just, take his word for it, because he, bellowed out something. And we know that much of what he has to say is misinformation, disinformation, half-truths, and a lot of poking out his chest and making declarations that we don't necessarily have a lot of evidence to back up. And so I would just like to understand more from this administration. If it matters that they carry this out, why?
Yeah, a lot of questions with our panel that have yet to be answered. Aisha Mills and Rick Davis, many thanks to both of you for your insights. We'll have much more ahead as we're joined by Mark Short, Republican strategist, veteran of the first Trump administration on day 16 of the shutdown.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks lower across the board. The Dow, the S&P, NASDAQ, they're all in the red. Wall Street's AI-fueled rally sputtering today as a pair of regional banks tumbled. Also, geopolitical concerns resurface. Those banks, by the way, Zions Bancorp, lower now by 10.6%. Western Alliance, it is down 9.6%. Bottom line here, stocks selling off. S&P down 24. Drop there of 0.4%. The Dow down 153, lower now by 0.3%, and the Nasdaq Composite Index down 45, a decline of 0.2%. Our Mag 7 Index down 0.3% with a 10-year 3.98%. We've got the 2-year 3.44%. Bonds rising, gold as well. Spot gold $42.92 the ounce, up 2% right now. Gold rallying $84 the ounce. Silver at $53.96, closing in on 54 an ounce of silver, up 1.8%. And crude with a $57 handle right now, $57.54. WTI, West Texas Intermediate crude down 1.2%. Taiwan Semiconductor Manufacturing is hiking its projection for 2025 revenue. ADRs of TSM, they are down by 1.6%. Among other chip names, NVIDIA up 1.1%. Advanced Micro Devices, little change now, down under 0.1%. After earnings, Hewlett-Packard Enterprises plunging 9.4%. After earnings, Salesforce.com up 4.5%. Balance of Power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, we do thank you, and we'll be looking at Wall Street again with the help of Charlie Pellet at the top of the hour, 2 p.m. Eastern, right around the time Bloomberg Business Week Daily begins. Connecting the dots here between Washington and Wall Street every day on Balance of Power. Thanks for joining us on Bloomberg TV and radio. The phone call has ended. If you're just joining us, Donald Trump spent some time today with Vladimir Putin talking about the war in Ukraine. It wasn't in person this time. They were on the phone, and it appears, at least based on the Truth Social posts, that call was approaching 2 hours in length. The president back on social media to announce the conclusion of the phone call. And there is some news here. It does not involve tomahawks or even a potential end of the war, but another round of meetings. High-level advisors, he says, will meet next week. Location and attendance other than the Secretary of State to be determined. But he says President Putin and I will then meet in an agreed-upon location, Budapest, Hungary, to see if we can bring this inglorious war between Russia and Ukraine to an end. Remembering, of course, that he meets with Volodymyr Zelensky tomorrow in the Oval Office, and the president refers to that, saying he will discuss his conversation with Putin and much more, I believe. This meeting tomorrow was already high stakes. If you're President Zelensky, reading this probably doesn't give you a lot of hope that tomahawks are on the way.
Yeah. Considering that this is the war that Trump wants to resolve, perhaps maybe there could be an opening for Zelensky to push. Trump has really talked about how this inglorious war, as he put it today, is the last remaining one that he really wants to solve. And so maybe something will be different. Maybe conditions have changed. That was one of the big questions. Caroline Leavitt, the White House press secretary, was on Fox News right before Trump posted on social. And she basically said that, Trump and Putin talked about trade, like something may be happening, essentially. And to what extent Trump can use this call with Putin as leverage with Zelensky to ultimately bring everyone to the table. Clearly, something has had to change. Something has shifted. Trump obviously doesn't also want a replay of what happened in Alaska, where he brought Putin out. There was a flyover, cameras, etc., and then not a whole lot came from it. Are we just going to get another round of 2-week extensions for this thing that never actually happened? Probably not. So whether or not tomahawks are on the menu tomorrow, TBD. But if I were Zelensky, in the very least, I'd be pushing for that, because there could be an opening there.
Well, they're going to have the opportunity in the Oval, remembering that their first meeting in the Oval Office didn't go so well. There was a follow-on visit to the White House that Zelensky thought was quite productive, in fact. The whole narrative, though, that Donald Trump had sort of shifted allegiances to sort of empathize with Ukraine based on his frustration with Vladimir Putin doesn't seem to be echoed in this post. You wonder what kind of a phone call this wasn't what Putin had to tell him.
Yes, the words being used are very productive, and that's really all we know. We also know that Trump kind of goes back and forth on things like this. Look at how he reacts to China. We have very good phone calls and then tariff threats and things following through with tariffs. It changes moment to moment based off of these discussions. And I think for what it's worth, Putin's breakthrough with the First Lady with returning the Ukrainian children that Russia took during the war, I think that possibly created some goodwill with Trump toward Putin that paved this phone call and then pushed forward. So I think that might be something there. But again, I think we'll just have to see.
Yeah, you mentioned the summit in Alaska. Rick Davis referred to that, I think, as the least successful summit in presidential history, or one of them. But there was no framework to take away. And remember, they decided spontaneously at the beginning of a global news conference to take no questions. So we really don't know what came from the ride in the limousine or the brief meeting that they had.
But there was a flyover, Joe.
Well, it was a big flyover, that's true. And I suspect maybe there will be in Budapest. But the question that we're asking is, will there be anything hammered out in advance, as you might have seen in a traditional presidential summit where the terms have been already laid out and the meeting is really a formality?
You would think that, so next week we know at least that there is a high-level meeting of advisors between Trump and Putin. Their advisors are meeting next week, location unknown. And while we know that Trump and Putin will meet in Budapest, that timing is unknown. One would assume that the traditional diplomatic process of the high-level advisors hashing things out ahead of time would then lay the groundwork for some sort of agreement going forward. But of course, this is a three-legged stool, and Ukraine needs to be involved. Nothing about Ukraine without Ukraine, at least was the Biden administration's phrasing there. So to what extent the U.S. and Russia can hash something out without Ukraine stands to be seen. And I think also like that makes the timing of Zelensky's visit to the White House tomorrow quite good and quite advantageous. And Trump, for, whatever people want to say about the deals, the types of deals that they are, he does have a way of kind of pushing through and creating conditions to yield results that would not have existed otherwise. I mean, look at the hostage release in Israel and Gaza and Hamas. To be clear, the subsequent situation that has occurred is, very much kind of up in the air, and what that deal looks like is a little tenuous, but something did happen there. And so when it comes to any sort of substantive deal between the U.S. and Russia and Ukraine, I think the next 48 hours are going to be really instructive.
Yeah. It's great to have you with us here covering the White House for us at Bloomberg. Lauren Dzenski with the Truth Socials flying, and of course a meeting that we were waiting for. It has now concluded. Lauren, it's great to have you back as always. I'm Joe Matthew in Washington. Speaking of, by the way, the war in Gaza and the tenuous ceasefire that Lauren refers to, the president just posting again on Truth Social about Hamas. He's been busy on a number of fronts here. If Hamas continues to kill people in Gaza, he writes, which was not the deal, we will have no choice but to go in and kill them. Thank you for your attention to this matter. The president's been asked repeatedly recently if that would involve American boots on the ground, and so far the answer has been no, but it's unclear how he might pursue these goals in the meantime. It's day 16 of the government shutdown. We've been reminding you of this, and Jack Fitzpatrick gave us a pretty good readout at the top of the hour. There is some hope about backroom conversations. That's been the case for days now, but there's also hope that John Thune is now essentially guaranteeing a vote to extend Obamacare subsidies. This is something that is not new, according to Thune, or the Speaker of the House, Mike Johnson. He spoke to reporters earlier today. Let's listen.
He offered to Chuck Schumer a vote on Obamacare subsidies, and Schumer said no. that happened. Asked Leader Thune about it, because they wanted a guaranteed outcome. Here's why we can't do that. Let me say this very clearly and for everyone again. Okay. The Obamacare subsidy issue is not the issue of today. It is in a subsidy that expires December 31. We were always planning to continue the debate and discussion about that issue in October and November. Ironically, Democrats are taking the time off the clock for us to do that.
Okay, so John Thune got everybody's hopes up on MSNBC this morning, of all networks. Now, Speaker Johnson is there to maybe put a little cold water on this. Maybe nothing has changed. That's why we want to talk to Mark Short. Former Chief of Staff to Vice President Mike Pence, he was also liaison to Congress, congressional director in the original Trump administration. Mark Short, welcome back. It's great to see you.
Joe, thanks for having me.
Are we closer to this being resolved, or?
I think you're closer just because of a timeline.
So no, not really.
Well, not so much because of the policies. Look, I think this has always been the out. You and I have talked about this. Is that eventually I think Republicans will cave on the Obamacare subsidies, and that was always the way that this is going to resolve itself because of the timeline of those. But I think that Speaker Johnson's right. I think this has always been on the table as far as a vote. It's interesting that Democrats didn't jump on that, and I think, Joe, the reason is because I think they're feeling more and more confident in their own position here, which is a surprise because I think traditionally when Republicans have forced shutdowns, eventually, the American people look at it and say, well, who forced this? And they don't get rewarded for it. I think in this case, Democrats forced the shutdown, but I think they're feeling that they're going to win on the Obamacare subsidies issue. So a vote, being given a vote now is no longer sufficient for them. They want a desired outcome.
Deal, sure. When you were legislative director in the first Trump term, you would have been making phone calls this week saying, hey, you know what? We got the troops paid. We've got federal law enforcement. We got money for WIC. These are really interesting moves that the administration has been making to say, well, in the words of Russ Vought, we're hunkering down for a long one.
I think they are, because I also think that the administration actually is sort of, engaged at a level above Congress. The president is in Israel striking historic deals. The president's looking for the next negotiation in Ukraine. He's looking to his trade deal with Xi coming up in November. And so I think that they're at a whole different level, and they sort of like Congress is beneath them, so why get mired into that right now? So I think there isn't as much interest in the White House to engage, which I think also slows down a negotiation to resolve the shutdown.
It does, right? I mean, you've got Mike Johnson saying this could be the longest ever. Is that where your head is?
I'm not sure it's the longest ever, because I still think that the next sort of backstop on this, Joe, is November 1, when the announcements of the new insurance premiums go out.
Right.
And so I think that's going to be a pressure point.
Do Republican governors start crying at that
Yes,
point?
I think probably so. I mean, I think what's to go back, when we failed in our effort to repeal Obamacare, one of the most untold stories of that is it was really Republican governors, because so many of the Obamacare subsidies, they were getting Medicaid funding. They did not want that to stop. And they were calling legislators, asking them not to vote to repeal Obamacare.
So, wait, that's a really important story to recall. This could be happening again
Absolutely.
right now.
Absolutely. Yeah, I think there'll be a lot of pressure from Republican governors. I think there's enough Republican members who represent districts. Look at Marjorie Taylor Greene, for instance, who's been out there saying that we need to extend the subsidies. I personally think it's terrible policy. I think that the Democrats were really shrewd in basically winning over insurance companies by promising subsidies that, it started at 400% of the poverty level, Joe, and now we're above that to be providing subsidies. But I think politically there's enough Republicans willing to go along with it that that's going to still be the outcome of this.
With conditions, right? Republicans obviously have something on paper that's going to say an income cap of what, $200,000, a point of expiration? I mean, the idea was that at some point these would not be made permanent, although I know a lot of Democrats want it to be.
There'll be a point of expiration, but that's what we have right now.
That's when the next shutdown happens.
That's what we have right now.
Yes.
There's a point of expiration during the COVID, and since that this was legislated to extend them for 2 years. And so I think that, the hardest thing to do is to end the government program, Joe. And so I think that even though you might have a temporary end date, it'll be hard to see that there'll be the political muscle to end it at that point, too.
Democrats say Donald Trump made the 2017 tax cuts permanent. Why can't we make this permanent?
Well, again, I think that the Democrats created a government-run healthcare system. There's been a total disaster that continues to create more and more and more government funding. I don't think people are happy with it, but they've created the system where it's, hey, it's too expensive if we don't extend the subsidies. Yeah. And that's just the ongoing problem that we're in now.
John Thune's doing more than promising Obamacare votes, and we've got just about a minute left here. He's going to have a vote on the NDAA potentially by the end of the day. What do you make of that strategy to see if we can get Democrats to come to the floor to vote for something?
I think it's really smart, because either you're saying, hey, we want to continue with government funding or continue the business of the Senate, or we're in a shutdown.
Right.
And so I think it's smart for them to keep putting forward votes of that nature, whether it's funding DOD or now NDAA. I think those are smart moves.
Does that shake a couple Democrats loose, maybe vote for a CR?
I think it could shake them one or two loose on these individual bills.
Got it.
I think that the CR is not going to be solved until you get around November 1st, and you have, again, a push on the subsidies.
We're going to be eating turkey still talking about this, right? I don't know. Don't answer that. Mark Short with us in the flesh. Great to see you, as always, Republican strategist Mark Short on Balance of Power on Bloomberg TV and radio. I'm Joe Matthew in Washington. We'll have the latest on the shutdown. Yes, day 16. And look ahead to tomorrow's meeting with President Zelensky when we meet on the late edition of Balance of Power. That's 5 p.m. Eastern. Stay with us here on Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. I'm Carol Masser, along with David Gore, of course. He is Bloomberg News correspondent, host of the Bloomberg Big Take podcast, in for Tim this week. And I got to say, David, when we're kind of getting ready for this hour, I kind of thought I had it figured out. And then all of a sudden we had some, concerns about some of the banks out there.
Concerned about these regional banks. We're going to get into that in more detail, and then political news as well. We knew that President Zelensky, making his way to Washington for a meeting with President Trump, didn't expect the 2-hour-plus phone call that President Trump had with President Putin earlier today.
That's pretty long.
Dig into that as well.
I'm
Yeah.
assuming there's like translation going on back and forth, but still, right?
Yeah, it's a long time, and we've gotten a short update on Truth Social about what they discussed. Maybe a meeting in Budapest down the line, but nothing more beyond that. So we'll see what we hear from the White House and from President Putin's camp as well.
All right, we're going to get into all of that over the next 60 minutes. We're also going to hear from Fed Governor Chris Waller on Fed policy and something odd that's going on in the U.S. labor market. He talked with our own Tom Keene in a big discussion. I think, was it a half an hour? Like, they talked for a long time.
Yeah, there was a speech at the top, and then the two of them talked for about half an hour, took a few questions from the audience there at the Council on Foreign Relations, building on the conversation he had earlier with Bloomberg Television and Radio. So a lot of new insight into Chris Waller, who, of course, we know is in the running to be the successor to Jay Powell, the next Fed chair. So some interesting stuff there for sure.
We're also going to head to D.C. Lisa Abramowitz at the IMF meeting. She is talking with Israeli Central Bank Governor Amir Yaron. We'll hear from that. And also something a little bit different, MIT. We're going to go there. Microscopic technologies that work inside the human body. Hopefully going to fix out everything and figure out things and maybe advance healthcare, right? The future. Hey, let's get a check on the trading day. Let's toss things over to Charlie Pellet. Charlie, a little bit of a switch in the tone in the markets
Indeed,
here.
A lot of red right now, Carol Master. The Dow, the S&P, NASDAQ 100 index, Russell 2000, Bloomberg Mag 7 index. They are all trading lower. Bottom line here, stocks are sputtering as two regional banks get hit. We'll have a whole lot more on that in a moment, but those two regional banks, Zions Bancorp down now by 10.7%, and Western Alliance Bancorp also down by 10%. We've got the S&P down 35, now down 0.5%. The Dow also lower by 0.5%. NASDAQ down 0.4%. Our Mag 7 index down 0.5%. The 10-year at 3.98%, with a 2-year that's yielding 3.43%. Gold is surging another $85 the ounce. $42.93, up by 2%. And silver also rallying, closing in on $54 now. $53.90 silver, up by 1.6%. Bitcoin down 2.8%. Bitcoin, 108,078 on Bitcoin. Bank earnings, Bank of New York Mellon's third quarter profit trounced analyst projections. Shares of Bank of New York Mellon right now trading lower by 1%. Schwab also out with earnings down up 0.2%. And shares of U.S. Bancorp, they're down by 0.5%. So bottom line here, two regional banks getting hits, stocks selling off, S&P down 35, down 0.5%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie's setting us up so well for our first discussion. By the way, the Spider S&P Regional Banking Index is now just off its lows, but down about 5%. So the whole regional banking sector taking a bit of a hit on that news about Zions and also Western Alliance. Let's get to it with Bloomberg News U.S. Finance Team Leader Sally Bakewell back here in our studio. So Sally, this kind of felt like it came out of nowhere, but what's going on? What do we know right now?
Right. So we have these two regional banks, Zions and Western Alliance, and shares of those are tumbling today after they said that they were victims of fraud on loans tied to the same borrowers. And those have both forced charge-offs on the debt, and it's also fueling a lot of concern, which is, I think, what we're seeing in the broader sector, that there are more cracks emerging in credit markets.
You used the phrase cracks. We were doing some market entomology yesterday, picking up on what Jamie Dimon said about the potential of there being more than one cockroach in the environment. And I wonder sort of how we should look at these two events and complement both the comments that he made about the bankruptcies that we've seen and this latest news about these two regional banks.
Well, they still remain quite isolated incidents as far as we can tell. So the borrowers in this case, they were not First Brands, they were not Tricolor, but a group of investment funds, it seems, that have faced a number of fraud charges. But yes, while they appear to be isolated events, of course, this feeds very much into Jamie Dimon's comments of are people doing the right amount of due diligence on borrowers in this kind of late cycle moment in the economy where credit spreads are very tight and valuations are high. That's the kind of environment that encourages a lot of dodgy behavior and froth. And are these borrowers examples of that? So that's the through line, even if they're isolated incidents.
I don't want to jump to conclusions or like get ahead of ourselves, but I just think about during the great financial crisis in the lead up where there, instances where people said, well, it's just isolated, incidences. So I'm just wondering, again, what are you keeping a watch on? Other banks, like how are you guys figuring out whether this is indeed isolated or there's something more? I mean, in our regulators, are we expected to hear from regulators on this?
Well, this is the interesting thing with the smaller, in terms of what we're looking at, these are smaller banks.
Right.
So, you know, JP Morgan took this 170 million charge tied to Tricolor, the subprime auto lender that collapsed in very dramatic fashion. That meant nothing to the bank. And actually, you know, to be fair to Zions and Western Alliance, it doesn't seem like this is going to be a huge issue to either of them, even though, you know, the shares are down. But for smaller banks, a hit like this is obviously much more consequential. And so if lots of smaller banks are experiencing borrowers, particularly, you know, borrowers that are connected to the subprime or lower income consumer or low income consumer, then, you know, it could fuel a lot more pain. And actually, you know, Jamie Dimon said that too, that if there are, you know, so many of these borrowers have been able to load up on debt, that when things start to turn, it's going to be worse and a lot more painful.
Lastly, here, a stark change in tone from the conversation we were having with you yesterday about the big banks and their prospects, how they did in the third quarter as well. As we look ahead now to earnings season, which will involve, of course, a lot of these smaller and mid-sized regional banks as well, how much does this color the conversation, what we expect to hear from bank executives as they do those earnings calls?
Yeah, I think it hugely colors it because they will be asked about this. They will have to disclose this kind of thing. I mean, maybe they feel a bit of cover now that some of these banks have disclosed this, but I think it's going to be one of the number one things that investors are looking for is smaller banks.
Well, it's fascinating to watch kind of the market trade over here. We're taking another leg down. And again, what we've seen along the U.S. yield curve, we've seen a 10-year go back below 4%, that 2-year note with a yield of 3.42. So you've got to expect, depending on where this goes, if it's not isolated, you know, the Fed's got to be watching this as well as it gets ready for its next meeting. Sally, thank you so much.
Great to see you.
News U.S. Finance Team Leader Sally Bakewell. All right, so we're keeping a watch on the regional banks, and banks are generally, as we said, monitoring what comes next from the Fed. Fed Chair Jay Powell signaled earlier this week that officials are on track to lower borrowing costs by a quarter point when they meet at the end of this month. And then, David, of course, Tom Keene catching up with a key member of the Fed.
Yeah, he sat down with Christopher Waller, governor of the Federal Reserve Board, this morning for a discussion at the Council on Foreign Relations here in New York City. That was on the heels of an interview that he gave to Bloomberg Radio and Television a little bit earlier in the day. And of course, there's so much fascination about each and every one of these Fed governors who are voting members, of course, and voting members who are regional Fed presidents as well. Christopher Waller, especially interesting because he's on this short list that we know the president and the Treasury Secretary are looking at for who might succeed Jay Powell in the future. So among the topics that they discussed, Chris Waller and Tom Keene this morning, was the importance of dissent and diversity of thought at the U.S. Central Bank. Let's take a listen.
One of the criticisms that's been leveled at the Fed for a long time is we engage in groupthink. Every policy decision is a 12-0 vote. There's no dissents. And that if you're all going to do exactly the same thing and think the same way, we don't need 19 of you. We need one. But what I always try to point out is it's through speeches and public speaking that everybody presents their views, and you can go out and listen, and they're not the same. So all the public speaking, the speeches are the way for us to show a diversity of opinions and thought about the direction of policy. This is a good thing. It's not a bad thing. Despite people saying it's a cornucopia of noise, it's actually signaling where people stand. When you come to the meeting, and I always try to stress this to people, we have to make a decision every 6 weeks. We do not get to kick the can down the road. And what that implies is that to get a reasonable, consistent opinion, we have to kind of compromise. You have to come to a decision. And that's why our votes are often 12-0, 11-1. It's because we all understand we have to compromise somewhat on our positions to have a clear, consistent policy setting for markets and the American people.
Larry Meyer, Washington University St. Louis, had a small book out of his time with Greenspan, a term at the Fed, and he was heated about the consensus vote, the need for consensus. Should we be more like the Bank of England, which seems like a fist fight every 6 weeks?
Yeah, I'd like to avoid the fist fight every 6 weeks. But, I mean, I personally think there's nothing wrong with dissents. It's a way to communicate differences in policy stances. You know, the whole complete consensus largely comes out of the Greenspan era, where it was like, if you have a 12-0 vote, there's no doubt about what policy should be. Everybody agreed with the chair at that time, and that kind of tradition continued. But as the Bank of England has showed, there's no point of having 19 of us if we always do the same thing. So at that point, what's wrong with having a few dissent? I dissented at the July meeting. I don't personally think that shows anything about loss of faith in the chair or not the right policy, but that's the whole point, is to say, look, I'm on this committee to have my own independent view and make these points. And that's what people are doing.
We welcome all of you again, particularly worldwide, with Christopher Waller into this audience. Ed, can I call on you first for the first question in a bit? I'll let you come up with it, but I think we need to hear from Ed Cox.
I'm giving you a little time to think about it.
He's got a little time to think about it. And, you know, I don't want to get in the way of his good first question. I'm going to ask some questions about the speech. I got to keep the assembled press happy or they won't show up again at Council on Foreign Relations. But I want to come out of this with a little bit more knowledge about who is Christopher Waller. We'll get to that in a minute. Number one question I get, the unemployment rate's 4.x%. Is a 4.x% unemployment rate now the same as a 4.x unemployment rate when you were at Washington State?
No, I think this is where we're in this unusual situation where we have this kind of zero net immigration instead of roughly, say, 400,000 a year. Actually, people leaving the country. And this is kind of, I've said this before, it's masking this decline in labor demand. So just think about, if it's all immigration and you have a decline in labor supply, then the following things should happen. Employment will go down. Wages should be bid up if you have a labor shortage. Vacancies should go up. Quits should go up. That's what you should see with a very tight labor market and declining labor supply. When did we see that? 2022. 2021. That's what we saw, and that was a very tight labor market. If things are driven by a decline in labor demand, just kind of thinking about labor supply as constant, you'll see jobs fall. There'll be downward pressure on wages. There'll be downward pressure on vacancies. Quits rates will fall. That sounds to me more like what we're seeing in the data. So all that's happening with all the labor supply stuff is it's kind of masking the weakness of labor demand. And I've seen some estimates that if you had just kept the labor force participation rate where it was earlier, unemployment would be 4.95%.
Okay, well, that's an important touch point. I would suggest 5% is a much bigger number than 4.9%. Do you see an immediacy at the central bank and among the staff that the real unemployment rate is 5-ish and not 4.x%?
Well, that's where you got to take a position on what do you think the labor supply is doing. Is it fine that it's 4.3? Because the fact that people leave or drop out of the labor force, that's just a natural part of the economy. And therefore 4.3 is exactly reflecting things. Or do you think like I do, which is like, we're seeing falling labor demand, and if it wasn't for this decline in labor supply, we would be hurting. And there'd be no doubt about cutting rates. Absolutely no discussion about it. So that's where they were in this weird thing. We've never seen falling labor demand with a big fall in labor supply at the same time. At least not in my career that I can remember.
And that, of course, is Fed Governor Chris Waller with Bloomberg's Tom Keene, co-host of Bloomberg Surveillance. That was earlier today at an event with the Council on Foreign Relations right here in New York City. Hey, we want to dig a little bit deeper into what Chris Waller had to say and really kind of how it fits into the current U.S. economic landscape. Bloomberg Radio and TV international policy and economics correspondent Michael McKee, he's there in the D.C. Bureau. He's been at the IMF meetings and more. Mike, Fed speakers out in full force. Chris Waller, not the only one. What, though, of Waller got your attention?
Well, I think basically what Chris Waller was saying, it was the same as he has been saying, that we are probably a little too tight and that with the decline in employment, new hiring, we should probably loosen rates a little bit. What caught some analysts on Wall Street's attention was the fact that he did not promise another rate cut in December, and that's what Wall Street is expecting. We saw today that the markets have priced in 2 full rate cuts, and Waller was saying that maybe that doesn't happen, but he really wasn't saying it's not going to happen. He was saying that a good process is you do one at a time and then decide what the data are telling you to do the next time.
Mike, you and I both have anchored shows with one Tom Keene, and we know his affection for the biographical, and he alluded to that at the top of that conversation. He wanted the audience to get a better sense of who Chris Waller is. Didn't play a ton of that tape, but I wonder if you could fill in the gap for us. As the president, as Treasury Secretary Scott Bessent looks at that list of who might replace Fed Chair Jerome Powell, what does one Chris Waller offer them in terms of biography, what he's done? How does he kind of fit into the broader board of the FOMC?
Well, he is perhaps the most accomplished economist on the list. He's been doing this for quite some time, was the director of research at the St. Louis Fed. He has that Midwestern background that perhaps might appeal to the president as opposed to somebody from the coasts. He taught at Notre Dame and not at Harvard, which might also appeal to the president. And he's also got a reputation as a sort of forward thinker. Tom did ask him about that because Chris Waller has made the case, he made the case that we could bring down the unemployment rate during or post-pandemic just because there were so many jobs open and you didn't have to have a recession to do that. And he also argued that he was the first to argue that we could cut rates more aggressively right now. So there are some things that would work in his favor for the Fed chair.
You know, one thing I want to ask you, Mike, and I'm thinking about now how we're all looking all of a sudden at the regional banks, because we've certainly seen yields move on concerns about that. We're talking about Zions and Western Alliance. We just talked with our Sally Bakewell, and at this point it seems to be isolated, but nonetheless, it's got everybody thinking about where now the next problems might come from. How much would the Fed be looking into this and watching very closely?
Well, they and the OCC would be watching very closely. I'm not sure about Midwestern Alliance, but about Western Alliance, but Zions is certainly a corporation that's regulated by the Fed, the overall holding company. And they would want to know how this got by them, how this got by the bankers to, that a fraud was committed of this size. The good news is it doesn't appear that there's any kind of run on the bank, which is what we saw with Silicon Valley. And so nobody's going to have to step in with a rescue program, but it does raise more questions about regulation at a time when some Republicans on Capitol Hill have been talking about stripping the Fed of its regulatory responsibilities. So one could suppose that that might come up ahead.
Mike, very quickly here, we've heard an awful lot from one Steve Myron, the gentleman who has that temporary position on the Federal Reserve Board. He's very keen to talk about his perspective on where he thinks monetary policy should go. Anything stand out to you from the comments that we've heard from him, yes, on Fox Business Today, but in other speeches as he continues to make the case here for this Fed going bigger than his colleagues want?
Well, Stephen Myron talked twice yesterday, and he's speaking 3 times today. He's taking advantage of his opportunity while on the Fed to make the president's case for these rate cuts. He hasn't said anything new. He did say that he believes we will get that December rate cut and that we should have that December rate cut. But of course, he's talking the president's book. Just a short while ago, the Treasury Department put out its annual report on the U.S. finances. They had said they weren't going to do that until the government shutdown is over, but they put it out in part, I think, because they wanted to make the case that they had record tariff revenues and that we paid a lot for over $1 trillion for interest on government debt. And Myron said that those are other reasons why the Fed should be cutting rates, is to bring down that interest on government debt, which would happen to a certain extent if the Fed cut rates, but not just by 25 basis points.
All right, well, the next Fed meeting on October 29th, right? That's our next focal point, it feels like, among other things. Hey, Mike, thank you, as always. Bloomberg Radio and TV international policy and economics correspondent Michael McKee. We've got IMF meetings underway.
Yes, they are underway. The IIF, the IMF, the World Bank, everybody's seemingly meeting in Washington this week, and we've been covering all of it. Our colleague, Bloomberg Surveillance co-host, Lisa Bromwitz, is there. She's done a string of incredible interviews, and she has another one for us here. Lisa, we'll hand it over to you.
Thank you so much. I really appreciate it. I am here with the Bank of Israel Governor Amir Yaron. He does run the central bank. You also advise on financial policy at a time when the mood has cleared. And there is a real sense right now in Israel that something significant has shifted. How much can you count on the war truly being over when crafting policy right now?
Well, Lisa, first, thank you for having me again. It's important to understand, Israel entered very well the 7th of October. The 7th of October did negatively impact Israel in a significant way. but the Israeli economy throughout these 2 years have shown remarkable resiliency. Now we're seeing that if this agreement, we hope it proves sustainable, that will bring sort of a lasting calmness and stability. And those are conditions that are definitely can unlock a lot of growth, rapid recovery, both for Israel and maybe for the region at large.
There's a lot of debt that has been incurred during this whole endeavor. There's also inflation that's actually come in less than expected, which has opened the door maybe to the possibility that maybe you could cut rates even before the November meeting. Is that a possibility?
The first thing to say about inflation, our monetary policy has actually proved itself in the sense that in spite of the wars are usually inflationary. Inflation has converged into our target, which between 1% and 3%, all throughout maintaining financial stability, which of course is very important. This was an encouraging CPI that came in. Right now we are at 2.5%. But there are two fundamental forces that are working now with the cessation of the fighting. On the one hand, there's short of labor supply that has been there all the time. We're going to see probably some release of reserve people, and that's going to help reduce inflation. We've seen the shekel appreciate throughout time, and in particular in the last, due to the cessation of the ceasefire. Then those are basically putting downward pressure on inflation. On the other hand, the optimism is potentially bringing a boost to demand. And so with these two offsetting forces, we want to see clarity a little bit on the forces that indeed inflation is converging more firmly, and we have some encouragement by the CPI, but we want to see this continues to go. And we are, because of the uncertainty, even about the agreements and everything, when we move, we still have to move very cautiously.
There's always uncertainty. Right now, globally, there's a lot of uncertainty. It seems like the uncertainty is that much more heightened at a moment when you have been at war for more than 2 years. And now there's this question of what the permanent situation will be of the Defense Department also. What kind of permanent expenditures are going to have to be on the government? I'm just wondering if you have a sense of that, or if that's also one of the variables that's up in the air.
I think it is one of the variables that's up in the air. Part of it is we want to see that the ceasefire and maybe phase 2 and maybe even other normalization factors, those will all affect the long run expenditures of military potentially. At least now, from the fact that there is a ceasefire and the planning was to go and advance longer into Gaza, that saves for the short run some fiscal cost. But I think this is one of the big assessments in terms of our fiscal situation is what are the expenses going forward? What is the growth that we can see in the coming years given the geopolitical situation? As I said, I think if we see stability, growth will come back. Israel tended to grow 4%. We're probably going to grow even more than that, at least in the short run. Recent economic activity in Israel showed VC money growing. We've seen credit card usage quite high. We've seen sentiment and trend surveys are being positive, and that's also related to your previous question regarding inflation, why we still have to be cautious in how we deal with our monetary policy.
You know, picking up on the VC flows and some of the other inbound flows from overseas, there has been some reputational damage that Israel has suffered. There have been a number of countries that have said that they're going to withdraw investments or limit investments into Israel. Have you seen those flows start to come back? Do you expect them to? Is that something that you're kind of trying to observe right now?
So first, as I said, the last 2 quarters we've seen VC money coming in a very strong way. Prior to the ceasefire, we saw some discussions on sanction, and Israel is obviously a small open economy. You have to do everything in our power to maintain our openness, and we do that. And I think with the ceasefire and the more it lasts, we will see some of this reputational risk hopefully gets mitigated over time. And that's partly why I think this could unlock growth and bring us back to our potential and maybe even beyond.
How big is the range right now in your growth outlook? I mean, I know it's pretty wide everywhere, but for you, it's got to be extremely significant, no?
I think if you look at our last analysis, and that was before the ceasefire agreement, we basically assumed the war would kind of end at the beginning of 2026, and we assumed that growth of 2.5% in basically 25 and about 4.7 in 2026. And in some sense, what has happened now, things have shifted 1 quarter ahead. That probably improves slightly 2025. The big issue is 2026. If this is a lasting agreement, and it, moreover, if it develops into more normalization, which clearly some of President Trump's and us would like to get there, that could unlock even more growth in 2026 and beyond.
We're here in Washington, D.C. The last time we were here, the discussion was all around central bank independence. Now it's about a question of de-dollarization. What is the new monetary order? What's been your big takeaway from these particular meetings being here?
I think, there's a lot of discussion on digitization and stable coins and what that might do to banking and fragility. That's one big issue. Private credit, is that a risk factor? Our asset market valuations in line? And of course, the geopolitical uncertainty, it's globally, and what that might do and what that might trigger. I don't think there are definitive answers, but those are the things that minds are trying to figure out.
From your perspective, given how significant the tech sector is in Israel, how much are you focused on the elevated valuations and the potential threat to financial stability, particularly because of how dominant that field is in Israel?
So obviously Israel's locomotive engine is the high-tech sector, and as I said, it's been very resilient. Partly because it's very well diversified now. Everybody knows we are extremely frontier in cyber, but we're also very good in med tech, fintech, defense tech now. With all the investments in defense in Europe and otherwise, we have a lot of things to offer. Agro-tech. So all these areas gives us a very well diversified portfolio of high tech. And obviously, in the AI, there's a lot of strong valuation. We tend to be particularly more on the applied side. So I think time will tell how much benefits those new innovations bring in. But I think the Israeli sector in general is relatively diversified enough that it can withstand even shocks to markets in terms of the areas it is particularly placed in.
Governor Yaron, thank you so much for taking the time. Always a pleasure. That was Governor Amir Yaron of the Bank of Israel. I'll send it back to you.
Lisa, thank you very much. Lisa Abramowitz there with Amir Yaron at IMF headquarters in Washington, D.C., and a fascinating conversation, a wide-ranging one about the Israeli economy after the ceasefire that was announced last week and after, of course, 2 years of war. And what struck me from that conversation, Carol, is how he said that the monetary policy the Bank of Israel has pioneered here has proved itself. It's worked. Inflation is at 2.5%, which is within the bank's target. And then picking up on what he said there just a few moments ago, he called technology the locomotive of Israel's economy and really touted VC investment that we've seen coming in strong, as he told it, over the last 2 quarters, and other positive signs for the economy. Credit card spending is high. Sentiment is high as well. And fascinating to hear him talk just about what they've been debating and discussing over the course of this week at the IMF and World Bank annual meetings, kind of the future of central banking, looking at digitization, stable coins, and of course, as we've been talking about, yesterday and today, the role of private credit, which is a thorn in the side of some folks here over these last couple of days, as I know you've been seeing.
Yeah, and something we will certainly continue to cover here. Hey, just quick check on the markets for you folks. We are just bouncing around our lows of this session. S&P down 67 points, a 1% decline. NASDAQ 100 off about 0.9%. If I look at the S&P, all 11 major industry groups are lower today. Again, some concerns about the regional banking sector that is definitely weighing on the trade. Most notably, got to talk about what's going on in treasuries. 10-year note below 4% at 397, 2-year note with a yield of 341. So a lot coming at us. And, you know, the geopolitical certainly doesn't end there because we had some more news, David, out of Washington between the president and President Putin.
Yeah, the two of them spoke by phone today. This wasn't previously announced. In the middle of that call, we got a post from President Trump on Truth Social indicating that the call was underway, and I think that's the first time we've kind of seen that happen. The president, I don't know if pausing the conversation, but tweeting or posting in real time that the two of them were talking, and then there was a subsequent post indicating that they'd had a conversation for about 2 hours where they discussed all manner of things, the war, of course, and maybe the prospects for another meeting with the two of them. Let's talk to Bloomberg News White House and National Security Editor Michelle Jamrisco, who's in our Bloomberg Washington, D.C. bureau. She's been tracking this story over the course of the day. Michelle, this is kind of the appetizer to an in-person conversation that's going to take place tomorrow at the White House. President Zelensky is going to be in Washington to meet with President Trump, and President Trump said the conversation he had today is going to inform what he says to President Zelensky. Get us up to speed on sort of what the contours of that conversation are likely to be tomorrow.
Yeah, well, never a dull moment over here, David. So we're following the developments minute by minute. And yes, just this morning we heard about this Putin-Trump phone call that would be slated to take place. So we did get a little bit of a preview of their later a meeting in person that Trump has forecast. But to jump ahead just to tomorrow, yes, this meeting with Volodymyr Zelensky is a very highly anticipated one, obviously something that Zelensky has been seeking for some time. We expect one centerpiece of this meeting to be the potential for the U.S. to provision Tomahawk missiles to Ukraine. At least that's Zelensky's wish. That is something that we expect may have come up in the conversation today between Trump and Putin, as it is something that is a highly sensitive topic, obviously, to Russia as well. And Putin himself has kind of threatens that it would the war would enter a new stage if this were to happen, if this exchange were to take place. While Zelensky, for his part, is obviously constantly looking for more military support that can help him end this war and end this invasion.
Yeah. Does it feel like we're moving closer to an end here? I'm trying to kind of read the back and forth here, the 2-hour phone conversation, President Zelensky at the White House tomorrow. And we have seen as of late, Michelle, it feels like President Trump in the White House leaning more on the side of Ukraine, but we know that that can also change rather quickly. So can you kind of gauge, where we are in this process and the possibility of an end, the White House playing a significant role in putting an end to this war?
Yeah, I mean, always very dangerous, as you know, Carol, to predict the end of these things. But we can say, I mean, first to your point about the evolution of this relationship between President Trump and Zelensky, that has changed quite a bit, even just this year. I mean, we all remember the Oval Office meeting that did not go well before there was the Oval Office meeting that did go well, with Zelensky at the heart of both. And I think, there is a long strain now of months-long episodes of Trump getting publicly frustrated with President Putin. And so the tide did turn in that sense. And now we seem to be kind of coming toward a middle ground, flying high off of last week's developments in the Middle East. We have a president who's even more emboldened on his peace mission, so to speak, and he's looking to do anything he can to bring a resolution to this war that he admittedly had said he would end on day one when he was back in office, and has been the most elusive of the 8 wars that he claims to have resolved. On one side, he says this one is much trickier to solve. And so he's doing everything he can to make sure that at least it looks like that things have calmed down. But we are in a war that's in its 4th year, and it's not going to be an easy end. As even Trump admits, these two leaders, Zelensky and Putin, don't seem to like each other very much. So it's going to be a bit difficult to bring them together. But we do see a lot of wheels turning in terms of new mechanics, new meetings that otherwise wouldn't have happened and would be kind of surprising to take place. But if not for Trump's willingness to kind of bring people together and at least hash things out in person.
On the phone and in person. Michelle, thank you very much. Always great to talk with you. Michelle Jamrisco is a Bloomberg News White House and national security editor, getting us up to speed on the conversation between President Putin and President Trump, setting the table for the conversation tomorrow with President Trump and President Zelensky. And I should say we're waiting for the president to make some remarks a little later this afternoon, Carol, and he did that yesterday. No idea what's going to be on the agenda, but we'll monitor that, of course, and bring you headlines as we get them on the Bloomberg Terminal. This is Bloomberg Business Week Daily.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ. They're all very much in the red right now, with the S&P down 61. That is a drop of 0.9%. NASDAQ Composite Index also down 0.9%. Dow Industrials down 0.8. We've got the VIX right now at 24. The 10-year 3.97%. The 2-year 3.42%. Gold is surging $82 the ounce to $42.90, up by 2%. West Texas Intermediate crude down 1.2%, $57.55 a barrel. Bitcoin down 2.5%. Right now, Bitcoin is at 108,361. Bottom line for the equity market, that rally is sputtering as two regional banks get hit hard today. Among those regional names today, Zions Bank down 13%. Also, shares of Western WAL on the ticker there. Right now, it is trading lower by 10.7%. Briefly, BBVA's $19 billion offer for Banco Sabadell rejected by a vast majority of shareholders, ending a takeover saga that has been going on for 17 months. I'm Charlie Pellet. That is a Bloomberg Business Flash.
A lot coming at us, Charlie, right?
Indeed. We're keeping an eye on it.
Man, it's a lot.
We got you covered.
You always do. All right, Charlie Pellet, thank you so much. Hey, earlier this month, Bloomberg News reported that Neuralink, that's Elon Musk's brain implant company, has submitted a scientific paper to a journal describing the results from some of its patients, which would be its first peer-reviewed publication with human data. David, you know, when I look at medicine, I feel like AI is going to maybe help things and be able to kind of crunch a lot of data and figure out some treatments, but it's interesting to see like brain-computer interfaces and what Elon's doing and some others when it comes to maybe the types of treatments we're going to be getting in the future.
Our next guest and her team are microscopic technologists that work inside the human body. That's what she's pioneering.
Yeah.
It's so fascinating, and I'm eager just to talk about sort of what A, they're working on, B, what the prospects are for doing kind of more of this stuff going forward.
Yeah, she's a great person. Let's get to our weekly Business Week Women's Health segment, where we do focus on key issues and developing technologies impacting the present and future of women's health around the world and really health overall. With us is Professor Deblina Sarkar. She is Associate Professor at MIT. She heads the Nano Cybernetic Biotrek Research Group at the MIT Media Lab, which I want to understand exactly what they're doing. And she joins David and me from Cambridge. Professor Sarkar, so nice to have you here on Bloomberg Business Week. What exactly is the work you guys are doing? What are microscopic technologies that are working inside the human body or will work inside the human body?
Yeah, very excited to be here today as well. So what we are doing in our group, we are fusing the fields of electronics, specifically nanoelectronics, with applied physics and biology to build tiny nanoelectronic chips which can seamlessly integrate with our body and brain. This can diagnose disease or treat diseases which even drugs cannot fix. So one example of such a technology we have built is the world's first autonomous and non-surgical brain implant. So existing brain implants require creating a hole in the skull and putting a centimeter scale probe in. That's highly invasive, and because of the surgery-related risks and hundreds and thousands of dollars of surgery costs, that's only limited to less than 1% of the patients. So millions of people suffering from devastating neurological conditions have impossible choices, either to go through this very risky brain surgery or live with debilitating symptoms which drugs cannot fix. So to overcome these challenges, what we have built are tiny electronic devices which can travel through our body fluids. They can autonomously recognize a disease region in the brain, disease regions which may not be even visible through imaging technologies. And these devices can self-implant in these disease regions. And then we wirelessly power these devices to provide precise electrical stimulation to treat diseases which are even resistant to drugs. So while existing technologies, as I mentioned, are only limited to less than 1% of the patients because of surgery-related risks and costs, we are breaking the barriers of age, health risks, and costs which are currently preventing millions from getting treatments. So we envision a future where these life-saving technologies will be accessible to all.
help me understand where we are in this process. So part of what you described sounds so fantastical, sounds like it stands to upend or radically change the way that we pursue medicine. Are we at the conceptual stage here? What have you been able to sort of prove as concept here as you've been working on these technologies?
We have already demonstrated this technology very robustly in animals already. So we have already built these tiny nanoelectronic devices. We have shown right now that they have record power conversion efficiency, so they can work deep inside the brain. We have also demonstrated that they have the capability of traveling through the body fluids, autonomously recognize a target region in the brain. Also, we have shown that they can very precisely electrically stimulate the brain. So these are already demonstrated in our animal models. A paper will be coming out in few weeks. And we are also translating these technologies, very interested in translating these technologies to humans. So we have not only shown this as a platform technologies to stimulate this brain, but we have also results in multiple diseases.
Professor Sarkar, because we only have about 3 minutes or so left, I just want to jump ahead. So what do you envision in the future, that all of us get an implant or something and it's kind of moving around our body, detecting things? Or how might this play out? And I am curious about what it would cost.
So electronics now will, is so cheap that you can have it in your shoes. Millions of these devices can be made with less than $10. So as I mentioned that in our lab, we have already shown this technology is helpful for multiple diseases, including brain cancer, chronic pain, and Alzheimer's. In the area of brain cancer, and then we work with terminal cancers like glioblastoma or DIPG, where these are terminal cancers, means the patients, when they're diagnosed with these cancers, they have no other hope. Radiation does not work. Chemotherapy does not work. People die within 12 to 18 months. We have shown that with our technology, with precise bioelectrical stimulation, you can completely halt the growth of brain cancer where other technologies will not work. Wow. That can increase the survival rate of patients to more than 85%. Also in Alzheimer's disease, we have shown that you can prevent the formation of the Alzheimer's itself. So it can lead to preventative technology.
Which would be unbelievable, because I feel like there's certain diseases out there, right? And that all of the medical world and pharmaceutical industry is trying to figure out how to deal with. Having said that, in this segment, we often talk about the gaps that are out there in terms of women's health, the spending on R&D, the gaps that are out there. How might this help in terms of diagnosing things that are certainly specific to women only?
Yeah, so taking the example of brain cancer, so if you think of breast cancer, that is horrible. But when breast cancer metastasizes to the brain, currently there is no cure. It becomes terminal. And our work on brain cancer showing that you can completely halt the growth of brain cancer, that is helpful for women. For Alzheimer's disease as well, women are actually at twice the risk of getting any kind of neurodegenerative diseases compared to men. So all these technologies we are building are also very, very relevant to women. And I should also mention that all our work are actually being supported by family members of patients, family members who have suffered a loss of their near and dear ones. Yeah. So we feel very supported. And for example, recently I got an email from a father who was talking about his 10-year-old daughter who has this terminal brain cancer called DIPG, and just seeing his daughter going to a certain death. So you're very committed and dedicated to taking this technology to humans, and we plan to start clinical trials in the next 3 years.
Well, certainly stay in touch and let us know how it's going. We really appreciate it. Professor Deblina Sarkar, Associate Professor at MIT, heading the Nano-Cybernetic Biotech Research Group at the MIT Media Lab. Hey, David, looking at shares of Apple, still down on the day, but we did see them pop a little bit higher.
Yeah, Mark Gurman here with an exclusive indicating Apple is preparing to finally launch a touchscreen version of its Mac computer. This is so fascinating because it's something that I think Steve Jobs was adamantly against, that there should be a separation between these two types of technology. Looks like that's likely to change.
My family makes fun of me because I get so used to and then they're like, Mom, it doesn't work that way.
Just imagine.
It's really humiliating. All right, do not go anywhere. Carol Master, David Gura, we're going to get a check on some of the stocks on the move, a day where we see stocks overall under pressure. This is Bloomberg Business Week Daily.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, we're coming up on the last hour of trading. Carol Masser, David Gora, here at Bloomberg headquarters in New York City, looking at a market where we are just coming off our lows of the session, but down about 0.7% on the S&P 500, and we are down about 0.5% on the NASDAQ 100. I am Carol Masser, along with David Gora. Let's get a check on some of the stocks on the move. Bloomberg News senior reporter and deputy team leader for U.S. equities, Jess Benton, here with us. In a market where there feels like it's running out of a little bit of steam, we do have some that have really outperformed today.
Yes, so going to point out to the best performer in the S&P 500. So JB Hunt, the ticker is JBHT. So this is important because not only is it a trucking and logistics company, but it's a bellwether for the U.S. freight market. So it's up almost 22%. So on pace for its best day since January of 1998. So that's some big size and scope there. So it's its biggest
98
drop. Yes,
I don't even know. What were you
almost
doing?
30
What were
years
you
ago.
doing? That's a long time.
I was alive then, believe it or not.
there you go.
I know you always try to ask me that question. You did
Just
this one time
barely,
when we
just
were
barely.
co-hosting together.
For
but
the
I know.
record.
Ouch.
She was.
Probably almost in middle school.
Were you really?
Yeah, I think. Surprise, surprise.
Still a kid.
Got
Silently
that youthful
sip my
glow,
water
though.
over here.
Yeah, shut up
I
over
want to
there.
put in context, though. So
Not
this
hearing
stock,
anything.
even though really big size and scope there, still down 19% year to date through yesterday's close. So if you look at today's gains, it still puts it down just roughly close to about 2% for this year. So really on the back of better than expected quarterly results, also some cost controls there that are boosting that. So that's important too.
They've
If you
had
look
some excess capacity. They've been really working off over the last couple of years.
And the big thing is, and to your point, Carol, back in January, they had actually warned that this could be another year where they lose as far as what had happened with cargo. And basically, it actually broke with its tradition of giving that forward guidance at the beginning of the year. So it was saying that analysts need to bring down some of those earnings estimates. But the fact that you have a bellwether like this, a few quarters later, coming in better than expected, that's helpful for the market. So if you look over at some of its peers, whether it's Schneider National, Warner Enterprises, Knight Swift, you're seeing all those stocks taking a boost here today.
1998, I was not quite yet at Bloomberg, but I was almost at Bloomberg.
There you go. Middle school. Middle school.
Love you, David. All right, where do we go next?
So I'm going to look on the other side of things here with the MOV function in the terminal. And so looking at HPE here, so Hewlett-Packard Enterprises, the ticker is HPE if you look at this stock, and how it's moving today, down almost 10%, so on pace for its worst day since April 3rd. So of course, this is one of the largest makers of computer equipment. So looking at this, unfortunately, its annual profit forecast misestimates is having an issue with some of that margin crunch. Also, the stock had gained about 17% year-to-date through yesterday's close. So still, when you're comparing that to some of its peers, still better than expected. But also, if you're looking at the industry group, where it houses a lot of those technology hardware and storage companies
It had
today.
a margin crunch like, with the AI spend?
Even despite some of that. So it is interesting because, unfortunately, it's underwhelming guidance for the fiscal year that is for basically the end of next October. So its adjusted earnings per share, it was expecting it to come in between about $2.20 and $2.40. So the analyst consensus estimate was closer toward the high end of that range, but its revenue growth range was between 5 and 10%. So analysts had actually anticipated more than that, closer to 17%. So that's why you're seeing some of those shares pressured there. But if you're looking at some of its industry peers and how they're performing in that sub-industry group, in the S&P 500, that group's down about 1% right now.
Still going through some growing pains with that merger with Juniper Networks as well, I think, figuring out how to align both those companies together.
And then, of course, also one of the worst performers, though, in the S&P 500 is 5 Inc. FFIV is the ticker on there. I was just going to quickly point that out just because that's down 11% today. So if you look over the last 2 days, especially on the back of what it was talking about, where it did warn about the catastrophic hacks yesterday.
Oh, right, that's right.
Actually, that stock's down close to 15% over the last 2 trading sessions. So that would be its worst 2-day span since April of 2022. So that was just some quickly size and scope for another underperformer here today.
It's become an ugly chart.
Yes.
It is.
Micron?
Yes, Micron. So I wanted to look at some other potential bright spots, though, even though I got through some of the underperformers here. So Micron Technology, MU is the ticker, up about 5%, on pace for its best day since not that long ago, October 13th. If you're looking at that, though, in the NASDAQ 100 in the MOV function, that is the best performer in that index. And so UBS actually raised its price target. So it said that Micron will get a boost from its memory chip storage. Of course, that's really important when you're thinking about chip makers. Obviously, this is on the memory side. It's a little bit different than what obviously NVIDIA is doing, but this stock actually had already surged around 140% this year, so it was well over 100% gains year to date, even before this upgrade came out. And so then you have Citi research analyst Christopher Danley. He actually still sees more gains in sight despite what this stock has done, so not surprisingly on high AI demand. So you're still seeing some bullish targets there. And then the stocks, though, not really doing a whole lot, even though it houses some other tickers like NVIDIA in there and Intel, but still nonetheless you're seeing Micron Technology.
Stocks is up almost 40% year to date.
Yeah.
I mean, that my whole
it's been quite a run for the stocks.
in those names. Jess, thanks so much. Bloomberg News senior reporter and deputy team leader for U.S. Equities, Jess Metton, right here in studio. Hey, check out our Stock Movers podcast, 5-minute episodes, biggest winners and losers in the market. You can find it on Apple, Spotify, or anywhere you get your podcasts. First hour down.
First hour down, 2 to go.
As I say,
yeah. President Trump scheduled to make an announcement here in the coming minutes. We'll monitor that. And as I said, we're going to talk about airlines, especially United, which reported yesterday while we were on air. I think it's a blur. I think they reported yesterday when we were on air.
They did. It was after the close.
Ish, whatever.
You're watching on TV. The close is coming your way. Dave and I continue right here on Bloomberg.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. President Trump has turned from the Middle East back to Russia and Ukraine with a phone call to Russian President Putin. Linda Kenyon reports.
President Trump says the call with President Putin was very productive. Posting on social media, the president said the two are planning to meet in Hungary. But first, says White House Press Secretary Caroline Leavitt, will be a meeting of high-level advisors.
Plans are now being made for the Russian side and our folks, led by Secretary of State Marco Rubio, to meet.
The call with Russia's president today comes in advance of tomorrow's White House visit with Ukraine's President Zelensky. Linda Kenyon, CBS News, the White House.
Trump also warned Hamas today there may be no choice but to go in and kill them if violence in Gaza doesn't stop. Earlier this week, he said Hamas had taken out members of some gangs and it didn't bother him much. The Justice Department could present a criminal case and seek a grand jury indictment against John Bolton today. Bolton is President Trump's former national security advisor. Nancy Cortez reports.
He had very strong opinions about various aspects of foreign policy that sometimes did not line up with President Trump's views, particularly when it came to Russia and Vladimir Putin. And if there's one thing that President Trump doesn't like, it's when disagreements with people who serve him are made public. And the other thing he really doesn't like is when those people leave the White House and begin to openly criticize President Trump.
Still no deal to end the government shutdown. Democratic Senator Richard Blumenthal says they'll stand firm.
Donald Trump has shown through his rescissions and his announcement that there is no reason to trust him. And as much as I respect Rita Thune, he can't vouch for the House or the White House.
Republican Senator Lindsey Graham.
Shutting the government down to get a policy outcome is not going to work. We made a mistake of shutting the government down for 35 days to try to get the wall built. And they didn't bend.
California will begin offering its own brand of low-cost insulin, as Stacey Lynn reports.
Over the last decade, the cost of insulin has skyrocketed, and doctors and pharmacists say many patients have been forced to skip or take a lower dose.
We've had patients who have made the choice to forego their insulin because they didn't have the money to pay their copays.
So California Governor Gavin Newsom said they were taking matters into their own hands. Beginning January 1st, a 5-pack of pens will cost no more than $55 because, he said, Californians shouldn't ration insulin or go into debt to stay alive. Stacey Lynn, CBS News.
On Wall Street at this hour, stocks are lower. This is CBS News. We're hearing from a state lawmaker who attracted national attention and now wants a spot in Congress.
Justin Pearson was one of the Tennessee 3 lawmakers who were expelled from the state legislature after a gun control protest in 2023. Last week, the Democrat said he will challenge longtime Democratic Congressman Steve Cohen for his seat. He tells the CBS News Takeout with Major Garrett he thinks he can have an impact.
More empowering of the community, more organizing of different groups that are on the ground doing the work of preserving the people's voice and the people's rights.
Cohen has called Pearson an ambitious young candidate, but he says at 76, he has experience and institutional knowledge. Steve Kathan, CBS News.
DoorDash customers in Phoenix may have their orders delivered by a Waymo autonomous vehicle. It's part of a new partnership to keep robo-taxis busy when there's a lull. Test deliveries have already begun. I'm Cammie McCormick, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Massar and Tim Stenovec. Live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, we are continuing on Bloomberg Business Week Daily. Carol Massar along with David Gora. He is in for Tim Stenovec, who comes back on Monday.
I can't wait to hear his tales of wherever he's been, but happy to be here.
So we're relaxing. I'm sure he's not checking in, although Tim has often all of a sudden I feel like
he'll react.
Yeah.
Quick reply.
But he's been quiet.
Good. That's a good sign.
I'm glad for him as well. We're looking at a day, folks, where we've got stocks under pressure. We're off our lows, but just barely. But what's really been interesting is what we've been seeing along the U.S. Treasury curve. We've seen that 10-year note go below 4%. Some concerns over regional banks. So that is something we're certainly keeping on our radar.
Yeah, looking at that 2-year incredibly low as well. Lowest we've seen in a couple of years. And yeah, you mentioned those regional banks, Western Alliance and Zions, both under pressure as a result of some loans that they had exposure to. As we talked about with Sally Bigwell about an hour ago, you know, this concern that comes with that of how widespread this might be, not helped by the comments from one Jamie Dimon of JP Morgan indicating that things could be more widespread in the market than one might think. So certainly going to keep talking about that over the course of the afternoon.
Maybe he's doing a hair flip like, hey, see, I'm just telling you.
That's right.
I put it out there. Hey, we're also watching airlines. United flying high, so we'll get into that. We're also going to kind of do a face-off between Meta versus Apple because the war for AI talent, it is definitely on, and we see a lot of folks leaving Apple going to Meta. We also have some breaking news that we had from Apple.
Yeah, and guess what? Mark Gurman breaking that news. But yeah, it's a face-off in actual fact that you have these kind of two companies, rivals with one another, really kind of getting talent, plucking talent from one to the other. So that'll be fascinating to talk to him about. And then we're going to go to Miami, of course, this new financial capital in Florida, and look at sort of the building in which Citadel and other big banks are have their offices and just the, there's a divide in real estate prices down there, but the high-end real estate is really off the charts.
It's amazing. Also, we're going to get into inheritocracy, where birthright rather than merit determine financial security. So a lot coming your way in just a couple of hours. Let's get to the trade and take a look at what's going on here. Some of your top business stories. Here's once again